News when you want it with Bloomberg News Now. I'm Doug Krisner. Harvard University has been hit with a $2.2 billion funding freeze from the federal government. This comes after Harvard turned down a deal from the Trump administration earlier today. It would have required Harvard to reform its governance, to end its diversity programs, and curb the power of certain students and faculty. Harvard said the administration's demands went beyond prior requests, and they represented direct governmental regulation of the university's intellectual conditions. Here is Bloomberg Politics contributor Jeannie Scianzano.
And the reality is that Harvard is saying we will comply with all valid laws, and they're looking at Title VI. Their problem is this push to curtail how Harvard admits students, what faculty teaches, is a violation of the law. And so, if the administration wants to change the law, they're saying they need to go through Congress, have that passed and signed.
That was Bloomberg Politics contributor Jeannie Scianzano. The Trump administration is pressing forward on investigations on semiconductors and pharmaceutical imports as precursors to imposing tariffs. We have more from Bloomberg's Amy Morris in Washington.
The Commerce Department is leading probes into the impact of semiconductor and pharmaceutical imports on national security. This could roil a chips industry that notched more than $600 billion in global sales of chips essential to products ranging from cars to airplanes and mobile phones to consumer electronics. The move toward pharma tariffs will mostly impact Ireland with a $54 billion trade surplus with the U.S. But the U.S. biotech industry, which drives a lot of the innovation in drug development, is also vulnerable. In Washington, Amy Morris, Bloomberg Radio.
Meantime, U.S. Trade Rep Jamieson Greer saying tonight President Trump is expecting to speak with Chinese leader Xi Jinping at some point. Here is Greer speaking to Fox News.
China is the only country that actually implemented its retaliation and set it on this course. So obviously that's concerning, and the president has been very clear that he's willing to talk to his counterpart and that he expects that at some point we'll have talks. We're not there yet, but that's his expectation, and I share that expectation.
That was U.S. Trade Rep Jamieson Greer speaking to Fox News. U.S. Treasury Secretary Scott Bessent sought to calm nerves today, given concerns about the recent sell-off in U.S. Treasuries and questions over the Fed's independence, as well as the anxiety when it comes to tariffs. Here is Bessent speaking exclusively to Bloomberg in Buenos Aires.
I don't think there's a dumping, and I think we saw in the tick data either today or Friday that actually foreign ownerships picked up. We had 3 big auctions last week, and on the longer end auction, 10-year, 30-year, we saw increased foreign competition. So I actually think this is one of those occasional VAR shocks that you get in the trading community. I think a lot of people got very leveraged, maybe out over their skis.
That is U.S. Treasury Secretary Scott Bessent. President Trump said today he's exploring possible temporary exemptions to his tariff policy on imported vehicles and parts. This as a way of giving auto companies more time to set up their U.S. manufacturing. Here is Trump speaking earlier at the White House.
I'm looking at something to help some of the car companies where they're switching to parts that were made in Canada, Mexico, and other places. And they need a little bit of time because they're going to make them here. But they need a little bit of time. So I'm talking about things like that.
President Trump speaking earlier at the White House. Now, his comments could potentially bring relief to automakers reeling from his duties on auto imports, but they could also inject further uncertainty. Today, shares in GM, Ford, and Stellantis all hit session highs after the president's comments. Mark Zuckerberg testified in federal court today as the first witness in the government's antitrust trial seeking to break up Meta platforms. Here is Jennifer Rhee of Bloomberg Intelligence.
They basically just maintained this monopoly they had in personal social networking and by just buying up everybody, they own them all. You know, they keep Facebook Blue, they call it the original, and Instagram separate. They're 2 different products, even though they're both owned by Meta, and that they maintain this monopoly over personal social networking. And what that results in is lack of choice for consumers, lack of quality. Maybe there's less privacy protections. There are more ads. Maybe if you had some competitor, you'd have better options as consumers. That's the allegation here.
Jennifer Rhee there from Bloomberg Intelligence. Now, if the FTC does prevail, a spin-off of Instagram and WhatsApp would undo years of integration between the apps. The trial is expected to last about 2 months. It will also feature testimony from former Meta executive Sheryl Sandberg. And that is news when you want it with Bloomberg News Now. I'm Doug Krisner.
Everyone, good morning, good afternoon, good evening to all of you. आज है 15th of April 2025. वेलकम वंस अगेन टू दिस लाइव एनालिसिस. स्टार्ट करते हैं आज का सेशन. फिलहाल के लिए देखोगे मार्केट को तो नेचुरल गैस कल वेरियस था, एक लास्ट सपोर्ट था, वही ब्रेक कर दिया, गैप डाउन ओवर और नीचे सपोर्ट है, वहां से एक बाइंग का प्लान रख सकते हैं इसमें. बीच में बाकी ये जो सपोर्ट था कल का, ठीक है, इट एक्ट लाइक एज अ रेजिस्टेंस, क्योंकि ये सपोर्ट था, कल ब्रेक डाउन हो गया तो ये रिटेस्ट की तरह काम कर सकता है. बाकी इसके ऊपर एक रेजिस्टेंस था, वहां पर भी आया नहीं है प्राइस, वहां पर आएगा तो और देखेंगे. ये लेवल बीच का एक रीटेस्ट का लेवल रहेगा, ध्यान रखना. सपोर्ट था, ब्रेकडाउन हो गया तो रीटेस्ट करना चाहिए यहाँ पर. ठीक है, दिस इज अ जोन ऑफ रीटेस्ट, यू कैन से इट. बाकी नीचे फिर से आता है, फिर से बाई कर सकते हो नेचुरल गैस में. एंड क्रूड ऑयल को देखोगे, कल एक सेलिंग आई थी, फिर नीचे से बाइंग आई थी, मार्केट साइडवेज चला गया था, कुछ खास हुआ नहीं. आज हल्का सा गैप अप हुआ और टारगेट दे दिया था कल बाइंग वाला. वापस ऊपर आता है तो एक सेलिंग का प्लान रखेंगे यहाँ पर, ठीक है. बाकी अब नीचे बाइंग तो नहीं करने वाले, बिकॉज कल वो डीप बाइंग करके आ चुका है, और नीचे ये भी रीटेस्ट जोन ही है सारे के सारे हमारे पास. ऊपर से ही सेलिंग आ जाए तो बेटर है मेरे अकॉर्डिंग. अब बाकी कोई नया लेवल बनेगा तो वी विल सी दैट. ठीक है, बाकी फिलहाल यही एक बाइंग का ट्रेड रहेगा इसमें. ठीक है, फिर से पुल बैक देता है, फिर से ले सकते हैं. बाकी रीटेस्ट से देखेंगे, अगर रीटेस्ट से सेलिंग आ गई तो रीटेस्ट से कर देंगे, नहीं तो ऊपर एक रेजिस्टेंस रहेगा मेजर. बाकी इंडियन मार्केट भी काफ़ी अच्छा था, बट बिकॉज गैप अप हुआ उसके बाद साइडवेज ही चला गया बिल्कुल, तो मुझे लगता नहीं है मोमेंटम कुछ खास करेगा. मॉर्निंग पे ऑलरेडी गैप अप था काफ़ी बड़ा, कल एक्सपेक्टेड ही था गिफ्ट निफ्टी को देखकर. उसके बाद से वो सपोर्ट रेजिस्टेंस के बीच में फंस गया है, तो इट इज़ ऑन अ साइडवेज साइड कह सकते हैं. बहुत बड़ा मोमेंटम होगा निफ्टी बैंक निफ्टी में, चांसेस आर लेस, बैंक निफ्टी स्पेशली. हाँ, क्रूड ऑयल में सेल कर सकते हैं, रेजिस्टेंस पे आता है तो. यस, डेटा देखोगे आज तो एम्पायर स्टेट मैन्युफैक्चरिंग इंडेक्स का डेटा है, इम्पैक्ट करेगा गोल्ड और सिल्वर को शाम को 6 बजे. स्टैक भी साइडवेज ही है. कल और नीचे एक सपोर्ट था, वहाँ से बाइंग आई, उसके बाद फिर से सेलिंग आ गई थी हाई लेवल से, देन इट इज साइडवेज कम्प्लीटली, कोई मोमेंटम ही नहीं है. के ऊपर रेजिस्टेंस है ही 18,930 940 के अराउंड, वहाँ से ऑलरेडी वापस रेजिस्टेंस मार्केट ने ले ही लिया था. भी करते रहो guys. Don't forget to like the stream. समझ गए इसका लेवल लिक्विडिटी जोन से अराउंड है ना, देख लेते हैं. क्रूड ऑयल को यहाँ से भी कर सकते हैं. ये तो कल वाला टारगेट हो गया हमारा. यहाँ पर जो रेजिस्टेंस था यहाँ से भी सेल कर सकते हैं. कल वाला टारगेट था वो हो गया है. बायर तो निकल गए होंगे, निकल जाना अगर रुके हुए थे कल से. यहाँ से भी सेल कर सकते हैं क्रूड ऑयल में. ठीक है. बाकी ऊपर भी है रेजिस्टेंस, वहाँ से भी कर सकते हैं, यहाँ से भी कर सकते हैं. यहाँ से वैसे सेलिंग आई गई है. अब फिर से ट्राई करना चाहो यहाँ से कर सकते हैं, थोड़ा सा ऊपर से भी कर सकते हैं. दोनों ही लेवल हैं सेलिंग के. एक कल वाला रेजिस्टेंस है छोटा सा. लेवल से वैसे कल सेलिंग आ गई थी तो अब यही लेवल है. कर लो, मार्क करके रख लेते हैं, कोई सुनिए. ये लो. नीचे से बाइंग नहीं करेंगे अब, ध्यान रखना, बिकॉज नीचे वाला लेवल कल डीप टेस्ट करके आया है तो रिस्की हो जाएगा वहां से बाइंग करना फिर से. वाला भी है, ऊपर वाला तो कल वाला ही रेजिस्टेंस है. नीचे ही बना हुआ है, दो दो रेजिस्टेंस साथ ही हैं. नीचे क्वांटिटी थोड़ी कम रख लेना, ऊपर क्वांटिटी बढ़ा के रख लेना. ऊपर वाला मेन रेजिस्टेंस है ना. इसमें कोई सपोर्ट भी नहीं है नीचे. ये एक समथिंग कुछ ये ट्रेड रहेगा यहाँ से सेलिंग करने के लिए. बाकी ऊपर भी रेजिस्टेंस है, ध्यान रखना. दो तो रेजिस्टेंस साथ में बने हुए हैं. बाकी टारगेट नीचे का ही रहेगा, दोनों में से जो भी होता है. कोई नया सपोर्ट बनेगा तो देखेंगे. अभी नहीं बना है तो वी कैन ओनली कंसिडर दिस वन. आएगा तब तो. लाइक भी करते रहो गाइस, लाइक भी करो जिन लोगों ने लाइक नहीं किया स्ट्रीम को। 1 पॉइंट का डिफरेंस है, ओपन इक्वल टू लो एग्जैक्टली नहीं है करंट कैंडल क्रूड ऑयल में, वो 1 पॉइंट का डिफरेंस है। नॉर्मली कह सकते हैं ओपन इक्वल टू लो भी, बट 1 पॉइंट का डिफरेंस है। चलो जा तो बढ़िया है, ऊपर वाले चले जाना। फिर से ले सकते हैं, नेचुरल गैस फिर से आएगा पुल बैक नीचे, 286.8 के अराउंड ले सकते हैं। XRP USD बाई कर सकते हैं क्या? कर लो XRP USD। बिटकॉइन तो ऊपर ही चढ़ा हुआ है। लाइक रुकने नीचे गाइस, लाइक करने चाहिए सबको। टेस्ट ना देखो करेंगे, रीटेस्ट पे भी अगर पहुंचता है नेचुरल गैस, क्योंकि कल सपोर्ट था वो ब्रेक हो गया है, तो वो रेजिस्टेंस की तरह काम तो करना चाहिए। सपोर्ट बिकम रेजिस्टेंस, उससे पहले कोई रेजिस्टेंस अगर नया नया ना बन जाए तो दैट एक्ट लाइक एज अ रेजिस्टेंस ऑब्वियसली। क्योंकि कल का ही सपोर्ट था वो ब्रेक कर चुका है, तो लॉजिकली उसको रीटेस्ट करना चाहिए। हाँ, कैंडल तो इम्पोर्टेंट रहती है, ओपन इक्वल टू हाई लो नहीं होनी चाहिए बस। बता दिए कि न्यूज है आज 6 PM पर। बाकी अभी 12:30 न्यूयॉर्क सेशन से पहले लंदन सेशन ओपन होगा। हाँ, क्रूड में भी सेलिंग कर सकते हैं। दोनों ही रेजिस्टेंस है कि कल वाला है ऊपर जहाँ पहले सेल किया था, बाकी एक बाइंग का टारगेट बनाया था, वहां पर भी एक सेलिंग का ट्रेड था वो। ये दूसरा वाला है। दोनों रेजिस्टेंस साथ साथ ही बने हुए हैं। नीचे वाले से क्वांटिटी कम रख लेना, ऊपर वाले से थोड़ी ज़्यादा रख लेना। मर्ज करूंगा तो एसएल काफ़ी बड़ा हो जाएगा नहीं तो। बाकी कोई और न्यूज आती है तो वी विल सी दैट। फिलहाल के लिए अभी कोई और न्यूज़ भी नहीं है। इस वजह से डाउ जोन्स भी देखोगे तो फ्लैट है, नैस्डैक भी फ्लैट पड़ा हुआ है। 12:30 के बाद ही शायद थोड़ा बहुत एक्शन रहेगा। बाकी इस वीक तो 3 दिन मार्केट वैसे भी क्लोज रहेगा। फ्राइडे सैटरडे संडे सारे मार्केट बंद है। इंडियन मार्केट बंद है, एमसीएक्स मार्केट क्लोज है, यूएस मार्केट भी गुड फ्राइडे की वजह से क्लोज रहेगा। फॉरेक्स का मुझे पता नहीं, फॉरेक्स भी वैसे शायद क्लोज ही रहता है गुड फ्राइडे के दिन। फिर सैटरडे संडे 2 दिन और बंद रहेगा, तो 3 दिन तो वैसे ही मार्केट में हॉलीडे है। ट्यूसडे हो गया, ट्यूसडे वेडनेसडे थर्सडे 3 डेज ही हैं हमारे पास इस वीक में। एमसीएक्स भी क्लोज है, बिल्कुल क्लोज है। गुड फ्राइडे के दिन मॉर्निंग इवनिंग दोनों सेशन क्लोज हैं एमसीएक्स में।
On April 2nd, President Donald Trump made good on a promise.
Starting tomorrow, the United States will implement reciprocal tariffs on other nations.
That oversized printout represented a seismic protectionist shift in US policy.
Very quickly after the announcements, we started seeing other world leaders talking about potentially negotiating or retaliating.
It's definitely the biggest shock to the global trading system that we've seen since World War II.
Trump's tariff wrecking ball careens through the markets.
Not Liberation Day, but Obliteration Day.
Whose throat do I get to choke if this proves to be wrong?
There's only a few events that rank up there with the kind of losses that we've seen in U.S. financial markets in particular.
Major global indices nosedived, including the S&P 500, the FTSE 100, the Nikkei 225, and Germany's DAX. Over a handful of days, business leaders and investors piled pressure onto the administration amid plummeting markets and palpable fears of a global recession. Then, just hours after the highest tariffs went into effect on April 9th,
President Trump announces a 90-day pause on reciprocal tariffs for all countries except China.
most countries would only be taxed 10%, but the tariff was going even higher on China, the world's second biggest economy. So what now? How is all this meant to work in the long term? And what could happen when a new 90-day clock stops ticking? In 1986, teenage Ferrari enthusiast Ferris Bueller took an eponymous day off school and skipped a lecture that included a prescient warning for Donald Trump.
The Hawley-Smoot Tariff Act, which, anyone, raised tariffs in an effort to collect more revenue for the federal government.
Economists love to tell the lesson about Smoot-Hawley when it comes to the lessons of protectionism. There was a law enacted in 1930 where tariffs were applied on all of the U.S.'s major trading partners. The outcome was very much unintended.
It did not work, and the United States sank deeper into the Great Depression.
Now, that was around here. And you can see that historically, the average tariff the US imposed on imports has trended downwards. There's a reason for that.
Coming out of World War II, the move started to say, if we trade with each other, we won't shoot at each other. And that model persisted until we are where we are today.
But Trump's policies would take us back here. And you need to increase the scale of this chart to see the rates that could be facing Vietnam, or Cambodia, or of course, China. Let's get to why. First, to revitalize American manufacturing.
More than 6 million fewer people work in manufacturing today than did in 1979.
Trump doesn't like that. His tariffs are intended to make it harder to sell into the US, paving the way for local companies to fill the gap.
He does view the rise of China in global trade and Chinese manufacturing as being really one of the things that has accelerated and driven the decline of manufacturing in the US.
The president has this ideology and a vision for the American economy and the American worker that dates back to those glory days of automaking and steel making and wants to revitalize those in a new way. There are predictions that China will so dominate global manufacturing in 2030 that it will have almost half of the world's industrial production capacity. The U.S.'s, meanwhile, will have gone from 25% down to about 11%.
And once those manufacturing jobs are gone, they're very hard to bring back.
There are something like 500,000 vacancies in the manufacturing sector right now, and those are jobs that employers can't fill right now. So there's big questions about whether or not there's enough people in America to go back to work in many of these factories.
Nonetheless, Trump wants to reopen factory doors to help rebalance trade deficits with the rest of the world.
The trade deficit's very simple. It is the imbalance between what I buy from you and you buy from me. You have probably an immense trade deficit with your grocery store, or your barber, or the local movie theater.
Or consider coffee.
We don't produce much coffee in the United States. We drink a lot of coffee in the United States, and that means we import a lot of coffee. And there is an enormous trade deficit when it comes to coffee.
Across all goods, the US has a massive deficit with China. It looks like this. The blue line shows the total value of exports from China to the US since 2000. It's grown to hundreds of billions of dollars a year as Americans snapped up cheap goods. But it's out of whack with what the US exports to China look. This orangey red line shows growth, but nowhere near to the same levels. Trump cares a lot about those kinds of imbalances.
He looks at those and says, if you have a trade surplus with me, I'm losing and you're winning. And he wants those to be at least balanced, if not tilted back in America's favor.
And that includes impoverished countries like Lesotho. It included unpopulated islands like the Heard and McDonald Islands, with which the U.S. Has an immense trade deficit. Those islands are populated only by penguins.
And then there's China.
The president came into office on January 20th.
The golden age of America begins right now.
And within a couple of weeks, there were 20% tariffs on everything coming into the U.S. from China.
And then the trade war between the US and China escalated. Trump's tariffs first went to 54%.
China this time hit back quite fast and strong, imposing the same 34% tariff rate on all US products entering the country.
So Trump imposed an additional 50% tariff, bringing the total duty on Chinese imports to 104%.
That means a doubling of the price at the border for anything that comes into the United States from China.
China said it would retaliate again.
China is raising tariffs on US goods to 84%.
And the increases kept coming, leading everyone to ask, where does this end? Well, temporarily in a 90-day pause on the most extensive tariffs. What changed his mind was the bond market and watching the head of JP Morgan on TV predicting recession. But he didn't budge on China, which produces many components for things America makes.
We have seen some auto factories shut down temporarily while they try and work out the costs of these new tariffs. We are going to see more of that in the United States.
Trump has another goal with tariffs: raise revenue. Government revenue raised using tariffs is meant to offset the cost of tax cuts, including a reduction in the corporate tax rate, which the Trump administration says will incentivize US companies to build and hire more.
Many of Trump's officials have talked about all of the revenue that they're expecting to get from these import tariffs, and that's to address the growing debt in the US and also to create space for the tax cuts that the administration are also trying to negotiate.
For instance, to extend income tax cuts approved during his first presidency, and maybe reduce the corporate rate even more, while also expanding tax breaks by exempting tips and Social Security earnings.
It's going to cost trillions and trillions of dollars.
The problem with that is that tariffs tend to be a pretty inconsistent source of revenues, because if you raise the cost of imported goods, people tend to buy fewer imported goods, and that means that revenues go down over time.
So maybe it's time we explain how tariffs are actually paid.
Tariffs are an import tax. They are paid by importers when a good lands at the border in the United States. So let's take a smartphone. If it's worth $100 when it lands at the port of Los Angeles, and there's a 50% tariff on smartphones from China, let's say, well, then there's an extra $50 that gets added to the price. That $50 is paid initially by the importer, and then economists have found that usually those importers tend to pass on most of the cost to consumers. When you go through this whole scenario, what you find time after time is that tariffs just raise the cost for consumers.
Trump's third goal for his tariffs is to use them as a tool of diplomacy. Maybe you've heard him talk about fentanyl and immigration, subjects of executive orders that have figured into his negotiations with Mexico, Canada, and China. His announcement of a pause on April 9th looked like that tool of diplomacy in action again.
There are imbalances. There have been imbalances building for years and years. And if he can thread the needle of applying tariffs on countries without crashing economies, he has a chance to achieve what he's trying to achieve.
So in the short term, Trump is really going to be looking for deals with their trading partners. So some concessions on what he views to be unfair trade practices by key trading partners would be viewed as a success.
If things go according to plan for Donald Trump, the economy will go through a short slowdown, inflation won't rise that much, but then in a quarter or two, the jobs will start rolling in, the investments will start rolling in, and those trade balances will start to level out.
And what if things don't go according to plan, as the world's economists seem to expect? Markets surged on the return of the Trump put. But what happens after the sugar high, or at the end of this 90-day pause?
The worst case scenario is that the US and the world go into a recession, and that is extended, and that we get trade barriers go up all around the world, that we trade less with each other, and that you get more instability in the world.
Which brings us back to what we discussed earlier, the Smoot-Hawley tariffs in the 1930s.
This time around, that's what's got markets agitated. In terms of the amount of trade that's covered, these are much bigger than the Smoot-Hawley tariffs of 1930. If you have the same effects this time around, that's going to mean a lot of turmoil in the world. It's going to be bad for not only the U.S. economy, but the global economy.
News when you want it with Bloomberg News Now. I'm Stephen Carroll.
And I'm Caroline Hepker.
Donald Trump's administration is signalling that more tariffs on semiconductor and pharmaceutical imports are likely to be coming soon. The White House has initiated trade probes into chip and drug imports in a move that sets the stage for sector-specific charges. Mandeep Singh of Bloomberg Intelligence says it's an approach that could be widened.
It looks like with semis and, consumer electronics, there will be more to come in terms of tariffs, but the goal is pretty clear. They want more reshoring, and I feel the sectoral tariffs are probably more effective in that, because with reciprocal tariffs, you could move from country to country depending on wherever the reciprocal tariffs were low. So from that perspective, sectoral tariffs could end up being more effective.
Mandeep Singh speaking there as President Trump says he is exploring possible temporary exemptions to his tariffs on imported vehicles and parts to give car companies more time to set up manufacturing in the United States.
Well, a near daily flow of tariff announcements is adding to the confusion for companies and countries trying to navigate President Trump's evolving trade policy. The higher so-called reciprocal tariffs are currently on pause for 90 days, with levies on popular electronics also temporarily halted as nations race to negotiate bilateral deals. Speaking to Bloomberg's Anne-Marie Jourdain, the US Trade Secretary Scott Bessent was asked how many of those deals he expects to have signed by the end of the pause.
I think there will be advantage to our allies, especially in a first mover advantage. Usually the first person who makes the deal gets the best deal. So
who do you think will be first?
It's their choice.
Is there a handful of countries that you expect to have a deal before the 90 days is up?
Oh, I think there could be numerous countries. And look, it may not be the actual trade document, but we will have an agreement in principle and be able to move forward from there.
US Treasury Secretary Scott Bessent there. His view that this is all part of an orderly negotiation process is not shared by his predecessor in the Biden administration. Former US Treasury Secretary Janet Yellen says the entire process is muddled.
The objectives unclear, the rationale for the tariffs that have been announced really unclear and not at all sensible. Steps toward removing the tariffs, lowering them are positive, but we're in a world of tremendous uncertainty.
Janet Yellen speaking there comes after the CEO of DHL told Bloomberg on Monday that both businesses and consumers may now, quote, adopt a wait-and-see approach before making spending decisions.
While the White House adds carve-outs for certain sectors, others dependent on China have been warning of the effect on consumer prices. Bloomberg's Ewan Potts has more.
Christmas is nearly here, at least that is if you're a toy manufacturer. As the sector plans for its busy season, there's a warning over what President Trump's 145% tariffs on Chinese imports will mean for customers. Toy billionaire Nick Mowbray's told Bloomberg that the tariffs have paralysed his company. He says as 80% of all toys are made in China, the firm will need to almost double retail prices. As to manufacturing in the US, he says the industry cannot simply replicate the deep ecosystem and tight supply chains that exist in China. As he puts it, Donald Trump is probably going to steal Christmas from families and kids in the United States this year. In London, I'm Ewan Potts, Bloomberg Radio.
Well, returning to our exclusive interview with the US Treasury Secretary, Scott Bessent played down the bond market sell-off, but added that he has a big toolkit to combat any crisis. Treasury saw their biggest weekly slide since 2001 last week, alongside a decline in the US dollar. Bessent was asked if he thought central banks and countries were dumping their US assets.
I have no evidence that it's sovereign. We are still a global reserve currency, that we have a strong dollar policy. The dollar can go up and down.
The US Treasury Secretary was speaking as several Wall Street banks are warning of weak foreign demand for US bonds due to President Trump's policies.
The European Union's top trade negotiator met his US counterparts in Washington, D.C. as the bloc tries to secure a deal on tariffs. The EU has paused retaliatory measures in the hope it can secure further carve-outs from the White House, which has reduced its key blanket levy to 10% for 90 days. Meanwhile, Bloomberg has learned that Britain has privately signalled to the EU that it would be open to following some of its rules on food products. The discussions come ahead of a key summit where the UK hopes to be included in EU defence spending.
UK households have increased their spending in a sign of resilience despite rising bills. The British Retail Consortium's March retail sales figures were 1.1% higher than the previous year. Separate data from Barclays suggests that 2/3 of consumers now want to buy goods made in Britain, in a sign of how the trade war is changing habits.
And Harvard University has been hit with a $2.2 billion funding freeze after defying President Trump's demands. The move came just hours after the institution put out a statement saying it wouldn't surrender its independence and capitulate to requests ending all diversity, equity and inclusion programmes. Ginny Sheehan-Zaino, political science professor at Iona State, says the prestigious university is well placed to contest the policies.
If anybody can push back on this, it's going to be Harvard, of course, the wealthiest, probably the best, one of the best institutions in America and the world. And the reality is that Harvard is saying we will comply with all valid laws. Their problem is this push to curtail how Harvard admits students, what faculty teaches, is a violation of the law.
Iona State's Ginny Sheehan-Zaino speaking there. The Trump administration last month said it was scrutinising as much as $9 billion in federal grants and contracts to Harvard as part of its efforts to combat anti-Semitism on US campuses. Harvard has previously signalled that it would work with the administration to combat anti-Semitism on campus, such as tightening disciplinary procedures, but its president, Alan Garber, says the latest demands are unacceptable.
And those are our top stories this morning. Let's get to the markets. So Wall Street managed to clinch 2 days of gains. The S&P 500 rose yesterday by 0.8%, although stock futures are pointing lower and in the red this morning. European stocks outperformed yesterday. Euro Stoxx 600 rising 2.7%. Again, we're in the red this morning. But the other big story was that Treasuries rallied for the first time in 5 days. Yields fell over 10 basis points across the curve, and they're adding to those gains overnight. Meanwhile, gilts rose alongside gains in European bonds. The dollar again is weakening, though, a 6th straight session, and we're down again this morning. The pound has been one of the beneficiaries against the dollar, strengthening to the highest since October. Japanese equities this morning are also outperforming this possibility of more tariff relief, maybe on the auto manufacturers. That has helped. The Nikkei 225 up 1%, and the Topix currently up 1.2% this morning. So that's a look at where we are in the markets. That's news when you want it with Bloomberg News Now. I'm Caroline Hepker.
I'm Stephen Carroll, and this is Bloomberg.
markets. And if you want to learn to listen for it, we'll show you how.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
Welcome back. 30 minutes until the start of the opening trade. Let us have a look at what is happening in the futures picture right now. Things look a little calmer. That said, we could see some movement in the CAC 40, of course, because we had those numbers out of LVMH that were disappointing. And so ADRs in the US went lower on that. We'll be looking for a read across into other luxury names as well. So we could see some negativity around the French market, possibly some positivity around the German market and other areas where you see reference to to autos, because, sorry, not chips, but to autos today, because we've had the possibility of an olive branch to the auto sector. More on that in the next hour of the programme, but we will certainly watch that sector as we get into trading. And in terms of bond markets, we'll wait for gilts to open, of course, at the top of the hour, because we had some labour market data that didn't move things much, but according to Venram on the Markets Live blog, gilts could move more than sterling, so we'll keep an eye on that. This, for the moment, is the movement we have in European bond markets as Treasuries, Chrissy, look a little bit calmer. Let's go to Chrissy, who has a chart that has caught her eye this morning. Chrissy.
I think that key word, Anna, is calmer, especially when it comes to that bond market, as we know that is the panic that led Donald Trump at least to kind of maybe hit that pause for 90 days. But I think the bond volatility question is one that is going to continue, which is why the chart that's caught my eye has to do with the term premium of the 10-year Treasury, essentially how much risk is associated with holding a 10-year Treasury bond to maturity. And you can see that we are creeping higher. Now, let me walk you through this, because we are now at the highest term premium on that 10-year in over a decade. You have to go all the way back to 2014 to get back to these levels. Now, this is crucial because all of this red on the screen has to do with when you have more of an inflation expectations in the short term. So that's really where that inversion of the curve is showing up in this part. And now we're reversing that trend. But Anna, there is a laundry list of risks here. And this is really important because it's not just about the volatility associated with tariffs as well and the international response from the United States, but the domestic one as well. What does spending from the U.S. government look like in the context of kind of these DOGE reforms, in terms of payrolls, in terms of defense contracts, in terms of that input that we ultimately get U.S. GDP? And the other piece of this is going to be the inflationary shock off of tariffs and how that shows up, not to mention any sort of de-dollarization. All of that is going to show up, and those worries are going to show up in a term premium like this.
OK, let's think about the dollar and the role of the dollar as a reserve currency then. Jane Foley joins us, head of FX strategy at Rabobank. And Jane, good morning.
Good morning.
So much to talk about then when it comes to FX in this context, in the context of the second Trump administration. We've heard from Scott Bessent overnight. He says they still have a strong dollar policy. The dollar, of course, has been weaker through all of this tariff drama. Has something fundamentally changed in the market's view of the dollar as a reserve currency? I was at an event last week and lots of people just said, well, Tina, there isn't an alternative. But does that matter?
It does matter, but it doesn't mean to say that we will carry on this gradual trend away from the dollar. I mean, if you think about, why is the dollar a reserve currency? When over the last, 40, 50 years, the share of world trade from the US has shrunk, really, because obviously China's grown, emerging markets have grown. But the dollar is still, nearly 60% of reserves. And perhaps there's a loose correlation between the amount of invoices done or written in US dollars. So around about 50% of the world's invoices are written in US dollars, so fundamentally central banks need dollar reserves. And I think that will change. And I think we can actually draw this back to the first Trump presidency, when there was this need. Even the Europeans weren't happy when, for instance, Trump pulled the US out of the Iranian nuclear accord and basically told European companies they had to pull out too, otherwise they may not have access to dollar funding. The Europeans were not happy about that then. So I think there have been changes made since the first administration to make perhaps other currencies a little bit more resilient. And I think that trend will continue. So I think the de-dollarization is a issue. It is a concern. It will continue. But we can't replace the dollar quickly. There isn't a clear alternative.
So you're describing a currency that has that status because of the role it plays in global trade. So if lots of other currencies are doing their bit in global trade, and increasingly so perhaps, and the role of the dollar is dropping a little, do we need one reserve currency? Or can we have many?
Now that question is, I think, very difficult to answer now, but perhaps part of the answer is in the perception that we are moving on to maybe more trading blocks. So, for instance, if we look at what the IMF has been saying in the first Trump administration, because of the trade frictions that he then injected, what we saw was not a decline in overall trade, world trade, but we saw it change. So we saw more trading done within blocks. If we carry on moving into that system, yes, maybe you will see different currencies being more important in those separate different blocks. But it's very difficult to answer that question right now.
Let's go around the world. Do you like the pound?
Not as much as the euro.
OK.
You know, I think...
sell the pound against the euro, buy it against the dollar?
Well, one thing I would say about the euro is that it's come an awful long way. And I would say that the standout performer over the first week, say, after the reciprocal tariff announcement, was the performance of the euro. It was standout. It was doing a really good impression of a safe haven currency. And that perhaps has really gone a little bit too far. And so
you're saying it's not a safe haven currency?
Well,
by
you know,
implication.
I would say that it's only 25 years old. Ever since, you know, in the 90s, economists were warning that, well, you know, how can this currency have longevity because you don't have fiscal union? We've had a debt crisis, 15 years ago. So its history is mottled. But it still has a current account surplus, and I think that is really important. And sentiment in the euro had already become a lot more favourable a month or so ago because of the German debt brake, and because we know that they are going to be spending money. So it's already the fundamentals of the euro had changed. Everyone was thinking, well, that's a real sea change, in favour of the euro. It's got a current account surplus. And really what makes, say, the Swiss franc and the Japanese yen safe havens is because they've got current account surpluses. And there is behaviours. We saw this. I mean, I remember very early in my career, the ERM crisis. People tend to go home, bring their money home when there is a crisis. Hence, safe haven currencies become current account surplus currencies become safe havens, such as the yen and such as the Swiss franc. And then speculators learn to follow that trend. And we do have a current account surplus in the Eurozone. So the euro, was gathering a lot of momentum over the last week or so, but it has come a long way. The ECB are likely to cut interest rates. They don't want a currency that's too strong.
ECB, the euro just needs to grow up a bit, to be honest.
25, it's not old enough.
I'll let it know. I can't even recover from that. Jane, talk to us about what fair value is for the euro at the moment.
Well, at the moment, I mean, you can look at models and say, well, what is long-term fair value? And it could be 120, 125. But, can we get there that quickly? Well, no, because the Europeans would be very uncomfortable if we suddenly surged towards 120. The US officials would be too. So, an interest rate cut from the ECB, the strength of the euro recently, the two things may be linked, or at least to some degree, it may push some people, towards strengthening their argument for an interest rate cut this week amongst the ECB council members. But I think, I was expecting we could get to, maybe 115 in a year's time after the Germans changed their debt rate. We've got there almost, very quickly. So I think we do need a little bit of consolidation. Perhaps we do need a little bit of, pulling back from that. And then we have to see where it goes in terms of, German economic growth. And it is notable that most of the big forecasters who've upped their German GDP forecast on the back of the fiscal reforms, it doesn't hit the growth forecast till 2026 and beyond. Not this year. We're still going to have stagnation this year. Yeah. So I don't think the Europeans would be too happy if the euro went too far.
Can I just point out the pound first appeared in 1489? Doesn't feel like a safe haven.
I was going to say, did do all the growing up it needed to do. Well, coming back to the concept of safe havens, you were talking about the Swiss franc and the Japanese yen. There's a question right now, or a concern right now, that the Swiss currency may get some sort of currency intervention. Should we be thinking about that?
Well, they continue to maintain currency intervention as a policy tool. We know that. But at the same time, they don't want to be pulled out by the US Treasury as a currency manipulator. So that is a concern. So maybe they'll, sit on their hands for now, wait to see if there is a response to that from the US Treasury. But it is a risk. I mean, if you look at the inflation in Switzerland, it's pretty low. They and their interest rates of course, have been cut down to pretty low levels too. So the market, a month or two ago was thinking that's it. Switzerland's done. They won't have to cut interest rates again. And now they have this sort of problematic rally in the Swiss franc, which will just depress inflation probably too much. So it's a risk, but it's something that maybe they're going to feel very uncomfortable about now.
Continuing our trip around the world, if we go to China, there's been a lot of talk about whether the Chinese and the Japanese might be tempted to sell some of their Treasury holdings, given the tensions that exist right now. But then, as Guy was pointing out at the top of the hour, that might do things to China's currency that it doesn't want to see right now. What do we need to know about the way they're managing the yuan that tells us anything about what they're likely to do on Treasuries?
Well, it might do things to the currency that they don't want to do, but also, they hold an awful lot of Treasuries. If they allow the value to go down, well, they're going to take a massive, great big hit in terms of the valuations of the holdings that they own. Politically, it might be a step too far right now. That would be a very difficult issue. In fact, we've had indications from the Japanese that is not something that is going to come up in this week's trade negotiations. The fact that they have this massive holding of US Treasuries. What is more likely to come up, certainly from Japan, is the foreign direct investment. Now, that had been pledged to increase in February when the Japanese were in Washington. They pledged to increase that hugely. They were already the biggest provider to the US of FDI. They thought by promising, a couple of extra investments from some of the big Japanese car manufacturers into the US, for instance, that they would be let off lightly in terms of tariffs. Not so. They were surprised, I think, when the US administration wouldn't allow them off the steel and aluminium tariffs. They certainly want some resolution with the auto tariffs. So the FDI, I think, is more likely to be a negotiation tactic, probably not the Treasury holdings, because that is so politically sensitive.
Very quickly, do you trade that? Do you trade changes in the FDI between Japan and the United States?
I think what we can say is that Japan has a pretty strong hand relative to many other nations in going into these trade talks, because they do provide so much. And also, think of things like shipbuilding. So Trump wants shipbuilding to go back to the US. That could take 15 years. It could take longer. Meanwhile, you've seen American military contractor sign an agreement with a South Korean shipbuilder last week. The US needs Japanese and South Korean shipbuilders. Simple. Japan does have a pretty strong hand. So, but at the same time, it's one of those countries that probably wouldn't mind a little bit of yen strength as well. So I think the yen can remain firm this year.
Lots to digest. Jane Foley, always a pleasure to have you on, the head of FX strategy over at Rabobank, joining us around the table. We're going to stick to that conversation of trade and what that looks like, except this time with a focus on European auto stocks as President Trump floats a potential temporary tariff reprieve on the sector. More on today's Stock to Watch next. This is Bloomberg.
Asia is a continent of contrasts. The region is a nexus of rich cultural traditions and a vibrant hub of trailblazing innovation and modernity. How will it push the limits of technology even further?
Going to space should become as easy as, taking a flight.
If NASA is designing a lander, their approach is they're designing a Formula One car. So we take, say, a Jeep approach.
Min-Seok, give us a sense of how you translate Korean architecture for the rest of the world.
We call this madang. In general terms, it's where we can be ourselves, where we belong.
There is an old saying in Korea that says, "Call me blue, 화이 불지." It means simple but not humble. So it has a tremendous impact on Korean architecture.
People tend to think the robot AI taking the job from them. We want to use the robot as a basic asset, meaning people have an income through the robot.
From space tech in India to robotics in Japan, Asia is driving the future, reshaping industries, societies, and the way we live. Join me as I take you through the bold innovations. Discover Asia's next-gen technologies on Momentum.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
40 minutes, the equity market open. Let's carry on digesting and segmenting what we got yesterday from the US Treasury Secretary. Scott Bessent rejecting speculation that foreign nations are dumping US Treasury holdings. He also downplayed concern about the dollar status as a global reserve currency. He spoke exclusively to AMH. Bloomberg's Anne-Marie Hordern.
We are still a global reserve currency, that we have a strong dollar policy. The dollar can go up and down. If you go and look back at President Trump's first term, I don't remember the exact number, but the dollar in 2017 went down, I can't remember, 7, 8, 9%, and then once the tax bill was done, took off for the remainder of his term.
Have you spoken to the Fed at all about contingency plans, though, if financial stability risks flare up?
Chair Powell and I have breakfast every week, and we discuss a wide range of things. And our staffs are always in contact. We have a markets room; they have a markets room. But and specifically, did we discuss some kind of a break the glass? I think we're a long way from that.
So when was the last time you guys spoke? You had breakfast last week?
We had breakfast last week, and it was an away game. I was over at the Fed.
And no concern so far from the Fed chair on what he saw in the Treasury market?
I think we would have heard from the Fed chair. I think we heard from Governor Collins of Boston on Friday. We heard from Governor Weller today on his thoughts on what tariffs mean. So it seems like business as usual.
When it comes to the Fed chair, his term is up May 2026. So we're almost 12 months out from that. When are you going to start to think about and have these discussions with the president about who should lead the Fed?
Well, we think about it all the time. I think when are we going to start the interviewing candidates, and that'll be sometime in the fall.
In the fall, so about 6 months lead time.
Yep.
The U.S. Supreme Court recently came out with a ruling that the executive branch, the president for now, could oust top officials at independent agencies. And that has some individuals in the market a little bit concerned about what this could mean for the independence of the Fed, which is really a cherished pillar of wanting to invest in America. Do you have any concern about potentially President Trump ousting Fed Chair Jay Powell or the independence of the Fed?
Well, and Marie, I've repeatedly said the Fed has two duties, and I believe that monetary policy is a jewel box that's got to be preserved, and then they have regulatory policies, and I think we can have more of a discussion because the Fed is one among three bank regulators. There's the Fed, controller of the currency, and the FDIC. So I think it's very easy to delineate between those two.
So at the moment, no concern?
No concern.
When you talk to Fed Chair Jay Powell, at the moment it doesn't sound like they feel like the need to step in on this unraveling we saw last week with the bond market. Does the Treasury have any plans to do something if this was to become more unnerving?
Well, look, the Treasury has lots of things we can do, and but again, I think we're a long way from that.
But all options would be on the table?
Sure. But again, we have a big toolkit that we can roll out. We do regular off-the-run buybacks. We could up the buybacks if we wanted.
Scott Bessent, US Treasury Secretary, speaking there to Bloomberg's Anne-Marie Jourdan. So where does that leave markets? So let's get to a conversation, 3 minutes on the markets, with our Markets Live Executive Editor, Mark Cudmore. Mark, good morning to you. So we're 10 minutes from the open here in Europe. Things look a little calmer. The futures picture looks a little calmer, certainly in the US. We could see some volatility, but actually around earnings, a bit of tariff news here in Europe. But US futures do look a little calmer than they have looked. Is this calmness or is this just exhaustion?
It is just exhaustion. It's always tough when you kind of oversimplify the market, but basically there are people that have just lost too much money and they're feeling broken. It's not the time where they've got the appetite to be greedy or want to be a hero. And then there are those who've got this roughly right, and they know that, hey, they've got ammo in their pocket, and this is a market that will continue to provide a lot of volatility in the months ahead. So wait to the next trigger, wait to the next opportunity. Right now, with a shortened week around the holidays, the fact that we're waiting for kind of the next steps on tariffs means there's no reason to rush back into the market. The underlying trends that we've been talking about since January remain very clear. They look quite extended in the short term, so it's very awkward. You've got a short-term time span where you're like, hey, the really logical fundamental trades that are going to work for the next couple of years, they're overextended in the short term. So do you wait for the pullback or do you chase them aggressively now? I think most people are saying, I'm exhausted, I'm tired, let's go through Easter or the next big trigger, next big news headline, and not chase.
Where does the dollar fit into that, Mark?
As you know, Guy, I think dollar has started a long-term depreciation trend in January, and I think that continues to be the case. But the dollar is the one that's probably been most persistent. I think it stays soft into the Bessent meeting with Japanese officials, because there is that speculation. I think your previous guest, Jane Foley, outlined that any Japan deal, and they'll be likely to make a trade deal, would involve a slightly stronger yen. While that's very logical, and I actually kind of agree in that theory, I think there's going to be disappointment those who are speculating some short-term announcement on anything meaningful in the yen. They might allow the yen to appreciate, but they're not going to do some big grand deal. So I think that what we could see is dollar stay roughly soft until then, and then it maybe bounces after then, kind of wears off some of the oversoldness. But overall, this is a market where the dollar is in a long-term downtrend, but it's just overextended in the short term.
Mark, does the dollar follow the moves of the Treasury market?
Look, I think that the Treasury market is a super interesting component here, and I expect that we'll see Treasuries come back under pressure again. I do believe that Bessent could not say anything else, but I don't think that his comments are particularly game-changing. We've got a whole world that is very exposed to US Treasuries and worried about the policies of this administration, worried about what they might do next, and ultimately people want to lower their exposure to those Treasury markets. If you add in the fact that it's expected that we'll see some aggressive tax cuts and an increase in the fiscal stress in the months ahead, I expect long-end Treasuries to sell off again this year, perhaps significantly at some point. But short-term, I'm not particularly worried. I think it is calm for the moment. The market is functioning. It's a longer-term story.
All right, Bloomberg Markets Live Executive Editor Mark Cudmore joining the program this morning. You can get more up-to-date analysis from him and the team. MLIV Go is the function on your terminal. Let's go from the macro to the micro. Get our stocks to watch with Joe Easton. Joe.
Morning, Critty. So LVMH shares set to fall at the open of trading in Paris after a really weak report from the luxury company last night. Here's what the US ADR did in late trading. We can see it dropping around 9%, coming back up a bit, down around 6% on the day in the regular session there in the US. And we're set to see a feed through into peers, given the magnitude of the drop down in the leather goods business. Sales on an organic basis in the quarter down 5%. The market only expected a 1% drop in sales, so really missing expectations. We're likely to see the peers like Burberry, Kering, also potentially Hermes dropping. Hermes has results later this week. And then the drinks as well. Drink sales in wines and spirits down 9% on the quarter at LVMH. That includes Moet Moët and Hennessy, so we're likely to see weakness in Remy and Pernod Campari, Diageo, all the usual suspects on that screen. And then finally, in the cosmetics business, we saw a drop down in L'Oreal's US shares as well when the report hit, because that was another weak part of the report. So pretty much every unit at LVMH missing expectations by a considerable amount. And we're set to see significant drops in that sector today. Then another sector that might do a little bit better is autos. This is after Trump indicated that there might be a bit of a reprieve on the tariffs for the sector, though he hasn't kind of explained what that might look like. But we did see a jump up in Stellantis in US trading. Remember, that's listed in Italy as well, so that one should be higher. And then keep an eye on the other peers, Mercedes, BMW, and the parts as well, like Valeo and also Michelin. Potentially, we're going to see a boost on that. And then a really interesting deal in the semiconductor space, Applied Materials buying 9% of BE Semi. That is a big deal. They do have a partnership already. Keep an eye on that one over in Amsterdam.
OK, we will watch the tech space then, Joe. We might see autos going higher, luxury coming down. We'll also keep an eye on Ericsson. We had numbers out from the telecom equipment maker, so we'll keep an eye on that one at the start of trade. 7:54 here in London. We will be back with the market open. Futures actually quite varied based on your exposure to cars and luxury. We'll be back with that opening trade shortly. This is Bloomberg.
I'm going to give you a prediction that will sound counterintuitive and surprising. I think in 5 years, the total cost will be 1% of today's cost.
Wow.
So 100 times cheaper.
Wow.
Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now, weekday.
What do you think happens to the cost profile in the next few years?
I'm going to give you a prediction that will sound counterintuitive and surprising. I think in 5 years, the total cost will be 1% of today's cost.
Wow.
So 100 times cheaper.
Wow.
If we've got a world of higher uncertainty, probably higher volatility, slower growth, you've got to adjust the portfolio accordingly.
It's more likely that we revisit the lows than we don't.
It's going to be hard to find a bullish or optimistic investor right now.
We have to be careful not to read too much into one-day moves and extrapolate them into the future.
What we're looking for is a very choppy year, unfortunately.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Let's get your week started live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now. Coming into Monday, following the biggest weekly gain of the year so far, the rally resumes as the likes of Apple and Nvidia secure an exemption from so-called reciprocal tariffs. The president warning that any relief might be short-lived, stressing that nobody is getting off the hook.
The tariffs will be in place in the not-distant future because, as you know, like we did with steel, like we did with automobiles, like we did with aluminum, which are now fully on, we'll be doing that with semiconductors, with chips, and numerous other things. And that'll take place in the very near future. I'm going to be announcing it over the next week.
China's Ministry of Commerce urging the United States to take a big stride to completely abolishing the wrongful action. Commerce Secretary Howard Lutnick isn't backing down.
They're exempt from the reciprocal tariffs, but they're included in the semiconductor tariffs, which are coming in probably a month or two.
Did you get all that? So the policy volatility continues, going into a week full of earnings, economic data, and another address from the Fed Chair Jay Powell. And so far, this Federal Reserve isn't blinking.
They don't want to own this because why should they? At a certain point, the policy uncertainty is actually not of their doing this time. And it is hard to know whether it's going to be in the near term, and I stress the near term, the inflationary aspect that's going to be the dominant theme, or the growth aspect. I will just say this. Anyone hoping for a trade limit up kind of morning when it comes to tech stocks, you aren't seeing that kind of optimism anywhere. You have, for example, Steve Capria over at Deutsche Bank. This is still a sell rallies environment. Max Kettner, who used to be the biggest bull, coming out and saying we remain skeptically and tactically cautious on risk assets, especially in the U.S.
So we've got earnings data and Chairman Powell. Let's pick up on one Fed official over the weekend, Neil Kashkari of the Minneapolis Fed. I think investors in the U.S. and around the world are trying to determine what is the new normal in America. He goes on to say, we have zero ability to affect that destination.
And he was talking about how J.P. Morgan and BlackRock were talking about how potentially you could see a 5% benchmark 10-year Treasury yield, and that is maybe price discovery. At what point does volatility become dysfunction? That is the ultimate question for a Federal Reserve, when people largely believe they will only intervene if there is market dysfunction. So far, the pipes seem to be working. I read one note over the weekend saying the house is burning down, but the pipes are still functional. There is this feeling right now they aren't going to get involved. They really don't want to get involved. But people don't believe that they won't get involved if you reach a certain level.
Do you want some good news this morning? So last week, 2-year and 10-year saw a move of 40 to 50 basis points higher on bond yields. This morning, Lisa, we're down 5 at the front end. On a 10-year, we're down 5. On a 30-year, we're down 2. Bob Michael of JP Morgan Asset Management was looking for this, just a little bit of stability to start the week.
He saw most of the sell-off that was pretty catastrophic last week for the bond market as largely leverage trade unwinds. And this, to me, is really the ultimate question. How much is this a positioning shock? And how much is this a fundamental reassessment of American assets? Right now, the only caveat to that is the dollar continuing to weaken at a time when it isn't exactly a risk-roaring, risk-on type of moment. But you're right. The fact that there's a bid into treasuries has to be a sigh of relief.
The dollar a whole lot weaker against the euro. Euro dollar right now, 113.80. Coming up this hour, we'll catch up with Steve Chevron of Federated, staying overweight equities. Ed Mills of Raymond James on this weekend's confusion. And Krishna Gua of Evercore on what he calls an ugly combination of market moves. We begin this hour with stocks rising as President Donald Trump pauses tech tariffs. Steve Chevron of Federated Hermes staying the course, writing, we're maintaining a modest overweight to equities and are looking for opportunities to upgrade portfolio quality. Steve joins us now for more. Steve, good morning. Good to see you. What do you make of the confusion over the weekend?
We're not done. I mean, I think that's the story. I think what we saw last week were two important things. One, what was the primary objective of the tariffs? And it was clear that the non-negotiable element here was China and the national security element of tariffs. This administration is insecure about our security, particularly when it relates to key goods that we source from China. I think the second thing is we probably, it's a big word, but probably took off financial crisis risk when Trump de-escalated a little bit on the rest of the world. I think the one caveat to that is that 10-year. We need to make sure that that's well behaved. If it really is a story of unwinding leverage trades and that's the end of it, then that should run its course and we should get to a stable bond market. If there's something else that's going on, then we may need Fed intervention, but we're not there yet.
Do you think it's one or the other at this point? And what are you looking for that gives you a strong indication of that?
I think it's a lot of little things, if you will, on a Treasury market that's not as liquid and more fragile than you think it is, right? So part of it is unwinding of basis trades. Part of it is meeting margin calls. I'm sure there was some foreign selling to kind of add on. I don't think that was the prime driver, but I think there was some add-on there. And so I think if you're looking for one big thing, you're not going to find it. It's a number of little things on a market that, quite frankly, needs some improvement. And I hope that when this episode's over, the Fed will take some steps to address liquidity in the Treasury market.
There are two aspects here. Yeah. On one hand, you have this question about the American safe haven status and this question of American exceptionalism. And on the flip side, you have this issue of whether treasuries can rally into some sort of weakening outlook. And that is what we're expecting to see from the earnings coming in. How critical is it to see treasuries rally on weaker data to give stock traders some confidence that we're not in a completely new regime?
Yeah, so you don't really worry. It's probably too strong a word, but you don't really worry about moves in the equity market, right? I mean, the equity markets they're important. I'm certainly an equity person, but they generally don't have that reflexivity that bond markets do. They're not as critical to the financial plumbing. So when you see dysfunction in the Treasury market, that catches your attention. This idea, though, of a buyer's strike on U.S. assets, I don't buy it. I don't believe that we live in a world that buys U.S. assets or trades with the U.S. or buys U.S. debt because they like us or because it's kind, right? They do it because they run major trade deficits with it. They do it because there's no substitute to the U.S. consumer. U.S. exceptionalism isn't because we've been nice. It's because all of the Magnificent Seven are magnificently American, and we're the only major economy that still has population growth or working age population growth. So I don't think any of that went away. I think maybe there was some add-on foreign selling. I think what this really had to do with was unwinding of highly leveraged trades.
Given that, do you think it's time to go into some of these tech stocks that got completely beaten up at a time when you still have a tariff regime coming for them, as we heard over the weekend?
So that was our ad at 5,400 on the initial drop. We added large cap growth stocks. If you play this out, right, I think we've taken off those bottom economic opportunities here with at least the pullback on the tariffs around the globe. As you go forward, we're probably past that point of peak uncertainty. I think last week was pretty uncertain. So I think we're probably going to be a little less uncertain than last week. You do have a tax bill coming out that's going to provide some pro-growth. Deregulation is still to come. I think you're going to have a tough earnings season here. But if you think about an economy that's dealing with uncertainty and a little bit of weakness, who in the world is better able to handle that than the very large, enormous cash flow generating tech stocks that are out there that make up that growth index? So that we do think is an area that's going to recover here.
This is an argument that Savita Subramaniam of Bank of America had with us going into the weekend. Do you think we're underestimating the ability of companies on the S&P 500 to adapt to this?
Yes. Let's keep in mind, within our lifetime and not that long of a history, we've seen companies navigate, the near collapse of the entire financial system, and then we turned off the entire economy with a light switch. The fact that we've instituted what amounts to a national sales tax is certainly important for earnings. It's certainly going to hurt earnings estimates. But the idea that these companies can't navigate that, I think, is ridiculous.
The numbers are still huge, though. This came from Paul Ashworth of Capital Economics over the weekend, who said the increase in the headline tariff rate on China specifically remains at 145%. But the effective increase once those exemptions are accounted for is now closer to 106. Still, 106%. On Chinese goods.
Yeah, it's not the worst case scenario, but this isn't good in terms of what the previous trade expectation was. I love that you brought up the idea of companies adapting and adjusting, because essentially what we're seeing is sentiment dropping to the weakest levels that we've seen, both among companies as well as consumers, going back to all of those great depressions and recessions, et cetera. And yet there is this still sanguine outlook. And how do you pair those two, which seem like they're contradictory, the words versus the actions?
We haven't seen the hard data hit yet. And there's an anticipation that the hard data will catch down to some very, very weak soft data. How will you and the team navigate that in the weeks to come?
I think there's 2 points. One is the de-escalation around the globe. What was important about that was not that it lowered the overall tariff level, because it was paired with an increase in China. So the overall tariff level was higher, but it gave companies optionality. In the old regime, before the de-escalation around the globe, there was nowhere to go or hide. Now you can. If you need to leave China, you can go to Vietnam potentially once we have a deal. I think the second thing in terms of the hard data, it's going to soften. I think you started to see a preview of that with the CPI and the PPI data next week. And so it would not surprise us, despite having a constructive outlook here, for us to retest the lows on the idea that over the next couple of weeks and maybe months, you're likely to see employment data soften. You're likely to see some of the inflation data. And I think earnings data is going to soften as well. I think that will then provide the basis for your next move up once you've kind of cleared the deck through that economic softness.
You haven't changed your allocation through all of this.
Yeah.
Everybody else sitting there like, oh, go to cash. This is awful. You've sat there. You've said, no, we're going to be modestly overweight stocks. What would make you rethink that?
What would make me rethink that? If we started seeing less Besant and more Navarro again, I think that would certainly be one. I mean, I think that certainly had a calming influence. So, this idea that you've gotten past peak uncertainty is one. Two, if we were surprised by the downgrade in earnings, we expect earnings are going to come down, somewhere in the neighborhood of probably 5 to 10%. Anything outside of that. But again, what I step back to is this, and we were talking about this before we went on the air. The moment you accept a fee, you're no longer allowed to be afraid, right? That's what we provide for that fee, is to be clear-headed about it. And what you have here is a tax with other offsetting tax cuts potentially coming and deregulation, and companies that have proven that they can navigate this over time. And we don't think that changes the long-term outlook for the earnings power of these companies. They will adjust around this.
Level-headed. Steve, it's good to see you, as always. Steve Chevron there of Federated Hermes. I've got some more good news for Steve. A little bit later on, you'll see more of Secretary Scott Bessent, the Treasury Secretary, sitting down with Anne-Marie in Argentina. They will be speaking at 4 p.m. Eastern Time, so don't miss that conversation a little bit later. Equity futures on the S&P 500 here up by 1.2% with an update on stories elsewhere this morning. Here's your Bloomberg Brief with Danny Berger. Hey, Danny.
Hey, John. President Donald Trump pledged that he will still apply tariffs to phones, computers, and popular consumer electronics. The comments downplayed a weekend exemption as a procedural step in his overall push to remake U.S. trade. The president told reporters aboard Air Force One that his decision will come soon. Goldman Sachs and UBS see more upside for gold. In their most recent calls, UBS sees $3,500 an ounce by year end. For Goldman Sachs, it's $4,000 an ounce by mid-2026. The strategists both cited strong central bank demand and gold's role as a hedge against recession and geopolitical risk. And in sports, Rory McIlroy has added the long, elusive green jacket to his resume with a win at the Masters. McIlroy ended a decade-long major drought in dramatic fashion, recovering from 2 double bogeys to reach a playoff round against Justin Rose. McIlroy then hit a stunning drive to set up birdie on the 18th hole, beating Rose by just 1 stroke. The win marks his 5th major title. He's now the 6th ever player to achieve a career Grand Slam. And that's your brief, John.
Danny, thank you. A massive congratulations to Rory McIlroy and the team. CBS and Jim Nantz doing a phenomenal job through those 4 days. Jim Nantz put it best. Rory has his masterpiece. If you can take 2 things away from the weekend, the resilience of Rory McIlroy, the grace of Justin Rose. Just absolutely wonderful to see yesterday evening.
I was impressed that you came in last night because I expected you to be watching this game, and I know that you sacrificed, but it came out for you. So I just want to offer you congratulations for a well-waited-for victory.
I raced to the car and watched the playoff.
I imagine that was the case.
I wish it hadn't gone to a playoff, but I raced to the car to
So you got to
watch
watch
the playoff.
it, so it's a good thing.
Just congratulations, Rory McIlroy. Just absolutely phenomenal. Up next on the programme, the President attempting to keep the pressure on.
The tariffs will be in place in the not distant future, like we did with steel, like we did with automobiles, like we did with aluminum.
और गाइस ये नेचुरल गैस में ना ये ब्लू कलर की लाइन तक ही टारगेट है. नेचुरल गैस का टारगेट इतना ही है. इसके ऊपर अगर निकलेगा तब देखेंगे, अदरवाइज यहाँ से वापस सेल कर देंगे. थोड़ा सा व्यू बेयरिश लग रहा है मुझे इसका, जिस तरह का प्राइस एक्शन बिल्डअप हो गया है. क्रूड ऑयल भी रेजिस्टेंस पे पहुंचने वाला है. काफी देर से रुका हुआ था नीचे वाले लेवल पे. लेट्स सी ऊपर वाले लेवल पे रुकता है तो. Like भी करते रहो guys. Don't forget to like the stream.
What I've told folks at Raymond James is that there's 3 buckets. Number 1, kind of that global tariff, that's getting revenue for these tax cuts. Number 2, it's national security, which is what we're talking about here. And number 3, those reciprocal tariffs really are about trying to get other countries to change their policies. So moving some of the semiconductors and other electronics from that policy change over to the national security is a relief from the 145% in China. But I have to remind folks at Raymond James is that those national security tariffs are probably going to be stickier, and it's going to be very hard to negotiate those away, John.
So where does a fentanyl bucket go into the national security, as well as the trade rejiggering, as well as the revenue buckets?
Yeah, I put the fentanyl bucket into that bucket 3 policy change, because if Mexico, China, Canada is included, never really understood why. If they're able to make policy changes in each of those countries, Donald Trump says those go away. I think the fentanyl for Canada, Mexico is really about trying to move forward the USMCA negotiation. Again, a policy-related change that Donald Trump is seeking, Lisa.
There are a lot of people who are on board with a lot of these goals. In fact, there are bipartisan support pretty much across the board, particularly for national security. Larger questions about how it's being rolled out and whether we actually know what the given tariff rate is at any given time. Ed, do you have a sense of what the actual tariff rate is, whether it's on China or whether it's on Europe?
I have what the executive orders and what the U.S. Customs and Border Patrol tells me. But when I talk to companies here at Raymond James, they tell me they don't know how to plan for this, that if they move kind of production from one country to another, is that tariff rate going to stick a week from now, a month from now, a year from now? And so, while there is some relief, if companies don't know what their tariff rate is anytime into the future, they just hold steady. They don't make changes. And another thing that I've heard from a number of companies is that if they move production to the United States, because of the costs of goods sold, these raw materials are actually going to have higher tariff rates than the finished goods in a number of instances, is actually a hindrance to getting things moved to the United States at this point.
Ed, we started the conversation this morning with an investor who at the moment is still bullish and overweight US equities. Lisa asked him what it would take him to become bearish, and he said more Navarro and less Besson. From your standpoint, how important is the personnel issue at the moment, and how have things changed over the past few weeks?
Yeah, we've told folks at Raymond James here that there's 2 teams, Team Econ, Team Tariff. It was very clear that Team Tariff was driving the bus for the last month. In the last week, it's gone more to Team Econ. That's a good policy shift from my perspective. The problem that I continue to have is even though it's over at Team Econ, we still have 145% tariff on about 75+% of goods coming out of China. We have a global tariff of 10%. We have tariffs coming on semiconductors and, quote, other things, pharmaceuticals. Jameson Greer yesterday said a lot of those investigations might actually already be ongoing. And so, yes, I get a little bit of comfort moving over to Team Besant and Team Econ, but the tariffs that are in place right now are much higher than anyone would have anticipated. And if Donald Trump just started with this, it would have been freak out. It's just because he's moved the goalpost so far that it seems like relief when it's only 25% or it's only 125%, depending on which country you're talking about.
As we have these 2 camps that are battling it out in terms of the cabinet of Donald Trump, how much are your companies that you talk to worried about a diminishing of the American brand? And I say this at a time where the dollar is weakening yet again. This could be a positive for companies. It could increase potentially their exports. It also could be a negative if you see something that we've seen with respect to Tesla sales overseas percolate into other industries. How much does that come up with you?
It hasn't come up as much as I would expect. I think there is more of a question about what is Donald Trump's endgame. And one of the things that we've noticed in the market and noticed in conversations here at Raymond James is that the more that Donald Trump seems to double down, the more investors think this is an unsustainable path forward and ask me a lot more questions about how does the courts end this? How does Congress step in and end this? So it is a risk, and there certainly could be some diminishment. But the more that is pursued, the more that people are looking for escape valves. And I think there's a really good court case or there's a real political pressure that gets on Congress if this does go too far.
Ed Mills of Raymond James. I'd appreciate your time, sir. Thank you. Just yesterday, we caught up with Libby Cantrell of PIMCO. Libby Cantrell said almost exactly the same thing about the release valve that could be used down in Washington, D.C.
She said the big news over the weekend was that the exemptions that were announced on Friday essentially made this president more vulnerable to using IEEPA, the Emergency Powers Act, to enact some of these tariffs, the 145% tariffs on China. So it actually undermined and weakened their case to really be able to execute this. If it is an emergency national security issue, why do they have to give an exemption to 20% of all of the exports coming into the country?
It's a good point. It's a question she asked as well. Equity futures this morning positive still. We'll see if this holds. We're just about holding right now, up by a little more than 1% on the S&P 500. Up next on the programme, Nita Richardson of ADP as tariffs weigh on consumer sentiment. You, Mitch, was ugly, ugly, ugly. Going into the weekend, we'll break down that economic data in just a moment. Last week posting the best week of the year so far on the S&P 500. Equity futures add to that, up by 1.2% on the S&P. On the Nasdaq 100 this morning, up by 1.4 with 3 hours until the opening bell. Let's get you some morning movers with Danny Berger. Hey, Danny.
Hey, John. Apple leading the gains amid that tech outperformance with the exemption for electronics from tariffs, as temporary as that might seem to be. So Apple up just under 5% this morning. But keep in mind, this thing is down more than 20% from its peak. So a lot of bad news already priced in. KeyBank raising its call on tech, saying that the actions from the administration over the weekend remove a key risk. But I don't think a lot of people would agree with this. They are not out of the woods yet. Intel also rallying with the rest of tech, but getting an extra boost this morning from Bloomberg sources telling us that they're going to be selling the programmable chips unit to the PE firm Silver Lake. Those shares up 4.5%. Sources say, though, that the deal is not final and it could still get derailed. And we have certainly seen a lot of deals get derailed because of market volatility. Finally, just rounding things out with a check on where Goldman Sachs stands this morning. It is higher in the pre-market session, 2%. We're going to get earnings from them in about an hour's time at 7:30 a.m. Eastern. We had strong results from their peers, especially when it came to equity trading. So that's the bar for Goldman Sachs. John.
Danny, thank you. Decent numbers from both Morgan Stanley and JP Morgan going into the weekend. On our radar this morning, President Donald Trump pledging to apply tariffs to chips, phones, computers and other consumer electronics, writing, quote, nobody is getting off the hook. His comments coming after he announced a tech tariff pause over the weekend.
So clear as mud. And this is basically what everyone's talking about, the fact that we're not necessarily getting a sense of exactly what the path is going forward. A key question to me is, how do you escalate? And you raised this question yesterday. Is this sort of peak escalation given the fact that China is saying, look, at this point it's silly. This is a joke. You raise it beyond 445%. We're basically just making up numbers here. Can it get worse? What about the rare earths metals? What about some of the other exports? What is the leverage that each side has at a time where both economies are still intricately connected to one another?
I think on the margin, to your point, there are other things they can do. It can get worse. I think the focus, though, will shift to other things, and it's the economic data. The damage done to the soft data is real. It's been building now for a number of months. And there are some people who believe that the damage to the hard data is unavoidable at this point. And my focus is certainly shifting to try and understand what that's going to look like in the next few months.
You saw that this morning with Morgan Stanley, among others, coming out and downgrading their expectations for EPS as we come into this earnings season. That is the first data you're going to see it in. That is going to be the hard data. The companies talking about near-term disruptions in demand. We saw that from Delta. If you read through their earnings transcript, they talk about how domestic travel has really taken a hit, how you're not seeing that kind of filling up. And I have to say, I took a plane recently, and I was shocked at how empty it was. Anecdotally, these planes used to be packed to the gills, and now you're actually getting upgrades. I mean, it's a very strange moment.
I've heard the same thing. We'll hear from United a little bit later on. Good for you getting the upgrades, though. Let's get to the data from China. China's exports rebounding in March with near-record shipments flowing to Southeast Asia. The Customs Authority saying exports rose 12.4% from a year earlier, reversing a 3% decline in the month of February. Lisa, you made the point out on X earlier on this morning, I think. It's important to look at exports, sure, but imports tell you a story as well in China, and it's not a great one.
So Brad Setzer, who used to work at the Treasury Department and is really a brilliant analyst in terms of trade dynamics, put out a series of charts saying that China's trade surplus has skyrocketed over the past few quarters and has not just been with the United States. It's pretty much tracked with the EU as well. So people who say this is all due to companies front-loading imports from China to get ahead of tariffs, That's not the whole story. It's also that China is not importing anything from anyone. This could be one of two things. One, a focus on nationalism and focus on their national brands. And two, and this is a key one, the economy still isn't recovering. How do you juice demand at a time where it's still flat on its back? And that is a big piece of this story as well.
The Treasury Secretary pushing aggressively for China to rebalance their economy, and no real signs of that happening just yet. We're going to see a bunch of negotiations take place over the next month or so. Japan's Prime Minister saying he won't rush to compromise with the US in high-stakes trade negotiations this week. Local media reporting the country's economic revitalization minister will be heading to Washington on Wednesday.
So a couple of things here. First of all, over the weekend, we did hear from one of the leaders in Japan saying that they were not going to use U.S. Treasuries and selling U.S. Treasuries as a negotiating tool. So people who are suspecting that Japan was behind the turmoil, you can back off. That's basically what they were saying with number one. Number two, what's interesting is they have somehow gotten a hearing with Scott Bessent, which a lot of people think is a very positive sign in terms of their ability to get some sort of exemption. I love that people are using Bessent versus Navarro as the litmus test of whether things are making progress or not, but here we are.
We're baking down trading to risk on, risk off based on whether you see Navarro or Bessent. Is that how this works now?
Pretty much we're going to have a tally where it's, Bessent appearances, risk on, Navarro.
It's risk on right now. For equities, at least. Equity futures positive by more than 1% on the S&P. If you are just joining us, if you're looking for stability in the bond market, you've got it at the moment. We're down across the board here, across the curve. We're down 6 or 7 basis points at the front end. On a 10-year maturity, the yield is down 6 to, let's call it 4.43. Let's turn to the economy. US consumer sentiment falling to its second weakest reading on record, while inflation expectations soar to multi-decade highs. Nita Richardson of ADP writing, inflation has made consumers cautious, but rising incomes can help cushion any tariff-driven price increases if they come. Nita joins us now for more. Nita, good morning.
Good morning.
Let's just focus on the data and get away from the politics. Are incomes still rising?
You know, we're seeing that when we look at payroll at ADP, they're certainly rising, not as fast as they were 2 years ago, but at a healthy clip, faster than before the pandemic. There's also a different source of income that's really important to think about, which is the housing market. We get housing starts later this week. Home equity for homeowners is up almost 9% from a year ago. So, no, it's not the highest home equity we've seen on record, but it's close. It's like the third highest. And so that's another level of cushion. I don't mean to be too Pollyanna on a Monday, but I also want to give a real data reality check to all the uncertainty that's out there in the market.
I was just going to say, you're not complying with the narrative. I love it. I think it's great. And I think it's good to push back against it because there's so much gloom and doom about companies who are frozen, who aren't going to be hiring. They're not going to be firing, but job mobility just isn't there. You're still seeing just some signs that consumers are maintaining resilience through other means, even with the stock market that maybe rallied last week, but certainly didn't feel like it, and even with the idea that it might be harder to get a raise.
You know, I don't discount the sentiment because sentiment usually triggers certain behaviors. And you see downbeat sentiment with consumers, with home builders, with CEOs. Everywhere you go, there is a pessimism in the outlook. But then when you turn to the raw data, this week is super important. Why? This is the reference week. This is the week that the BLS will start counting the number of people who got paid for their employment report. And this is the week that ADP will report in 2 weeks to talk about the labor market. And if you look at this week and you compare it to March, what you're seeing is that hiring is still solid. And if you look at one area of sentiment that is holding up, worker sentiment, we're actually going to produce a worker sentiment index tomorrow, publish it at adpresearch.com. What you'll see is that while consumers are downbeat, workers are highly engaged. They're plugged in. Maybe it's because they're cautious about their job loss, but they're showing up, they are engaged, and they are productive. And they're doing so because they want to make sure that they keep those jobs as they move into the rest of the year.
So quiet quitting has died, basically, is what you're saying, which is actually
we're seeing less
really welcome.
Of it.
That's fantastic.
We're seeing less of it.
I'm curious. You say that hiring is remaining solid. Mm-hmm. Is it in specific industries that give you a sense of potentially whether this is a resilience factor or whether this is people getting old and needing to cater to them of getting factor?
Yeah, that's a great question because we really do see a good news, bad news scenario there. We're seeing hiring across firm sizes. That's good news, especially if you look at small businesses who are price takers in the global input market. We're seeing solid hiring across the board, but not every industry. In fact, if you look at consumer-facing industries, they're somewhat discretionary, like leisure and hospitality. It's been weaker. If you look at retail, also weaker. So we're seeing hiring in, ironically, manufacturing. So we don't know if that's pull forward hiring to get ahead of some of these tariff and trade changes, or if this is a real rebound. And we're seeing it in B2B services, but not so much in consumer-facing industries. That is a sea change, and it's tied directly to consumers and how they're feeling about the economy.
You talked about the importance of expectations. Let's talk about how consumers are feeling about this economy. You met out on Friday. Consumer sentiment almost 3-year low. Inflation expectations, multi-decade highs. Unemployment expectations, the worst since 2009. Are you seeing anything in the hard data to validate consumer confidence that weak, that poor, that we saw on Friday?
On the labor market, no. Layoffs are at, a 2-year low. They continue to hover around those 2-year lows in the private sector. Different for the federal government, but in the private sector, we are not seeing that kind of upturn and upheaval and pause in hiring that is being projected or picked up in the sentiment. Now, things can change rapidly. I'm not saying that the outlook that we're seeing right now is going to be consistent 6 months from now, but if you're looking at the starting point and the baseline, you're seeing, and I think Chair Powell said this in his recent remarks, a labor market that is solid and continues to perform.
Still this massive spread, Lisa, between the soft and hard data. I keep going back to that headline from you, Mitch. To see unemployment expectations down at the worst levels we've seen since 2009 is pretty staggering.
It was funny. You were mentioned that in the past couple of weeks. Lori Calvasina put that out in a report saying that in all of the earnings calls, also corporate executives have been talking about how this reminds them of 2008. This reminds them of 2020. This reminds them before that of the 2000s. You see that in the AAII sentiment survey as well. So at a certain point, have we really reached a new paradigm shift, though, where suddenly the soft data has not been predictive of the hard data? Or are we going back to something more normal, where you would normally see a correlation there?
So the Federal Reserve's not blinking, and neither the Federal Reserve will be meeting in early May. That meeting concludes. We'll get that decision on May 7th. What do you make of how they've navigated things so far, and what would you expect to see in a few weeks' time?
I think the Fed has navigated the way Main Street has. They're waiting and watching. There hasn't been any big money moves that we can identify. And I think it's too early on the policy front to make any firm movements. And that's what you're seeing from the Fed. But it's also what you're seeing from small businesses and medium-sized businesses who can't change operations on a dime. Consumers can't change spending patterns on a dime. So what you're seeing is an economy that started from a solid baseline in wait-and-see mode, just like the Fed.
There was this discussion that we had, and it was off air, about whether this Fed is going to be really just targeting dysfunction in the Treasury market or whether they actually were going to be looking at levels. We're not going to close the spreads until the spreads get too wide, and then we're going to close them akin to maybe what the ECB has been doing. I am curious about this theory that Neil Kashkari put out over the weekend, saying that we at the Fed have zero ability to affect that destination of 10-year yields as investors try to get some sort of price discovery here. Do you believe that, or do you think that there is a level at which they do step in?
Well, I think this comes to your sentiment momentum distinction. I mean, the Fed operates at the short end of the curve. That is their mandate. And so I think if you take the literal interpretation of the Fed's actions, yes, they're not responsible for the longer end of the curve. But we know that the Fed has a huge sentiment role in all of this in itself. And just by their forward guidance, they can change the way the bond market reacts. So yes and no, hard and soft. We're still back in that distinction.
So I guess to sum it all up, do you see the unemployment rate rising quickly enough to get the Fed engaged in terms of cutting rates or having some sort of stimulative effort in the near term, in the next 2 weeks, the next 3 weeks, before, or the next 2 months, right before the economy really can turn?
Not in the next month, no. We have not seen the transmission mechanism multiply to an effect that it hits the real economy in a way that you would see the kind of staggering job loss that would justify on its own a rate move by the Fed. The labor market is still holding up. 209,000 private sector jobs created, according to the federal government last month. That's not going to be a downbeat measure by anyone's estimation.
Nita, it's good to see you. As always, thanks for dropping by. Nita Richardson there of ADP. Step 1 of the Federal Reserve is to pledge to anchor inflation expectations. Step 2, they've basically told us if unemployment breaks, to Nita's point, they're going to step in. We saw that last summer. At the moment, that's not breaking at all.
And it's unlikely that it's going to break, at least in the near term, even as people ratchet down their recession calls. At the same time, they also have this off-ramp of dysfunction. Define dysfunction. Good luck. Have a good time. Say that it's necessarily some sort of failed trades. That's not happening. Say it reaches 5%. Well, they're not saying that, but, you know, things change when sentiment changes.
Is anyone having a good time at the moment? I'm not sure they had a good time last week, even with that 5 to 6% move in the equity market.
So to me, the idea that Jim Reed and Henry Allen at Deutsche Bank put out was really telling. That financial markets experienced one of their most tumultuous periods in living memory. That last week we saw the biggest sell-off since 2020. We saw the biggest rally since 2008. We saw the biggest weekly surge in 10-year Treasury yields going back to 2001, and the biggest surge in 30-year yields going back to 1987. Are you having fun yet?
It was that FX bond mix that got a lot of people concerned, right? That 50 basis point move we saw on a 10-year yield higher, together with the weakness we saw in the FX market, dollar weaker. This morning, if you want an update, the dollar weakness continues, but in the bond market, some stability. The 2-year yield is down by 6 basis points. The 10-year is down by 6. Your 10-year at about 443. With an update on stories elsewhere this morning, let's get your Bloomberg brief with Danny Berger. Hey, Danny.
Hey, John. Police have arrested and charged a 38-year-old man after an attack on the Pennsylvania governor's mansion, where Governor Josh Shapiro and his family live. Suspect Cody Balmer turned himself in and faces charges including arson, attempted murder, and terrorism. Shapiro and his family were evacuated early Sunday morning and are unharmed. Elsewhere, Meta faces a landmark antitrust trial today. The FTC alleges that the tech giant acquired Instagram and WhatsApp to eliminate competition and maintain a monopoly. Meta says the acquisitions were approved by regulators over a decade ago. And Dubai topped Heathrow as the world's busiest international airport, that from the Airports Council International. The Gulf Airport handled 92 million travelers last year, up 6% compared with 2023. Heathrow, in second place, handled about 79 million passengers. And that's your brief, John.
Danny, thank you. More from Danny later on in the programme. Up next, a shakeout in the bond market.
From our perspective, we're seeing a complete deleveraging of positions, whether it's been swap spread trades, whether it's been the Treasury basis, all those things have begun to unwind, and it's put a lot of downward pressure on Treasury prices.
That conversation just around the corner, live from New York City this morning. Good morning to you all. You're watching Bloomberg TV.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I'm Alex Rodriguez, executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Jay Williams.
I want to be an owner one day.
Billie Jean King.
Learn the business.
Paul Rabel.
Don't chase trends. Get ahead of them.
And so many more.
Live from New York City, welcome to the programme. Equity futures still positive here, holding on to gains, up by 1.3%. The bigger gains coming from big tech on that tariff exemption, if we can call it that. The president's saying we can't. But ultimately, that's what it looks like. Up by 1.5% on the Nasdaq 100 this morning. Under surveillance this morning, a big shakeout in the bond market.
From our perspective, we're seeing a complete deleveraging of positions, whether it's been swap spread trades, whether it's been the Treasury basis, whether it's been investors who sold Germany and bought the U.S., all those things have begun to unwind, and it's put a lot of downward pressure on Treasury prices. It's a one-time price reset for tariffs that will create demand destruction and lead us to recession.
So here's the latest this morning. US Treasury is looking to rebound after posting their biggest weekly loss in some 2 decades. And of course, Krishna Gua writing the following. There are only 4 other episodes in the last 30 years in which the dollar appreciated, or rather depreciated, more than 1.5%, with the 30-year bond yield at more than 10 basis points. Krishna joins us now for more. And Krishna, we saw that last week. I'd love your view on this situation. How concerned were you at times seeing that kind of price action through last week?
Yeah, very concerned, to be honest. This kind of behavior, yields higher, currency lower, is what you see all the time in emerging markets that come under pressure. It's what you saw in the UK during the Liz Truss debacle. We do not see this kind of behavior in U.S. markets other than in exceptional times. The one period in the last 30 years where you saw some price action of this kind was shortly after Lehman failed. So this is absolutely not business as usual. And when you see this combination, essentially what it's telling you is global investors are taking money out of the U.S. and reallocating it to foreign markets. That's the only way you get the combination of yields up and currency down. Now, as you say, maybe the market's going to try to consolidate some today, but we need to keep a very close eye on this going forward.
Krishna, how do you determine whether this is a sell America moment versus some sort of leveraged trade unwind, which is what a lot of people have been saying?
So I think it's clearly a bit of both, right? And part of the risk right now lies in the scope for interaction between global portfolio reallocation, slightly smaller allocation to the U.S., increased allocation to other markets, in particular Europe, but not only Europe, Japan, some other places, and the ongoing delevering, degrossing in the hedge fund community around basis swap spreads and so forth, which have so far proceeded relatively orderly. But when these two forces are operating at the same time, there is some additional risk, of course, that this could start to get out of hand. And that's why the Fed certainly would want to keep a close eye on this. Just very quickly, how can I tell you with very high confidence that it's not all leveraged trade unwinds? Well, if it was, it would be yields higher, but it wouldn't be dollar lower. The dollar lower piece has to have a cross-border aspect to it.
There is a cross-border aspect to this question of how much people had overweighted the American exceptionalism story.
Yes.
And this idea that suddenly people are pulling back. And there is this argument being made that it was strange that the dollar was as strong as it was based on the fact that the Fed had cut by 100 basis points and that typically you would see a dollar weakness at that point. But that didn't happen because of this belief in American exceptionalism. At what point can you say this is actually healthy? This actually balances some of the imbalances that came from an overly strong dollar.
Well, again, some dollar moderation in and of itself could be constructive, could help, in terms of the process of rebalancing the U.S. economy and so forth. But dollar depreciation that comes along with rising yields, that is not good news for anything, particularly not for a country that runs a very large structural deficit that might be about to go into a recession, that is considering tax legislation that's likely to increase rather than decrease the deficit, and with some risk that if things get bad enough in terms of the economy and unemployment, that the current administration and its allies in Congress could be tempted to go for broke with still bigger tax cuts. The tricky thing here that it's really important to understand is, what is a trade deficit? A trade deficit is a capital surplus. And the actions of the U.S. administration in seeking to draw back from international economic engagement, to threaten its creditors with Mar-a-Lago Accords, user fees, this kind of nonsense, runs the risk that the foreign investors who are a core part of the U.S. Treasury market may have reduced appetite to purchase this debt at precisely the time when there's upside risks to deficits. So it's not that dollar moderation is a problem. It's that we need to think through the interaction of what's going on in the dollar and what's going on in the bond market. In effect, what's going on in the trade account and what's going on in the capital flows.
Begs the question, Krishna, does the Fed actually have a role to play here or not?
Well, the Fed has potentially, of course, two different types of roles. One is to intervene in the Treasury market or adjacent markets like the repo market in the event that there is severe stress on market functioning. That's not linked directly to the level of prices or the level of yields. It's about market functioning, though, of course, when market functioning breaks down, prices can overshoot. The two are not perfectly separated. Right now, market functioning is okay. It's hung in there. It's not great because there's, sort of long one-way traffic, but it's held in okay. And so the Fed on that basis will, I think, continue to hold fire, will only intervene for market functioning purposes if there's a more severe deterioration in market functioning, which could come at any point, but isn't there now.
Krishna.
Separately, of course, the Fed has to deal with the macro impact of all of this.
They've got a lot of work to do potentially on May 7th. And May 7th feels like a lifetime away. It's good to see you, sir, as always. Thanks for breaking that down. Join us again soon. Krishna Gua there of Evercore. That's Evercore's view. Deutsche Bank, very direct. George Saravelos over the weekend. If recent disruption in the US Treasury market continues, we see no other option for the Fed but to step in with emergency purchases of treasuries.
Well, we heard the same thing from Bob Michael. At a certain point, they have to step in. At what point that is, they'll feel it out.
Up next on the programme, Peter Chia of Academy Securities, Henrietta Trays of Veda Partners, Gerard Cassidy of RBC with Goldman earnings just around the corner, and Vivek Arya of Bank of America from New York City. This is Bloomberg.
There's greater uncertainty around the U.S.
Uncertainty doesn't do it justice.
That max uncertainty that we all keep hoping to get behind just continues on a daily basis.
The market does want to know that there is some put from policymakers. You're completely switching around the world order of the last 40 years.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning to you all. The second hour of Bloomberg Surveillance starts right now, and your price action looks like this. Equity futures gaining by 1.4% on the S&P 500. Some outperformance on the Nasdaq. A relief about exemptions for the likes of Apple and Nvidia. Apparently that relief will be short-lived. Stay tuned for an explanation of that in just a moment. Some good news in the bond market. A lot of you spooked by the moves of last week. This morning, yields are lower by 5 basis points on a 10-year, 443 on 30s. We're down a basis point or two. This hour, we'll hear more from corporate America. Goldman earnings just around the corner, 30 minutes away. As we work our way through the week, you'll get more economic data and earnings. And Chairman Powell's on the calendar. Chairman Powell speaking this coming Wednesday.
Which potentially could be the main event. The big question for him is how does he respond to what a lot of people are saying isn't quite dysfunction, but is feeling a little bit like dysfunction. And given the fact that people have typically seen the Fed step in at times of great uncertainty, given the fact that people are drawing analogies to 2008 and 2020, you would expect them to do the same. So far, the answer is not our problem. You deal with it because right now there is no dysfunction. Ultimately, the other big event to me is going to be earnings and how corporates really guide ahead.
More from Goldman in about 29 minutes' time. Let's sit on that market move. I think it's important. So last week we had a 50 basis point move higher on a 10-year yield. And at the same time, we had a weaker dollar, not a stronger one. The dollar weakening by almost 3%. That spooked people. And they're looking at two options here, Lisa. Either it was a big unwind of trades and a risk aversion period, a big bout of risk aversion, or you're starting to see some leakage as people step away and question the safe haven status of the United States.
And we've heard conflicting things from different people. Some people, like Bob Michael, attributing it much more to some sort of leveraged trade unwind. Jordan Rochester said, regardless of what it is, Trump seeing a watering down of tariffs, but still dollar weakness and U.S. rates still selling off. They were at least late last night in the futures market. He said it's a horrible, toxic combination. And right now, the fact that the dollar is still weakening gives you a sense that maybe something else is still at play, especially given that this rally, certainly in the 30-year, doesn't scream some sort of rebound after the worst weekly sell-off since 1987.
That dollar weakness continues. DXY down by 0.6%. The euro stronger against the weaker dollar. That currency pair 113.86. Coming up this hour, we'll catch up with Peter Chia of Academy Securities as investors brace for more volatility. Henrietta Trays of Veda Partners on this weekend's policy confusion, and Gerard Cassidy of RBC reacting to earnings from Goldman Sachs. We begin this hour with stocks higher, looking to build on their best week since 2023. Peter Chia of Academy Securities writing, for the first time in weeks, I'm optimistic about the outlook for the economy and for markets, but it is tempered slightly by all the measures it took to get here. Pete joins us now for more. Pete, good morning.
Good morning.
Where's the encouragement come from?
Well, first I wrote that like at 9 a.m. on Sunday, so I'm probably not quite as encouraged as I was. For me, what I would really like to see is a true pivot towards domestic growth, right? Let's get the CHIPS Act money out there. You know, last Thursday at the cabinet meeting, a couple of the people talked about shipbuilding. I think we have to spend some money, do some things, domestic growth, long-term contracts, either with shipbuilders, something to, that we can really get our hands around and grow, build up manufacturing without necessarily having to fight with the rest of the world.
Do you think it's likely we'll see that?
I'm increasingly dubious. I did not like, all the mixed messaging we got on tariffs over the weekend, right? From Friday night, no exemptions to more exemptions. And I think I'm a little bit worried about bond yields as a whole. Partly, I do think foreigners should be selling. I think you can get better yield in your own country. There's all this talk about, potentially fees on foreign holdings, Mar-a-Lago Accord. But beyond that, if you just take away, I think we missed three things last week. The budget for the military, Trump wants to do $1 trillion instead of $800 billion. That's going to add to the budget. We just had very large debt ceiling raises. That gives them the opportunity. And finally, DOGE at the Thursday morning cabinet meeting basically said they're targeting $150 billion for this year instead of $1 trillion. And places like the Wall Street Journal and things are reporting that they can't even come up with $150 billion. So we are not on the right track on the deficit, which I think was everyone's big hope. So I think bond yields lead us lower across the board right now until we do something domestic to help growth.
Bond yields lead us lower. Can you elaborate on that? By the way, coming out and saying that you're optimistic and then this litany of negatives really is just,
Well, he did say he wrote it at 9 o'clock yesterday morning.
That's true, which gives you a
Things
sense
change.
of just how quickly things are. So what do you
And
think?
I was very, 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 so I was thinking, we were like heading towards 20% down from here. It feels like it might be more controlled. I will watch very closely today. When we went through the GFC and even the European debt crisis, one thing that always struck me as key when we moved to a new leg of the problem was you'd get the announcement you were hoping for, so in this case tariff exemptions, and if you don't last a full day on the rally, it tends to mean the market's now looking through that and saying, okay, yeah, these exemptions, whatever, let's look what we actually have on the table, and it's a lot of problems out there. And the other part that makes me a little bit nervous that I think we'll see is if we stick to tariff deals, I think tariff deals are easy. I think we're going to have to go after trade deals. And to me, trade deals will require import quotas, something like that on behalf of these other countries, and possibly restrictions on what they can do with China. I don't think that's going to be that easy for them to digest. So I think we'll learn a lot more in this week about deals. Tariff deals, I'm comfortable with. If it goes down trade deals, I think we take another leg lower.
I've seen so many notes where people talk about how exhausted they are and how stressful this period is. And I was thinking about why. And there's this flood of information, and it's hard to understand what structure to even put them in. What have we learned versus just tidbits of information that are coming in at you in rapid fire? Have we learned anything from the turmoil of the past week? Are we past peak uncertainty and heading into something that we can more concretely hold?
So the biggest thing for me that I can't quite figure out, and I think is really critical, is did China get sucked into being more aggressive on tariffs? How we play this out? Did we make it look like it was the U.S. versus everyone? China was more aggressive and now regrets it? Or did we learn that China really doesn't care, that China spent 4 years preparing for this and is really ready for the fight? I lean towards the latter. I will give the people who talk about, art of the deal and 4D chess, that it could be the former. And if it's the former, that's great, because China will have to back off. If it was the latter, we're not really prepared for this at all.
I'm pleased you went there. Is there any sign that China's coming to the table? Do you see anything at all?
No, I think, we have to go back, and we're about 15% of China's exports. And, I think they exempted 25%, whether it lasts or not. But I think that's also looking at it on the raw dollar value. I think from a profit margin, we exempted probably China's most profitable things that they export to us. I don't see them coming to the table. I see the rest of the world talking to them. We've been and which is very dangerous. And again, if you're in that part of the world, you probably have to play nice with China. Their military is there. Their navy is growing. It's unclear what direction Trump wants to go on some of that. And the rest of the world, I think, is very tired. The uncertainty doesn't do well. And everyone knows it's going to take years to rebuild manufacturing, which is why I go back to I'd be much more optimistic if we started doing things domestic. Maybe we buy $10 billion of Navy ships, but they have to be built in a U.S. shipyard. And that's going to be 10 years of delivery, but it can start that process.
We've talked a lot about the pressure that was put on Europe, and it's pushed Europe to do things that is good for Europe. And I just wonder if this pushes China to do things that is good for China, in line with what the president would actually like to see from China, which is a rebalance of the economy towards domestic consumption. Are you hopeful?
No, I just don't think Chinese consume the way we do. I think, quite frankly, no one consumes the way the U.S. does, right? We consume a lot, and that's another concern about the economy, right? We're seeing some delinquencies tick up with all this uncertainty. I think China is going to try and do what they do, trade with the rest of the world, trade with us, and we're going to figure out where they have the opportunities. Again, they've spent the last 10 years building up 90% of rare earths and critical minerals are refined in China. We can get them anywhere. I think that's not the hard part, whether it's cost justified to get it out of anywhere. It's the refining, and again, that's going to take years. So China's putting all this pressure on us. And again, this was ridiculous 5 years ago, when we talked about this at Academy Securities, the number of things that are really critical to military equipment that we were getting from China when we were having all this friction with China was insane. So bringing those back makes sense, but we've done it in such a way that I think we've left ourselves vulnerable in the meantime.
So it seems like we haven't really gotten much clarity when it comes to understanding the off-ramp between U.S. and China negotiations. We do have a sense, though, of what that off-ramp looks like for President Trump to cater to a market, specifically the Treasury market. And I want to go back to something that you said, which is that you think that the bond market is going to lead the rest of the markets lower from here. Have we learned something about where that Trump put is in terms of what kind of levels of bond yields get him nervous?
A little bit, but I think it was very easy with all the noise last week to talk about this as being foreign selling, this basis trade unwinding, right? So, the Fed said they would, they would protect the bond market, which I think they will. They'll buy some here or there. I don't think we're going QE, but I think it was very easy to think of this as a temporary thing. If the conversation starts turning, as I think it might, that our deficit isn't going away, Doge isn't being as successful as we wanted, we are not being spendthrift, I think that starts putting even domestic pressure on yields and people saying, well, maybe even with inflation coming down, we're not at the right level. So that, to me, would be a bigger problem, right? And it'd be hard then. So what can he do? I'm not sure at that point.
Okay, so if you get to like 475, if we get to 5?
I think they're
I'm trying to come up with structures.
I don't know. I think they're begging the Fed to support. And again, a lot of this happened overnight last time. If it starts happening more and more during the day, that's where I think the fear comes out. But I don't know what he can do other than go keeping flip-flopping on tariffs. Yeah. And it feels like they're kind of tired of flip-flopping on tariffs. And the other part is with this whole deficit, right? We were at one time, and it was always confusing how much of that was going to be the case, but tariffs are going to help reduce our deficit. Well, if that income's not really coming in, where are they going to get other income? And I think they're going to target foreign holders of treasuries. Again, there's talk about delisting some of the Chinese ADRs. I don't see what that really does at this point, but that probably triggers yet another response from China. And I just keep thinking that we expect China to make these simplified moves. And we've talked about this before. Xi has learned something. Trump 1.0, Xi was the first one to Mar-a-Lago. Every time Trump said tariffs, they raised their hand, trade delegation. They have played this very differently. So just like Trump administration has had 4 years to plan this, China has had 4 years to plan this, and it's beginning to look like China spent a lot more time and money planning this than the U.S. did.
It doesn't look like a negotiation right now. In fact, Lisa and I were talking about this yesterday. It looks like the U.S. is negotiating potentially with itself at the moment. You're not hearing much back from China. I wanted to finish on one final point with you, because you've been very consistent about this. As we work our way through earnings season, you've really, really raised the flag about the damage being done to the American brand. Not about the attractiveness of U.S. assets, but the attractiveness of U.S. goods, U.S. services. How much damage has actually been done?
I think we're going to see some of that. And this first wave is going to be a little bit difficult to tell whether it's just because of global economic weakness that foreign sales sell down, or you're going to have to start looking, is there an indication that, say, Cadbury, for example, starts doing better than some of our brands overseas? And that, I think, will be the real key. Try and figure out pairs where, okay, here's a European or other brand, and are their sales declining or changing relative to the U.S. brands? And I think that would be a big shock to the system, because I do think people believe, and you can see it in some of the price action today, that there's just this huge demand for our brands globally, and it's only being affected by tariffs. I think we've diminished that as part of this overall, trading strategy, and that's going to be harmful. And I think we may even see some companies talk about it. I think it's too early this quarter, but as this goes on, I think that becomes an issue for the rest of the year.
Interesting. One to watch. Pete, it's good to see you. Thanks for dropping by. Peter Chair there of Academy Securities. Equity futures at the moment near session highs by 1.5%, with an update on stories elsewhere. With your Bloomberg Brief is Danny Berger. Hey, Danny.
Hey, John. A check on Pfizer shares lower by about 0.5% in the pre-market trade. In a major setback, it will stop developing its obesity pill. Pfizer said that in a clinical trial, there was a potentially drug-related liver injury in one patient. It leaves Pfizer far behind its competitors without an obesity treatment in the market. Elsewhere, Japan's prime minister said that the country is in no rush to compromise with U.S. trade negotiations. The country's chief trade negotiator is set to visit the U.S. Wednesday through Friday and will be discussing levies on cars, agricultural products, and FX with Treasury Secretary Scott Bessent. Citi equity strategists have lowered their view on U.S. equities to neutral from overweight, citing the trade war's impact on economic growth and earnings. The firm joining its Wall Street peers and lowering its year-end target for the S&P 500 to 5,800 from 6,500. And that's your brief. John.
Danny, thank you. More from Danny later on this hour. Up next on the program, a brief sigh of relief for big tech.
The tariffs will be in place in the not distant future, like we did with steel, like we did with automobiles, like we did with aluminum, which are now fully on. We'll be doing that with semiconductors, with chips, and numerous other things.
Up next on the programme, we'll attempt to make some sense of the announcements from over the weekend. We'll do that with Henrietta Trays of Vader Partners, live from New York City this morning. Good morning. Later on this afternoon, an exclusive conversation. Anne-Marie sitting down with the Treasury Secretary, Scott Bessent, live from Argentina at 4 p.m. Eastern Time in New York City. Do not miss that conversation coming up a little bit later on this afternoon. At the moment, equity futures are elevated and near session highs. We're up by 1.5%, call it 1.6 on the S&P. Apple is higher by more than 5%, exempted from so-called reciprocal tariffs, but we'll still get hit by tariffs eventually. Yes, really. We're going to make some sense of this now. Under surveillance this morning, a brief sigh of relief for big tech.
The tariffs will be in place in the not distant future because, as you know, like we did with steel, like we did with automobiles, like we did with aluminum, which are now fully on, we'll be doing that with semiconductors, with chips, and numerous other things. And that'll take place in the very near future. I'm going to be announcing it over the next week.
So here's the latest this morning. President Trump indicating exemptions on electronics will be short-lived and stressing, quote, nobody is getting off the hook. Bloomberg's Tyler Kendall joins us now for more. So, Tyler, help us out here. What was actually announced over the weekend and what will be announced in the weeks to come?
Yeah, hey, John. So it appears that these tech imports, including consumer electronics, will now be subject to a Section 232 investigation. That would then allow the White House to impose tariffs on the basis of national security concerns. So as you mentioned, these tech imports now under the sector-specific umbrella instead of the so-called reciprocal plan umbrella. We have to keep in mind that these Section 232 investigations typically take 270 days. That's roughly 9 months. But it appears very evident that this White House would like to see it done sooner. And they've already implemented an expedited timeline on other Section 232 tariffs, including for steel and aluminum imports as well as auto imports. We have to keep in mind also that how these tariffs are designed, it's to be stacked on top of existing levies. And President Trump made clear that all of these tech imports are still subject to that 20% baseline tariff that's been imposed on Beijing since February. But still, no matter how fleeting the reprieve, it is still widely considered to be at least an initial victory for these big tech companies as they try to seek some more permanent carve-outs from the administration. President Trump said yesterday that he was open to having some flexibility when it comes to specific products. But of course, the scope and the timeline here is just still so uncertain. And John, I would just mention very quickly that we should also be watching how this White House messages around critical minerals that go into semiconductor chips and the supply chain in the days to come as Beijing moves to restrict its rare earth mineral exports to the U.S.
Tyler Kendall. Tyler, thank you. Tyler Kendall down in Washington, D.C. With us around the table here in New York, Henrietta Trays of Vader Partners. Henrietta, good to see you.
You too.
Let's just get to this. Are we allowed exemptions or not? Do they exist?
I mean, under the IEEPA tariffs that went on that are already at 20%, there are no exclusions except in the case of, like, if you're giving a donation from a religious entity. The semiconductors are tariffed. The pharmaceuticals are tariffed. Everything coming in, $498 billion, is effectively tariffed. So it's just going to get worse from here.
We're familiar with all these different buckets. Speaking of getting worse, sectoral tariffs. What would they look like and when would they be announced?
So I think that the 232 tariffs are the most pernicious kind that we can get. And in the 2025 environment, 30-day comment periods are pretty much all we should expect. We saw with the auto investigation back in 2019, was it, that they don't even necessarily release the investigation after it's confirmed. You know, they're just putting these tariffs on. So I think for pharma and for semiconductors, the worst case scenario is that sometime in this 30, 60, 90-day window, the tariffs go on, the comment period happens, and the tariffs are on before the summer.
What's the strategy here?
That's a great question. I mean, they want pharmaceutical manufacture back in the United States. We know that that takes 5 to 7 years to get the various approvals for even opening the facility, let alone having the workers come in and actually do the manufacturing. on those kinds of products. I think that the semiconductor space is exactly the same. When I'm on calls with investors, they're talking about, thank goodness we had the investment from the last administration into semiconductors from the Chips and Sciences Act, a bipartisan bill that passed years ago, to keep, providing any kind of support to the industry because it's going to get slammed from the tariffs.
I'm just asking because the complications here are pretty dramatic. Trying to keep track of which tariffs have gone on where is a bold task when you try to talk about what the actual effective tariff rate is, let alone how you plan for the future and what that could be with additional rounds of tariffs coming on. What are people telling you?
That's the stories that I hear the most are the anecdotal data points, as you were talking before about connecting the soft data to the hard data. The bankruptcies that they're expecting, the seizing up at the ports, the manufacturers halting hiring, halting production, keeping their products on ships, in cargo ships. There's a lot of reminiscing about COVID era when the ships were just idling in the port. We're going to have to all go back to monitoring the Pacific Ocean and see what kind of fleets are out there. That's what folks are talking about now and anticipating seeing in the hard data in the next couple of weeks.
Just got a message from a Bloomberg subscriber. This sounds very chaotic. The market seems to have priced peak chaos is behind us. What are we missing? What are we missing?
I don't think the stories have come out yet about how this is going to impact actual domestic manufacturers who rely on foreign imports. You were mentioning critical minerals before. How are you supposed to make, your windshield wiper sensors if you don't have the magnets that go into it? So if you stockpiled enough in the last couple of months to get in around that, you have some certainty for a couple of weeks, but it's not a sustainable situation. I think the hard data is going to come out next for the next couple of weeks and months, and these tariffs are not going to come off, especially if they're done during under 232. Those are the most pernicious. 301 is pernicious. I mean, these have real staying power for years.
And then we need some relief. Taxes. What's changing with the tax push at the moment?
Man, you know how I feel about this. The tax component, they're now, President Trump is talking about it as tax cuts and deregulation. You are not permitted to pass deregulation via reconciliation instructions, and Democrats will not be working with Republicans on a crypto bill or any other deregulatory legislation. So unless you like the emission standards components, which are going to get reduced in a, $75 barrel oil situation, you're not going to see a deregulatory push anytime this year. And certainly not until you get certain agency officials seated in their positions in the first place. And then the tax bill, I think, is going to take until the end of July. And as you know, it includes $4 trillion in deficit increases and very little in the way of new stimulus. So I think there's a disconnect between the narrative and reality.
Given that, is there a loss of power that Trump is having or a loss of a clutch over the Republican House caucus?
I don't buy that argument. They passed the budget vote last week, and I think that was the biggest hurdle. The next step is, are you going to vote for tax increases on every single American, or are you going to vote for this bill? And that's a cut and dry. The whip is easy. All members are going to support that.
There is this theory that if things get chaotic enough and if some of these proposals are outrageous enough, there is going to be the ultimate check, which is going to come by congressional action against some of these tariffs or potentially a court action. Do you see any pathway to that, or are people just wishful thinking?
No, I see no path for that either. If you can get 6 or 7 Republicans to join on to a Senate bill, that is wildly insufficient. I think that President Trump needs these members through this budget vote that happened last week and now through, let's call it Memorial Day or July to pass this tax bill, and then he doesn't need them at all. And no legislation is going to pass. There will be no reconciliation authority. There will be no more legislation, which is, by the way, the playbook from the first term where we got a tax bill initially and then spent the next 3 years doing tariffs. And that's what I expect here.
Just quickly, are we at the point where they're all quoting Treasury yields to each other down on Capitol Hill?
No.
We're not there yet.
I'm not sure we'll ever be there. I wouldn't expect that.
I hope we never get there, because if we get there, we've got major problems.
Yeah. On one level, I kind of hope that they do pay attention because it does actually matter. Suddenly, if you have a 50 basis point increase in 10-year yields, that increases by billions of dollars the amount that the United States is paying. So I hope they do quote those Treasury yields. Congress members, if you are listening, please get a Bloomberg terminal. Take a look at that 10-year yield. Take a look at the 30-year yield.
There's the sales pitch. I'm right there with you.
And plan
you get that
accordingly.
Bloomberg terminal. Clearly, the president was looking very closely last weekend coming into the trading week.
Yeah, it got yippy. People got a little nervous, but he dealt with that in one statement, and that's what he said. The issue is, do we have a true sense of where that Trump put is? Do we have a sense of what level, what type of chaos could potentially end up dealing with some sort of response from this administration?
Henrietta, it's good to see you.
Thanks for having me.
Thanks for dropping by. Thank you. Henrietta Trace there of Vader Partners. In just a few seconds, Lisa, we'll be talking about the numbers coming from the likes of Goldman Sachs after what we heard from JP Morgan and Morgan Stanley going into the weekend.
Yeah, and the key question for me is how much these really represent the broader corporate American sphere, because right now they are seeing a benefit from increased income payments. And even though they aren't necessarily seeing any kind of M&A boom that a lot of people were expecting, they are seeing equity trading benefits. And so we expect to see that as well from Goldman Sachs.
Upside surprise on equity trading. The numbers just dropped. $4.19 billion, the estimate $3.8. The board also approving up to $40 billion share buyback program. We'll have more on this in just a moment. That stock is higher by 4%. Sonali Bassett will break down the figures, and we'll catch up with Gerald Cassidy of RBC for reaction. Live from New York, you're watching Bloomberg TV. Session highs in the equity market, positive here by 1.6% on the S&P, building on the gains of last week. Last week, the biggest weekly gain of the year so far. On the Nasdaq, 7 percentage point move on the Nasdaq 100 last week. Phenomenal. We add another 1.8% to it. Big tech story in focus this morning after the exemptions over the weekend. Big banking in focus now. Let's bring in Sonali Bassett for more. Sonali, another beat on Wall Street.
Another beat, John. And not only are you looking at Goldman Sachs beat on equities trading, coming in with record revenue, overall trading is probably one of the best, if not the best, set of results we've seen since 2008, post-2008. You also have trading coming in with the best results in equities trading across all of Wall Street. They came in above Morgan Stanley. They beat on revenue, they beat on returns on tangible common equity, and they have a whopping buyback program as well, as you had mentioned a little bit before. Now, they missed on investment banking. A Goldman executive told me that there is actually a building of the investment banking pipeline. There's the fourth consecutive quarter of investment banking deals building under the surface. Now, the question is, when are these going to get done in IPO, M&As, and leveraged finance? I would also turn to the commentary, John. David Solomon not mentioning tariffs in the quotes, but saying that they are in the second quarter with a markedly different operating environment than earlier this year. The main question will be, can they continue these trading gains as the environment turns?
Sonali, you touched on it. I think it's really important. Coming into 2025, confidence was sky high for some of these executives, particularly the investment bankers. Your point on that pipeline building, I think, is really important. The difference between activity delayed versus derailed. Sonali, what have we learned over the last few days?
A few things. One is that we haven't been able to see much debt financing. A lot of the deals in the pipeline are private equity related, John. This means all these companies that have borrowed for the last several years waiting to get out the door have not been able to. How fast does that window close is what I want to know. And how willing will lenders be to give these companies money when they are ready to go? And are strategics able to do deals with a regulatory environment that's frankly unclear? There's plenty to point to. Think about HP, for example. Earlier this year, a lot of deal makers are pointing to U.S. Steel, highly uncertain. Still, even without the macro not working out, you have a lot of uncertainty with policy that is stifling deals too.
Do we have a sense, Sonali, of where Goldman Sachs' growth strategy is going to come from? We know that they had the consumer effort that they backed away from. They did report deposits coming up about 9%. They did underperform, though, when it came to wealth management. Do we have a sense of where beyond just the trading and banking business Goldman Sachs could potentially lean on?
Yeah, the asset and wealth manager are exactly where executives are pointing to. They have been pointing to that for months, for years now, to be the next steady revenue stream. In this quarter, very interesting. They actually posted a loss in their equity investments unit. Now, this is a small amount of money relative to what Goldman makes overall, but it is the place that they're trying to grow, asset and wealth management overall. They also missed on their debt investments that they hold as well, but they are reducing the size of their balance sheet. Now, this also leads to legacy. It's President John Waldron. He's been building this business. It's Mark Nachman, who's been over at that business as well. All of these folks are kind of the next generation of Goldman Sachs, and building that business is why you're not seeing them get the same multiples with companies that already have those businesses built out in a larger way, like JP Morgan and Morgan Stanley. JP Morgan is trading at 2 times book. you have Goldman trading at 1.4.
Shanali, appreciate the update. As always, Shanali Basak there breaking it down. That name in the pre-market up by 2.5%. Two headlines jump out here, Lisa. One, big upside surprise on equity trading revenue. Following some upside surprises elsewhere on the street, that number came in at 4.19 billion, the estimate 3.8, approving a share buyback program of up to $40 billion.
Which mimics what we've seen from other banks as well. And we expect to see more of the same, especially if they're getting their stocks at a discount. That stood out to me. The other thing that stood out to me was that their advisory revenue came in light at $792 million versus the estimate of $910 million. The reason why I thought this was interesting is it goes to this question of derailed or delayed. How much are these businesses? How much is it really building a pipeline versus something that is a shift in terms of people feeling like they can get deals done?
Let's get the view of Gerard Cassidy of RBC's back with us. Gerard, welcome back to the programme, sir. Your take on Goldman with those numbers out just 4 minutes ago.
John, thank you. The numbers were very strong, as you guys have just talked about, particularly in the equity trading area. Trading in all of the big firms that we saw on Friday and today in equities was better than expected, and Goldman certainly delivered, as did they in their FIC trading or fixed income trading. And similar to the other big banks, investment banking was on the light side. But overall, a really good quarter. And the buyback announcement, $40 billion of potential buybacks in the future is also a positive. And that's a positive for the group. That's one of the reasons investors can own the group is the return of excess capital.
Gerard, let's talk about that buyback. $40 billion on a market cap of what? Almost 160. It's pretty phenomenal stuff, Gerard.
It sure is. And in fact, John, I'm looking at my numbers here. If you go back to the peak level of shares outstanding for Goldman Sachs, which was back in the first quarter of 2010. So this is post-financial crisis. Banks had to issue equities to get through the crisis. Their share count has fallen over 45% since that time. This is one of their active strategies, and they do it very well.
Goldman Sachs shares are down some 13% this year, so maybe they are also seeing a chance to get in while its shares are cheap. How much do you see this being a strategy for banks more broadly as we await Citigroup and Bank of America?
Lisa, I think it's going to be a very important part of the strategy for banks, particularly with this new regulatory environment that we're expecting under Treasury Secretary Benson as he reduces the corset. He's pointed out that the regulations around the big banks is like a corset. He's going to loosen it up. And in doing so, I think this is going to enable the banks to give back even more capital. So I think it's a strategy all the big banks will be using in 2025.
All of the banks have reported really strong revenues from equity trading, little light on the fixed income currencies and commodities trading. What was it about the equity strategy that was so successful in the first quarter?
I think what we saw, Lisa, was the volatility. The banks have always pointed out to us in trading, volatility is their friend. And it's not their friend in investment banking, and you're seeing that as well. But because of the volatility, these big players like Goldman, Morgan Stanley, JP Morgan, we expect similar trends for Citi and B of A, they get very active in facilitating trading for their clients. And in doing so, it makes it very profitable for them.
If you are just tuning in, welcome to the programme. Goldman trading higher in the pre-market. The stock is up by 2.3%. The numbers came out just moments ago. Upside surprise on equity trading revenue. That came in at $4.19 billion. The estimate was $3.8. FIC a little bit lighter, coming in at 4.4, the estimate 4.47. Approving a share buyback program of up to $40 billion. Pretty punchy stuff supporting the stock there. But let's talk about that lighter note, Jared, that you referenced. So investment banking revenue coming in a little bit lighter at $1.92 billion. The estimate $2.03 billion. We've been talking about this subject around this table for the last several months. Into 25, Jared, as you know, confidence sky high that we'd make deals. We'd see IPOs. It hasn't happened in the way that we'd anticipate. And the question we keep going back to, derailed or delayed? Jared, do you have any confidence that it is just delayed?
John, I mean, it's a great quote. I think you put your thumb right on it. And at this point, I think it's delayed. A little too early to jump to the conclusion that it's derailed. And the reason being is that many of these companies are waiting for calmer markets, more settling in the markets. Hopefully we'll get that at some point this year after the tariff situation settles down. But once it does settle down, I think you're going to see a lot of activity in the ECM market and the advisory market as well. The advisory market has been subdued for a number of years. and companies have always used acquisitions as part of their organic growth strategy, and we expect that to continue going forward.
Gerard, can we spin this into a broader statement here? Because we've seen banks report earnings that are really positive, that have beat pretty much across the board. And then we've heard some negative rhetoric, particularly from JP Morgan's CEO. We've heard the similar kind of uncertainty around tariffs from Morgan Stanley. Is there a note of confidence when you actually look at the nuts and bolts of some of these financial earnings, given the fact that actually credit loss provisions at Goldman Sachs actually went down, not up, that they expect that these deals will come, but just later in the year?
Lisa, it's really an interesting question because the core fundamentals in the first quarter for some of the regional banks have already reported, like in M&T this morning, and on the credit, very strong for them. Like you just mentioned on Goldman, Wells Fargo last week had strong credit numbers as well, as did JP Morgan. So I think the core business in the first quarter was very strong. What's so unsettling right now, however, is the uncertainty of what we could see if these tariffs go through and the economy slows. We know a slowing economy will weaken the fundamentals for the banks, but we have to remember the banks today are in such strong shape going into this vis-a-vis what we saw in 2007 when we went into the financial crisis of 08-09. So it's a different ballgame entirely. The banks are strong. They have very strong fundamentals. And most importantly, they have a regulatory environment that's now constructive, not confrontational.
In this different ballgame, Gerard, which banks have the best profile to actually profit? Is it the trading banks or is it the lending banks? Is it the Goldman Sachs and Morgan Stanleys, or is it the Bank of America's and Citigroups?
It's going to be today. Obviously, the investment banks and the trading operations are doing much better than the lending operations. But I think if the economy settles down and we get back to growth and we go back to building out plant and equipment and capital expenditures pick up later this year, then the lending will take over as the driver of the revenues. But as of today, as you saw from Goldman's numbers and the others that have reported, trading has really stood out as the outstanding area to be in today.
Let's finish on the names that haven't reported. We'll hear from Bank of America and Citi, Gerard, in the next few days. What do you expect to hear now you've seen all of this?
I think we're going to see very similar numbers, John, on the trading side. We would expect both Citi and Bank of America to put up both strong equity numbers and the FICC trading numbers. They'll probably come in light on ECM and advisory, similar to, again, the others. And DCM will be pretty strong for those names. More importantly, what's going to be interesting for both of them is what they do on credit. We expect, Citi, because it's global and has higher risk, maybe the provisioning comes in a little higher, but Bank of America may look more like Wells Fargo or a Goldman in coming in with a provision something a little lighter because their credit is holding up better.
Interesting. Thanks for the update, Gerard. Appreciate it. The reaction live to Goldman earnings dropping just moments ago. Gerard Cassidy there of RBC. You've got to draw a distinction between what they're telling you and what they're doing. What they're telling you sounds really cautious. What they're doing, Lisa, what have we seen across JP Morgan and Goldman Sachs? JP Morgan raised the outlook. Goldman Sachs came out with a buyback of up to $40 billion. That's what they're doing. It's very different to what we're hearing elsewhere.
Which gives the sense that either, one, they're better positioned than many other companies in the United States. They're uniquely positioned to benefit at a time of turmoil, given some of the trading revenues that could come from that. Or the second thing is what they're hearing from clients and what they're seeing in the business community just isn't matching the rhetoric that we're seeing in the soft data. It goes to the question of the soft data versus hard data. Is the soft data giving a signal that isn't going to come out in the same kind of way in the hard data? And that is the ultimate question for so many.
Here's some hard data for Goldman Sachs. Equity trading revenue rose 27% from a year earlier, posting their highest quarterly revenue haul on record for that division. That stock right now up by 1.7%. With an update on stories elsewhere and more, here's your Bloomberg Brief with Danny Berger. Hey, Danny.
Hey, John, just another quick recap on Goldman Sachs, which shares are higher by 1.7% in the pre-market. It posted a record revenue haul from its equity trading unit, up 27% from a year earlier. The board also approved up to a $40 billion share buyback program. Elsewhere, growth in Goldman's deal-making machine remains challenged by broader market volatility. The company's investment banking revenue coming in 8% lower than last year. President Donald Trump pledged that he will still apply tariffs to phones, computers, and popular consumer electronics. The comments downplaying a weekend exemption as a procedural step in his overall push to remake the U.S. trade system. The president telling reporters aboard Air Force One that his decision will come soon. And in sports, Rory McIlroy has added the long elusive green jacket to his resume with a win at the Masters. McIlroy ended a decade-long major drought in dramatic fashion, recovering from 2 double bogeys to reach a playoff round against Justin Rose. McIlroy then hit a stunning drive to set up birdie on the 18th hole, beating Rose by 1 stroke. The win marks his 5th major title. He is now the 6th ever player to achieve the career Grand Slam. And that's your brief, John.
Congratulations, Rory, once again. Danny, thank you. Appreciate it. Up next on the program, a temporary reprieve.
The president is going to come out with his policies on semiconductors and pharmaceuticals. They're going to be outside the reciprocal tariffs. We need to have semiconductors. We need to have chips, and we need to have flat panels. We need to have these things made in America.
That conversation coming up next with Vivek Arya of Bank of America. Live from New York City, this is Bloomberg. So here's the state of play this morning, and good morning to you. Equities near session highs, up by 1.5% on the S&P, on the Nasdaq up by 1.7%. Moments ago, numbers from Goldman Sachs. Upside surprise on equity sales and trading revenue. And then you've got the additional up to $40 billion share buyback program. So throw that into the mix as well. That stock is up by 1.5%. This line came from David Solomon, the Goldman Sachs chief executive here, Lisa. We are entering the second quarter with a markedly different operating environment. And that's the story, really, isn't it? Where we are now compared to where we thought we would be only 3 months ago.
Yeah, he goes on to say we remain confident in our ability to continue to support our clients, which I don't know what that means, but evidently they are going to be a solid bank and they're going to buy back their shares. It's a way of saying a lot of something has changed without really weighing in at all on it, which is kind of this theme that we've gotten. How do you comment on the unknown? And so many companies have grappled with the same, especially when you're faring off with an otherwise really solid balance sheet. And that's how he dealt with it. It's markedly different. We're here. And that's, I think, the kind of ambiguous rhetoric you're going to hear from a lot of CEOs.
The investment banking activity we didn't get. We keep going back to the same question. Delayed or derailed? And a lot of people we speak to keep going with delayed and not derailed.
Let's put some numbers on it. People expected the investment bankers to come out with $2 billion of revenue. It came in at $1.91 billion. They did say their backlog increased, but that is a decrease of 8% from last year at a time when people had expected that revenue to be the driver of a lot of bank profits.
That stock is up by 1.5%. That's the latest from Goldman and the latest earnings on Wall Street. Let's turn to tech. Under surveillance this morning, a temporary reprieve.
The president is going to come out with his policies on semiconductors and pharmaceuticals. They're going to be outside the reciprocal tariffs. And he was just making sure everyone understood that all of these products are outside the reciprocal tariffs, and they are going to have their own separate way of being considered. We need to have semiconductors. We need to have chips, and we need to have flat panels. We need to have these things made in America.
So here's the latest this morning. The Trump administration saying a separate semiconductor tariff is coming, downplaying an exemption announced over the weekend. According to 2024 trade statistics, the exclusions cover almost $390 billion in U.S. imports. Joining us now to discuss is Vivek Arya, the senior semiconductor analyst over at Bank of America Securities. Vivek, welcome back to the program, sir. Help us understand what some of the companies that you follow are doing at the moment to respond to all of this volatility in policy.
Sure. I think it's important to understand that the semiconductor electronics supply chain has been formed over decades, right? We have materials that come from Japan. We have a lot of design work that gets done in the U.S. and Europe. A lot of the leading edge chips are manufactured in Taiwan. A lot of their back-end processing is done in Southeast Asia. Then a lot of the assembly lines are in China and so forth. So the supply chain has been built over decades, and we certainly understand the importance of insourcing more to the U.S. But it's going to be a long and complicated process, despite the right motivations in place. So what we are hearing from the companies is somewhat a state of there is a freeze in their thinking because they are not sure exactly what the rules of the road are going to be. They're not sure how many of these tariffs are going to be followed through. They are not sure where and how and when they would need to relocate their production. So I think there is a little bit of a sense of freeze among the companies that we follow, which is not good for the industry.
That's the rules of the game in the future. I think people are struggling with what the rules of the game are right now. China also has tariffs on the United States too. The US has got tariffs on China. They've both been responding to each other. Can you help us understand what is and isn't getting a tariff right now? Who is and isn't exposed to these numbers?
Sure. So the first thing is when we look at the tariffs that China intends to put on the U.S., there's only a handful of companies that make semiconductors here in the U.S. that are actually exported to China. So Intel and Texas Instruments are among them. But in many cases, Intel and Texas Instruments have a production overseas. So some of it can be used to satisfy China demand. So I think in terms of China placing tariffs on U.S. companies, it is a bit of a bother. It is going to impact a handful of companies. But I think for the most part, the sector should be able to work around it. I think the bigger challenge comes in terms of the tariffs that the U.S. plans to put on electronics that are assembled in China. That is where we have exposure for some of the most important categories in electronics, especially smartphones and some level of PCs. And I think that's where the industry is most worried because of how the supply chains have been built up over the last few decades, as I mentioned. I think that's what the industry is really trying to get their arms around and make sure that whatever they can to try and either postpone it or try and minimize their impact. And I think that's why we think that what we heard yesterday, even though it's not the best news in terms of just completely removing all those tariffs on electronics, still a reprieve offers the industry about 1 or 2 months of time to go and make their case to this White House that moving all this production to the U.S. is not going to be that easy.
Vivek, we did hear from Howard Lutnick, the Commerce Secretary, that the ultimate goal is to move supply chains away from Southeast Asia. And you've been mentioning this has been a supply chain that's been built up over decades. How long would it take to bring that back to the United States to do as what Commerce Secretary Lutnick said, which is we need to have those things made in America?
Absolutely. And I completely agree, I think, with that objective. Just like iron and steel and energy have been important parts of the global and the U.S. economy, and insourcing them has been a priority. I think so is the case for semiconductors, not just for the U.S., but every country in the world, that these are very critical inputs to a very critical electronics industry. And in some ways, we are starting to see that ball move forward. I think the U.S. CHIPS Act was an important first step in kind of getting this process started, which is why we have seen Taiwan Semi start to invest in fabs in Arizona. And they renewed and expanded their commitment to $165 billion under the Trump administration. We have also seen media reports about TSMC wanting to perhaps do a joint venture with Intel. I think that can also move the ball forward. But I think it's important to understand that these things don't happen overnight. Building a leading edge fab can take years. It can cost over $20 billion. And you still have a lot of the back end assembly and testing outside, and a lot of assembly of these electronics outside. So I think parts of the process we can move over to the U.S. over the next 2 to 4 years. But a lot of the other parts of the back end, I think, are just going to be too cumbersome. So we'll have to find a compromise somewhere in between.
Let's see if we can find it. Vivek, appreciate your time, sir. Thank you. Vivek Arya there of Bank of America. Lisa, they've correctly identified the issue. This is a national security problem. With that, there can be no debate. And there is massive agreement down in Washington, D.C. about that. It's how you address that problem, how you encourage, incentivize those people to develop that manufacturing right here in the United States.
And how much time you give them to actually engage with some sort of transition, given that it has been built up over decades. What the market is grappling with is the ultimate goal in its general concept. Most people would agree with in the United States on both sides of the aisle. The question is the path to get there, how much pain is required. and what the U.S.'s profile is with the rest of the world. They're trying to do a lot of things at once, and people are getting kind of confused.
Hitting the ground very quickly. Equity futures at the moment rolling over just a touch, still positive, just off session highs. We're up by a little more than 1%. Up next on the programme, we'll catch up with Aaron Cannon of Clear Harbour Asset Management. We'll speak to David Ellison of Hennessy Funds, Greg Dacko of EY and Noel Dixon of State Street. The third hour of Bloomberg Surveillance is just around the corner.
If we've got a world of higher uncertainty, probably higher volatility, slower growth, you've got to adjust the portfolio accordingly.
It's more likely that we revisit the lows than we don't.
It's going to be hard to find a bullish or optimistic investor right now.
We have to be careful not to read too much into one-day moves and extrapolate them into the future.
What we're looking for is a very choppy year, unfortunately.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning to you all. It's a calmer morning on Wall Street. Equity futures are firmer by a 1.2% on the S&P. The third hour of Bloomberg Surveillance starts right now. We had some weight to the Nasdaq 100 after a major rally last week. A gain of 7% plus on the Nasdaq 100, up again this morning by 1.5%. And we have some stability in the bond market, which I think is really encouraging news. Let's see if this sticks. We're down 5 basis points at the front end on twos. On a 10-year, we're down 5 to 443, following a 50 basis point move higher just last week alone. Coming up through this week, you'll get more earnings and you'll get more data. We'll hear from Bank of America and Citi tomorrow. You'll hear from United Airlines too. Then on Wednesday, you'll hear from the chairman of the Federal Reserve, Chairman Powell, later this week.
How much confidence can he give that the Fed truly will step in at some point should that sell-off in the bond market continue? You mentioned that stability. That is key for so many people this week. If we get that stability, can you breathe life into this idea that we just saw a leveraged fund unwind? To me, my most interesting part of this week might be United earnings. If you get them after the bell tomorrow, how much do you get a repeat of what we saw from Delta?
Let's unpack that. If you lose confidence in the risk-free asset, how can you have confidence in anything else? And certainly last week, confidence was damaged. The confidence then needs to come from the earnings and come from the data. I'm with United Airlines and then retail sales later this week. How's the consumer doing? We know how they feel. It's not great right now at all. What are they actually doing?
It goes to the gap between soft data and hard data. Soft data, the sky is falling. Hard data, as we hear from all of the banks, things are okay. We're still here. We're making money. There is a question going forward of when you start to see that shift. United might follow in Delta's footsteps, where they are seeing a market shift when it comes to some of the deterioration, particularly in domestic travel. I'm also interested in international travel, and you kept mentioning this. Are inbound flights going down from international visitors to the United States at a time when potentially this is a U.S.-centric problem at a time where the issue is U.S. policy uncertainty?
So that's the story for the week to come. Let's talk about the uncertainty over the weekend. Got to make sense of this. So over the weekend at the beginning, it looked like we had exemptions, some big wins for the likes of Nvidia and Apple. And then the Commerce Secretary, Howard Lutnick, came out and said, no, those tariffs are just going to come from a different bucket. Jamieson Greer, the U.S. Trade Representative, saying it's not really an exemption. That's not even the right word for it.
So to me, this all kind of summed up as, don't call it a pivot. Don't say he caved, because this is just the beginning. And we're just shifting the bucket from the 145% bucket to the 20% fentanyl-related bucket on China. It is unclear what the policy is going to be. The reason why people have any confidence whatsoever from this with respect to the tech trade is it takes the worst-case scenario off the table for now. That tail risk of a potential complete decoupling, immediately severing with no discussion, is now not on the table. There are 90 days for tech giants to get to Washington, D.C., get their lobbyists in place, and get a sense of what actually makes sense for them to have enough breathing space to bring production back to the United States and comply with some of the ultimate objectives of this administration.
In the short term, as we often say, markets care about better versus worse. Things are better. In the long term, we have to think about good versus bad. For some of these companies, this is not good, that's for sure.
It materially increases the cost of their doing business. And even more than that, what we have heard repeatedly from guest after guest this morning, how do you put a number on these tariffs is one thing. How do you put a number on what tariffs will look like in a month, 2 months, 3 months? And then how do you plan accordingly for supplies, for pricing, for staffing, for store placement? It becomes paralyzing for a lot of companies.
It's going to be a long year, isn't it? Equity futures right now in the S&P still positive by 1.2%. Coming up this hour, Aaron Cannon of Clear Harbor on navigating heightened volatility. We'll catch up with David Ellison of Hennessy Funds reacting to the latest bank earnings, and we'll speak to Noel Dixon of State Street on why he's still optimistic for US assets. We begin this hour with global stocks rising following the biggest weekly gain so far this year. Aaron Cannon of Clear Harbor Asset Management writing, we continue to anticipate elevated volatility, not only as tariff policy evolves in the coming weeks, but also as mounting recessionary headwinds signal further economic deterioration. Aaron joins us now for more. Aaron, welcome to the programme, sir. I'm pleased you included that last line because this is increasingly going to become more and more important in the weeks to come. What are you anticipating from the hard data for the United States?
We started to see some signals late last week with the University of Michigan, Jonathan, of course, indicating that consumers are really on their heels now. They're anticipating higher prices due to this tariff war, and they anticipate employment to start to soften. We're going to see probably the employment side through jolts later on in the month, almost the last couple of days of the month. And we're not going to see real inflationary data until the last bit of the month. So this is going to wait into May. But I do think the central question around this tariff debate, Jonathan, if I could, is important leg of the stool as articulated by the administration is the degree to which tariffs are going to be revenue generative and help offset this massive fiscal deficit that we have running at, call it 7% of GDP. Where they seem to be backing down is on that important leg of the stool. And I think to the extent that they continue doing that, that could trigger further risk on movement. To the extent that they continue to muddy the waters as they did over the weekend around objectives, that could prove another de-risking event where gross de-risking happens and degrossing and de-risking happens going forward.
De-risking hasn't benefited treasuries. So let's maybe go to that story. Let's say the hard data catches down to the soft data. I don't know if that's your base case, but I just want to explore the possibility, the very real possibility that develops. How do you think treasuries will respond in that moment? Have we moved on from the events of last week? How do you think about the situation at the moment? And do you believe there has been a real reassessment of America's safe haven status or not?
I think our brand has been marred a bit, and I think it can be recovered. I think it's around the tariff question. We're very concerned. You had a weaker dollar last week, and you had higher interest rates. I mean that's not a healthy. We know Besant's objective is to reduce rates. We know Trump's objective is to reduce interest rates. He's been twisting the arms of the Fed to reduce interest rates, and certainly that meeting in the Oval Office that has been well reported now was heavily around a dislocation in the fixed income markets. I think if we continue along this current path of uncertainty where objectives are not stated, I mean, gosh, we sit around the kitchen table and we state objectives when we communicate with our children. We're here in the office communicating objectives when we have an issue we need to talk about. We don't really know exactly what the objectives are. And interestingly enough, on foreign policy over the weekend, the Trump administration did state an objective with Iran. We do not want Iran to have a nuclear weapon. They stated an objective. That's what you do when you have a debate. They're not doing this with tariffs. And it's going to continue to maintain, I think, an unhealthy level of volatility for the markets.
Well, and this is the key question, an unhealthy level of volatility for all markets, right? Not just equities, but for bonds as well. What's going to be the main driver for the bond market? We were hearing earlier from Peter Scheer that ultimately this also stems from the idea that the budget deficit isn't going to get curtailed anytime soon, and that all of the proposals in Washington right now speak to an expansion of debt and deficit. So how much is that going to be a major driver of the volatility versus policy uncertainty that causes dislocations in levered funds?
Yeah, I think there are two interesting ways to look at that, Lisa. One is the traditional, which is, well, if we have slower growth, we're going to have a flight to quality in the Treasury market. The other one is, no, this is a Liz Truss sort of moment for U.S. Treasuries. And to the extent that this tariff schematic continues to not just breed uncertainty, but to reduce the need, if we're not going to be trading as much with China, they don't need to maintain as many dollar reserves. If they don't need to maintain as many dollar reserves, and they may actually need to support their own currency because they're importing energy and other important inputs, well, it's not retribution, it's economics. They would then sell those dollar reserves, and in doing so, that could put pressure on the Treasury market. there's a huge tug of war going on right now. This morning, the more traditional perspective is outweighing things. But mid last week, certainly we saw that Liz Truss moment weighing on the conversation in the Oval Office, in my opinion.
Aaron, how much have you changed the way you allocate as a result? Have you? Because we hear mixed things. Some people come on the show and they say we haven't moved anything. Steve Chiaveron still modestly overweight equities. And then we heard from Greg Peters of PGIM Fixed Income last week, who said this is a sea change. And it really does raise these existential questions for the bond market. Where do you stand on this?
Yeah, I think, in some ways I think about it in the context of, well, the 60-40 portfolio hasn't died on a year-to-date basis. You have the Bloomberg Aggregate Bond Index up over just 1%. You have equities off mid-single digits in the U.S. You have equities up in Europe by about 700-800 basis points on average year-to-date, not including today, which is up another % or so. But then you have the other components of what it means to diversify a portfolio beyond just sort of treasuries. And we believe the treasury piece still has merit, particularly with break evens where they are. But gold's up 23% year to date. We own that in some portfolios where we're really trying to create balance. You look at the alternative segment, merger arbitrage is up a bit this year. Stat arb is up. Market neutral long short equity is up. So there are different ways to diversify the portfolio that are working really well this year and create real ballast against this sort of long duration treasury volatility and economic uncertainty that's feeding into lower equity levels, at least on a year to date basis in the U.S.
Let's just finish on gold. 32.25 this morning, down a touch. We're down 0.4%, nothing compared to the rally and the all-time highs we've seen. Goldman out. Goldman's saying we could test 3,700 an ounce by the end of the year and maybe go even higher. What's benefiting gold, Aaron, from your standpoint? What's driving the success of the yellow metal?
So gold's an alternative currency. We know the Dixie, the dollar index, was at 109 not too long ago. Back in January, it's at 99 handle today. So weaker dollar tends to, on the margin, be a net benefit for gold. But I think there are other things going on here. We have central banks that are looking for alternative ways to allocate their reserves outside the dollar. I mean, part of that is due to this tariff spat, which is just accelerating that trend. But this started back in 2022, Jonathan, when Russia invaded Ukraine and we shut off dollar access to Russia. Think other countries like China, Iran, maybe even some of our, countries that we do trade with, but that may be a little skeptical of our relationship around Saudi Arabia. They seem to be accelerating purchases of gold going forward. And I don't think that there's really a catalyst for that to necessarily reverse anytime soon. So I tend to embrace the thesis you just articulated.
Interesting. Seen a series of record highs over the past year. Aaron, appreciate your time, sir. Thank you. Aaron Cannon there of Clear Harbor Asset Management. Certainly seen evidence of that reserve diversification over the last several years building repeatedly.
And we've heard central banks actually say that was the strategy they were going to engage with. And typically, we've been speaking with experts in the field, and they say, if you hear a central bank say that, they're on the beginning of a multi-year strategy. This isn't a 2-week discussion about whether we should buy gold.
You know who used to be focused on this? The Treasury Secretary before he was the Treasury Secretary.
What do you think Treasury Secretary Scott Bessent would be doing with a long-short hedge fund right now, or a macro hedge fund, if he were on the other side of this?
It's something I've given some thought. I'm sure that gold position would be in the mix.
Yeah, I'm pretty sure it would.
Based on what he communicated before, but I can never get into someone's head. It's a risky business trying.
Well, maybe Anne-Marie can later today.
She's going to give it a go. She can ask him directly. I'll see if he answers. Anne-Marie's sitting down with the Treasury Secretary, Scott Bessent, later on this afternoon at 4 p.m. Eastern Time. That will be live from Argentina, so look out for that conversation a little bit later. Let's give you an update on stories elsewhere this morning with your Bloomberg Brief. Let's cross over to Danny Berger. Hey, Danny.
Hey, John. President Donald Trump pledged that he will still apply tariffs to phones, computers, and popular consumer electronics. The comments downplayed a weekend exemption as a procedural step in his overall push to remake U.S. trade. The president telling reporters aboard Air Force One that his decision will come soon. Chinese President Xi Jinping has landed in Vietnam for his first trip overseas of the year. The Chinese leader is expected to present China as a more stable trading partner than the U.S. under President Donald Trump, whose shifting tariff policies have rattled markets. Elsewhere, Meta faces a landmark antitrust trial today. The FTC alleges that the tech giant acquired Instagram and WhatsApp to eliminate competition and maintain a monopoly. Meta says that the acquisitions were approved by regulators over a decade ago. And that's your brief, John.
Danny, thank you. More from Danny later this hour. Just a word on that story. It's up to them to take care of business in the courts. I get all of that. But the benefit of hindsight, at the time when these acquisitions were made, I remember covering them. I was in London at the time. I'm sure you remember covering them here in New York. People thought they'd overpaid for the assets. I remember people thinking the numbers were absolutely crazy.
They're going to argue, and I'm talking about Meta, that this is revisionist history, and you can look back and say, now, with 10 years of hindsight, wow, they have a monopoly. But at the time, it was actually highly skeptical. It goes to this question, too, of the Trump administration as having the same approach as the Biden administration when it comes to antitrust, at least when it comes to big tech.
NASDAQ futures, at least this morning, up by 1.7%. Up next on the programme, the Morning Calls Plus, David Ellison of Hennessy Funds with bank earnings in full swing. That conversation just around the corner. Wilson and Morgan Stanley summing things up pretty well this morning. The worst may be over, but the coast isn't clear. Certainly feels that way. Equity futures on the S&P up by 1.3%. The squeeze continues. The Nasdaq 100 up by 1.7%. The Russell doing okay, up by 1 full percentage point. That's the price action. Let's get to some morning calls. First up, Wedbush reiterating its outperform rating on Apple. The analyst Dan Ives citing US tariff exemptions on tech components. Apple is up this morning by 6%. Your second call from Goldman, downgrading higher to sell, highlighting an increasingly uncertain backdrop for demand. That stock is down by 1.3%. And finally, Phillips Securities upgrading Wells Fargo to buy, expecting a slow but stable year for the bank. That stock is up again today by about 1%. Let's stick with the financials. Goldman Sachs adding to banking optimism after posting a record revenue haul from its equity trading unit. The stock is up by 2%. To discuss, I'm pleased to say, is David Ellison of Hennessy Funds. David, welcome to the programme, sir. Appreciate getting some time with you. We've heard from JP Morgan, from Morgan Stanley, from Goldman. How would you grade the quarter so far?
Well, the quarters were great. I think the industry is showing that they're have done a great job of dealing with credit and liquidity and capital, managing the buybacks. So I think it's like that's all in the past, unfortunately. But I do think the industry is in great shape to weather what's ahead. I think your conversation with Gerard Cassidy this morning sort of put it in focus. But I think the industry is in great shape. Doesn't mean the stocks are going to double or triple or go down 50%. But I think as an industry, they're ready for whatever happens in Washington, I think.
Let's talk about that. As a portfolio manager, just how defensive do these names trade in growth scares? And how has that changed over the last decade, say?
Well, I think since 2008, we've been worried about a credit cycle, worried about a rate cycle. We've had an inverted curve. So the financials have been, frankly, not the place to be for 10 or 12 years. And I think the color of my hair shows it. So I think the hope is that as we go forward here, there's going to be a little less pressure on them as they, in a sense, the tariffs are not attacking financial services products. They're attacking physical goods. And so I think people maybe are going to be more worried about the physical good traders and makers than they are about the financial guys. So we'll see. I mean, Wall Street finds a way to make money in all environments. People need to lend money to grow. The economy is not going to go to zero. And so I think, these companies could be the safe harbor that they haven't been for the last 10 or 12 years.
David, the narrative around banks has shifted. At the beginning of this year, it was the growth stock, given the fact that there was supposed to be a wave of deregulation as well as a boom in mergers and acquisitions and all sorts of deals. Now it's a defense stock where suddenly banks are buying back their own shares in pretty large quantities. We just heard about a $40 billion repurchase from Goldman Sachs. Which is it? Is it defense or offense?
Well, when you sort of have one guy deciding what the world trade environment's going to be and a bunch of other stuff, I think, you look for defensive names, and that means you look for good balance sheets, you look for capital, you look for liquidity, and you look for good managers. And I think the banks have that. And so, this weekend was pretty quiet on the Washington front, so the market's up. So I think the general move of the market, I think, is the market generally wants to go up, in my view, and it's being held back by sort of one guy making decisions about how the world's going to function. And that, I think, will calm down, and I think we'll be okay on the other side.
Another way of sort of approaching the same question is which banks are best positioned for the next phase of whatever is to come? Is it the ones who are going to benefit from volatility in markets, trading revenues, some of the potential other opportunities there, or is it going to be the lenders? The Bank of Americas, they're going to go out and actually be able to create credit at a higher rate based on where the Treasury yield is right now.
Well, I think one of the concerns I think that's coming up on the analysts that I've talked to and the companies that I talked to prior to earnings was that is this disruption going to really hurt small business and therefore hurt the lending of the traditional banks that we haven't heard from yet, but we will in the coming weeks. I think the big banks, they have the earnings, they have the, in a sense, network effect of having a lot of customers and a lot of data inputs about what's going on. But I think the overriding thing about this industry is that we need new products, we need innovation, and we need companies to do transformative acquisitions to kind of get them back on a growth path. They've lost so much share on the lending side to private equity and private debt and other sources of income that the loans just don't grow anymore. And so they need to do other things to get out of that box that they're in. And hopefully that will happen as we move forward with the new administration.
We've heard lots of people say the same thing, that we're expecting consolidation, particularly between the regionals and the smaller lenders, David. What are you anticipating for the year ahead on that front?
Well, it started off pretty good. I think that I don't think that's going to stop. I don't think whatever the administration is doing now is going to stop that. I think at the end of the day, the smaller banks know that they're losing share. They can't invest in technology. It's hard for them to compete with these new platforms that seem to be popping up every day that are competing for deposits and loans. And so they need to get bigger. And that's, sort of the process that you see that in the marketplace. The bigger companies have the higher valuations, and the smaller companies are going to be left behind. So I think the market is telling you something, and hopefully the managers are hearing that and seeing it.
David, appreciate your time. Tricky moment for you all, I'm sure. David Ellison there of Hennessy Funds. You do all the work, and then one man comes out with a tweet, a post, an X, or whatever, a truth.
Yeah.
And all of a sudden, everything gets turned upside down.
You can feel the frustration. You can feel it in the notes. You can feel it in people's faces. You can feel it when people come in and they say, oh, my God, this was the longest week ever. And you could say, all right, it's not that bad. At the same time, it is very difficult to have any kind of overarching thesis or theory that you can follow if it all can get upended by a series of conflicting narratives that then leave you throwing up your hands and saying, I have no clue.
I keep going back to that quote from Stuart Kaiser of Citi because I think it addressed this moment so well over the last week or so. The least satisfying 5% plus rally on the S&P in recent memory. And we talked about it yesterday evening in our special programming. If you asked people to guess where the S&P 500 finished last week, if you didn't know, I think you might have thought the market was down and not up. It just felt brutal at times.
Chetan Aya over at Morgan Stanley, who is one of their lead economists, said without a doubt it was the most stressful week of my career in financial services. And yes, he has been on the street since going back decades and before 2008. So it raises this question. Is it just that it feels that way, or is it actually going to lead to some sort of financial consequence akin to those moments? It sort of goes to the hard versus soft.
Yeah, repeatedly.
And again, repeatedly, it goes down to, are we just feeling bad, but it's not that bad? And it goes to a psychology game.
A lot of that stress has been in the bond market. I can't offer you the kind of therapy that Lisa might be able to offer you.
No, I can't offer.
No therapy session
I'm
right
look
now?
For, a good one.
Bond yields are down this morning, so there's your good news. Your bright spot. Yields are lower by 4 basis points on a 10-year. 445 at the front end of the curve. 2-year yields are lower too. At the long end of the curve, stabilising is the way to put it here. Yields down just a single basis point on the 30-year after a big move higher last week. Up next on the programme, Greg Dacko of EY, Noel Dixon of State Street from New York City. This is Bloomberg. Last week, your scores, the S&P up by 5.7%, the Nasdaq 100 up by 7.43. And we wake up this Monday morning with more gains. Equity futures up across the board. On the S&P 500 up by 1.4%. On the Nasdaq 100 up by close to 1.8%. With 60 minutes until the cash open with some morning movers. Here's Danny Berger. Hey, Danny.
Hey, John. Some news from Pfizer. Over the past few hours, they will be abandoning their obesity treatment. The company citing one of their clinical trials in which one patient developed a potentially drug-linked liver injury. This is a setback for them. They say they're going to continue to invest in early-stage obesity treatments. However, they are far behind the competition. Those shares down about 0.2%. To the upside this morning, much like you saw in general tech, Apple shares higher, 6.5% in the pre-market trade over those exemptions for electronics when it comes to tariffs. Of course, they might still have tariffs to come. It is just temporary, but for now, we're off to the races with this company down 20%, more than 20% from its peak, I should say. So a lot of bad news already priced into the shares. Rounding things out with more good news from Goldman Sachs. We got their earnings about an hour ago. Those shares are up 2.5%, much like their peers that we've heard from so far. A huge haul when it comes to equity trading. In fact, a record over the quarter that helped make up for some quieter activity on the deal-making and investment banking front. John.
Danny, thank you. Appreciate it. Certainly on Wall Street, no big scares so far. Bank of America and Citi still to come, but so far, pretty good.
It seemed like equity trading, as Danny was just saying, very much the star. Really interesting. Mixed messages when it comes to the build in provisions for credit losses. We saw builds over at JP Morgan and some others. We did not see that at Goldman Sachs. How much noise are they preparing for versus actual weakness?
Look out for numbers in the next 24 hours or so from Bank of America and Citi. You'll hear from United Airlines as well, so lots of earnings still to come. Lots of data too, and a very important address coming from the Fed Chair, Jay Powell. Mike McKee has more. Good morning, Mike.
Good morning, guys. Well, and the question here, obviously, is do the tariffs still continue to overshadow the economic data? Because, as you mentioned, we've got some important numbers coming up, including one today that maybe you don't think about all that much, and that's the New York Fed inflation expectations number. We've seen big jumps in the Michigan numbers that have scared the Fed a little bit. Now, do we see that today in the New York Fed number? That would get people's attention. Import prices tomorrow. Everybody wants to know what effect the tariffs are having. And then, of course, retail sales and jobless claims later in the week. Those are going to be big deals. Friday, at least, we get off. No economic data on Good Friday. But a lot of Fed speak to go along with all this data, including, as you mentioned, the chairman of the Fed, Jay Powell, speaking on Wednesday. But pay attention to Chris Waller today. He tends to move the markets with his economic outlook, and he hasn't given one in a little while. So a lot of Fed speak to follow through on all of this data, including one on Friday, unfortunately. And I'll leave you with one chart here, guys, to show you what the impact tariffs can have. This is the 30-year mortgage as tracked by Bankrate. You can see how it was going down and leading people to think maybe the housing industry could come out of it. But look what happened over the past week.
President Daley needs a day off. What's that about, hey, Mike? A speech on Good Friday. We'll reach out to her and find out. We did hear from Kashkari over the weekend. I'd love your reaction to this. I think investors in the US and around the world are trying to determine what is the new normal in America. We have zero ability to affect that destination. Has he got a lot of company on the FOMC?
Yeah, it's pretty much unanimous in that view, John. Everybody thinks that at this point, the Fed is completely sidelined because it has zero visibility. If inflation goes up, they can raise rates or leave them where they are. If we see the economy fall off, they can cut rates. But right now, they have no idea what's going to happen.
Mike McKee, none of us do. Appreciate it, sir. Thank you. Which is why consumer confidence has been hit so much. Mike mentioned the numbers coming from the University of Michigan on Friday. A much-watched anticipatory read on what's going to happen with inflation, what's going to happen with things like unemployment. Inflation expectations are now at multi-decade highs. And anxiety about unemployment near levels we haven't seen since 2009. Greg Dacko of EY writing the following. Higher tariffs will lead to a renewed inflation impulse in coming quarters, with core CPI inflation likely to end 2025 in the 3.5% to 4% range. Greg joins us now for more. Greg, welcome to the programme, sir. Can we start on Friday? The numbers from you, Mitch, are absolutely awful. Do you anticipate seeing any of that in the hard data in the months to come?
Yeah, I certainly think we're going to see some of that sentiment reading filter through to real economic activity. Already, one of the factors that we've seen is the fact that many businesses are in a wait-and-see approach. Many consumers are more and more hesitant. And let's not forget that we were already in an economy that was slowing before all of this tariff uncertainty and the implementation of massive tariffs across most trading partners. That's very important. The pillars of the U.S. economy were not collapsing, but they were becoming more fragile. And that type of environment, on top of which you add an inflationary impulse from tariffs and more hesitancy from businesses and consumers, risk pushing the economy towards a more than desired, for sure, but very severe slowdown in terms of economic activity.
Greg, where are we going to see it first, given the fact that people are raising questions? We were talking to Neela Richardson of ADP earlier, saying we probably aren't going to see it in the employment rate, certainly not in the next month, maybe not the next few.
I think we're going to see it in the unemployment rate in the next few months because we were already in an environment where we had a slowdown in hiring. Businesses and business executives were very cautious as to who they hired, for what skills they hired, and at what salary they hired. Going forward in an environment where there's tremendous uncertainty about final demand growth, about CapEx, and about hiring, and potentially more strategic decisions to essentially right-size labor forces across multiple sectors, you're going to see some movement up in the unemployment rate. Sadly, that's a consequence of a higher inflation, less growth environment, and I think that's going to be the case that leads to even more caution on the part of consumers, because on top of inflation, consumers will be facing this environment of weakened employment conditions.
Greg, how do you square that negativity with some of the rhetoric that we're hearing from companies on their earnings calls? Certainly not, Goldilocks, certainly not coming out with these really bright prognostications, but certainly showing a lot of strength in their numbers and in their forecast for what's to come.
It seems like we're numb, essentially. We're numb to an environment where we now have tariffs, despite all of the movements, tariffs that are at a 100-year high. I think people tend to forget that. And that's because we've seen all of these different announcements and walkbacks in terms of tariffs, an on-off approach that is extremely confusing and somewhat numbing. So I feel numb today on Monday because we are in this environment where you were just talking about the stock market performance last week, positive, ending in the green. Yet we have the highest tariffs we've seen in 100 years. And we have businesses that are very much hesitant to do much of anything, whether it's CapEx, hiring, or deal making. There's a lot of hesitancy until there's going to be more clarity as to the longer term picture with regards to tariff. That's all we need. We need more certainty as to what the landscape is going to look like, not just for the next day or two, but for the next few years as to what the landscape is going to look like. And that would in and of itself be a big support to the economy, because right now uncertainty is at an all-time high. We have volatility that is at an all-time high, and all of those factors are constraining economic activity.
Greg, I'm pleased you went there. I think these numbers are so large, they're almost impossible to really internalize. Really difficult to try and process. To look at the numbers on China now, this came from Capital Economics, and we keep going back to this quote from Paul Ashworth. The effective increase on China, even once those exemptions over the weekend are accounted for, is still closer to 100%. Greg, what on earth does trade between the US and China look like in the next few months?
We really don't know. I think what businesses are doing right now is they're holding off on orders, which is actually in and of itself a factor that is constraining economic activity, because when you have less of these orders, it does hurt economic activity. You're absolutely right about the average tariff rate. The average tariff rate has increased 27% to nearly 30% on all of our trading partners. And as you were just saying, our average tariff rate vis-a-vis China is something that is unconceivable, or was unconceivable just a few weeks ago. So we are in this historical environment where you have the cost of traded goods that would put upward pressure on inflation, continue to feed financial market volatility. And I don't think we're out of the woods here in terms of the appetite for US denominated assets. Whether it's treasuries, stocks, or the US dollar, they're still all going to be under tremendous pressure in an environment of hyper protectionism. And I think that's a key risk to continue observing very closely.
Hey, Greg, appreciate it. As always, sir, thanks for jumping on. Greg Dacko there of EY. The market's preoccupied with up and down. Are the tariffs higher or lower? We've almost forgotten where the tariffs are at the moment, and the tariffs are still incredibly high.
Well, this is the point, actually, and I think that Greg really summed it up with the fact that he feels numb. I think a lot of people feel numb. There is a question about whether people are numb to the idea of this becoming a reality because they say that the tariff rates are so high that they are, kind of like what China said, not realistic. They're almost a joke. They can't be real. There are so many people that come on. They're looking for off-ramps. They're not taking it seriously and literally. Economists who come out with some pretty fantastical numbers that represent some pretty shocking situations. So how do you factor this in if you're an investor who doesn't understand whether to take President Trump literally or seriously?
With great difficulty. So we get you some optimism. Noel Dixon of State Street writes this. While the next month or so will be bumpy, the second half of the year will be a good story for U.S. assets. I think we ultimately avoid recession. Noel joins us now for more. Noel, good morning. Good to see you.
Good morning.
Big picture then. Why is it going to be so good in the second half?
Yeah, so I think right now a lot of bad news has been priced into markets, and I do think ultimately we avoid a recession. And when I say recession, that's the Embers, National Bureau of Economic Research's definition, which factors in real income, non-farm payrolls in the household survey. But I do think what will happen is we'll grow below trend. And what that'll do is that'll actually help with the cyclical part of inflation, the part of inflation that the Fed's been struggling to get control over in the past few years. And they'll be in a position, I think, to cut a couple of times in the second half.
What are your assumptions on tariffs from here? How do things change?
So I do think we're in the negotiation phase. I think we are getting some certainty. I just think markets haven't been liking the certainty that we're getting. And I think where we're going to get to is probably an effective tariff rate of roughly maybe 15% or 20%. Still high, but I do think businesses will finally have that certainty.
From the low single digits to a number that big, and you think inflation has settled down so much that by the middle to the second half of this year, the Fed can cut rates?
I think it's possible because you're going to have lower energy prices. I think you're already seeing a pullback in discretionary spending with consumers. And again, that's getting one of the key pieces of inflation that the Fed has been struggling to get under control, and that should help to offset some of the price shock, I think, from tariffs.
How much is your faith that there is going to be some further gains predicated on the idea that the U.S. will be once again a haven in a storm, that the tariffs that the U.S. puts on are going to hurt the rest of the world more than the United States?
I think it will. I mean, we import a lot from the rest of the world, more from the rest of the world than others. So I think we're going to be in a situation where it's relative growth. I think what you're having now is some outflows, largely going to Europe, some going to China. But I think once we get into the second half, you get some business confidence with the tax plan. I think businesses will be more confident. You'll get more capital back to the U.S., largely in tech companies. I think interest rate differentials will become a factor again, and I think that'll be positive for risk.
Are you seeing international clients right now interested in coming into U.S. assets?
Right now, I still do see appetite, especially with fixed income. So on the 10-year, the domestic investors are still coming back. I think a lot of foreign investors are still buying the long end of the curve, which tells me that there's still confidence in the U.S.
So what do you think is wrong about this narrative that the uncertainty itself, if continued, and it is likely to continue at least in the very near term, is going to suppress growth disproportionately and actually have a greater chance than not of putting the United States into recession?
Yeah, so I think, again, we avoid recession because I think the tax plan from the Trump administration will put a floor under, at least for the bottom 2 quintile of income earners. And then you have deregulation, and businesses will have some confidence with things like the 100% bonus depreciation. I think with the consumer, employers, they may not be hiring, but they're not laying off. I think they learned from the pandemic that it's really costly to rehire workers that you laid off. And our labor force is still actually short, still about 1.5 million to 2 million workers. So there is some demand for labor.
No, it's good to see you. Constructive view.
Good
Thank
to
you,
see
sir.
you.
Thank you very much.
Pleasure.
Noel Dixon there of State Street. Equity futures at the moment higher by 1.6%. The opening bell is about 46 minutes away. With an update on stories elsewhere, with your Bloomberg brief, here's Danny Berger. Hey, Danny.
Hey, John. Intel has entered into a definitive agreement to sell 51% of its Altera business to Silver Lake, shares up 4% in the pre-market. The transaction values Altera at $8.75 billion. Intel says the deal is expected to close in the second half of the year. Elsewhere, Japan's prime minister says that the country is in no rush to compromise in U.S. trade negotiations. The country's chief trade negotiator is set to visit the U.S. Wednesday through Friday to discuss levies on cars, agricultural products, and foreign exchange with Treasury Secretary Scott Bessent. Blue Origin is set to launch a high-profile all-women crew on its flagship space tourism rocket today. The crew includes pop star Katy Perry and Jeff Bezos' fiancée, Lauren Sanchez. The flight's expected to take off at 9:30 a.m. New York time from West Texas on a roughly 11-minute trip. And that's your brief, John.
Hey, Danny, thanks. Big update there. Appreciate it. Got thoughts, Bramo?
Wow. All I could say is this idea of space travel as this recreational thing for pop stars is really interesting to me. I'm curious, is this going to be the future? 11 minutes in space if you're Katy Perry.
I'm not going to share my opinion. Up next on the programme, I'm withholding that. I think you know what it is.
Come on, go ahead.
You know what it is.
Okay.
I just couldn't care less.
Okay.
Let's set you up for the day ahead. We're going to catch up with Anne-Marie in just a moment from Buenos Aires, Argentina, who's catching up with the Treasury Secretary, Scott Bessent, a little bit later on this afternoon at 4 p.m. We'll speak to her on the other side, live from New York. This is Bloomberg. The opening about 41 minutes away. Equity session highs up by 1.5% on the S&P 500. Adding some weight to that rally from last week, and what a phenomenal rally it was, up by 1.9% on the Nasdaq 100 this morning. So equities up across the board and a big week ahead. Your week ahead looks like this. Tomorrow, numbers from Bank of America and Citi, plus United Airlines coming out with results after the closing bell. On Wednesday, retail sales and Fed Chair Jay Powell will be speaking. On Thursday, an ECB decision plus another round of jobless claims, and we'll get Netflix earnings before the long weekend and the Good Friday holiday. Let's turn back to policy. Anne-Marie joining us from Argentina ahead of her exclusive conversation with the Treasury Secretary, Scott Bessent. AMH, welcome to the programme. Welcome back, I should say. Talk to me about this first of all, because a lot of people have the same question. Why Argentina?
Well, it's a great question, given the fact that this is an individual who is right now in the driver's seat with trying to get to the bottom of 90 agreements and trade deals. When it comes to Argentina, though, I think it's twofold on why people think the Treasury Secretary is making time, his only second foreign trip, to come here to Buenos Aires. One, you do have this IMF deal that was clinched between Argentina and the IMF board on Friday, $20 billion, Jonathan, and they've given Argentina $12 billion of that up front. In exchange, Argentina is willing to put the peso, their currency, to now start trading more free-floating in a band. The second, and what the local press seem very excited about, but it's very unclear if this can even happen, is that they think maybe the Donald Trump presidency would give Argentina a credit line. This is something that would happen under the Treasury Secretary. What I would say is I'm reading this trip as a little bit more of tea leaves. Javier Milei has been a big supporter of President Donald Trump, one of those handful of world leaders that went to Washington, D.C. for the inauguration. And I think on top of this IMF loan, they want to come here and show a sign of support for him.
Let's talk about the Treasury Secretary himself. At the start of the programme this morning, we were speaking to Steve Chavarone, a federator, a guest you know well. And Lisa asked him, he's constructive, what it would take to make him bearish. And he said, if I see more Navarro and less Bessent, how important has this transition been to, at least from a perception point of view, there is a belief on Wall Street that Secretary Bessent is now running the show in a way that he wasn't a number of weeks ago?
It's a massive change, and it's a huge perception change on Wall Street. Individuals have called me and said to me they are so happy to now see that as the Treasury Secretary, Scott Bessent, taking the lead on negotiations. This week, he is set to sit down with not just Milei here in Argentina, but also his counterpart, the trade mission when it comes to Japan, as well as the economy minister in Spain. So he is really going to be the face of a number of these negotiations. What people on Wall Street will tell you is they are so happy because they feel like they have an adult in the room, someone that not just understands trade, but understands financial markets and is less aggressive when it comes to the cabinet of rivals than the likes of, say, Peter Navarro or the Commerce Secretary Howard Lutnick.
Anne-Marie, if we're going to read the tea leaves of both this trip and future trips to come, do we have a sense of who Treasury Secretary Bessent is currently scheduled to speak with when it comes to negotiating with some of the counterparts that we would be dealing with when it comes to trade negotiations?
I think front and center is clearly going to be Japan. We do know that Japanese negotiators will be in Washington, D.C. this week. Also, we should note Japan is a country that the Treasury Secretary has a deep wealth of knowledge about, given the fact that he put on massive trades when it comes to the Japanese yen in his former life as a macro hedge fund manager. And also, I think Japan is a place where the U.S. realizes is such an important ally in the Asia Pacific. And the Treasury Secretary has talked about the fact that do these deals with these 90 countries, with American trading partners and allies, get trade fairer, get the deficit down, and then approach China as one.
One question we were asking Anne-Marie, and I don't expect you to ask this of him, but I am curious what you would say about Treasury Secretary Bessent, the macro hedge fund trader, versus Treasury Secretary Bessent as the Treasury Secretary, as a policymaker, and frankly, as a politician. Do you get a sense of what the daylight is between those two figures?
Well, Lisa, I heard you and Jonathan talking about this earlier, and this is the question I would love to ask him, but I know he's not able to give me an answer. If he was still running Key Square Capital, what kind of positions and bets would he be putting on when he sees this administration come out with global realignment and trade policy we have never seen in our lifetime? What I will say is something the Treasury Secretary told me, you, and Jonathan in February, that in his old life, he used to be that person, put his ear up against the door, looking over the doorway, trying to understand every next move of policymakers and the domino effect of that and what that would mean for financial markets. So maybe we can ask him, what is your advice for individuals who are sitting in his former seat, putting their ear up against the door and trying to understand what this administration is doing? Because one thing is very clear, financial markets, global investors, even everyday consumers, they want clarity.
Anne-Marie, appreciate it, and we're all looking forward to the conversation a little bit later on this afternoon. Anne-Marie sitting down with the Treasury Secretary, Scott Bessent, at 4 p.m. Eastern Time in Buenos Aires, Argentina.
I love that. What would you tell those people with their ears pressed up against the door, especially when they hear 5 different things behind the same door? It becomes a real question about messaging, as well as how he can contain a message that seems at odds with itself, depending on the day.
Consensus would suggest limit long gold. Is that right?
Well,
that's the view of things, right?
That was something that he liked before. I'd be curious to see, right? Because ultimately, this is a difficult moment for him to game out, considering that he is very much a player. So, you know, he wouldn't tip his hand, obviously.
Let's take stock of things, Lisa. So far, a lot of people are concerned, anxious. You see that in the data. What you also see in the data, though, and particularly from the guidance that we've had from Wall Street so far, is a degree of confidence. A degree of confidence that you certainly didn't see in you, Mitch, on Friday, to come out and raise your guidance, JP Morgan, to come out and boost the buyback plan, Goldman Sachs, does speak to a degree of confidence that some of these business leaders still have.
I go back to something Mohamed El-Erian said when he spoke with us a couple of weeks ago, and he said there was a 50% chance that we go to a Reagan-Thatcher-like reorganization of world trade that ushers in an era of prosperity, or Carter on steroids, which we embark on a 1970s stagflation, inflationary, and recession-type situation. He moved that down to 35%, 65%. But there still is that upside, and that, I think, is the point.
We'll see if that confidence is misplaced or not. Coming up tomorrow, we'll catch up with Christian Muller-Glissman of Goldman Sachs, Brent Schutte of Northwestern Mutual, Krishna Mamani of Lafayette College, plus the Virginia Governor, Glenn Youngkin. Look out for that conversation tomorrow morning. Live from New York City this morning. Good morning. Thank you very much for choosing Bloomberg TV. This was Bloomberg Surveillance.
गाइस नेचुरल गैस ये डे हाई के अराउंड ट्रेल कर लेना, ऐसे लिए ब्लू कलर की लाइन के अराउंड, ठीक है। यहाँ पर प्राइस थोड़ा सा ट्रैप कर सकता है। ये रेंज बना दी एक्चुअली इसने, ये सपोर्ट है, तो ये ऊपर नीचे मार्केट के पास ये छोटा सा एक रेजिस्टेंस भी है, तो इट एक्ट लाइक एज रेजिस्टेंस। डू वन थिंग, ट्रेल द एसएल इन नेचुरल गैस। देखेंगे अगर ये होल्ड करेगा, होल्ड नहीं किया तो फिर ब्रेक डाउन भी हो सकता है, क्योंकि ये रेंज है फिलहाल के लिए, बार बार रिपीट कर रहा हूँ। जिन लोगों ने बाई किया था सपोर्ट एरिया पे, ट्रेल द एसएल। कितना मिल गया, रेंज ब्रेक करेगा तभी जाएगा, नहीं तो ठीक है। रेंज है बहुत छोटी सी, ब्रेक हो जाए तो मेरे अकॉर्डिंग बेटर ही रहेगा। नहीं हुई ब्रेक तो फिर कुछ कर नहीं पाएंगे, फिर ब्रेक डाउन ही मान के चलो आ जाएगा प्राइस में। तो ये ब्लू कलर की लाइन बहुत इंपॉर्टेंट है, प्राइस को अगर ऊपर जाना है और ऊपर जाना है तो एटलीस्ट 289 के ऊपर क्लोजिंग चाहिए। 289 के ऊपर क्लोजिंग नहीं आएगी तो नहीं जाएगा ऊपर। क्लियर है, ये देख ध्यान रखना, इन नेचुरल गैस स्पेसिफिकली बता रहा हूँ। इंडियन मार्केट भी क्लोज होने वाला है, लाइक भी करते रहो गाइस, जिन लोगों ने लाइक नहीं किया स्ट्रीम को, डोंट फॉरगेट टू लाइक द स्ट्रीम। बाकी नेचुरल गैस भी ठीक ठाक आ गया, अच्छा खासा आ गया है। अब की बार अगर ऊपर जाएगा तो अब इस लेवल से मत करना सेल, ठीक है। अब की बात ऊपर वाले लेवल से करना। ने अब की बार अगर नीचे वाले लेवल से किया था, ये ब्लू कलर की लाइन से, वो लेवल ऑलरेडी मार्केट ने कर दिया है ऑक्यूपाइड अब, तो अब इस लेवल को कंसिडर मत करना, ऊपर वाला लेवल कंसिडर होगा। बाकी देखते हैं ये जाता है नहीं जाता है ऊपर। नेचुरल गैस बड़ा इंपॉर्टेंट है, नहीं गया तो फिर प्रॉब्लम क्रिएट कर देगा। कोई न्यूज़ वगैरह नहीं है अभी फ़िलहाल के लिए, देयर इज़ नो न्यूज़। कोई मेजर न्यूज़ और डेवलपमेंट होती है तो वी विल सी दैट। बाकी जैसा मैंने बताया 3 दिन मार्केट क्लोज भी है। देखो इंडियन मार्केट तो बुलिश ही है फ़िलहाल के लिए, हो सकता है थोड़ा बहुत और मोमेंटम मिलता रहे मार्केट को।
News when you want it with Bloomberg News Now. I'm John Tucker.
And I'm Karen Moscow.
And Karen, Boeing may be caught in the crosshairs of the U.S.-China trade war. Bloomberg News has learned China has ordered its airlines not to take any further deliveries of Boeing jets. And Bloomberg aviation reporter Danny Lee is following the story this morning.
This is really quite a blow for Boeing in the sense that we have seen more companies increasingly being caught up and caught in by this tit-for-tat trade war between Washington and Beijing. But increasingly where someone like Boeing is increasingly marginalized in.
बाकी ध्यान रखना अगर ये क्रूड ऑयल नीचे आता है ना, ये कल वाला सपोर्ट है, मार्केट ऑलरेडी वहां से डीप सपोर्ट लेके जा चुका है कल। ऊपर रेजिस्टेंस स्ट्रांग है, नीचे सपोर्ट थोड़े वीक ही मान के चलना। अगर अभी नीचे आता है तो फिर हम देखेंगे अराउंड 5212 के अराउंड। ठीक है, यहाँ कहीं इस लेवल के आसपास चेक करेंगे फिर उस केस में। बिल्कुल कर सकते हैं। अगर ये वापस ऊपर गया क्रूड ऑयल वापस सेल कर सकते हैं ऊपर वाले लेवल से। फिर से नीचे आएगा तो यहाँ देखेंगे इस लेवल पे, इस वाले लेवल को एक्सपेक्ट करेंगे कि ये ब्रेक हो जाए, क्योंकि कल ये सपोर्ट ले चुका है डीप, और फेक ब्रेकआउट देके रिकवर करे जितना भी करता है। कोई नया रेजिस्टेंस ही बन जाएगा तब तक मोस्ट प्रॉब्ली मेरे अकॉर्डिंग तो। बाकी इंडियन मार्केट वही एक्सपेक्ट था, गैप अप हुआ, थोड़ा बहुत मोमेंटम, फिर साइडवे चला गया पूरा दिन भर। कुछ खास मोमेंटम हुआ नहीं है बैंक निफ्टी फ्यूचर में गैप अप की वजह से। नेचुरल गैस नीचे आएगा तो नीचे लेवल से देखेंगे नीचे, क्योंकि सपोर्ट ऑलरेडी ना टेस्ट हो चुका है, तो इट इज़ वेरी अनलाइकली कि वो वहाँ पर सपोर्ट ले फिर से। नीचे भी सपोर्ट दूर ही है, ये लेवल भी ना, ये प्रीवियसली काफ़ी सपोर्ट ले चुका है यहाँ पर। इसके नीचे के लेवल क्लियर नहीं है हमारे पास, प्राइस एक्शन ही ऐसा बिल्डअप है। एक बार एक डिपो ऊपर हो सकता है यहाँ से चला जाए, फिर वो रह जाएगा। ये ना कभी ये लेता है कभी नहीं लेता। साइडवेज ही है फिलहाल के लिए डाउ नैस्डैक, और दोनों ही साइडवेज चल रहे हैं।
Such a thriving aviation market.
And Bloomberg Aviation reporter Danny Lee says China is forecast to make up to 20% of global aircraft demand over the next 2 decades. And in 2018, nearly a quarter of Boeing's output ended up there. Shares of Boeing this morning down 2.7% in early trading.
Well, John, President Trump's administration is pressing forward with plans to impose tariffs on semiconductor and pharmaceutical imports by initiating trade probes led by the Commerce Department. And we get more on that with Bloomberg's trade czar, Brendan Murray.
The Trump administration wants semiconductors to be made in the U.S. rather than in Asia, mostly in Asia, in places like Taiwan and China. This is going to be especially important with the next generation of chips, the ones that power artificial intelligence. The other issue, and this was one that came up during the pandemic, was the drugs production and the pharmaceutical issue. Both of these are, the Trump administration is seeking to ground them in the legal rationale of national security.
And Bloomberg trade czar Brendan Murray says President Trump is also floating a potential pause in auto tariffs, and that has shares of Nissan, Toyota, and other auto stocks on the rise this morning.
And Karen, the near daily flow of tariff announcements adding to the confusion for companies and countries trying to navigate President Trump's evolving trade policies. Speaking exclusively to Bloomberg's Anne-Marie Hordern, the Treasury Secretary, Scott Bessent, was asked how many of these deals he expects to have signed by the end of the pause.
I think there will be advantage to our allies, especially in a first mover advantage. Usually the first person who makes the deal gets the best deal. So
who do you think will be first?
It's their choice.
Is there a handful of countries that you expect to have a deal before the 90 days is up?
Oh, I think there could be numerous countries. And look, it may not be the actual trade document, but we will have an agreement in principle.
Okay, crude oil में चाहो तो बुक भी कर सकते हो प्रॉफिट अब पूरा. बाकी थोड़ा सा वेट करना चाहो तो ये एक टारगेट और रख सकते हो, बट थोड़ा बहुत यहाँ पर वॉलेटाइल हो सकता है. थोड़ा नीचे आ जाएगा तो बाइंग करेंगे, नहीं आएगा तो नहीं करेंगे. ठीक है, बाकी बुक करना चाहो तो कर लो. वैसे वो नीचे वाला टारगेट बहुत बड़ा दिख रहा है. यहाँ तक का टारगेट देखोगे 100 पॉइंट का, नीचे जाएगा तो 130 पॉइंट 30 पॉइंट एक्स्ट्रा है. 70 + 30 100 हो जाएंगे कंप्लीट. बाकी यहाँ पर देखोगे नेचुरल गैस को कंटिन्यूसली ओपन इक्वल टू हाई कैंडल बनाया जा रहा है. निकल जाए ना वैसे 289 290 के ऊपर क्लोजिंग दे दे अगर, इट विल बी ग्रेट. ऊपर का और पूरा लेवल ओपन हो जाएगा 295 96 तक. नहीं ओपन होता है तो फिर साइडवेज, और जो फाइटर में जीतेंगे वो निकल जाएंगे. सेलर जीते तो और डाउन आएगा, बायर जीते तो फिर रिकवरी आ सकती है.
It's winning the support from Democratic lawmakers, alumni, including former President Barack Obama. Now, already the government has canceled $400 million in funding to Columbia University. They've paused funds to Northwestern and Cornell and suspended money for Princeton, claiming that they're not doing enough to fight anti-Semitism on campus. Now, unlike those institutions, however, Harvard, the richest university with a $53 billion endowment, but the school does say about 70% of the annual distribution is restricted by donor terms to specific programs, departments, or purposes. Lisa Mateo, Bloomberg Radio.
All right, Lisa, thank you. Let's turn to the markets now. And futures, they're higher this morning following gains on Wall Street to kick off the trading week. The S&P 500 and Dow gained nearly 0.8%. David Sowerby, managing director and portfolio manager at Ancora, says it's a good time to buy for long-term investors.
This is my 12th bear market. Sadly, it's not going to be my last. And I think with the average stock now trading at a free cash flow yield of 6%, that compares very favorably to the 10-year Treasury. So if you're willing to buy and be a little wrong before you're ultimately very right, you should be in there selectively buying.
And Cora's David Sowerby notes the S&P 500 is down 8% so far this year. Time now for the Bloomberg Sports Update, and we bring in John Stashower. John.
Thanks, Karen. The day after the NBA season ended, the Phoenix Suns fired coach Mike Budenholzer. Had the job only 1 year, and the Suns went just 36-46. New Orleans went 21-61, and the Pelicans have fired general manager David Griffin. They're expected to replace him with Joe Dumars. San Diego Padres won again. That's 5 straight wins, and they're now 14-3 on the season. They beat the Cubs 10-4. The Giants are 12-4. They beat the Phillies 10-4. That's your Bloomberg Sports Update.
Thanks, John. And that's news when you want it with Bloomberg News Now. I'm Karen Moscow.
I'm John Tucker, and this is Bloomberg.
नेचुरल गैस देखो ट्राई तो कर रहा है, नहीं जा पा रहा है अभी भी। 290 289 के ऊपर क्लोजिंग नहीं आई तो नहीं जाएगा, ध्यान रखना। ऊपर और निकल गया तो अच्छा टारगेट मिल जाएगा, नहीं तो फिर ये रेंज बाउंड है। फिर आप मान के चलो जिस साइड के एसएल जाएंगे पहले वो निकल जाएंगे। 290 के ऊपर निकला तो और ऊपर, नहीं निकलता है 284 के नीचे तो फिर डाउन मोस्ट प्रोबेबली सीधा वही 276 की ओर चला जाएगा। कैंडल इज ओपन इक्वल टू हाई इन नेचुरल गैस। यहाँ पर ना छोटा सा रेजिस्टेंस बन गया, इसलिए थोड़ा बहुत वो रुक रहा है यहाँ पर। ट्रेल कर लेना नेचुरल गैस में, जो लोग बाइंग में हैं, ठीक है। मैं फिर रिपीट कर रहा हूँ, ट्रेल कर लेना। नहीं निकला 290 के ऊपर, नहीं जा पाएगा ऊपर, और फिर ब्रेकडाउन हुआ तो और नीचे आ जाएगा प्राइस। ऊपर जाना है तो 290 के ऊपर एटलीस्ट एक कैंडल तो क्लोज हो 15 मिनट की, तभी कुछ प्रोबेबिलिटी बनेगी 289 290 के ऊपर। अदरवाइज 289 से 284 के बीच में ये रेंज है छोटी सी मार्केट की। जी बुक कर लिया, ग्रेट। अब थोड़ा अवॉइड करना क्रूड ऑयल में, नीचे से बाइंग का एक्सपेक्ट है, बट अब 330 के बाद ही देखेंगे वॉल्यूम, क्योंकि 530 के बाद ही आएगा। उससे पहले थोड़ा सा मुझे अब लग नहीं रहा क्रूड मोमेंटम करेगा। ठीक है, क्रूड ऑयल में वैसे बुक करना चाहें तो कर सकते हैं, ठीक है। उसमें 70 पॉइंट मिल चुके हैं। थोड़ा सा बड़ा टारगेट और रखा हुआ है, क्योंकि एक कल वाला सपोर्ट है, वहाँ से डीप सपोर्ट लेके आया था। तो मैं एक्सपेक्ट कर रहा हूँ कि थोड़ा और ब्रेक करके जाए यहाँ से, फिर सपोर्ट ले तो ज़्यादा बेटर है, मतलब इस लेवल के आसपास कहीं से फेक ब्रेकडाउन दिखा के। बाकी ऊपर आएगा तो वापस सेल कर सकते हैं। लाइक भी करते रहो। जिन लोगों ने लाइक नहीं किया स्ट्रीम को, डोंट फॉरगेट टू लाइक द स्ट्रीम, सब्सक्राइब द चैनल। इंडिया मार्केट क्लोज होने वाला है, ओवरनाइट पोजीशन मत रखना, कल का कल देखेंगे बाकी। Philippines calls joint US drills defense rehearsal as China tension simmer. India to receive above average monsoon rain in 2025, government says. IEA like OPEC cuts 2025 oil demand forecast on trade tension. Not good news. News is negative. Why UK visa cost data international scientist and engineer. नेस्डेक के कल के लेवल मिस हो गए थे, नहीं तो कल वो सपोर्ट लिया उसने वहां से, सपोर्ट लेके ऊपर चला गया, फिर क्लोजिंग होते होते ऊपर से सेलिंग भी आ गई थी उसी रेजिस्टेंस जोन से जो कल वाला था। अभी तो फिलहाल के लिए शायद साइडवेज ही चल रहा था, मॉर्निंग पे तो देखा था मैंने। हाँ अभी तो थोड़ा बहुत साइडवेज ही चल रहा है, थोड़ा बहुत बाइंग दिख तो रही है बट है साइडवेज ही ओवरऑल। फिर से प्लान करना चाह रहे हो तो वही कल का हाई ही एक रेजिस्टेंस है अभी भी, और तो कोई इसमें रेजिस्टेंस बना नहीं है, कल वाला ही है। ठीक है, कल वाला ही रेजिस्टेंस है। ये चेकआउट हो चुका है, कल एक बार टेस्ट, दूसरी बार टेस्ट करने आएगा। 18,975 से लेकर कल वाला ही है। ठीक है, कल वाला ही रेजिस्टेंस अभी भी इंटैक्ट है। लो पे इक्वल पे है ना, एक सेकेंड, यहाँ पर है। 18,970, अरे एक नंबर नहीं हो पूरा ऊपर, कल जो बताया था रेजिस्टेंस 18,975 से 19,120 पूरा ही रेजिस्टेंस जोन है। बाकी नीचे देखोगे तो जो कल का लो बताया था वो, दैट जोन इज स्टिल एक्ट लाइक एज अ सपोर्ट। बाकी वैसे आज एक डेटा भी है 6 PM पे, वो थोड़ा बहुत इम्पैक्ट डालेगा इस पे। 5:30 और 6 PM, 5:30 न्यूयॉर्क सेशन ओपनिंग, 6 PM पे डेटा। बाकी फिर यूएस मार्केट ओपन होगा सीधा 7 बजे, तो 5:30, 6 PM, 7 PM ये तीन ट्रिगर इवेंट है जहाँ पर थोड़ी वॉलेटिलिटी बढ़ सकती है प्राइस में। ये है ना, आगे देखो जा सकता है नीचे इसका मतलब। निकलेगा तो अभी नेचुरल गैस फाइट कर रहा है, इतना स्लो मोमेंटम है, ऑप्शन बायर्स के लिए प्रॉब्लम हो जाती है। ठीक है, श्योर, देख लेंगे। स्क्रीन से स्क्रीन नैस्डैक की, लो ठीक है। कल यहाँ पर सपोर्ट ले लिया था मार्केट ने, ये कल क्लोज होते होते बस सेलिंग आई थी, फिर यहाँ सपोर्ट ले लिया था, फिर ऊपर गया, वहाँ से भी सेलिंग आई थी, अभी साइडवेज रहा है। ये ऊपर का रेजिस्टेंस है, कैंडल अगर ओपन इक्वल टू लो नहीं बनती है तो यहाँ से फिर से एक सेलिंग एक्सपेक्ट करेंगे। नीचे आता है तो ये थोड़ा बहुत अब वीक हो जाएगा, फिर नीचे यहाँ पर एक मेजर सपोर्ट और है इसके नीचे। अभी तो साइडवेज ही चल रहा है, ब्रेकआउट हुआ 19,120 के ऊपर, तब फिर और ऊपर जाएगा। बाकी 5:30, 6 PM, 7 PM, इन तीन टाइम फ्रेम का थोड़ा ध्यान रखना, वहाँ पर ट्रेड अवॉइड ही करना। रेजिस्टेंस पे ओपन इक्वल टू लो पे सेल नहीं, सपोर्ट पे ओपन इक्वल टू बाई, ओपन इक्वल टू हाई पे बाई नहीं डायरेक्टली। हो गया ना क्लोज मार्केट, मार्केट क्लोज, इंडियन मार्केट क्लोज्ड, क्लोज्ड इंडियन मार्केट क्लोज्ड। क्रूड ऑयल बेरिस है क्या? बेरिस वैसे मतलब इतना कोई खास भी बेरिस नहीं है, मतलब ट्रेंड तो नेगेटिव ही चल रहा है, डाउन ट्रेंड ही चल रहा है। कल मैंने बताया था ना मार्केट में 5,350 के ऊपर कहीं सस्टेन करेगा तभी कुछ बुलिश टाइप में हो सकता है। बाकी नीचे सपोर्ट है, थोड़ा बहुत पुल बैक आ जा रहा है। अभी प्राइस को बुलिश होना है तो मान के चलो 5,370, 350 के ऊपर सस्टेन हुआ तो वापस बुलिश हो जाएगा। बाकी अगर ये 5,200 के नीचे और जाता है तो और भी रिस्क। मुझे तो अभी इंट्राडे में इसकी रेंज ही लग रही है, कोई न्यूज़ वगैरह नहीं आती है तो ऊपर 5,350 और नीचे 5,200, ये रेंज मुझे लग रही है। इसके किसी साइड ब्रेक करने के लिए मार्केट को कोई न्यूज़ या फिर कोई बहुत ही बड़े इवेंट की ज़रूरत पड़ेगी, फिर उसी डायरेक्शन पर मूव कर सकता है। अदरवाइज दिस इज़ अ रेंज ऑफ अप्रॉक्सीमेटली 130 टू 150 पॉइंट की रेंज है इंट्राडे की। 100 हो गए, थैंक यू सो मच। 400 व्यूज़ आर कंप्लीटेड, बताओ अब की बार 400 पार। ले तो सकते हैं उसको। नैस्डैक को थैंक्स, ऊपर से देखो नैस्डैक को थोड़ा हाई लेवल से सेल करना, ठीक है, क्योंकि नीचे सपोर्ट लेके आया है प्राइस। कल वहां से ऑलरेडी 2 बार सेलिंग आ चुकी है तो तीसरी बार आई है, अभी ये कोई पहली बार सेलिंग नहीं आ रही है तो थोड़ा सा वीक हो जाता है प्राइस जनरली, एक या 2 बार के बार। और सबसे बड़ी बात, मार्केट ने कल लोअर लो नहीं बनाया, वो सेलर्स के फेवर में नहीं है। आज इंपॉर्टेंट होगा ये लेवल, अगर लोअर लो आज भी नहीं बना, थोड़ी बहुत सेलिंग आती है और प्राइस 18,780 के नीचे नहीं ट्रेड करता है तो फिर ब्रेकआउट होने के चांसेस बढ़ जाएंगे। 780 के नीचे चला गया तो फिर तो अच्छी खासी सेलिंग है। ये देखो ये वाला है ना, that is a great level liquidity draft, price come down now over here, यहाँ से अगर सपोर्ट लेके जाए प्राइस वो ज़्यादा स्ट्रॉन्ग बन जाता है। look at that, मैं फिर रिपीट कर दूं, ये नेचुरल गैस को ट्रेल कर लेना भाई, जो लोग नेचुरल गैस में बाइंग में हैं। रेंज है नेचुरल गैस में, वो टारगेट बड़ा लगा रखा है बट फिलहाल रेंज ही बनी हुई है, डे हाई टू नीचे 284 के बीच में। प्राइस को ऊपर जाना है तो 290, 289 के ऊपर एटलीस्ट क्लोजिंग बेसिस पे जाना जरूरी है, तभी ऊपर के लेवल ओपन होंगे, नहीं तो ये रेंज बना के बैठ जाएगा मार्केट, फिर फाइट होगी, जिस साइड के भी बायर्स जीतेंगे चाहे वो बायर हो या सेलर, मार्केट उसी साइड मूव कर जाएगा। अगर यहाँ से एसएल उड़ते हैं सेलर्स के, यहाँ पर थोड़े बहुत सेलर तो बैठे ही हैं, तो ऊपर पिकअप कर सकते हैं। अगर नहीं निकलते हैं सेलर के एसएल, तो फिर से नीचे आएंगे एक बार हैमर करने के लिए। यहाँ बायर के फिर एसएल अगर जाते हैं तो फिर और नीचे के लेवल ओपन हो जाते हैं। इसलिए थोड़ा सा मैं तो एक्सपेक्ट कर रहा हूँ कि ऊपर के लेवल ही एसएल ही जाएं सेलर्स के, तो बेटर है। बट अब कहने से नहीं होगा, जाएंगे नहीं जाएंगे वो हम नहीं कह सकते। बहुत ही कॉम्पैक्ट रेंज है, थोड़ी रेंज बड़ी होती तो बेटर था। सबसे बेटर तो ये था कि मॉर्निंग पे जब आया था, मॉर्निंग पे सीधा ही चला जाता, नीचे आता ही नहीं। यहाँ से मॉर्निंग पे गैप डाउन किया, सीधा ही चला जाता इस तरह से, और फिर यहाँ से सेलिंग आती। वो सबसे बेस्ट था। 35 पीपल आर वॉचिंग, 35 लाइक्स कर दो फटाफट से। कोई क्वेश्चन हो तो कमेंट बॉक्स में पूछ सकते हो। तेरे लाइक करते रहो गाइस, लाइक रुकने नहीं चाहिए। बाकी नेचुरल गैस में देखो, थोड़ा सा अगर ये नीचे और आएगा तभी बाइंग करेंगे। कल का सपोर्ट जोन है यहाँ पर, बाय द वे दिस इज द यस्टरडे सपोर्ट जोन। यहाँ कल ऑलरेडी एक बार सपोर्ट ले चुका है प्राइस डीप लेवल से। थोड़ा सा और करेक्ट होके नीचे से आए ना सपोर्ट, एक यहाँ पर फेक ब्रेकडाउन दिखा के ऐसे जाए, वो मेरे अकॉर्डिंग ज़्यादा सेफ रहेगा बाई करने के लिए। क्योंकि कल अगर डीप लेवल से नहीं लेता, ऊपर ऊपर ही निकल जाता, तो फिर भी हम कह सकते थे कि अभी भी सपोर्ट पे ही है। एंड मार्केट मूव नहीं किया तो फिर और प्रॉब्लम। 3:30 हो चुका है, 5:30 2 घंटे बचे हैं हमारे पास वॉल्यूम के लिए। वॉल्यूम डिप हो चुका है ऑलरेडी। बेबी पिप्स में देखोगे तो वॉल्यूम डिप हो चुका है 3:30 to 5:30। इसको बुक कर लेना। निकल गए होगे क्रूड में, निकल जाओ सेलर्स, तो निकल जाओ। नाइन्टी, बिल्कुल 290 के ऊपर क्लोजिंग आ जाती है तो फिर यस ऊपर जा सकता है प्राइस 296 297 के अराउंड। नहीं आई क्लोजिंग तो यहीं से वापस सेलिंग एक्सपेक्ट कर लेना नेचुरल गैस में। मैं सेलिंग का ट्रेड लगा नहीं रहा हूँ बिकॉज फिर दोनों साइड फंस जाएंगे। बिकॉज यहाँ पर सेलर बैठे हुए, नीचे बाहर कौन फिर स्ट्रांग है कहा नहीं जा सकता। बट क्योंकि बायर पहले आए थे तो लेट्स सी सेलर अगर थोड़ी देर यहाँ पर कंसोलिडेशन करके ब्रेकआउट ही दे दे। हाँ निफ्टी काफ़ी अच्छा, कल ऑलरेडी वो 250 पॉइंट से ऊपर ओपन होना ही था कंफर्म। गेन इसीलिए आज भी बना रहा 500 पॉइंट का। कल देखेंगे कल क्या ये कंटिन्यू करता है रैली या साइडवेज जाता है, क्योंकि आज साइडवेज जा चुका है मार्केट गैप अप के बाद। बैंक निफ्टी फ्यूचर और निफ्टी फ्यूचर दोनों ही। निफ्टी फ्यूचर ज़्यादा साइडवेज था गैप अप का, क्योंकि इतना बड़ा गैप अप था उसके बाद नई पोजीशन मुझे लगता नहीं बनी होंगी। मोस्ट प्रोबेबली जो लोग शॉर्ट करके गए होंगे वो अपने एसर उड़ा दिया होंगे उन लोगों ने, और जो लोग बाइंग करके गए होंगे उन लोगों ने अपनी पोजीशन कहीं ना कहीं होल्ड रखी है, बता रहा है मार्केट ऊपर से। अगर कल हल्का फुल्का गैप अप ओपन हो जाता है तब ठीक रहेगा ऊपर से एक सेलिंग करने के लिए। फ्लैट ओपन रहा तो फिर बाइंग पता नहीं आएगी भी नहीं आएगी, स्लोली स्टडी, क्योंकि साइडवेज रहा है आज। प्राइस एक्शन साइकिल के अकॉर्डिंग कल दो ही चीज़ हो सकती है, मार्केट साइडवेज कंटिन्यू रहेगा या वॉलेटाइल होगा। अगर गैप अप हुआ इट मींस मार्केट वॉलेटिलिटी में चला जाएगा सीधा सीधा। फ्लैट ओपन हुआ तो फिर वो साइडवेज टू वॉलेटाइल दोनों में से कुछ एक ही रहेगा, क्योंकि फिर अगर गैप अप नहीं होता है तो सीधा ट्रेंड मिस हो गया ना। गैप अप हुआ तो सीधा ट्रेंड में गया है, इसलिए कंटिन्यूएशन के तौर पे मार्केट वॉलेटाइल होता ही होता है, तो रेजिस्टेंस नियर बाय वहाँ पर जो भी मिलेगा वहाँ से सेलिंग ऑटोमेटिकली आ जाती है। वही ऊपर एक रेजिस्टेंस है ना, गैप अप ओपन हुआ तो बेटर रहेगा कल 23,550 के आसपास। फ्यूचर इक्विटी में फ्यूचर का चार्ट देखना पड़ेगा थोड़ा बेटर लेवल के लिए। ना उतना ही है 23,440 का आज वाला लेवल। ठीक है, गैप अप ओपन होता है फ्यूचर में तो एक अच्छा सेल ऑफ देखने के लिए मिल सकता है। गैप अप नहीं हुआ तो फिर देखने पड़ जाएंगे लेवल ऊपर 23,650 से लेकर 23,730 के बीच में, 720 के बीच में अच्छा रेजिस्टेंस हो जाएगा। बाकी क्या इतना बड़ा गैप अप देगा मार्केट कल? 290 पॉइंट 290 पॉइंट। क्योंकि अगर गैप अप नहीं होता है फ्लैट ओपन होता है तो फिर दोनों साइड मूव कर सकता है, तो कंटिन्यूएशन मोमेंटम में जाए बाइंग के लिए, या फिर एक जो नीचे मार्केट के पास रीटेस्ट है वो करने हैं। रीटेस्ट के लिए आएगा तभी आप बाइंग होगी और फिर मोमेंटम में जाएगा उसके बाद सेलिंग होगी, बट फिर इतना मोमेंटम मिलता नहीं है। 290 पॉइंट 300 पॉइंट निफ्टी मूव कर जाए इंट्राडे में, उसके बाद मोमेंटम होता नहीं है नॉर्मली जितना देखा जाता है। बाकी फिर नीचे रीटेस्ट करने ही आना चाहिए प्राइस को 23,100 के आसपास। ओके, बैंग सॉरी माफ करना, नेचुरल गैस निकल तो रहा है। ट्रेल कर लें इसको। टू 90 के ऊपर क्लोजिंग चाहिए, आ जाती है तो वेल एंड गुड, ऑलमोस्ट डे हाई कह सकते हो। ये मुझे लग रहा है फ्लैग टाइप में कुछ बनाने की कोशिश में है क्रूड। चाहो तो हाफ प्रॉफिट बुक भी कर सकते हो नेचुरल गैस में। 3 पॉइंट मूव कर चुका है, लगभग 8 पॉइंट का टारगेट है। 3.5। ऑन। ठीक है, ट्रेल तो कर ही रखा है एसएल नेचुरल गैस में, हाफ प्रॉफिट बुक भी कर सकते हैं। ट्रेल करके छोड़ दो, देखेंगे 290 के ऊपर क्लोज होता है नहीं। अभी भी कैंडल क्लोज तो हो गई है, नहीं हुई कैंडल क्लोज 290 के ऊपर। 290 को टच किया, वहीं से रिजेक्शन मिला है मार्केट को। नेचुरल गैस में कोई न्यूज़ स्पेसिफिक कोई न्यूज़ नहीं है। बाइक की थोड़ी देर पहले आईए का वो एक स्टेटमेंट आया था जहां पर उन्होंने फोरकास्ट थोड़ा सा डाउन किया है क्रूड ऑयल के लिए। लाइक ओपेक 2025 की ऑयल डिमांड जो रहने वाली है ट्रेड टेंशन की वजह से थोड़ा सा डाउन रह सकती है। क्या लगता है नेचुरल गैस जाएगा ऊपर या फिर ये यहीं साइडवेज हो जाएगा? अब लॉजिकली तो जाना चाहिए इसको। 290। यार के सर नेचुरल गैस में अपसाइड के लिए एंट्री ले सकते हैं, निकल गया सर वो तो लेवल ऑलरेडी। अब नीचे से बाइंग नहीं किया था क्या? सपोर्ट तो बहुत नीचे है, अब यहाँ लोगे तो एसएल बड़ा हो जाएगा थोड़ा सा। यहाँ लोगे तो फिर डे लो का एसएल लेना पड़ेगा, क्योंकि सपोर्ट आपका नीचे था 286 के नीचे। वहां से मार्केट थोड़ी देर पहले ही सपोर्ट ले चुका है ऑलरेडी, सपोर्ट लेके ऊपर गया था। यहाँ अगर बाइंग करते हो अभी करंट एरिया पे तो फिर डे लो का एसएल रखना पड़ेगा, विच इज अराउंड 2.3। थोड़ा सा बड़ा हो जाएगा। अगर रख सकते हो तो मिनी वगैरह ट्राई कर लो, अगर नहीं रख सकते हो तो फिर थोड़ा वेट करना चाहिए, लेवल के ऊपर निकल चुका है प्राइस। बाकी ये कोई ब्लू कलर की लाइन को मैंने एज अ रेजिस्टेंस नहीं रखा हुआ है कि इसका ब्रेकआउट होगा तो रीटेस्ट ट्रेड करेंगे, ऐसा कुछ नहीं कर रहे हम। बाकी क्रूड में प्लान जरूर करना, अगर ऊपर आता है थोड़ा बहुत इन एरिया पे वापस सेल, नीचे आता है यहाँ पे बाइंग कैंडल का ध्यान रखेंगे, ओपन इक्वल टू हाई लो पे बाय सेल नहीं करेंगे। वैसे मैं बना दूंगा लेवल, बनेगा तो वहाँ पे। तो नेचुरल गैस में अगर ट्राई करना चाह रहे हो तो थोड़ा सा एसएल बड़ा है आपका, अभी लिया हुआ है आपने, ले लिया आपने या देखो अभी ले लिया तो फिर जैसा मैंने बताया एसएल डे लो ही बनता है, इससे बड़ा एसएल मत लेना, ठीक है। फ्यूचर में 2.3 पॉइंट का एसएल है, थोड़ी सी लेट है एंट्री इसलिए। बाकी जो लोग नीचे से बाइंग करके आ रहे हैं वो ट्रेल कर सकते हैं अपना एसएल, ठीक है, दे कैन ट्रेल योर एसएल। अभी भी 290 के ऊपर क्लोजिंग नहीं आई है, आती है तो बेटर है। कल बताया मैंने, अभी फिलहाल तो रेंज के अंदर ही है, ऊपर 130 टू 150 पॉइंट की रेंज है, 5350 से 5200 के बीच में, 130 टू 150 पॉइंट ओवरऑल रेंज। बाकी जिस साइड भी ब्रेक होगा इन एरियाज के तो उसी साइड पर बुलिश या और बेरिश हो सकता है, अदरवाइज इट इज़ अ रेंज राइट नाउ। बाकी 630 से पहले रेंज तो सॉरी 530 से पहले रेंज तो ब्रेक नहीं होने वाली। 530 न्यूयॉर्क सेशन ओपन होगा, उसके बाद हो सकता है थोड़ा कुछ रेंज ब्रेक हो जाए। 15 मिनट का चार्ट है वो, जो 5 मिनट का यूज़ कर रहे हैं कर सकते हैं 5 मिनट का भी यूज़, बट दिस इज़ 15 मिनट, मैं 5 मिनट यूज़ नहीं करता। ट्रेल कर लेते हैं। गैस ट्राई तो कर रहा है 290 के ऊपर क्लोजिंग देने का, ये कैंडल देखते हैं, देती नहीं, लास्ट ने तो नहीं दिया। स्टिल वी हैव 7 मिनट लेफ्ट, दिन ऊपर आएगा। कौन गाइस 45 पीपल आर वाचिंग, लाइक करते रहो, जिन लोगों ने लाइक नहीं किया स्ट्रीम को। कोई क्वेश्चन है तो कमेंट बॉक्स में पूछ सकते हो। कोई मेजर न्यूज़ नहीं है, डेटा मैंने बता दिया ऑलरेडी जो शेड्यूल है आज के लिए। 6 PM का एक डेटा है, थोड़ा बहुत गोल्ड और सिल्वर को इम्पैक्ट करता है। RFK Junior vaccine panel made in early test for scientific way. Haven't been this bearish. Wow. Investor have not been this bearish in 30 years. Both of all source.
Wall Street has just fine-tuned its strategy for influencing the White House. So imagine this, you are JP Morgan Chase CEO, Jamie Dimon, running the largest bank in the US, but you've got a very specific problem. You need the president to change his mind in order to avoid a brewing economic crisis. So let's take a look at how Dimon, Bill Ackman, and other finance CEOs helped pull the global economy back from the brink, at least for now. To be clear, none of what follows is anything close to an ideal way for the business community to engage with the US president. But here's what I'm saying and what the rest of corporate America can learn from it. Number one, admit when you're wrong and speak up. CEOs have, for the most part, been unwilling to speak out against Trump on practically any issue, fearing retribution. In this case, finance execs had to both publicly break with the president on tariffs, as well as eat some crow about their previous stances on the impact they would have.
क्रूड ऑयल में ली थी AR के, नेचुरल गैस में फ्यूचर लॉन्ग है सिर्फ, उसके अलावा और कोई नहीं लिया, ना नेचुरल गैस शॉर्ट किया है ना अभी क्रूड ऑयल बाई किया है, ओनली नेचुरल गैस सेल, ये बिकॉज ये कल वाला ट्रेड है, इसको मत काउंट करना, और एक फ्यूचर बाई था नेचुरल गैस में, मैं ऑप्शन बाइंग नहीं करता हूँ तो इसलिए। बाकी देखते हैं, अगर ये थोड़ा सा नीचे अगर आता है और कैंडल ओपन इक्वल टू लो ओपन इक्वल टू हाई नहीं बनती है, तब एक बाइंग का भी प्लान रहेगा क्रूड में। सपोर्ट पे है जरूर, बट वो क्योंकि नीचे डीप सपोर्ट लेके आ गया इसलिए थोड़ा सा रिस्की है वहाँ पे, तो आई एम नॉट इंटरेस्टेड इन नेचुरल क्रूड ऑयल ऑन दिस लेवल। हाँ, वापस ऊपर चला गया तो वापस ऊपर सेल जरूर कर सकते हैं, वो ऊपर वाला रेजिस्टेंस अभी भी इंटैक्ट ही है। स्ट्रक्चर देखोगे क्रूड ऑयल का एक छोटा सा फ्लैग बनाने की कोशिश में है, नॉट अ सिमेट्रिकल ट्रायंगल पैटर्न बट अ फ्लैग। इसको ट्रेल कर लेना, ट्रेल तो ऐसा लेट एंट्री मत करो यार, लेट एंट्री करके कोई फायदा नहीं है, लेना है तो लेवल पे लो, अदरवाइज मत लो मेरे अकॉर्डिंग, तो बाकी ले रहे हो तो फिर उस पर मैं कुछ नहीं कह सकता। नहीं हुई कैंडल अभी भी क्लोज 280 290 के ऊपर, अभी भी नीचे ही है नेचुरल गैस में 290। से रिजेक्शन ही ले रहा है नेचुरल गैस, मतलब अभी रेंज के आइदर साइड पे नहीं निकल पाए हैं बायर्स, सेलर स्टिल एक्टिव एट 290 289। ठीक है, नहीं निकल पा रहा है ये, कैंडल हो गई क्लोज, नेचुरल गैस स्टिल ऑन द सेम लेवल, ट्रेल कर लो इसको। ठीक है, लास्ट दोनों कैंडल ट्राई जरूर किया 290 के ऊपर जाने का, नहीं जा पा रहा है। एटलीस्ट एक कैंडल तो क्लोज हो, जब तक कैंडल क्लोज नहीं होगी 290 के ऊपर रेंज इंटैक्ट रहेगी, ऊपर से सेलर्स की और नीचे से बायर्स की। इस पे कितना है 230 बुक करके, गौतम राठौर जी नेचुरल गैस 7 के बुक कर लिया, 2 लॉट ट्रेल कर रहे हो, चलो बढ़िया। रखना अगर ऑप्शन ट्रेड कर रहे हो तो अगर ये ऐसे ही साइडवे चला गया तो फिर प्रीमियम कुछ बढ़ेगा नहीं। अगर ऑप्शन सेलिंग में हो या फ्यूचर ट्रेड कर रहे हो तो बात अलग है। जो लोग ऑप्शन बाइंग में है, अगर नेचुरल गैस में सपोर्ट से मोमेंटम नहीं आया फास्ट तो प्रीमियम डाउन चला जाएगा, कुछ मिलेगा नहीं, ध्यान रखना। जी नेचुरल गैस आज साइडवेज ही रह जाएगा लगता है। वैसे कल काफ़ी सेल ऑफ आ गया है, थोड़ा प्रॉफिट बुकिंग आनी तो चाहिए क्योंकि इसके नीचे कोई सपोर्ट नियर बाय में है नहीं नेचुरल गैस में भी। अगर नीचे ब्रेकडाउन के लिए चला गया गलती से भी तो या तो नए कोई रेजिस्टेंस ही बन जाएंगे, नहीं तो नेक्स्ट सपोर्ट हो काफ़ी नीचे है, फिर तो थोड़ा बड़ा ही सेल ऑफ आ जाएगा। ऑलमोस्ट मेरे अकॉर्डिंग तो लोअर सर्किट पर ही है फिर मार्केट 284। 30 पॉइंट डाउन है ऑलरेडी मार्केट, ब्रेकडाउन कर गया तो ऑलमोस्ट 4 से 4.25% और गिर जाएगा फिर उस केस में, अगर नहीं होल्ड करता है तो ऑलमोस्ट लोअर सर्किट के अराउंड 276 275 वही एक लेवल है। हाँ, बाकी वहाँ पर एक वीकली का भी सपोर्ट है, वो भी ब्रेक हो जाएगा उस केस में। ना ना, ट्रेल कर सकते हैं। क्रूड ऑयल में क्या करें, अभी तो कुछ भी नहीं कर सकते, सेलिंग में थे तो प्रॉफिट बुक कर लेना, नीचे आता है तो देखेंगे बाइंग के लिए, लगा दूंगा मैं लेवल अगर कुछ ट्रेड बनेगा तो। 75 सुखबीर जी ग्रेट लग तो रहा है रेंज के अंदर ही है बट उससे अच्छी रेंज नेचुरल गैस की बनी हुई है नेचुरल गैस में एटलीस्ट रेंज तो छोटी है क्रूड की रेंज काफ़ी बड़ी है अदरवाइज
What is happening in China right now? We're astonished at what's happening from an innovation point of view. When the government here put out an objective,
yes,
the entrepreneurial zeal of the people takes over and they accomplish incredible things.
move that has been given a narrative versus a narrative that has been that has resulted in the move. How do you separate those two?
You know, normally I would be absolutely on the side of those arguing that this is more as an explanation, an ad hoc explanation for a move that we've already seen. I mean, I've always been quite vocal in saying that, you know, all these stories about the era of the dollar coming to an end are overdone. And in the past, I absolutely believed that. But my sense right now is that it's more than that. And I mean, and I don't think it's just the narrative. The problem is that there is a story behind that narrative. I mean, we're talking about Donald Trump, the president who, you know, in his first few months of office has done many things that maybe we would have considered almost unthinkable beforehand. And I think the problem is this drives massive uncertainty. I mean, at this point, what do we want to rule out? I mean, let's take the Mar-a-Lago Accord. I mean, the idea of forcing investors in U.S. Treasuries to give up their, you know, interest-paying bonds in favor of non-interest-bearing century bonds, that's almost ludicrous. And I think with this uncertainty and this sort of feeling of anything could happen, I think that's what's damaging the dollar and dollar sentiment right now.
So, Sonia, what is the alternative? You need a deep market with lots of liquidity, a reliable issuer with stable policy. What's the alternative?
Yeah. Well, that's the big problem. I mean, when you look back, I mean, you know, we have this sort of codependency that's evolved over centuries, decades, sorry, not centuries, but decades. You know, we have the U.S. depending very much on foreign capital. So the U.S. has been dependent on that source of money coming in. And on the other side of the equation, you have foreign investors who've built up massive amounts of treasuries or dollar assets. And because they're sitting on a big pile of these, it's very difficult for them to leave. So the thinking so far has been, it's too painful to leave, because let's imagine China were to announce, you know, we're going to divest U.S. treasuries, we're going to sell out. That's going to immediately result in a massive increase in UST yields. It's going to damage the still existing portfolio China, for example, holds. So it seems a bit like a codependent situation. I think the question now becomes is what's more painful, staying in that dependency or making a hard cut. And I think that's the thinking that's driving investors to question old traditions of safe haven dollar assets.
Debates that are taking place right now in investor committees all around the world. Sonia, appreciate your time. Sonia Martin there of DZ Bank on the latest. What is the alternative? I'll tell you what the ultimate test is. If you get a bad jobs number, some bad data this week, retail sales, do bonds rally or do they sell off? That, for me, is going to be the ultimate test. Has it still got that haven status in times of difficulty in financial markets? That's
a fantastic test. Take it a step further. Nature is healing. With some time away from the leverage trade unwind, supposedly, if we don't get material dollar strength and if we get the ongoing sell-off in treasuries, all of a sudden you have to think maybe something else is afoot.
That would spook people, that's for sure. Equity futures at the moment just about positive, and did the bond market some stability in the last 24 hours. With an update on stories elsewhere, with your Bloomberg brief, here's Danny Berger. Hey, Danny.
Hey, John. Several small businesses have sued President Donald Trump over his tariff policy. They argue that his use of the International Emergency Economic Powers Act is unconstitutional and that, quote, trade deficits are not an emergency. The White House responding, saying that President Trump is, quote, standing up for Main Street. Elsewhere, NVIDIA plans to produce as much as $500 billion worth of AI infrastructure in the U.S. over the next 4 years. NVIDIA started producing its advanced Blackwell chip at TSMC's new plant in Phoenix. NVIDIA is also working on key partnerships to build supercomputer plants in Texas, alongside packaging and testing operations in Arizona. And a Blue Origin rocket that sent an all-female crew to space included pop star Katy Perry, Gayle King, and Jeff Bezos' fiancée, Laura Sanchez. The flight lasted roughly 11 minutes, and Perry sang Louis Armstrong's What a Wonderful World as the crew looked at the Earth. This is the first time in 60 years that an all-female crew has flown to space. And that's your brief. John.
Danny, thank you. Just getting some earnings from Bank of America. So net interest income comes in at $14.44 billion. The estimate 14.36. A line that Lisa was looking for, provision for credit losses. Lisa, that comes in at $1.48 billion. The estimate 1.53.
This to me is fascinating. Provisions for credit losses. The fact that it came in lighter than expected. We saw that similar from PNC earlier this morning with provisions for credit losses also coming in lighter than expected. Where lies that downturn that everyone was talking about that the banks discussed possibly girding for?
The stock is up by 1%. It's a beat also on trading revenue. Up next on the program, the big banks embracing volatility.
Trading in all of the big firms in equities was better than expected. The banks have always pointed it out to us in
नेचुरल गैस हो गया है कैंडल क्लोज। यस 290 के ऊपर कैंडल देखो क्लोज हो गई है। थोड़ा एक्सपेक्ट करेंगे कि अब मोमेंटम करें, लेवल को रिमूव कर देते हैं, अब इनको ज़रूरत नहीं है। लेट्स सी डायरेक्टली आता है एक पुल बैक देता है, हाफ प्रॉफिट बुक करके ट्रेल करना है, नथिंग एल्स। ऊपर आ जाएगा तो फिर यहाँ से वापस सेल करेंगे। लास्ट कैंडल हो गई है क्लोज लेवल के ऊपर। लेट्स सी उसको भी देखते हैं। आगे देखते हैं ये कैंडल कहाँ क्लोज होती है, नहीं तो एक और पुल बैक में ट्रेड प्लान हो जाएगा। एक कैंडल अगर थोड़ा सा एक और ऊपर लेवल पे क्लोज होती है, बीच में से एक लेवल और। प्रसाद सत्या जी देखो यहाँ इसके ऊपर जाएगा नहीं जाएगा कह नहीं सकते। इसके ऊपर वैसे जाना तो नहीं चाहिए, कल वाला ही सपोर्ट है वो स्ट्रॉन्ग ही सपोर्ट था। दैट इज़ अ रीटेस्ट जोन एक्चुअली। तो इसके ऊपर 298 आई थिंक लेवल है, आई थिंक एक बार चेक कर लेते हैं। हाँ 298 299 कह सकते हैं, वहाँ तक जा सकता है। उसके ऊपर सस्टेन करना मुश्किल है। मैक्सिमम 300 मान लो राउंड नंबर पे, अदरवाइज 298 से 299 मेजर रीटेस्ट जोन बन जाएगा ऑलरेडी। हाँ कोई न्यूज़ हुई तो उस पर मैं कुछ नहीं कह सकता, न्यूज़ पे हो सकता है डायरेक्टली मूव कर जाए, बट अगर कुछ ऐसा मोमेंटम नहीं होता है तो उस केस में फिर मार्केट उसके ऊपर सस्टेन नहीं होना चाहिए लॉजिकली, क्योंकि वहाँ पर रीटेस्ट भी है साथ में ऊपर रेजिस्टेंस, दोनों साथ ही बने हुए हैं। पर कलर को मत मानना, कोई एक लेवल आपका रीटेस्ट नहीं होता, वो पूरा जोन है वहाँ पर एक जो सपोर्ट था, ब्रेक डाउन हुआ है तो पूरा जोन ही रीटेस्ट की तरह काम करेगा एज अ रेजिस्टेंस। आपके लिए पोजीशन बना ली हूँ, क्या लिखा है, बना लिया है। मेरे साइड से कोई ट्रेड नहीं चल रहा अभी। क्रूड ऑयल में सेलिंग का ट्रेड था, उसका टारगेट हो गया। बाइंग का बनेगा तो देखेंगे। नेचुरल गैस में एक बाइंग का ट्रेड चल रहा है। मेरे साइड से कोई ट्रेड नहीं है भाई। अगर आप ले रहे हो तो फिर उसमें एसएल रखो। एसएल रखा हुआ है, एक टारगेट है तो फिर कोई प्रॉब्लम ही नहीं है। मेरे साइड से अभी कोई ट्रेड नहीं चल रहा उसमें फ्रेश। और नहीं नेचुरल गैस ऊपर वाले में जाएगा तो लेट्स सी देखते हैं। यस ओपन इक्वल टू हाई या ओपन इक्वल टू लो, नॉर्मली वो कैंडल अगर सपोर्ट रेजिस्टेंस पे बन रही है तो दोज आर नॉट गुड। ये 290 के ऊपर क्लोज, तो नीचे तो नहीं आई कैंडल, आ रही नीचे आ गई। ये भी ठीक है ना, इसमें यहाँ पर नहीं बनेगा कोई नहीं। यहाँ पर एक हो सकता है अप्रोक्सीमेटली और है तो रीडर्स में राइट। फाइव 30 पे ओपन होगा, अभी नहीं। 5:30 न्यूयॉर्क सेशन 5:30।
around the world. Having a secure infrastructure that you can reliably use globally is a key ingredient for our success.
Lauren, let me start with you. Where's your head at the moment?
Well, gosh, I think uncertainty is certainly the word of the day, if not the word of the year. So looking at this from the outside, I think it's really interesting to see how China's strategy is shaping up. It seems to be a strategy of patience, matching action with retaliation, and courting the rest of the world in anticipation that others are going to be hurt by Trump's trade policy right now.
Cameron, I think we can put the same question to you.
Yeah, I mean, the reality is that much of the zeitgeist of the U.S. now is just kind of is gone. And I think one of the things you see here when you talk to suppliers and buyers is that this essentially gives Asia and Africa to Chinese supply chains an influence, because now as American firms have to focus more on the home market, the companies and organizations with the money to invest in new areas, whether it's new products in Southeast Asia, whether it's going into Africa, that will be mostly Chinese money. And China also has the technology, and they also have the talent and the people to use that. So here on the ground, that's kind of how they're looking at it. I think the other thing is that we haven't really been here before, at least for a century. So there's not only uncertainty, but what is going to happen next? I think Lauren actually pointed that out. We just don't know, and it's causing great uncertainty in the markets.
Cameron, there's something very prescient about that observation that we haven't been in this situation in a century. If you look back, not even a century, look back 50 years, there wasn't a trade relationship to talk about really to the extent that we've seen evolve over the last few decades. So, Lauren, on that note, do we need to prepare? Do companies need to prepare for a almost near complete decoupling on bilateral trade between the two?
Well, frankly, I think the trajectory is well understood at this point, right? This isn't new territory. This is our second trade war under this current president, right? So I think a lot of that, there are no illusions about the direction of travel here. I think what's now become the most difficult and the least predictable element of this is U.S. policy. And that's what's really affecting these broader questions of global trade order, right? Obviously, companies are having a significant amount of difficulty planning 5-10 years out. But there are bigger questions here about what it means for the U.S. to pull back from the global trade system.
Cameron, we were speaking with the Footwear Association from the US earlier as well. They represent more than 95% of the shoe industry across the states. And they were saying that they're already hearing of orders that are being cancelled by companies in China. How are the suppliers in your network or contacts that you have also reacting to this?
Yeah, we're seeing across the board a wholesale canceling of POs, particularly anything in the near future, let's say in Q2. Past that, though, we're seeing a bit of a pause, more of, we'll put some down payment on, but we're not going to fully execute the PO until we have better clarity. So in the supply chains, at least, anything in the next couple of months basically is a no-go, particularly if they don't have any exemptions tied to it. Electronics will be safe, things related to that, but any kind of footwear, toys, puzzles, the things you might buy at a Walmart, even on Amazon, all of that is basically stopping at the moment.
What are you seeing, though, Cameron? Because one of the interesting sort of phenomenons that maybe we're seeing, and we are discussing it at least, are these TikTok videos, essentially, where suppliers are going through and
देखो 4 आवर टाइम फ्रेम पे XRP USD को अगर देख रहे हो अभी फिलहाल के लिए 530 पे थोड़ा बहुत वॉलेटाइल हो सकता है उस समय थोड़ी बहुत कैंडल, बट 4 आवर टाइम फ्रेम पे इतना कुछ खास मेजर इम्पैक्ट तो होता नहीं है. तो अभी के लिए तो साइडवेज ही है मार्केट, और ऐसा नहीं कि अभी से साइडवेज है, काफ़ी देर से कल से साइडवेज ही है ऑलमोस्ट. कल शाम देखोगे वहाँ से मोमेंटम ही नहीं हुआ है मार्केट में, एक रेंज के अंदर फंसा हुआ है. प्लान अगर कुछ करना चाह रहे हो तो क्या कर सकते हैं, देखो ऊपर मार्केट के पास एक रेजिस्टेंस है, आया नहीं है वहाँ तक अभी एग्जैक्टली. अगर एक हल्का सा ब्रेकआउट कर देता है तो देयर इज अ वेरी हाई चांसेस वहाँ पर एक बाइंग सेलिंग की अपॉर्चुनिटी मिल सकती है. अप्रॉक्सीमेटली ये बाइनेंस के चार्ट में देखोगे तो 2.3143 के अराउंड, तो वहाँ पर एक सेलिंग का प्लान कर सकते हो अगर उस लेवल के अराउंड मिलता है तो. आया नहीं है वहाँ पर एग्जैक्टली अभी भी. तो वो एक रेजिस्टेंस ही है फिलहाल के लिए इन 4 आवर टाइम फ्रेम. बाकी कोई रीटेस्ट है तो वो भी देख लेता हूँ, अगर वैसे लग तो नहीं रहा मुझे रीटेस्ट है यहाँ पर कुछ. ये लेवल ऑलरेडी टेस्ट है फर्स्ट. ये लेवल ऑलरेडी टेस्ट करके जा चुका है एक बार। ठीक है, ये रुक रहा है बिकॉज यहाँ पर एक रेजिस्टेंस हुआ करता था 2.1305 के अराउंड। ये मैं बाइनेंस के चार्ट की बात कर रहा हूँ। वहाँ पर ऑलरेडी एक बार सेलिंग आ गई थी 6 अप्रैल को। फिर इसका ब्रेकआउट हुआ था 12 अप्रैल को, तो रीटेस्ट में ही रुक गया ऑलमोस्ट। ऊपर आता है तो वहाँ सेलिंग कर सकते हैं वापस 2.3170 के ऊपर कहीं पर भी। बाकी अभी रीटेस्ट पर ही है। कल ब्रेकआउट हुआ था, कल ही रीटेस्ट कर दिया था, उसके बाद से एक दिन से उसी साइडवे जोन पर रुका हुआ है। अब या तो ऊपर जाए या फिर अगर वापस बाइंग होनी है इस रीटेस्ट पे, इतना देर रुका हुआ है, अगर अभी ऊपर नहीं जाता एक दिन से ज़्यादा, तो फिर तो एग्जैक्टली सपोर्ट पर ही टिल्ट होना चाहिए लिक्विडिटी लेने के लिए। तो ये कुछ लेवल है जिनको फोकस रख सकते हो। फिलहाल तो ओवरऑल साइडवेज ही मान के चलना इन 4 आवर टाइम फ्रेम। ठीक है, ऊपर एक रेजिस्टेंस यहाँ मिल जाएगा 15 मिनट टाइम 4 आवर टाइम फ्रेम के अकॉर्डिंग। यहाँ एक सेलिंग का प्लान कर सकते हो। एक रेजिस्टेंस था, कल ब्रेकआउट हो गया था 4 आवर टाइम फ्रेम पे, कल ही रीटेस्ट कर दिया, उसके बाद से पूरा ही साइडवे चला गया। अब या तो ऊपर जाए, यहाँ सेलिंग, अगर ये अब नहीं होल्ड करता है, नीचे निकल के आ जाता है क्लोजिंग बेसिस पे $2 के नीचे, तो फिर नीचे सपोर्ट पे बाइंग कर लेना 1.86। ये 4 आवर टाइम फ्रेम है, ध्यान रखना अलग अलग टाइम फ्रेम के अलग अकॉर्डिंग लेवल अलग अलग हो सकते हैं। हाँ, ओपन इक्वल टू लो बनाया तो सीधा ही चला गया ना। लाइक भी करते रहो गाइस, डोंट फॉरगेट टू लाइक द स्ट्रीम। और है न्यूयॉर्क सेशन पे, देखते हैं उसके बाद कुछ रेंज ब्रेक होती है तो क्रूड की स्पेसिफिकली। ट्रेंडिंग था, साइडवेज हो सकता है क्या? नेचुरल गैस हो सकता है। कल ट्रेंडिंग था तो दो चीज हो सकती थी, या तो आज ट्रेंडिंग ही रहे या फिर साइडवेज हो जाए। अगर आज साइडवेज रहा तो फिर कल साइडवेज टू वॉलेटाइल हो सकता है, फिर से एक ट्रेंड मिल सकता है। साइकिल ये रहती है, ट्रेंड, वॉलेटिलिटी, साइडवेज, ट्रेंड। तो ट्रेंड कल मिल गया है, एक वॉलेटिलिटी हो सकती है, देन फिर साइडवेज, फिर से एक ट्रेंड।
I love it. It's my dream job. Come to the Red Sea Mountains and regenerate your body.
The president now warning that tariffs are coming for phones and consumer electronics, downplaying a pause as merely a procedural step. China, meanwhile, hiking its own tariffs to 125% while calling Trump's actions a joke and showing no signs that it's ready to negotiate. We get the outlook for global logistics too, speaking exclusively with the DHL Group CEO, Tobias Mayer.
Take a look at how Asian futures are setting up right now, pointing to the upside early in the Asian session as we continue to watch the offshore yuan holding at that 728 level against the U.S. dollar. Remember, 4 weeks of losses already for the Chinese currency, both onshore and offshore. We have seen central bankers, both from China, Korea, Japan, everyone gathering in Malaysia just to discuss these tariff implications for monetary policy. Nikkei futures pointing to the upside of 0.6%. We heard from Japanese officials saying that they will not be using the potential of offloading treasuries in these tariff negotiations going forward. Remember, there was a lot of speculation, of course, on what China might do with their purchases of treasuries that really spooked the treasury markets as well. And Heidi, we saw those losses last week when it comes to U.S. sovereign debt.
Take a look at how we're setting up when it comes to US futures. And of course, there are signs that this move upwards when it comes to US equity futures as a result of this idea of some of these exemptions. President Trump, of course, now pushing back against that narrative, saying that it's just more of a procedural step, that this could see that rally fade quite quickly. A little bit firmer. So we are seeing that relief that smartphones, electronics are being exempt at this point, that tariff stay applying. But it does look like they're looking at those supply chains, and that could very much impact the next move that we see ahead. We are looking at Asian stocks, though, as you say, particularly those electronics and tech-related names, seeing at least a boost in today's trading session. Let's get more on that top story. Bloomberg's Tyler Kendall at the White House is with us. Garfield Reynolds leads our Markets Live Asia coverage out of Sydney. Our Chief North Asia correspondent, Stephen Angle, is joining us out of Hong Kong. Great to have you all. Tyler, let me start off with you. What did we actually hear from President Trump in terms of these exemptions that he doesn't really want to be characterized as exemptions, and how permanent or impermanent could they be?
Yeah, so President Trump is saying that, quote, no one is off the hook, as it does appear that these tech imports will be subject to a Section 232 investigation, which could take weeks or months. So it's unclear how long that reprieve will actually be in place. We have to keep in mind the original executive order that President Trump signed on April 2nd always excluded things like chips, lumber, copper, pharmaceuticals, these industries that could be subject to Section 232 tariffs on the basis of national security concerns down the line. It now appears that these tech imports, including consumer electronics, will now fall under the umbrella of the sector-specific tariffs instead of the umbrella of the so-called reciprocal tariff plan. We heard President Trump saying that they're just moving these tariffs from one bucket to another bucket. Now, with that said, when this White House has invoked Section 232 before, including for steel and aluminum tariffs, on auto tariffs, they put into place a 25% baseline tariff when it comes to that. So let's say, just for the argument that potentially that could be the tariff rate that goes into place on these chips and these chip supply chain products that go into them, that would be lower than what they were facing, including that now 145% tariff across the board when it comes to China.
EDP's 5G Living Lab is transforming a 70-year-old dam into a digital innovation hub.
Vodafone Business has deployed 5G infrastructure to transform the way we do things better, faster, more efficiently.
How much signal are you able to see at the moment in all the noise at the moment? What are you watching to figure out what happens next?
Well, there are three scenarios that are important for the global economy markets. One in which you de-escalate not only with friends and allies, but also with China, and you start negotiation. If that's successful, then you avoid the U.S. and global recession. Markets are going to be higher all over the world by the end of the year. The other extreme scenario is one in which there is a failure of negotiation, even with friends and allies, let alone with China. Then we end up in the U.S. and a global recession, an ugly one. But the more likely scenario is the middle one in which you have successful trade negotiation to de-escalate with Europe, Japan, Taiwan, India, South Korea, and you name it, but not with China. And if you don't start negotiation with China, the trade level of tariffs are such that then inflation is much higher in U.S., there is a growth shock in China, and you can still get a near recession in U.S. and in China that then damages the world economy and damages the markets. So I think that unfortunately we're in this limbo right now. There is a chance the U.S. and China may start negotiations. If they do start negotiations, they could try to reach a grand bargain, but the ask of the U.S. out of China might be too much for China to accept. So those negotiations may still fail.
Nouriel, what's on the table here? You think about the kind of the spectrum of what we're thinking about. Besant's talking about what sounds like, as I was just talking about, Kennan-like containment of China, that we're basically going to tear the global economy into two competing spheres of influence. He wants to use the rest of the world to ring-fence China and to isolate China. In that kind of a world, how long is it going to take? How long is it going to take to get to a steady state in which we don't have the kind of volatility that we've got now? How long is it going to take to reorder the global economy into that kind of a new world?
Well, if you're really trying to contain China, it's not just a trade war, but restriction to technology, to financial activity, to investment both ways, and so on, imply a strategy of full economic containment of China, what China is really worrying about, that the U.S. is trying to prevent the rise of China. If you do that, you have a risk of a true war, because the only thing that is constraining China from going and trying to take over Taiwan, either to an invasion or a blockade, is the fact that they know that the U.S. might punish China by doing what they've done with Russia, meaning total trade embargo, no economic activity with China, and that would be highly painful for China. But if you are going to a world of trade tariffs of 145%, of full economic containment, then that leads to a trade war that becomes an economic war, that leads then to this Cold War becoming colder, and eventually a hot war in the case of Taiwan. Why should China restrain itself with Taiwan and not take it over? If it is losing the global markets of the U.S., might as well start to do that. And it's not obvious that the U.S. is going to reply to that by breaking a blockade, because that's not just a war with China. It's not just a conventional war with China, because either side is going to either win or lose, and then it becomes an unconventional war, and then it's the end of the world. So those who think that they can contain China, I think they're really playing with fire, because that's very, very dangerous. What you can do is to do a grand bargain with China, where you do a deal where you de-risk the relation of China by decoupling in technology, because the things that are critical to U.S. and China, there has to be full decoupling, but then you do trade on everything else. We don't care about Chinese toys or consumer products being cheap in U.S. We're worried about advanced tech or EVs or semiconductors or things of that sort. So if you reach a grand bargain, then you still have a division of the world in two, but it is a technological division. It is not a full decoupling, it's de-risking what's important.
Well, Nouriel, walk us through then the levers that China can use here. There's a lot of speculation about whether or not China is selling treasuries, whether they're looking to devalue their currency further. What kind of response can we expect from China in the days and weeks to come? As you point out, the U.S. looks to contain it.
Well, there are things you can do for the domestic economy. You can do massive additional fiscal stimulus. You can do further monetary easing. You can gradually weaken your currency, but of course, with tariffs at 145, if you let your currency so much lower, then there is a risk of capital flight in spite of capital control. You can do structural reforms to reduce the savings rate and increase domestic consumption. It implies to creating a social safety net. You're already replying to the U.S. by imposing tariffs of 125%. Of course, given the trade imbalance, the U.S. hit on China is worse than the one that China can impose on the U.S. But then there are lots of other things. You can shut down the exports of rare metals to the United States. Most of the refining of even industrial and green metals like copper occur in China, not the production, but the refining. You can shut down that. You can go after Tesla. You can go after Apple. You can go after hundreds of billions of dollars of U.S. Economic interest and FDI in China. You can do lots of things. And as I said, you can then become more aggressive with Taiwan as well. So there's a whole spectrum of things China can do. By the way, China and Xi Jinping do not face election. Next year, there'll be midterm election in the U.S. that could lead, if there is an economic recession, to the MAGA project failing miserably. He can wait out the United States. So in the short run, China has a lot of leverage. In the medium term, of course, a trade war like this hurts China more than the U.S. because China is exporting 2% of its GDP to the U.S. If that goes to zero, it's a huge economic shock.
Well, Nouriel, in terms of the economic shock, I'm curious about, I mean, you just laid out all the levers that China can pull. To what extent is the volatility around these tariff announcements doing more damage than the rate itself, in that corporations from both sides of the Atlantic and both sides of the Pacific are...
देखो यहाँ पर एक क्रूड ऑयल में सेलिंग का ट्रेड प्लान कर सकते हैं. नीचे थोड़ा सा रह गया प्राइस का आना अभी, तो ये छोटे से पुल बैक के लिए एक प्लान हो सकता है कि अपने इस नीचे सपोर्ट को ब्रेक करे और हल्का सा नीचे आके वापस सपोर्ट ले. बहुत ही कॉम्पैक्ट रेंज है, बीच बीच में बहुत सारे सपोर्ट रेजिस्टेंस बना दिए हैं इसने. तो ये छोटा सा एक पुल बैक का ट्रेड इन क्रूड ऑयल, छोटा सा ही है, कुछ ज़्यादा बड़ा नहीं है. ये अभी आधा घंटा 45 मिनट और है, देखते हैं कुछ मोमेंटम तब तक हो जाता है तो. पूरा ही साइड में चला गया मार्केट तो. ठीक है, वैसे लॉजिकली तो यहाँ पर कोई ट्रेड लेना नहीं चाहिए, वेट करना चाहिए कि प्राइस नीचे आ जाए या फिर रेजिस्टेंस पे चला जाए, क्योंकि बहुत ही स्मॉलर रेंज के अंदर फंस गया है यहाँ पर मार्केट. बट ट्राई कर सकते हैं, अगर ये थोड़ा सा रिस्क उठा सकते हैं 17 पॉइंट का, नथिंग मोर देन दैट. फ्यूचर 17 पॉइंट ऐसा ओनली. नीचे आएगा तो फिर देखेंगे सपोर्ट के अराउंड. ये अभी मोमेंटम नहीं आता है तो फिर सीधा 5:30 के बाद ही देखेंगे, क्योंकि 6 PM पर एक डेटा भी है, थोड़ा बहुत उसका भी इम्पैक्ट होगा ऑब्वियसली है.
Use globally is a key ingredient for our success.
Good morning from London. I'm Kriti Gupta alongside Guy Johnson. We're an hour away from the opening trade. Here's what you need to know. President Donald Trump pledged tariffs are still coming on smartphones, computers, and other electronics, downplaying a weekend exemption as a procedural step in his push to remake U.S. trade. And the dollar continues to weaken as worries around the U.S. trade balance and deficit pressure the Treasury curve and amplify those trade worries. How prepared is China in all of this? We're going to dive into the latest data as President Xi Jinping aims to woo Southeast Asian nations. Guy.
In honor of Rory McIlroy, there is an awful lot of green on the screen this morning. He wins the green jacket. And as you can see, markets respond. I joke, of course, we are watching very carefully what is happening with the tariff story. You've got Euro Stoxx 50 futures up strongly. Keep an eye on the tech trade today. That is where the centre of attention is likely to be. The Nasdaq is up by 1.45% in terms of the futures trade that we're anticipating out of the States. You've got the Euro bid as well. We're up by 0.2%. The dollar is definitely down this morning. That is one of the narratives we'll come back to. And the US 30-year, even the US 30-year, in honour of Rory McIlroy, is in the green this morning. The countdown to the opening trade starts right now.
That exists.
Yeah.
At least there's going to be one kind of potential trading point that sectoral tariffs are coming. Was this part of the strategy? We don't know. But at the end of the day, if there is a bull case to be had, and I'm kind of clutching at straws here for the bull case, just given all the volatility, is that even just for the temporary basis, the number on some of these electronics are still less than 145%. Even with the fentanyl tariffs, even with the 20% and the 34% and all the numbers, it is still less than the 145.
Doesn't it just expose? Doesn't it just sort of act as a way of exposing just how embedded US tech is into China, and how important it is and how problematic it's going to be, therefore, if Trump is determined and Besson is determined to isolate China from the US economy? They are so intertwined. Apple is so into China in such a massive way that withdrawing is going to be difficult.
So Tim Cook did a really notable job in the first Trump administration getting iPhones exempted from that whole China story. But in the meantime, diversifying away from China and creating the supply chain now into India that he can kind of draw on. He hasn't been so lucky this time around, even after attending the inauguration with several of his tech counterparts.
So I think it's going to be really interesting to see how long the bump that we get from the temporary part of this lasts, because it is temporary. Lutnick said it, Trump said it. It clearly is, as you say, we are heading towards some sort of sectoral story here. I don't know, what could that look like? I have no idea what the number could look like, but it is going to be, it's going to raise the price of these products in the United States. So I wonder how long before that is the part that ultimately gets price in. Yes, it's not 145, but it could be a pretty punchy number.
It could be a pretty punchy number. The whiplash over the weekend when the markets were closed was unreal. I mean, it's just a moment of kind of brief optimism from the tech crowd, including the likes of Dan Ives, by the way, who went from Uber tech bull to Uber tech bear very, very quickly, and then back again. I think it's also important that we're talking here about, and a lot of the analyst knows, I don't know if you've seen this, is you had this idea of peak uncertainty kind of in the rearview mirror. That peak uncertainty had already passed. And I thought that was really interesting because that phrase came up so much over the weekend.
I just don't know. I don't know. Are we heading for another week like last week? I don't know. What could go on here? I don't know. The volatility in the policy story is so hard to read at the moment. As you say, I'm almost glad it happened over the weekend, though. In some ways, all of this stuff should be limited to weekends so we can go through the arc of it all. And by the end of it, hopefully have some resolution. I'm not sure we have some sort of resolution here, but this stuff is coming out all over the shop. Mid-session, you've got a tech story over the week. Who knows when it's going to come out? It could come out at any moment. Clearly, there is still concern around the bigger picture, though. You could see that, I think, in the dollar this morning. The dollar continues to be an area of weakness. We do have a bid back into Treasuries at the long end, so that at least maybe is signs of some stabilisation. But you've got an awful lot of ground to cover this week. And it is interesting that the dollar story is still there as a negative, you could argue, in terms of how the market is voting on what Trump is doing. Basically, it is signaling that assets are leaving the United States.
There's the trades piece of it, which absolutely is weighing on the dollar. And we've seen that across U.S. assets as well. Then the idea of the kind of the deficit, the trade balance, all of these kind of fundamentals from, I would argue, September of 2023 has kind of come back into the conversation. We are counting down to that debt ceiling in July. We're counting down to that This is the chart that I think is really important for our audience because you can just see how much investors are really hedging against further dollar weakness. You've already seen them gone neutral. You've already seen them quite bearish. They're saying there's more to come, at least when you look at the options market.
Absolutely. So the beneficiaries of this, I look at Europe. So the euro is trading strongly into an ECB meeting this week, which I think could be fascinating because it's an ECB meeting that could deliver a cut. So how does the FX market respond to a cut from the ECB? Is that something that takes the steam out a little bit of the euro story, or in some ways could it turbocharge it because the European economy is getting a boost at this point? Now it's obviously off a very low base, but it is getting a boost.
It's getting a boost in terms of the asset classes, but the European economy still has the same problems that arguably the U.S. economy has. They're still talking about deficits. They're still talking about overspending. They're talking about a supply chain issue. The narrative around the European economy is really a narrative shift around Germany specifically, and the idea that somehow the German fiscal spend will come to the rescue of the broader European economic story. But is that a temporary situation? The next 3 months, Europe kind of outperforms, and then it reverts back.
It's interesting. You look at all the investor surveys at the moment that are being done. People are saying we're going to take money out of the United States and we're going to put it to work in developed markets, which basically means Europe at this point. They're singling out Europe as being as an investment destination for equity money in particular, and it's going to flow out of the United States and into Europe. And obviously that's a real money story that in theory should boost what is happening with the euro as well. Let's talk about China. I'm not sure how you read the data this morning. I looked at it first thing and kind of largely ignored it. Clearly there's been a lot of front running. There has been a lot of front running. Chinese exports are up way more than anticipated. That is understandable. This is March data. Imports are down, but it basically tells you about an economy that has front run the tariffs. The next set of data, I think, will be the interesting ones.
Yeah, the front running of the tariffs, but we've seen that in the data set for the last 3 months or so on the anticipation of that tariffs exist. I think the question around China is that they feel very prepared for this. They've had they're looking to diversify. Xi Jinping is in Vietnam at the moment. He's on a tour in Southeast Asia to a lot of the countries, by the way, that are getting also hit by the tariffs in a very, very big way. He's also speaking to a lot of the European leaders. This was a conversation last week as well. At the same time, they're kind of pumping in this fiscal stimulus. They're keeping an eye on the stock market. There's a question of devaluation. The narrative that I've heard in the last week has been, do they or do they not sell treasuries? Yeah. Are they going to be doing that? Do we know? I've seen it both sides. Some people saying it's already happened. Others saying, actually, the hard frequency data doesn't say it yet.
It just needs to do a little bit. Shirley Wren's written a nice piece about this today. Just a little bit here, a little bit there, just to keep the treasury market unstable. Just to kind of sell at just the right times. You don't even need to sell very much to freak everybody out because the market's so sensitive at the moment. Just want to factor in another part of the narrative as well. LVMH has got sales and revenue numbers down a little bit later on. I think the numbers will drop at about 4:40 London time. There's a call at around 5 o'clock London time. It's the new CFO on that call. It's going to be really interesting to see what LVMH says about what is happening in the United States, where it's highly exposed, what's happening in China. That kind of what happens with the consumer story, I think, is going to be really interesting. And LVMH, I think, will particularly give us an upper-end view of what is going on. But also the wealth effect, which I think is something we haven't talked a lot about recently. The stock market keeps going down. What is the wealth effect? Do people stop spending? There's already some early evidence that is going to be happening. So we've got a lot to discuss this Monday morning. We'll probably all really talk about the golf, but we'll talk about what else is going on as well. Jordan Rochester from Mizuho is going to be joining us, FIC Head of Strategy. Kevin Gordon, Charles Schwab, Senior Investment Strategist. Nuria Rubini is going to be here as well, Rubini Macro Associates. And Diana Choileva, Inodo Economics Chief Economist, is going to be joining us to give us a take on what is happening in China. What is China up to? How prepared is it? What is going on? We will ask her a little bit later.
Plenty of great conversations coming up, plenty of data and plenty of earnings throughout the week as well. Something we haven't talked about this morning is, of course, the slew of numbers we got out of JP Morgan, Wells Fargo on Friday. Goldman Sachs is going to be reporting today, plus a slew of other bank earnings throughout the week as well. We've got UK employment on Tuesday as well. And then it kind of all goes down to monetary policy later in the week. Chair Powell, what is he going to be making all of this? U.S. retail sales will show up, perhaps reflecting some of that kind of worries in the consumer confidence data. And then the ECB rate decision. But I think the highlight really is that we get Friday off. We get a little bit of a break.
It's a short day. It's a short week. You've got another short week coming up as well. I wonder how you manage risk this week. Just because we've got 4 days.
Yeah.
who knows what's going to happen over 4 days. I would argue you put all the news into those 4 days. We can go through the full arc of everything that we need to know and hopefully come back on Tuesday morning being fully informed with an accurate picture of what is going to happen. That ain't going to happen. I know that's not going to happen, but it'd be nice.
In terms of the data, though, I'm curious, is it what we're going to wait, of course, wait for Chair Powell and what he has to say as well. But to me, I think the bank earnings are really crucial there. Yeah. What Jamie Dimon said last week, he's ringing the alarm. He's saying, look, recession odds are there. Chair Powell is fully capable of stepping in. But he went from an uber consumer bull of American resilience and consumer exceptionalism to saying, actually, guys, we have a problem.
He has been talking about the hurricane for a while, though. He has been talking about the storm gathering. It's not all been plain sailing in Jamie's view as to what is going on in the world for quite some time. Obviously, there's turbocharges, all of that. So what else do you need to know this Monday morning? Iran has said talks with the United States over the weekend were, quote, constructive. Saturday's meeting was the first top-level meeting between Washington and Tehran since 2022 and marks a renewed effort to resolve a standoff over Iran's nuclear program. President Trump has said repeatedly he wants a deal or he will resort to military action. The next meeting is now scheduled for April the 19th. UK officials are rushing to secure raw materials needed to keep Britain's last primary steel manufacturer running. The government passed an emergency bill on Saturday to take control of British Steel after talks with its Chinese owner broke down. The UK Business Secretary, Jonathan Reynolds, spoke about the takeover at an emergency session of the House of Commons.
Since taking office, this government has been negotiating in good faith with British Steel's owners, Xingye. We have worked tirelessly to find a way forward, making a generous offer of support to British Steel that included sensible, common-sense conditions to protect the workforce, to protect taxpayers' money, and create a commercially viable company for the future.
From one extreme to the other, tech giant Meta and America's Federal Trade Commission will meet in court today in a high-stakes case that could result in the social media giant being forced to divest Instagram and WhatsApp. The FTC is accusing Meta of buying the two businesses to stifle competition. It's a case that started in the first Trump presidency and will be a big test of his new administration's willingness to take on big tech. The sense seems to be that the FTC and its lawyers face an uphill battle here, that it is going to be difficult to achieve that divestment story. But nevertheless, it just shines a light, I think, on the Trump administration and what its policy towards big tech is going to be. Because at the moment, it feels like it's all over the place. We come back to what is happening with Apple. We look at this case here. The expectation was that Zuckerberg would have an in with this administration, that Tim Cook would have an in with this administration. Setting out to be a bumpier ride than many, I suspect, in Silicon Valley would have hoped for.
Well, we were waiting for the deregulation that he was screaming for on the campaign trail, and that meant for a lot of people more M&A activity. But take a look at what's happening to M&A activity right now anyways. They're looking at the volatility in these public markets. They're saying, let's give it a second. Facebook, Meta, Apple, Amazon, all these big tech names aren't able to position and grow that quickly. They do it through acquisition. So this is going to be a really crucial one.
Yeah, they did it through acquisition. Certainly in the early days, that was the idea. This is an antitrust case. It'd be interesting to see how. So I think Meta's idea will be to present this as the consumer is benefiting here.
Yeah.
I.e., these businesses are better within our fold than they are as individual standalone entities. And as a result, the consumer has benefited from that. So it's going to be interesting to see the two different ways of approaching this from Meta's side and also from the FTC side. Yeah. We'll watch very carefully, I think.
Well, and is the FTC just going to be sending a different message than what Meta is dealing with right here in Europe with the European Commission? That's going to be certainly something we keep a very, very close eye on. In addition to what's coming up on the show, we were talking at the very start about this kind of change or gear shift around some of the chip stories and the technology. Infineon up sharply on trade day. We're going to see what the ripple effects of that are. Plus, JP Morgan CEO Jamie Dimon warning of stormy seas ahead amid Donald Trump's trade war. We're going to dive into the details and some more of the bank commentary throughout the week. But up next, we're going to dive more into the markets. Nicholas Brooks from ICG will be joining the program. If you have any questions of your own for us or for our guests, get involved in the conversation. IB plus BBTV Go is the function on your terminal. This is Bloomberg.
From our perspective, we're seeing a complete deleveraging of positions, and that's what's been driving it. So whether it's been swap spread trades, whether it's been the Treasury basis, whether it's been investors who sold Germany and bought the U.S., All those things have begun to unwind, and it's put a lot of downward pressure on Treasury prices.
Well, Michael, global head of fixed income at JP Morgan Asset Management, speaking to the surveillance crew yesterday as we came into this new week. I think the Treasury curve has been steepening for 9 straight weeks now. Valerie's here with the details.
Yeah, steepening for 9 straight weeks, Guy, and every day yesterday, last week, the 10-year yield headed higher. 60 basis point rise in the 10-year yield last week, but it looks like there is a bit of calm when it comes to the Treasury market. We are lower all across the curve. That 10-year yield lower by nearly 3 basis points. So while there is some calm in the Treasury market, though, there is still other trades that are extending. The main one being dollar weakness. We're seeing the dollar headed lower this morning, hitting fresh lows for the year, trading at a lows not seen since last October. The main outperformer on the back of this is the Japanese yen. And Guy, I think this tells us that those repatriation flows out of dollars into home currencies might still be continuing. The yen is particularly vulnerable to that kind of repatriation flows, as a large chunk of Japanese investments are held abroad. So to keep an eye on dollar yen and also on the euro for any hints of those repatriation flows continuing. Guy, I want to end with one chart that I found very shocking. 5 years ago, on the onset of COVID, if you plowed your money into gold instead of the S&P 500, you would have now returned the same. The recent decline in the equity market compared to the recent new record after record for the yellow metal has now shown over the last 5 years they're neck and neck on returns.
It's amazing, isn't it? Kind of one equity is, in theory, very risky. Gold, in theory, isn't. I think it's interesting to see how divergent this market is. Valerie, thank you very much indeed. Let's get more on these markets. Nicholas Brooks, Head of Economic Investment Research at ICG, joining us around the table. Good morning. What's going on with the US Treasury market right now?
Yeah, I think we're seeing a realignment from investors. We've had 2 years where everyone has viewed the U.S. as sort of in an exceptional position of 2 to 3% economic growth, inflation coming down at a steady pace, people feeling very comfortable with the outlook, money going into the S&P 500. We're now seeing a complete shift because there's a huge amount of uncertainty, of course, because of these tariff policies. The concern is that the U.S. growth, the U.S. economy is going to slow potentially quite sharply. So the questions about, how quickly the Fed might have to cut. And then on top of that, we have the Treasury market issue of what already has been a large amount of supply coming into the market from the U.S. Treasury. And the concerns are if we see a slowdown in growth, fiscal deficit widens even further, and we're going to see an even bigger supply coming into the market, hence yields start to rise.
So we've got this kind of multiple set of factors coming into the Treasury market. Just want to come back to Valerie's last chart on gold.
Yeah.
Are Treasuries safe havens? Because in theory, what should happen at this point is that equity starts to come under pressure, Treasuries catch a bid. But that's not happening. Gold is catching a bid, Treasuries aren't.
Yep.
Again, what does that tell you about investor sentiment and what is going on out there?
Yeah, no, I think, and what's interesting is gold has been rallying for quite some time now. I think structurally the U.S. has been running big fiscal deficits under Biden, and now it appears we're going to continue to see that under Trump. And the concern at that point is the dollar a safe haven in the medium to long term? So people are diversifying. So I don't think people are wholesale selling dollars and saying, it's the end for the U.S. But I think long-term investors are saying, maybe we need a bit more euro, maybe we need a bit more gold, maybe we need a bit more Swedish krona. But what we need to do is diversify ourselves away from the U.S. dollar.
There's a question here, in addition to a potential stop in business sentiment or business investment, a potential stop in consumer investment as well, that the lack of spending from the government is ultimately what's going to be the straw that breaks the camel's back, and that we're talking about these massive federal layoffs, we're talking about defense contracts that are kind of going away and dissipating as well. To what extent is that the underpriced risk in this market?
No, I think that's right. And I think, as you probably spoke about on Friday, the data coming out of the U.S. on the consumer sentiment is quite worrying. We've had 3 consecutive months of sharp falls. And again, inflation expectations rising, and that puts some constraint on the Fed to react to that. And then on top of that, we're getting cuts in government spending coming through. So I think the combination of these factors, plus actually what you mentioned earlier on, is the wealth effect. Yeah. The stock market's falling. People are still looking in the U.S. at pretty high mortgage costs. So Are we going to see a further, down leg in private consumption? So I think we're in a pretty difficult place right now in the U.S.
You mentioned that kind of digestibility being an issue when it comes to extra issuance from the Treasury market as well. Is there an argument here that there's too much liquidity in the system, not just in the Treasury market, but in the equity market as well, that would almost dissuade some sort of Powell put?
Interesting. Yeah, to be honest, I think where the Powell put comes more into question is the inflation expectations. Looking at those long-term inflation expectations rising so substantially, I think is very worrying to the Fed and to any central bank, because, of course, what they worry about is that self-reinforcing cycle. And it's the worst-case scenario, the so-called stagflation scenario, where you have growth slowing and a central bank in a position where they can't really cut aggressively to shore things up.
So what's the advice right now? Very little clarity, a lot of opacity, a very bumpy policy path ahead.
Yeah.
What do you do as an investor right now? You talked about diversification a little bit earlier on. Is that just pot luck? Because in some ways, some of these countries are being affected by Trump policy. You get a reaction in the other country as well. I diversify, but I don't know which bits of my portfolio are going to be affected by the trade war. Yeah. So what do I do? Just to go as broad as I can?
I think what a lot of people are doing, and I think it's rational, and often this is not a rational thing to do, are moving to cash and moving to the sidelines or moving into gold. If you're in liquid markets, if you're in more private markets and you're looking long-term investor, well, you might be looking at this volatility as creating opportunity to find some good value for a long-term investment. So, so for me, it would be cash, gold, private markets with a long-term time horizon.
Do I own cash because I think better opportunities are coming, or do I own cash because I'm seeking safety?
I would say you'd be holding cash just to watch and see how things pan out. And I think ultimately we will have a better buying opportunity.
Okay.
So I think it's just waiting for that time, and no one knows what it is because no one knows what those tariff policies are going to look like tomorrow, next week, or a month from now.
Doesn't holding cash, though, make you more susceptible to any sort of inflationary shock?
Good point. Well, I guess what I would say to that is the idea would be that you wouldn't be in cash for too long, you would hope. But wait until we see how these policies play out, because they seem to be changing pretty much every day and every week. And until that settles down, I think it makes more sense to sit on the sidelines and watch.
You're still getting 4% at the front end of the curve.
Sure. For how long?
I know, but sure. But the Fed's not cutting at the moment, so let's assume that you keep 4%. You're basically matching inflation, aren't you?
I guess so. Sure. And then until it flips in like 3 days, right? Isn't that the concern of this volatility? You can't actually bank on that 4%. It is quite literally picking your moments. Is what
you can't bank on anything right now.
Right.
I guess that's the challenge.
And that's the challenge. And I would say that's why sitting in cash, no one wants to do that for too long.
Yeah.
But we are in a period of massive flux right now, and one would hope it will start to settle down in the next few months.
Gold doesn't deliver any yield.
Yep.
Yeah.
Well, but maybe the S&P 500 does. Who knows? Nicholas Brooks, head of economic investment research at ICG, joining us around the table this morning. We're going to continue the markets conversation and how you digest these markets, how you digest this news flow. That conversation next. This is Bloomberg.
Monday the 14th, good morning. 30 minutes until the start of equity trading here in Europe. Bonds have just started trading. We'll get to those in just a second. This is what futures look like. Heavily influenced this morning, I suspect, by tech. You're going to see some of the big tech names out of Europe. Infineon, maybe one of those names, bouncing quite strongly. This on the back of the carve out for US tech, which apparently is temporary. Who knows what the ultimate tariffs will ultimately be? We'll wait and see at some point this week, maybe. Could be today. Who knows? Anyway, let's talk about what's happening in the bond market, which is actually probably a little bit more interesting right now. You have German 10-years UNCH, OATs moving a little bit. There's a bid back there. What you do have is a fairly decent-sized move in BTPs. Italy's rating was upgraded by S&P Global Ratings Friday afternoon. That is now being priced in to the BTP market this morning. So just keep an eye on what is happening there. Inflation, obviously a factor in all of this as we work our way towards the ECB meeting on Thursday, but also a factor in the United States right now. So we try and watch which piece of data we should be focusing on when it comes to the inflation narrative. Critty's all over that story.
Well, Guy, we keep using the R word, recession. What does that look like? How do we know when we're in one as opposed to just looking at it in hindsight? And I think the important piece here, at least for me, has been what is the consumer doing at the end of the day? Or is the consumer responding to some sort of bracing for impact from businesses? Nevertheless, I'm looking at a set of data that we got on Friday coming out of UMich. Now, the top panel here is going to be inflation expectations on a one-year basis. So just how expensive are things going to get in 12 months' time? The median estimate on that. The bottom panel, by the way, is the consumer sentiment index. And I like to look at both of them because every time they don't always correlate. They don't always show you the same kind of messaging and that higher inflation equals lower consumer sentiment. But that's the moment we're in right now. And that's what this panel really shows. Inflation expectations hitting the highest going back to the 80s. I'll show you that in just a moment. Just as consumer sentiment takes a beating as well. A lot of this tariff narrative, the idea that things are about to get more expensive, already worrying consumers in the United States and having ripple effects around the world. But when we have this kind of divergence in the data, we tend to see it kind of align with some of the recessions. I'm going to take you back and give you a little bit of a history lesson here. The last time we saw this jump in both sets of data in opposite directions was in 2022. Now, of course, we didn't hit a recession at that point, but we did see this question of inflation expectations. We did see the Fed hiking very, very aggressively and met, by the way, by a massive stock market decline. So that was 2022. You have to go back to 2008 to see the previous example of both of these data sets. Going back even further, because we feel like we need to look at historical parallels, we go back to the 1990s, the early 1990s. I had to Google this one, Guy. Maybe you'll remember it. But this was important because this had a lot to do with this thing called the December freeze. Not a recession, but a really very cold ice storm, I'm told, that actually messed with the data a little bit. But then right back, the further example is Volcker-era economics. Under Jimmy Carter, this idea of inflation expectations got really high. A recession was basically manufactured by the Federal Reserve. Is that the moment we're in? I don't know. But the data suggests that we're in an era of worry.
What's really interesting here is that actually in so many ways the UMich data is or tends to be heavily influenced by what happens with gasoline prices. Generally, they are the kind of North Star for the UMich data when Janice Shu pulls those numbers together. What I think, Critty, is interesting is that that's not turning out to be the case. Gas prices have been coming down, but the consumer is still seeing more inflation coming through. And I think that will be the worry, that this is clearly something out of the ordinary, as you say, to see what is happening here. And the consumer's also been bitten a lot by inflation recently and is really wary of it. So it'd be interesting again to see what happens on spending. Is this ultimately the straw that breaks the camel's back, to your point, that drags the consumer down? Or is it just a broader wealth effect that comes out of the stock market? Or is it just a combination of all of it?
I love that you brought up oil because I feel like the conversation in 2022 and specifically in 2021 as well, is when we were talking about these inflation increases, oil was part of the conversation, but you heard so many times that chips are the new oil in terms of the commodity increase. So it's interesting to me that even with lower oil prices, a lot of American consumers, I would argue global consumers, are looking at the prices of washing machines, of iPhones, of EVs, of the things that require more of that technology space and ultimately that dependency on China that's freaking everyone out. But the idea that maybe iPhone prices is the bigger scare factor than oil prices tells you a lot about the era we're in.
Yeah. I think somebody worked out last week that it would cost £3,500 for an iPhone if it was manufactured in the United States.
Yeah.
Is that the direction we're ultimately going in? Because that's going to become quite prohibitive, I suspect, for a lot of people. Is this something that you have to have, or is this something that is just nice to have? Do you have to have the latest version? I don't know. Maybe
we all switch to Androids and Samsungs all that.
I don't know. I'm an Android user. Phones don't tend to cost quite as much. Certainly the ones I buy. Anyway, let's talk about what is happening with these markets right now. Let's figure it out. Our executive editor for Asia Markets, Paul Dobson, joins us now. Paul, in terms of just setting us up for the week, we're going into a week where it looks like the dollar is starting on the back foot. Is that a trend that is likely to continue and be maintained?
That's certainly the risk scenario, Guy. I think that's what people are worried about. And that narrative does seem to be gaining traction as well. The idea that people are moving their cash sequentially out of US assets, both on the equity side and on the bond side, in favor of overseas assets. We saw a lot of that, obviously, last week with all of the volatility. Now, in the Asia session, the dollar did start particularly weak. It's actually recovered some of those losses. You know, one thing we don't really know for sure, but one thing that's going to determine it is how far the Trump administration is still going to go with the tariffs. If there are more signs of an easing of those tariffs, then that may play into a more favorable dollar perspective, particularly if there's less confrontational approach. On the other hand, if people are genuinely losing trust in the US and the US economy and US assets as a whole, then there could be a long way further to go because the dollar is overvalued on most measures of relative value for currencies.
Paul, what do dollar bulls need to hear from Chair Powell to reinstate some confidence?
I don't know if it's Powell who will be the one that would give them confidence. It's more all about the president, right, Chrissy? I think that one thing that we did get a little bit of positivity in U.S. markets on Friday was from the fact that one of the Fed speakers, Collins, was talking about the idea that if there's market dislocations, then don't worry, the Fed's got your back. But they would need to be pretty extreme because we've already had some pretty big market dislocations. If you look at swap spreads, for example, if you look at bid-offer spreads at the back end of the U.S. yield curve, there has been some troubling signs already, and we haven't seen any action so far from the central bank. I think, if the central bank does say that it's going to do something, and that could mean stepping up cuts in interest rates, and actually that could still play dollar negatively rather than positively because of those relative spreads. And if people are taking their cue more from short-term yields than from long-term yields in the US, then that may still not be very supportive for the dollar.
Let's talk about gold. Gold catching yet another bid. Is gold the new treasury? There's a lot of debate about this over the weekend in what I was reading. Can gold replace treasuries as a safe haven asset? It's a much smaller market. You're going to see, therefore, the market moving much more aggressively in theory. Can it really serve the same purpose given the scale of the two markets?
I mean, the one thing that gold has going for it is it's physical, right, Guy? You actually have gold in your hands or in your reserves if you're buying it, as opposed to treasuries. So on the flip side, treasuries pay you a coupon. They give you an asset that you can use as collateral in trades elsewhere around the world as well. So they're useful in terms of greasing the global economy as well as a store of value. On the other hand, if you just want to stay away from the dollar, and a lot of people are talking about that being a possibility, then you need something else. Gold, European bonds, Japanese government bonds, they're where people are looking.
Paul Dobson, Bloomberg Executive Editor for Asia Markets, walking us through all the assets, maybe an alternative to the dollar at the moment. It's fascinating the ripple effects that this dollar weakness is and is not having, and that it's having a positive effect on the likes of Europe. But I'm not seeing the bid into commodities the way, besides gold, but into commodities that a weaker dollar would traditionally bring.
There's a couple of things I just want to point out. One of which is the euro is now above 114, which I think is worth paying attention to. So that is getting some traction. The yen is now north of 142, so we're keeping an eye on what is happening there. The Japanese 30-year is up 16 basis points. So you're seeing some quite... This is a move that's picking up pace over the last kind of half an hour or so as European traders start to get their feet around the desk, under the desks. So just keep an eye on what is happening there. That 30-year move in Japan is a fairly big one. We're now north of 114, as I say, on euro dollar. So I think this morning is setting up, just demonstrating once again the market nerves around what is happening here. The US 5-year down by 4.8 basis points. So you are seeing some positive news, you could argue, in the Treasury curve, but the move in Japanese 30 years is worth noting.
And we should mention that as you talk about the dollar move, a lot of that getting amplified in the Treasury. You mentioned Treasuries as well, but 444 on the 10-year, now down 4 basis points. And cable as well, almost at a 132 handle. So seeing some gigantic moves in the UK as well. So where do you hide out in this market? This morning, some of the optimism certainly in the European currencies, certainly in some of the semiconductor stocks as well. Is the reprieve over the weekend actually positive news? We're going to dive into the details in our stocks to watch next. This is Bloomberg.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I'm Alex Rodriguez, executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Jay Williams.
I want to be an owner one day.
Billie Jean King.
Learn the business.
Paul Rabel.
Don't chase trends. Get ahead of them.
And so many more.
16 minutes till cash opens this Monday morning for equities. There's a lot going on out there. Japanese 10s are fairly stable. Japanese 30s really are. The yen is on the move. Euro dollar's trading north of 114. The dollar's definitely on the back foot. Valerie's here and she's worried about deficits. So let's start there.
Guy, I think one thing that was
Good morning from London. I'm Kriti Gupta alongside Guy Johnson. We're an hour away from the opening trade. Here's what you need to know. President Donald Trump pledged tariffs are still coming on smartphones, computers, and other electronics, downplaying a weekend exemption as a procedural step in his push to remake U.S. trade. And the dollar continues to weaken as worries around the U.S. trade balance and deficit pressure the Treasury curve and amplify those trade worries. How prepared is China in all of this? We're going to dive into the latest data as President Xi Jinping aims to woo Southeast Asian nations. Guy.
In honor of Rory McIlroy, there is an awful lot of green on the screen this morning. He wins the green jacket. And as you can see, markets respond. I joke, of course, we are watching very carefully what is happening with the tariff story. You've got Euro Stoxx 50 futures up strongly. Keep an eye on the tech trade today. That is where the centre of attention is likely to be. The Nasdaq is up by 1.45% in terms of the futures trade that we're anticipating out of the States. You've got the Euro bid as well. We're up by 0.2%. The dollar is definitely down this morning. That is one of the narratives we'll come back to. And
तो गाइस 5:30 होने वाला है, न्यूयॉर्क सेशन ओपनिंग होने वाली है. अपना एसएल थोड़ा संभाल के रखना क्रूड ऑयल में. बाकी नेचुरल गैस कैंडल ओपन इक्वल टू हाई बनाई, सपोर्ट ब्रेक करके नीचे आ गया. नीचे सपोर्ट है, देखते हैं यहाँ पर रुकता है नहीं रुकता है. अभी डेफिनेटली लग रहा है कोई न्यूज आई होगी पक्का. बाकी ये कैंडल देखेंगे क्लोज कहाँ पर होती है, नहीं तो उसके बेसिस पे एक सेलिंग का ट्रेड वापस बन जाएगा इस सपोर्ट के ब्रेकडाउन पे. नेक्स्ट सपोर्ट तो नीचे ही है काफ़ी. और तो कोई ये भी रीटेस्ट ही है, सपोर्ट तो है ही नहीं इसमें. कि 7 मिनट लेफ्ट, 7 मिनट और रह गए हैं सिर्फ. ठीक है, क्रूड ऑयल में एसएल कॉस्ट पर रख लो अब. 5:30 की कैंडल कहाँ मूव करेगी, नोबडी नोज. नीचे आता तो बाइंग ही कर लेते हो, एग्जैक्टली आ भी नहीं रहा वहाँ पे. मिनट लेफ्ट. नीचे भी अब नेचुरल गैस ऑलमोस्ट ऐसा लग रहा है लोअर सर्किट ही मारेगा। ये कैंडल अगर इसी लेवल पे क्लोज होती है पुल बैक में वापस सेलिंग आ जाएगी इसमें। नीचे फिर 275, 273 एंड 270, यहाँ तक के सारे लेवल ओपन है। इनमें से कहाँ रुकता है देखते हैं। 272 वाले पे रुक जाएगा ये ना। ये तो एक रेजिस्टेंस मार्केट ने कर दिया ब्रेकआउट। यहाँ पर एक बाइंग बनती है इस एरिया पे। ठीक है 273 के अराउंड एक बाइंग बन जाएगी अगर डायरेक्टली नीचे आता है। ऊपर गया तो ये सपोर्ट ब्रेक डाउन हो चुका है, इसके रीटेस्ट पे सेल। आता है तो भी अच्छा। ठीक है दिस सपोर्ट बिकम अ रेजिस्टेंस नाउ। थ्री मिनट लेफ्ट। अगर ये हल्का सा पुल बैक दे देता है तो यहाँ से सेलिंग कर देंगे, अगर डायरेक्टली नीचे आता है तो फिर ये बाइंग जोन होगा। यहाँ पर तीन सपोर्ट हैं, एक ये भी है, एक ये इसके नीचे भी बना हुआ है। यहाँ पर तीनों एक के बाद एक के बाद एक है। ये टेस्ट अभी तक हुआ नहीं है तो ये थोड़ा ज़्यादा स्ट्रॉन्ग है। ये टेस्ट हो चुका है 3 बार। टू मिनट लेफ्ट। ट्रेल कर लो क्रूड ऑयल में सेलर्स। बाकी कैंडल ओपन इक्वल टू हाई, ओपन इक्वल टू लो कुछ बनती है तो फिर थोड़ा वेट करना पड़ेगा। Asia raises 700 million from bond auction. दोनों ही सपोर्ट बहुत ही पास में बने हुए हैं, ऑलमोस्ट एक के नीचे एक बने हुए हैं। इसको रिमूव करूँ तो एक के नीचे एक ही बने हुए हैं ऑलमोस्ट। इसको ना एक काम करते हैं, वेट करो। कैंडल ओपन इक्वल टू लो है क्रूड में, नेचुरल गैस में ओपन इक्वल टू हाई जरूर बनी थी बट ब्रेक कर दिया है। कैसे पता नहीं कौन सी न्यूज आ गई, रुक ही नहीं रहा है प्राइस, ऑलमोस्ट 4% डाउन हो चुका है, 4.5%। लोअर सर्किट के काफ़ी करीब 6% पे लोअर सर्किट लगता है। अगर नीचे वाले एग्जैक्ट सपोर्ट पे आ गया 272 तो लोअर सर्किट लग ही जाएगा। फ्री फॉल में चला गया नेचुरल गैस ऑलमोस्ट क्रूड गिर ही नहीं रहा ऑलमोस्ट। ये दैट इज करेक्ट। 273 सॉरी 273 274 यहाँ पर एक बाइंग का ट्रेड है प्लान। कैंडल कैप अप हुई इतना सीधा ऊपर चली गई। बाइंग कर सकते हैं यहाँ पर। एसएल क्या रहेगा इसका? देखिए ये एक ट्रेड रहेगा बाइंग का इन नेचुरल गैस। इसका टारगेट देखना पड़ेगा स्पेसिफिकली क्या रहेगा, अभी तो के लिए यही है, बीच में कोई और लेवल भी होगा तो वही मार्क कर देंगे। सेकंड टाइम ही आ रही है ना, चलेगा। ये अगर नीचे तक आता है तो ये लोअर सर्किट है इसमें 6%। दो दो सपोर्ट साथ में बने हुए हैं तो मैंने मिक्स कर दिया, ठीक है, दोनों का लेवल। दोनों ही सपोर्ट जोन है साथ साथ, अब या तो मर्ज कर लो या अलग अलग बना लो, दोनों जगह से बाइंग एक्सपेक्ट कर सकते हैं, जितना डीप आए उतना बेटर। 0.78 अच्छा। बाकी अब तो नेचुरल गैस का व्यू सुपर बेरिस हो चुका है, पुल बैक आएगा तो वापस सेलिंग ही होगी, नीचे से बाइंग आती है सपोर्ट की जोन से। हाँ यहाँ से भी सपोर्ट ही है। 6 PM पे डेटा, अब और कोई डेटा नहीं है। डेटा वैसे था भी नहीं, 5:30 पे तो न्यूयॉर्क सेशन ओपन हुआ है। नेचुरल गैस अगर क्रूड ऑयल 5240 के नीचे अगर कोई क्लोजिंग दे देती है तो मेरे अकॉर्डिंग तो फिर ये और अच्छा खासा बेरिस होना चाहिए। क्लोजिंग अगर आई तो 5240 नहीं आती है तो फिर थोड़ा सा यहीं रुक जाएगा प्राइस। ऊपर रेजिस्टेंस जरूर है बट इसके नीचे एग्जैक्ट लेवल तक आएगा नहीं प्राइस। करते हैं चेकआउट करते हैं इस कैंडल को। तो लोग सेलिंग में है, एसएल कॉस्ट पर रख लेना गाइस, जाएगा नहीं नीचे, नहीं तो कल वाला ही सपोर्ट रुक गया है वहीं पर प्राइस। नीचे आना है तो क्लोजिंग जरूरी है एक ठीक ठाक। पहुंच गया नेचुरल गैस सपोर्ट एरिया के अराउंड, वो पूरा ही सपोर्ट जोन है, ऊपर वाला नीचे वाला दोनों ही सपोर्ट है। चाहो तो मिक्स कर सकते हो, चाहो तो अलग अलग रख सकते हो। नेचुरल गैस में वॉल्यूम देखोगे सडनली स्पाइक हुआ है, दोनों साइड पे 5% डाउन है ऑलमोस्ट. Singhal ji, thank you so much for joining channel members. If you have any question, you have a question. Jing future level. Let me check. Jing future level. You're talking about MCX, right? Not Forex chart. And in 15-minute time frame, I hope so. Day low. In 15-minute time frame, day low is a support. Okay, 250 to 250.70 is a support area. Day low is a support area in 15-minute time frame. The next support is 247 in 15-minute time frame. This is 15-minute time frame level I'm talking about. This is not any other time frame. So these are the two levels in 15-minute time frame as a support. Day low, which is already taking the support in morning. Morning already एक बार support ले चुका है अभी 12:15 के around. 250 to 250.70. Next support जैसा मैंने बताया 246.40 to 247. As far as resistance is concerned, if you look at the resistance, okay, so there's a resistance, but I think it is already too much occupied from this area. 252.35 to 252.70. It is a resistance area, but it is already occupied 2 to 3 times. So you can mark one another level for more confirmation, because उससे क्या होगा एक लेवल थोड़ा सा दूर दूर बन जाएंगे, नहीं तो बहुत पास पास में लेवल है 15 में टाइम फ्रेम पे. दिस लेवल इज फार बेटर देन दिस वन. ये टेस्ट नहीं हुआ अभी तक. ठीक है, तो इस लेवल को देख सकते हो 15 मिनट टाइम फ्रेम पे. कोई न्यूज आएगी तो उसका ध्यान रखना. अभी 7 PM पे यूएस मार्केट ओपन होगा. इन 15 मिनट टाइम फ्रेम दिस इज जिंक फ्यूचर चार्ट MCX. ओके, दीज आर सपोर्ट. नीचे 247 के अराउंड एक सपोर्ट है, ऊपर एक रेजिस्टेंस 253 54 के अराउंड है. दोज आर वेरी गुड सपोर्ट रेजिस्टेंस. बाकी फ़िलहाल के लिए अभी मार्केट जैसा मैंने बताया छोटी सी रेंज के अंदर चल रहा है. तो नीचे एक सपोर्ट है, यहाँ सपोर्ट ले चुका है. ऊपर रेजिस्टेंस भी काफ़ी देर ऑक्यूपाइड होकर रेजिस्टेंस लेके नीचे आया, तो ये अभी थोड़े वीक हो चुके हैं, बट अभी भी हैं, ब्रेक नहीं हुआ है जब तक. नीचे 250 और ऊपर 252.50. किसी एक साइड निकल जाए तो रेंज ब्रेक हो जाएगी, देन मार्केट विल मूव अवे बियॉन्ड द रेंज टिल डाउन. दिस इज द रेंज इन 15 मिनट टाइम फ्रेम. अब इसमें किस साइड का ब्रेक होगा वो देखना पड़ेगा. कैंडल ओपन इक्वल टू हाई लो बने तो उस पर बाय सेल मत करना एग्जैक्टली रेजिस्टेंस सपोर्ट पे. दिस इज 15 मिनट MCX. बाकी क्रूड ऑयल में भी थोड़ा सा रह गया. आजा भाई अब नीचे, कितना मूव करेगा पता नहीं. कहाँ करें इसमें अब क्रूड में फ्रेश बाइंग. शेयर कर दिया स्क्रीन पे, फिर से करना है क्या? ऑलरेडी शेयर्ड ऑन स्क्रीन. कैन आई शेयर अगेन? लाइक भी करते रहो गाइज. इन लोगों ने लाइक नहीं किया स्ट्रीम को. डोंट फॉरगेट टू लाइक द स्ट्रीम, सब्सक्राइब द चैनल, हिट द बेल आइकन. 56 70 people are watching and only 37 likes. बताओ, आधे लोगों ने लाइक ही नहीं किया. क्रूड तो ऐसा लग रहा है मुझे, अगर ये नीचे गया तो 5190 भी दिख सकता है नीचे. पे बनाई थी आपने लॉन्ग पोजीशन फ्राइडे को, कोई पर्टिकुलर लेवल फ्यूचर में? क्योंकि फ्राइडे के दिन तो मार्केट रेंज के अंदर ही था. कहीं लोअर एंड के आसपास बनाई थी, अराउंड 250 के अराउंड, 251 के अराउंड. तो ट्रेल कर लेना. अगर 249 या फिर 250 के नीचे 15 मिनट की कैंडल क्लोज होती है तो फिर सीधा 246 47 चला जाएगा प्राइस. बाकी ऊपर जाना है तो 253 के ऊपर अगर कैंडल क्लोज करती है 252.75 एग्जैक्टली, तो फिर आपको 253 254 का लेवल मिल सकता है. वहाँ पर फिर सेल कर सकते हो, वापस शॉर्ट कर सकते हैं इन द सेंस ऑफ. 6 PM पे डेटा है गाइस, ध्यान रखना। एम्पायर स्टेट मैन्युफैक्चरिंग इंडेक्स का डेटा है, थोड़ा बहुत गोल्ड और सिल्वर को इम्पैक्ट करेगा, ये ज़्यादा नहीं। फिर इसके अलावा और कोई डेटा नहीं है आज के दिन। दिस डेटा इज़ वेरी इंपॉर्टेंट फॉर गोल्ड एंड सिल्वर। 1 minute is left only. Spot Zinc future at 253.50. You bought at very high level, 253. $253.50. Wow. 253.50 on Friday. Friday 253. See, I can only say this to you right now. If you want to hold, day low is your last SL. 250 is your last SL. 250 के नीचे अगर कैंडल क्लोज होती है तो निकल जाना, बिकॉज जो मैंने अभी चार्ट आपको दिखाया, प्राइस फिलहाल रेंज के अंदर फंसा हुआ है। नीचे सपोर्ट है, वहाँ से मॉर्निंग पे सपोर्ट ले चुका है प्राइस, ऊपर से रेजिस्टेंस भी ले चुका है। तो अब ये दोनों रेंज में से जिस साइड भी ब्रेक करता है तो चला जाएगा। अगर ये ऊपर ब्रेक कर देता है अबव 252.70 के ऊपर, तो फिर आपको इजीली 254 मिल जाएगा, तो कॉस्ट टू कॉस्ट निकल जाना उस केस में। बाकी अब ये यहाँ से नीचे ब्रेक करता है, 250 के नीचे क्लोजिंग दे देता है, तो फिर तो ये इजीली आ जाना चाहिए 247। उस केस में लॉस बहुत बड़ा हो जाएगा, तो इससे बड़ा ऐसा लेना मत मेरे अकॉर्डिंग। बाकी आपको निकल जाना चाहिए था। आज अर्ली मॉर्निंग मार्केट ओपन हुआ था, ओपन होने के बाद नीचे से सपोर्ट लेके ऊपर गया था 253 के अराउंड, आपको निकल जाना चाहिए था। 50 पॉइंट 0.50 पॉइंट के चक्कर में इतना बड़ा लॉस हो जाएगा नहीं तो। मार्केट गया है, यहाँ पर देख पा रहे होगे 253 को भी टच किया है, एग्जैक्टली 253 तक गया है। निकल जाना चाहिए था आपको उसी समय। 50 पॉइंट के 0.50 पॉइंट के चक्कर में ऑलरेडी 1.5 पॉइंट के लॉस में हो। तो यही लास्ट एसएल है 250 का, इससे बड़ा एसएल लेना मत मेरे अकॉर्डिंग। बाकी अगर फिर होल्ड करोगे तो फिर एसएल बढ़ते जाएंगे, लॉस बढ़ता जाएगा। बाकी जब आपने कल लिया था उसमें कोई एसएल नहीं रखा था क्या आपने? वैसे जहाँ तक मैं देख पा रहा हूँ 253.50 पे कोई बाइंग का ट्रेड था ही नहीं। नहीं है ही नहीं, 253.50 पे देयर इज नो बाइंग ट्रेड। डेटा आ गया है, बिल्कुल आ चुका है डेटा। एम्पायर स्टेट मैन्युफैक्चरिंग इंडेक्स का डेटा देखोगे अब, और कोई डेटा नहीं है। 7 PM पे अब सीधा यूएस मार्केट ओपनिंग होगी, बाकी फिर कल है डेटा। बाकी डेटा देखोगे, इट इज़ पॉजिटिव फॉर डॉलर, नेगेटिव फॉर गोल्ड एंड सिल्वर। नाउ देयर इज़ नो डेटा शेड्यूल फॉर टुडे। लाइक नहीं रुकनी चाहिए गाइस, लाइक नहीं रुकनी चाहिए, लाइक करते रहो सभी लोग। ओके ठीक है, देखो यहाँ पर क्रूड ऑयल में एक बाइंग का ट्रेड प्लान करते हैं। एसएल कितना होगा यहाँ पर, एसएल देख लेते हैं एक बार पहले, एसएल कितने पॉइंट का बन रहा है पहले। अरे ये नहीं है कैंडल। स्टैक का देख रहे हैं एक बार पहले, क्रूड में एक ट्रेड बना लेते हैं फिर से, एक बाइंग का ट्रेड क्रूड में ना। एसएल बड़ा हो रहा है क्या? यहाँ पर ना एसएल बड़ा बन रहा है एक तो क्रूड का, लॉजिकली कुछ ज़्यादा ही बड़ा बन जाएगा। अरे नहीं, काफ़ी बड़ा एसएल है ये। ठीक है, देखो यहाँ पर सपोर्ट है क्रूड में नीचे लोअर एंड पे, बट एसएल काफ़ी बड़ा बन रहा है, फ्यूचर चार्ट में देखोगे तो इट इज़ मोर देन 40 पॉइंट। सेलर्स बाकी निकल जाना क्रूड में से, कोई रुकना चाह रहा है तो एसएल कॉस्ट पे रख लो। एसएल बड़ा बन रहा है तो एसएल लेंगे तो अगर इस लेवल पे एसएल बड़ा है उसके हिसाब से रिस्क रिवॉर्ड नहीं बन रहा है, या तो रिस्क रिवॉर्ड भी उतना बड़ा होता है। 1:1.3 कोई मतलब नहीं बनता है। ठीक है, देखो यहाँ पर एक ट्रेड बन रहा है बट एसएल बहुत बड़ा है, तो मैं तो अभी अवॉइड ही करने के लिए बोलूँगा आपको, और कुछ नहीं कह सकता। या तो कोई नया सपोर्ट बनाए या थोड़ा सा और नीचे आए, तब थोड़ा एसएल छोटा हो सकता है। बनने को यहाँ पर ही बाइंग बन रही है क्रूड में, बट बिकॉज ऑफ द एसएल इज़ टू हाई, नॉट इंटरेस्टेड। इंटरेस्ट रहेंगे 5190 के अराउंड, वहाँ पर एसएल छोटा हो जाएगा। यहाँ 45 पॉइंट का बन रहा है फ्यूचर में, और रिस्क रिवॉर्ड ही 1:1.2 है बस। इससे बेटर अगर थोड़ा और नीचे निकल के आता है, एसएल थोड़ा छोटा कर देता है, तब थोड़ा ज़्यादा बेटर रहेगा मेरे अकॉर्डिंग। एटलीस्ट एसएल छोटा हो जाएगा और कुछ नहीं। रिस्क रिवॉर्ड तो 1:2 ही, वहाँ भी उतना ही बनेगा लगभग। ठीक है, तो थोड़ा सा वेट करेंगे अभी क्रूड में, इवन दो सपोर्ट है पहले ही बता दे रहा हूँ, बट इंटरेस्ट रेट नहीं है, एसएल बड़ा बन रहा है। बात इसकी नहीं कि प्राइस ऊपर जा नहीं सकता, प्राइस चला भी गया, अगर एसएल हिट हो गया तो फिर दूसरे ट्रेड में रिकवर करने में बहुत प्रॉब्लम हो जाएगी। एटलीस्ट ना भी हो तो 1:2 1:3 एटलीस्ट होना ही चाहिए, उससे छोटा रिस्क रिवॉर्ड फिर फ़ायदेमंद नहीं है। क्योंकि एटलीस्ट अगर 1:3 भी है तो हम उसमें ट्रेल कर सकते हैं 1:1.5 पर। हाँ कोई नहीं। Nasdaq का व्यू, how it looks now, it looks bearish, now it looks bearish definitely, let's see। सेमी ब्रोकर है ना आपका, जिनको हो चुका है प्रॉफिट अवॉइड करना, ठीक है, अननेसेसरी ट्रेड, ऐसा नहीं कि हर ट्रेड लेना है। यहाँ पर हर ट्रेड लगा रहा हूँ तो उसका मतलब ये नहीं कि हर ट्रेड लेते जा रहे हो। जिनको हो चुका है प्रॉफिट प्रॉफिट वो अवॉइड करना, ट्रेड ही मत लो, सिंपल सी बात है। एक दो ट्रेड काफ़ी होते हैं दिन के, जिन्होंने नहीं लिए वो ट्राई कर सकते हैं, अदरवाइज नो। अभी तो यूएस मार्केट ओपन ही नहीं हुआ है, ये करंट कैंडल अभी यूएस डेटा की कैंडल है अभी फिलहाल के लिए, बुलिश फॉर यूएस 100 नैस्डैक। जो डेटा आया था उसका इम्पैक्ट पड़ रहा है फिलहाल के लिए करंटली। देखो ऊपर रेजिस्टेंस तो कल का ही है जो मैंने मॉर्निंग पे बताया था 19,040 वाला जो रेजिस्टेंस बना हुआ है कल का, जहाँ सेलिंग आई थी ओपन होने के बाद थोड़ी देर के बाद। वो रेजिस्टेंस है, जब तक उसके नीचे है तब तक थोड़ा सेलिंग का प्रेशर है, बट बेरिस तो नहीं कहूँगा अभी मैं। बेरिस के लिए नीचे सपोर्ट है, वो ब्रेक अभी भी हुआ नहीं है। वो ब्रेक हो गया तो डेफिनेटली काफ़ी ज़्यादा बेरिस हो जाएगा। अभी भी वो सपोर्ट ब्रेक नहीं हुआ है मार्केट में। कल से उसी सपोर्ट पे 2 बार सपोर्ट ले चुका है, अभी भी वहीं पर रुक रहा है प्राइस, ब्रेक ही नहीं कर रहा। ब्रेक कर दे तो अच्छा खासा बेरिस है, नेक्स्ट सपोर्ट तक तो आ ही जाएगा। ठीक है, तो बेरिस कहीं यहीं मानेंगे 18,560 के नीचे, वहाँ तक सपोर्ट ही है। हो सकता है थोड़ा नीचे आ जाए या ऊपर चला जाए, क्योंकि ऊपर रेजिस्टेंस कल का हाई अभी भी इंटैक्ट है 19,040, और नीचे कल जो सपोर्ट लिया था 18,560 के अराउंड आई थिंक, हाँ वो अभी भी इंटैक्ट है। तो बिटवीन द रेंज चल रहा है, कुछ रेंज के बाहर निकलता है तो बेटर है। फिलहाल एक छोटा सा फ्लैग पैटर्न जरूर बना दिया मार्केट ने 15 मिनट में नैस्डैक में। बाकी कल जिस तरह से सेलिंग आई थी, कल ही बेरिस हो गया था होने को, बट नीचे सपोर्ट होल्ड करके बैठा है। देखते हैं ब्रेक करता है या फिर नहीं। ब्रेक कर देता है तो फिर नीचे नेक्स्ट सपोर्ट पे आ जाएगा, जो मॉर्निंग पे बताया था 18,230 220 के। दैट इज़ अ बाइंग जोन आफ्टर दैट। फिर से सेल कर सकते हैं क्या नेस्डेक? देखो नेस्डेक को सेल करना चाह रहे हो तो दो लेवल है फिर से सेल करने के। एक तो कल का ही रेजिस्टेंस 19,040-50 वाला जो कल बताया था, और एक 18,850 वाला भी है, बट वहाँ पर कैंडल का ध्यान रखना, ओपन इक्वल टू लो पे मत करना सेल। अभी थोड़ी देर में वहीं उसी लेवल से सेलिंग आई है एक्चुअली में। 30 सेकंड बचे हैं ना ये कैंडल क्लोज होने में, कहाँ क्लोज होती है? 18,780। ठीक है, क्रूड में सेलर्स निकल गए होंगे, आई होप सो। बाकी मैं तो इंटरेस्टेड नहीं हूँ, देखते हैं किस तरह से प्ले आउट करता है इस लेवल को प्राइस। सपोर्ट जरूर है बट एसएल बड़ा बन रहा है तो नहीं ले रहे हैं। क्रूड ऑयल में थोड़ा और नीचे आएगा तो देखेंगे, नहीं तो अवॉइड करेंगे। कैन आई वेट फॉर यूएस मार्केट ओपन? कर सकते हो यूएस मार्केट। देखो आपका एसएल वही है जो मैंने बताया अभी 250। अब वो यूएस मार्केट से पहले हिट हो या बाद में हिट हो, उसके नीचे अगर कैंडल क्लोज होती है 15 मिनट की तो निकल जाना चाहिए। अभी तो नहीं गया है शायद एसएल 250 का, तो जाएगा तो तभी निकलना। इतना ऐसा ले ही चुके हो कल से, वैसे भी 250 का लो तो दिखाई दिया था मार्केट ने आज, उतना तो माइनस में देख ही लिया होगा आपने भी पीएनएल में। तो उतना ऐसा बनता ही है, अब कुछ कर नहीं सकते। बीच में निकलोगे, हो सकता है मार्केट नीचे आ जाए, कम लॉस में निकल जाए, हो सकता है मार्केट यहीं से आपके कॉस्ट टू कॉस्ट में चला जाए। दोनों साइड रिग्रेट है। तो फिलहाल के लिए मैं इतना ही कह सकता हूँ, 250 का लास्ट ऐसा है अगर रुकना चाहो तो। बाकी और इसमें मैं कुछ कहूँगा नहीं अभी, क्योंकि बीच में निकलना तो फिर वही बात है कि 50-50 चांसेस हैं, हो सकता है रिकवर कर जाए, फिर रिग्रेट होगा कि यार जल्दी क्यों निकला। और अगर नहीं निकले, हो सकता है पूरा नीचे चला जाए और लॉस हो जाएगा, फिर लगेगा यार पहले निकल जाता तो लॉस तो आधा हो जाता। तो फिर मिडल ऑफ द लेवल यही होता है। क्लोजिंग क्लोजिंग 15 मिनट कैंडल। ये कितने लॉट हैं आपके पास? सिंगल ही लॉट है या फिर एक से ज़्यादा लॉट है? और जिंक जिंक लिया हुआ है? जिंक मिनी ट्रेड कर रहे हो? ये भी कंफर्म कर देना। लाइक भी करना होता है गाइस, 50 लाइक्स अभी भी नहीं हुए, बताओ 50 लाइक्स तो कर दो फटाफट से। कम ऑन, जिन लोगों ने लाइक नहीं किया 50 लाइक्स कर दो सभी लोग। उस हिसाब से तो फिर ये भी है, इसमें नहीं हुआ। इस वाले लेवल का क्या कहेंगे? एवरेज कर दिया क्या आपने? ये एक फ्राइडे को लिया था, एक आज ऐड कर दिया, दोनों बाइंग साइड पे। 253.5, अच्छा 253.50 एवरेज है आपका? मतलब जब पहला लॉट लिया था तो ऑलरेडी उससे भी ऊपर लिया था क्या हाई लेवल पे? इसका मतलब तो यही है कि 253.50 के ऊपर कहीं बाई करके बैठे हो कल से। लूजिंग पोजीशन पे एवरेज नहीं करना चाहिए कभी भी। वही है, देखो 250 है असल, अब क्या कह सकता हूँ, 250 से बड़ा तो और कुछ है नहीं। बाकी ऊपर भी जाएगा नहीं जाएगा, ऊपर जाने के लिए भी मार्केट को ब्रेकआउट करना है, यहाँ पर ये देखा बताया ना मैंने अभी। ऐसा तो है नहीं कि उड़ते हुए चला जाएगा सीधा ऊपर। मार्केट अभी इस रेंज के बीच में है, ये सपोर्ट है, ऊपर रेजिस्टेंस है। यहाँ सपोर्ट अभी लिया मॉर्निंग पे, यहाँ भी रेजिस्टेंस लेके गिरा है। अगर ऊपर जाना है अब तो ये ऊपर ब्रेकआउट भी करना पड़ेगा तभी जा पाएगा, नहीं तो ऊपर भी ऐसा नहीं है कि सीधा चला जाएगा प्राइस। 252.70 के ऊपर अगर कैंडल क्लोज होती है तब एक चांस बन सकता है 254 तक जाने का। 254 255 वहाँ से तो फिर सेलिंग वापस आ ही जाएगी। तब तक ये मान सकते हो कि ये रेंज है। थीटा डी के नहीं होगा, फ्यूचर है इसलिए। बट अब इसमें जिस साइड भी निकला वहीं चला जाएगा। फ्राइडे को लिया था ब्रेकआउट पे, मेरे अकॉर्डिंग तो यहाँ पर कोई ब्रेकआउट है नहीं वैसे। 253.50 के अराउंड मेरे अकॉर्डिंग कोई ब्रेकआउट बना नहीं है। बट हो सकता है आपने अपनी स्ट्रेटजी के अकॉर्डिंग लिया हो। आई होप सो उसी के अकॉर्डिंग लिया होगा। तो मैं बार बार बोलता हूँ, अगर कोई अपनी स्ट्रेटजी के अकॉर्डिंग भी ट्रेड करता है तो वहाँ पर एसएल रखो एटलीस्ट। अगर जाएगा तो एटलीस्ट हमारे पास एसएल तो होना चाहिए। अब मैंने ये नेचुरल गैस क्रूड ऑयल में ट्रेड लगा रखा है, कि एसएल भी रखा हुआ है, एसएल जाएगा तो निकलना पड़ेगा ना, वेट नहीं कर सकते। या तो फिर ट्रेलिंग एसएल लगा लो। कोई भी स्ट्रेटजी होती है उसके 3 रूल सिंपल से होते हैं, एक एंट्री पॉइंट, एक आपका एग्जिट पॉइंट, और एक आपका एसएल पॉइंट। ये 3 चीज़ ट्रेड में घुसने से पहले, ट्रेड इनिशिएट करने से पहले हमें पता होनी चाहिए, तभी ट्रेड एग्जीक्यूट करना चाहिए। 90% लोग ऐसा नहीं करते हैं, वो पहले ट्रेड ले लेते हैं बस। फिर प्राइस उनकी डायरेक्शन पर जाता है तो ठीक है, नहीं जाता है तो फिर वो फाइट करते रहते हैं ना, वाइस वर्सा। तो दोनों चीज़ पहले डिफाइन करनी चाहिए। अभी के लिए वही 250 का असर रख लो, और क्या कर सकते हैं। एवरेज मत करना अब। और वहाँ पर ऐसा नहीं है ना 30 होने वाला है आधा घंटा और रह गया यूएस मार्केट की ओपनिंग में नहीं बनाया अभी वहाँ पर सपोर्ट है जरूर बट मैंने बताया जैसा कि रिस्क रिवॉर्ड इज़ नॉट कंफर्टेबल ऐसा बहुत बड़ा बन जा रहा है तो अवॉइड कर रहे हैं अभी ओके नेचुरल गैस में भी बुक कर सकते हैं प्रॉफिट एग्जिट कर लो नेचुरल गैस में भी एग्जिट करना चाहो कर लो बायर्स कोई फ्रेश ट्रेड बनेगा तो देखेंगे अब देखो थोड़ा सा और ऊपर जा सकता है प्राइस बट निकलना चाहो निकल सकते हो ऊपर से सेलिंग का प्लान रख लेंगे अगर जाता भी है थोड़ा बहुत कॉस्ट पे भी रख सकते हो वैसे निकल जाओ जितना मैं देख रहा हूँ यहाँ से लाइव चार्ट को पुल बैक आया तो फिर कॉस्ट टू कॉस्ट में बचेगा नहीं कुछ नहीं है, बताया ना, क्रूड में कोई ट्रेड नहीं चल रहा अभी, और सेलिंग लास्ट वाला ट्रेड था ये, जो दूसरा सेलिंग का ट्रेड था, नो अदर ट्रेड। नेचुरल गैस में एग्जिट जरूर कर लें बायर्स, फ्रेश ट्रेड बनेगा तो देख लेंगे, थोड़ा ऊपर और है इस पे जाने के लिए, बट अभी निकल जाओ। क्रूड में कहाँ से बाइंग फिर एक्सपेक्ट कर सकते हैं, थोड़ा सा और डाउन आ जाए तो। यहाँ से एसएल बड़ा हो जाएगा, नथिंग एल्स, और कुछ नहीं है, होने को तो सपोर्ट है ही, बट थोड़ा डाउन आके अगर बाइंग आती है तो वो थोड़ा सा एटलीस्ट एसएल छोटा कर देगी, और तो खैर क्या ही होगा, नथिंग एल्स। व्हाट इज द मार्केट सेंटिमेंट फॉर बेस मेटल कंसिडरिंग अप्रैल एक्सपायरी? ऐसा कुछ मैं देखता ही नहीं हूँ, नो आइडिया। मैं आपको बोल दूँ, मेरा व्यू ये है वो है, ऐसा मैं खुद नहीं देखता हूँ ऐसा कुछ व्यू। मंथली व्यू क्या जाएगा मेटल्स का, हम मैं वीकली व्यू देख लेता हूँ सैटरडे के दिन, जो मैं लाइव भी करता हूँ, कि वीकली मेरा क्या व्यू है, क्या रेंज में एक्सपेक्ट कर रहा हूँ, मेटल्स में हो, निफ्टी बैंक निफ्टी हो, कमोडिटी हो, इक्विटी मार्केट हो। बाकी टोटल होल मंथ्स का व्यू क्या रहेगा ये मैं नहीं देखता हूँ, मैंने देखा भी नहीं है, और मैं देखता भी नहीं हूँ, तो इस पर मैं कुछ कमेंट नहीं कर पाऊंगा। इस पे वही कुछ बता सकता है जो देखता होगा, जो एनालिसिस करता होगा मंथली व्यू के अकॉर्डिंग मेटल्स का। जो सही है आपका, बट आई एम नॉट द राइट पर्सन एट दैट टाइम। कोई बताना चाहे तो बता सकता है भाई, किसी ने अगर किया है अपना एनालिसिस मेटल्स का, व्हाट डू यू थिंक मेटल्स अप्रैल एक्सपायरी में क्या व्यू है, इफ एनीबडी वांट्स टू शेयर देयर व्यूज। 50 लाइक्स हो गए, थैंक यू सो मच। नेक्स्ट टारगेट रखें 100 लाइक्स का। आधा घंटा है, यूएस मार्केट की ओपनिंग। कोई नहीं, चलेगा। लगता है नेचुरल गैस लोअर सर्किट के बिना मानेगा नहीं आज। कंटिन्यूअसली फॉल है, थोड़े बहुत पुल बैक देन फॉल है, तो मार्केट बेयरिश ही, बट even not sustained singularly. ऑयल में मोमेंटम है, कैंडल ओपन इक्वल टू लो बनी है, गैप डाउन ओपन हुई थी, उसके बाद ओपन इक्वल टू लो। ऑयल ट्रेडिंग लोअर एज आई ए कट्स थी तो होल्ड न्यूज़ हो गई। खैर नेचुरल गैस में भी रिकवरी थोड़ी बहुत। जैसे ये स्ट्रॉन्ग है। National Herald case, ED files charge sheet against Congress leaders Sonia Gandhi and Rahul Gandhi. Breaking news. Bihar Daily Wager wins Rs 1.5 CR on Dream 11 after betting on Rs 49 rupees for 3 years. बताओ. Okay guys, 20 minute left. US market देख लेते हैं उससे पहले कोई न्यूज़ है तो. गैस रीटेस्ट जोन के अराउंड ही आ रहा है वापस. सपोर्ट था जो ब्रेकडाउन हुआ है, ऑलमोस्ट रीटेस्ट जोन पर है. 286, यहाँ से एक वापस सेलिंग का प्लान कर लेंगे इसमें, रीटेस्ट का जो है. जो सपोर्ट था इट एक्ट लाइक एज अ रेजिस्टेंस इन नेचुरल गैस, बिकॉज ये सपोर्ट काफ़ी स्ट्रॉन्ग ही था. ब्रेकडाउन हुआ है तो रेजिस्टेंस भी अच्छा बन जाएगा. ये इसका टारगेट कहाँ तक हुआ? वेट सेकेंड. ठीक है, रीटेस्ट का ट्रेड होगा यहाँ पर इन क्रूड ऑयल. ये बार बार इधर क्यों लग रहा है पता नहीं. नीचे से भी रख सकते हैं, यहाँ से ऐसा बड़ा हो जाएगा बस। यहाँ से यहाँ तक इसको चाहो तो यहाँ पर भी रख सकते हैं नीचे इस तरीके से। उसमें थोड़ा सा ऐसा बड़ा हो जा रहा है इसलिए थोड़ा सा मैंने ऊपर कर दिया वो। यहाँ से रिटेस्ट जोन स्टार्ट हो जाएगा। डन। हाँ टारगेट तो डन हो गया, इतना ही है। ऊपर रिटेस्ट है तो वहाँ से एक सेलिंग का प्लान है, रिटेस्ट करता है तो। क्रूड ऑयल का व्यू, रेंज 150 पॉइंट की रेंज है, 5350 से 5200 के बीच में। ध्यान रखना इसमें, ये यहीं से रेजिस्टेंस रिटेस्ट जोन यहीं से स्टार्ट हो जाएगा, ये पूरा येलो कलर का जो हायर लेवल है। इसको चाहो तो यहाँ रख सकते हो। इस मार्केट भी ओपन होने वाला है, 15 मिनट रह गए हैं सिर्फ, ओनली 15 मिनट लेफ्ट। लाइक करते रहो गाइस, जिन लोगों ने नहीं किया लाइक। न्यूज़ देख लेते हैं, न्यूज़ ऑफ द आवर। 13 मिनट लेफ्ट यूएस मार्केट। सिर्फ 13 मिनट और हैं यूएस मार्केट की ओपनिंग में।
News when you want it with Bloomberg News Now. I'm Karen Moscow. We had some breaking economic news. New York State factory activity contracted in April for a second month, while a gauge of the near-term outlook for business conditions plunged to the lowest level since 2001 in the wake of the Trump administration's extensive tariffs plan. The Federal Reserve Bank of New York's General Business Conditions Index did rise 11.9 points to minus 8.1, and readings below zero indicate contraction. The outlook for business conditions slumped to the second lowest reading on record. Separate figures from the Bureau of Labor Statistics showed import prices, excluding petroleum, were flat in March after a downwardly revised 0.1% gain a month earlier. While tariffs are not included in the agency's calculations of import and export prices, higher duties on materials can be passed through into costs of other goods. And Bloomberg's Michael McKee takes a closer look.
Now, one of the categories that rose a lot last month was metal imports, unfinished metal and finished goods related to metal because of the tariffs on aluminum and steel. Those were up 1.4% and 1.3%. So we are seeing some tariff effects there.
And that's Bloomberg's Michael McKee. Well, Boeing may be caught in the crosshairs of the U.S.-China trade war. Bloomberg News has learned China has ordered its airlines not to take any further deliveries of Boeing jets. Bloomberg aviation reporter Danny Lee.
This still stings for Boeing, and this directive is, given how important still Boeing plays in the Chinese aviation sphere, it still provides around 40 to 45% of all jets into the Chinese aviation market, and it's a huge market as well. So Boeing is more broadly yet another company that is caught up in this ongoing tit-for-tat trade war between Washington and Beijing.
And that's Bloomberg aviation reporter Danny Lee. Meanwhile, President Trump's administration is pressing forward with plans to impose tariffs on semiconductor and pharmaceutical imports by initiating trade probes led by the Commerce Department. We get more on that with Bloomberg trade czar Brendan Murray.
The Trump administration wants semiconductors to be made in the U.S. rather than in Asia, mostly in Asia, in places like Taiwan and China. This is going to be especially important with the next generation of chips, the ones that power artificial intelligence. The other issue, and this is one that came up during the pandemic, was the drugs production and the pharmaceutical issue. Both of these are, the Trump administration is seeking to ground them in the legal rationale of national security.
And that's Bloomberg trade czar Brendan Murray, who says President Trump is also floating a potential pause in auto tariffs. Treasury Secretary Scott Bessent is downplaying the recent sell-off in the bond market. Bessent spoke exclusively to Bloomberg's Anne-Marie Hordern in Buenos Aires.
I don't think there's a dumping, and I think we saw in the tick data either today or Friday that actually foreign ownerships picked up. We had 3 big auctions last week, and on the longer end auction, 10-year, 30-year, we saw increased foreign competition. So I actually think this is one of those occasional VAR shocks that you get in the trading community. I think a lot of people got very leveraged, maybe out over their skis.
And that's Treasury Secretary Scott Bessent speaking exclusively with Bloomberg's Anne-Marie Hordern. And you can hear the full conversation on the Bloomberg Talks podcast feed or watch it on the Bloomberg podcast page on YouTube. The Trump administration followed through on its threat to pull federal funding from Harvard University hours after the oldest and richest U.S. college refused to agree to a list of government demands. The government froze $2.2 billion of multi-year grants to Harvard, following a defiant message from the school's president that it won't surrender its independence or its constitutional rights. We turn now to bank earnings this morning, and Citigroup inching closer to a key profitability target in the first quarter as the firm's traders surpassed expectations and the bank drew a record haul from its wealth and retail businesses. The trading division rode a wave of volatility in global markets to notch $6 billion in revenue for the period, helped by an 8% jump in fixed income and a 23% gain in equities trading. We also got comments from Chief Executive Jane Fraser, and here's Bloomberg's Lisa Abramowitz.
She came out and she said, when all is said and done,
the U.S. is still going to be the leading economy, and the U.S. dollar will still remain the reserve currency. So weighing in on some big topical issues of the day.
And that's Bloomberg's Lisa Abramowitz. Meanwhile, Bank of America stock traders posted a record quarter as the company reaped the benefits of volatile markets, and net interest income topped analyst estimates. Revenue from equity trading rose 17% to almost $2.2 billion in the first 3 months of the year. Mark Zuckerberg is expected back in federal court today in the second day of a historic antitrust trial to defend his company against allegations it illegally monopolized the social media market. And futures are sliding after a 2-day advance as traders weigh escalating China-U.S. trade tensions against signs that the Trump administration may add more tariff exemptions. S&P futures down 0.2%, Dow futures down 0.3%, NASDAQ futures down 0.1%, and the 10-year Treasury yield at 4.38%. And that's news when you want it with Bloomberg News Now. I'm Karen Moscow, and this is Bloomberg.
Danny, this story just breaking right now. What do we know?
Yeah, Anna, good morning. What we are seeing is a broader cachet of companies being caught up in US President Donald Trump's trade war, in which at least Chinese goods, they're being imposed a tariff of up to 145%. Now, what we know this time is that the Chinese government has asked its carriers to stop taking delivery of Boeing aircraft in the meantime, and this extends to aircraft-related equipment and parts from US companies. Now, this order came last week, just as China retaliated on the US with tariffs of 125%. And for the airlines, it makes the economics of buying an aircraft more challenging. It doubles the cost, frankly. And we have heard these warnings from a number of airlines globally, from Delta to Ryanair recently, about the warnings of aircraft deliveries being delayed. But in this case, for China, given this rapidly evolving trade war dispute, we don't know yet if any of these positions would change in the next week or two or longer. We have seen, for example, Donald Trump's position on Apple iPhones, for example, change.
Yes, indeed. Some of these positions have been stuck to by the Trump administration, and some have appeared more flexible, or he has appeared more flexible in how they are applied. So how significant is this then, Danny? I mean, what role, how significant for Boeing? How significant for Chinese aviation? What role do the two play with each other?
Well, it is extraordinary that two of the world's largest economies are facing off, and frankly, that Boeing once again caught in the middle of all of this. And for Boeing, China used to be one of its most important foreign markets as far as the billions of dollars worth of commercial aircraft it could sell into the country. And of late, over the last several years, it's been enormously difficult, and Boeing hasn't won a large aircraft order from a Chinese carrier for many years now. And it comes against the backdrop, frankly, of China trying to develop its own commercial aviation plane-making capabilities. And so it's increasingly being squeezed out in the Chinese market. And when you look at the growth prospects over the next 20 years, the fact that China is going to account for a fifth of all aircraft demand, it does remain to be seen what role Boeing has to play in the years to come. But clearly on something like this, with Chinese airlines being asked to stop taking delivery of Boeing aircraft, Boeing, it said, had declined to comment on this story.
गाइस यूएस मार्केट ओपन होने वाला है 2 मिनट 2 मिनट रह गए हैं 2 मिनट लेफ्ट ओनली देखते हैं यूएस मार्केट की ओपनिंग पे कैसे मूव होता है एक बार थोड़ा सा चार्ट देख लेते हैं नैस्डैक का भी नैस्डैक रिकवरी कर रहा है थोड़ा बहुत ओवरऑल साइडवेज ही कहेंगे इसको ओके 1 मिनट 45 सेकेंड्स यूएस मार्केट ओपनिंग कैंडल का ध्यान रखना ओपन इक्वल टू लो हाई बने तो कोई ट्रेड रनिंग ट्रेड होगा तो वो चलेगा नहीं फिर ठीक है फिलहाल क्रूड ऑयल ने मेरे साइड से भी और कोई ट्रेड नहीं चल रहा एसएल बड़ा हो रहा था इसलिए अवॉइड किया था ले लिया सपोर्ट उसने वैसे देखेंगे कुछ और नया ट्रेड बनेगा तो क्रूड में फिर से नेचुरल गैस में वो रिटेस्ट जोन है तो वहीं पर एक सेलिंग का प्लान है वापस ओपन हो गया यूएस मार्केट नाउ कैंडल ओपन इक्वल टू लो है लेट्स सी ब्रेक कर देगी लगता है क्रूड में करेगी क्या 5288 के ऊपर नहीं करती है तो एक वापस सेल कर देंगे अगर कर दिया तो फिर नहीं करेंगे इस कैंडल की क्लोजिंग देखते हैं कहाँ आती है नेचुरल गैस की कैंडल भी ओपन नहीं नेचुरल गैस की कैंडल भी हाँ ओपन इक्वल टू लो तो है नेचुरल गैस की भी है बट नेचुरल गैस में स्टिल ऊपर रिटेस्ट जोन ही है क्रूड में अगर ये कैंडल क्लोज करती है कहीं 2000 5280 382 के नीचे तो नेक्स्ट कैंडल पे सेल कर देंगे अगर ऊपर क्लोज कर गई तो फिर अवॉइड करेंगे क्योंकि ये डायरेक्टली ओपन इक्वल टू लो है तो डायरेक्टली नहीं कर सकते यहाँ पर कुछ सेल्स तो बिल्कुल नहीं कर सकते ब्रेकआउट होके ऊपर चला गया तो फिर प्राइस वापस डे हाई की ओर चला जाएगा वैसी रेंज बाउंड है 150 पॉइंट की रेंज में उसी रेंज में घूमना है आज नैस्डैक को भी देखोगे तो बुलिश ही दिख रहा है थोड़ा बहुत। एज एक्सपेक्टेड नीचे वो सपोर्ट ब्रेक नहीं हुआ, रेंज के अंदर था, सपोर्ट ले लिया वापस। बिल्कुल डोजी कैंडल बनने वाली है ऐसा लग रहा है नैस्डैक की। बिल्कुल डोजी ही बन गई ऑलमोस्ट। नीचे सपोर्ट था, वहां से सपोर्ट आया, ऊपर अभी भी रेजिस्टेंस है कल का हाई, स्टिल होल्डिंग। जिंक चेक कर लेते हैं एक बार। गैप डाउन ही कैंडल ओपन हुई है डायरेक्टली, अभी भी सपोर्ट होल्ड किया हुआ है। 250 के नीचे कैंडल क्लोज होगी तो निकल जाना। गैप डाउन ओपन हुई थी, ओपन इक्वल टू लो बना के उसी रेंज में फंसा हुआ है, मार्केट मूव नहीं कर रहा है कहीं भी। तो रेंज के ब्रेकआउट या ब्रेकडाउन पर ही शायद कुछ मूव करेगा, अबाउट 250, 2.70 या फिर नीचे 250 के नीचे। स्टिल इन अ रेंज, अभी भी रेंज के अंदर ही है। देखो अगर थोड़ा और छोटा ऐसा रखना चाह रहे हो, क्योंकि आपके एसएल बढ़ते ही चले जाएंगे, ध्यान रखना नीचे को। बाकी मैं इतना ही कहूँगा, प्राइस को अगर ऊपर निकलना है तो एटलीस्ट 250, 252, 253 तो छोड़ो, एटलीस्ट 252.40 के ऊपर ही क्लोज कर दे बस, चला जाएगा ऊपर 253, 54। बाकी अगर आप चाहो तो करंट कैंडल के लो पे एसएल रख लो, क्योंकि ओपन इक्वल टू लो बना ही है कैंडल, इसका मतलब कहीं ना कहीं बायर आए हैं इस कैंडल पे। अगर इसके लो के एसएल चले जाते हैं तो फिर बायर निकल जाएंगे सारे, फिर मार्केट हो सकता है 250, 249 तक और नीचे जाए, डीप लेवल से सपोर्ट लेने जाए, फिर आपको एटलीस्ट डे लो का सपोर्ट लेना पड़ जाएगा। तो ट्रेलिंग एसएल चाहो तो आप करंट कैंडल के नीचे भी रख सकते हो 251। बाकी देख लो अगर ये 252.50 के ऊपर क्लोज कर देता है, मेरे अकॉर्डिंग तो अगर 252.70, 5070 के ऊपर क्लोज कर देता है तो चला जाएगा ऊपर। बाकी अभी और इसमें कुछ मैं कह नहीं सकता। हाँ ये है। कॉस्ट टू कॉस्ट से ऊपर ही आ जाओगे उस केस में। यहाँ पर नहीं कर सकते अभी क्रूड में। वो कैंडल ओपन इक्वल टू लो है, देख लो कैंडल तो देखो। थोड़ा सा अगर अपर साइड की ओर आ जाए, थोड़ा सा और ऊपर आ जाए तो कर देंगे, अगर यहाँ पर नहीं क्लोजिंग आती है 5002 जो भी लेवल बताया था एक। क्या लेवल था वो 5000? ठीक है, अगर नहीं आती है 5280 के नीचे क्लोजिंग, जो कि मुझे लग नहीं रहा आएगी भी अब इस कैंडल को देख के, तो थोड़ा सा और ऊपर आता है प्राइस 5310 उसके आसपास सेल करेंगे वापस से। हाँ, इसका क्या था? रॉयल को देखोगे ना, वो अपनी रेंज को बहुत ही कॉम्पैक्ट करे जा रहा है, करे जा रहा है। एक तो ब्रॉडर रेंज है ऊपर 250 5350 वाली, और नीचे 5200 वाली। इसको भी नैरो करने की कोशिश में चल रहा है प्राइस। एक शॉट यहाँ से बना लेंगे, नहीं आता तो फिर बाकी नेचुरल गैस में कर सकते हो। वहाँ पर रीटेस्ट जोन है हमारे पास एक लास्ट, जहाँ से सेलिंग का प्लान रखा जा सकता है। बाकी अब की बार अगर रीटेस्ट लेके नीचे आता है ये, नेचुरल गैस की मैं बात कर रहा हूँ, ये रीटेस्ट तो हो गया, ये भी हो गया। रेजिस्टेंस था, यहाँ से ऑलरेडी सेलिंग आ गई है। ब्रेकआउट हुआ, रीटेस्ट भी कर चुका है। कितने बार रीटेस्ट करेगा सेम लेवल से? ये किस चीज़ का लेवल है यार, देखना पड़ेगा। ठीक है, क्रूड ऑयल में ऊपर एफईजी है क्या? ऊपर कहाँ पे है? तो करंट लेवल पर भी है। ठीक है, नेचुरल गैस अगर नीचे आता है तो दोबारा बाय मत करना डेलो से। अच्छा, ये इसका रीटेस्ट पेंडिंग है क्या? हाँ, इसका रीटेस्ट पेंडिंग है शायद। 2 3 सपोर्ट था, ब्रेकडाउन हुआ, रीटेस्ट कर दिया। फिर से रीटेस्ट करेगा क्या इस लेवल पे? पॉसिबल लगता तो नहीं है। 130 की बड़ी कैंडल पे ये यहाँ पर की बात कर रहे हो क्या? इस एरिया की बात कर रहे हो क्या? हाँ, यहाँ पर भी है एफजी। कुल है। ठीक है, यूएस मार्केट ओपन हो गया है, क्रूड ऑयल वापस ऊपर ही क्लोज हो गया थोड़ा बहुत। लेट्स सी कोई ट्रेड बनता है। नेचुरल गैस में ही है फिलहाल के लिए, ऊपर सेल कर सकते हैं। रीटेस्ट जोन टारगेट इसका थोड़ा नीचे रखना पड़ेगा। सपोर्ट था, बाइंग आई, एक बार ब्रेकडाउन हुआ तो रीटेस्ट कर दिया मार्केट ने। फिर से होगा क्या रीटेस्ट तो दोबारा? लग तो नहीं रहा मुझे भी। नहीं, क्रूड में नहीं है, अभी बताया ना। बनेगा बता दूंगा, लगा दूंगा ट्रेड। नेचुरल गैस में लगा रखा है, वही है। नेचुरल गैस में देखो, अगर नीचे आता है प्राइस रीटेस्ट करके, तो फिर टारगेट थोड़ा सा बड़ा रख सकते हैं। ये नीचे वाला जो जोन है ना, यहाँ के अराउंड रख लेंगे। बीच में कोई और बन जाएगा तो बात अलग है, अदरवाइज फिर यही बनता है टारगेट, अगर ये कम्प्लीटली रिकवर नहीं कर पाता है। पहला ये टारगेट यहीं तक रहेगा आपका, 277। इसके नीचे आता है तो फिर वो सबसे नीचे वाला लेवल कंसिडर करना। वापस ऊपर जाता है तो वापस सेल कर सकते हैं रीटेस्ट में। अब तो यूएस मार्केट भी ओपन हो गया, अब कुछ और ट्रिगर पॉइंट तो है नहीं मार्केट में। कल का डेटा देख लेते हैं एक बार, कल कौन कौन सा डेटा है कल। बाय द वे, इस वीक सिर्फ 2-3 दिन ही मार्केट ओपन है, ध्यान रखना। फ्राइडे सैटरडे संडे 3 दिन और मार्केट क्लोज है 18, 19 और 20। तो आज तो निकल ही गया, कल परसों 2 दिन मार्केट और ओपन रहेगा। 16 को देखोगे तो कल रिटेल सेल्स गोल्ड और सिल्वर को इम्पैक्ट करेगा, 6 बजे ये डेटा है। क्रूड ऑयल की इन्वेंट्री आएगी, फोरकास्ट भी नहीं दिया इन्होंने तो। फेड चेयरमैन पावेल की स्पीच है। अनएम्प्लॉयमेंट क्लेस, हाउसेस स्ट्रांग, नेचुरल गैस। फिर नेक्स्ट वीक ही आएगा आई थिंक, अप्रैल लास्ट वीक। बाकी ये नैस्डैक को देखोगे वही परसों के रेजिस्टेंस जोन पे पहुंच कल के रेजिस्टेंस जोन पे पहुंच गया वापस। थोड़ा बहुत वॉलेटाइल हुई जरूर थी फर्स्ट कैंडल, बट अल्टीमेटली क्लोजिंग पॉजिटिव ही हुई, बाइंग ही आई एंड ऊपर रेजिस्टेंस को हिट कर चुका है। देखते हैं फिर से सेलिंग अगर इनिशिएट करता है ये। बाकी किसी ने नीचे सपोर्ट से बाय किया था तो बुक कर सकते हैं। विदाउट एनी सिंगल रेड कैंडल प्योरली ऊपर ही चला गया है। एक दो बाकी नीचे आएगा तो 18,790 780 एक सपोर्ट की तरह काम कर जाएगा ये नीचे लेवल। वैसे तो हो सकता है ये भी ब्रेकआउट कर दे, बट क्योंकि कल ऑलरेडी एक रेजिस्टेंस ले चुका है, दूसरी बार आएगा यहाँ पर। दूसरा है, तीसरा है, थर्ड टाइम इसके ऊपर रेजिस्टेंस ये है 3। इसके ऊपर सीधा 19,190 19,200 के अराउंड एक रेजिस्टेंस है। एक पुल बैक तो दे देना चाहिए। एटीन टू 20 3 दिन मार्केट क्लोज है एक्चुअली। उस दिन तो पूरा ही मार्केट क्लोज है 18 को, 19 20 का तो सैटरडे संडे है खैर, बट 18 को आपका गुड फ्राइडे है तो उस दिन इंडियन मार्केट पूरा बंद है। एमसीएक्स मार्केट भी मॉर्निंग इवनिंग सेशन क्लोज है, यूएस मार्केट भी बंद ही रहता है, गवर्नमेंट हॉलीडे। फॉरेक्स का मुझे पता नहीं, फॉरेक्स शायद ऑफ हो सकता है। वीकेंड दे दिया काफ़ी अच्छा। 18 को देखें जरा यहाँ पर कुछ। स्टिक करते रहो गाइस, 55 लाइक्स पे रुकना नहीं है, 100 लाइक्स का टारगेट रखते हैं। टाइम काफ़ी है, अभी 7:30 हुआ है, 4 घंटे और है मार्केट क्लोजिंग में। क्रूड में तो मुझे लग रहा है एक और ट्रेड बन ही जाएगा अभी। ठीक है, यहाँ पर एक सेलिंग का ट्रेड प्लान करते हैं इन क्रूड। फिर से थोड़ा सा और ऊपर आ जाता है तो छोटा सा ये है, लगभग 15 पॉइंट के अराउंड इसका एसएल है, लगभग 45 पॉइंट का इसका टारगेट रहेगा। 1/3.2 इनफ है। कैंडल का ध्यान रखना, ओपन इक्वल टू लो ना बन जाए कैंडल। वो भी ठीक है, छोटा सा ही ट्रेड है ये, ज़्यादा बड़ा नहीं होगा। बाकी थोड़ा पुल बैक देगा डाउन साइड पे, क्योंकि रेंज बनाने की कोशिश कर रहा है, तो वापस बाइंग कर लेंगे। क्रूड में ध्यान रखना, ठीक है, बाइंग और सेलिंग करते वक्त ओपन इक्वल टू लो बाइंग करते वक्त, और बाइंग करते वक्त ओपन इक्वल टू हाई, और सेल करते वक्त ओपन इक्वल टू लो वाली कैंडल ना बने। नॉर्मल कैंडल पे चल जाएगा, कोई प्रॉब्लम नहीं है।
Control and monitoring technology with Vodafone Business IoT enables life-saving medicine to be delivered safely around the world.
Having a secure infrastructure that you can reliably use globally is a key ingredient for our success.
The countdown is on. Everything you need to get the edge at the end of the market day. This is the close.
For the cost of groceries, rent, and other items, all of that is rising. And this becomes the danger right now. Unanchored economic expectations among consumers now intersecting with relatively anchored investor expectations as investors try to snap up whatever bargains they can. But one big difference coming into this week versus last is that the markets, unlike the consumers, now have some confidence that there is indeed a White House put, a potential floor on asset prices. We're going to hear a little bit later on the program from the Treasury Secretary, Scott Bessent, who many speculate was the catalyst in curbing last week's bond rout. As of today, one bugaboo remains the dollar. A Bloomberg index of USD performance versus a basket of 10 peers, sliding for a fifth straight day, now down 7% from a year-to-date high, and more importantly, moving against the grain of direction to which other asset classes point. And should you be concerned? That is the question. But it really depends on whether you see the sell-off as more technical or fundamental.
So structurally, I do think that there is going to be continued pressure on the dollar, and we may be past that peak in U.S. exceptionalism. But the price action last week really screamed to me more technically oriented than anything else.
Kelsey Barrow, there, Scarlett, speaking a little bit earlier, we talk about the direction of equities. You can't really determine that direction without having some sense of where yields are going and where the dollar might go.
Right. How on earth do you begin to price equities? So let's dig into that divergence by looking at the dollar versus U.S. Treasuries. And usually the bond differential between countries is a key driver of FX. Money tends to flow to where it can get the higher yield. Take a look at the lines here. The dollar, which is the blue line, and yields, which is in yellow, moving in tandem for much of the past 12 months. But since April 2nd, and we'll go right here to the far right part of the screen, the dollar has tumbled along with bond prices, pushing yields up, showing that investors are fleeing both assets. Now, one explanation is perhaps a loss of confidence in the U.S. as a destination for funds. The chaotic rollout of tariffs may be causing people to doubt U.S. government bonds as the risk-free instrument and ultimate haven that they've long been. Romain?
Particularly coming off of that volatility that we saw last week. Volatility is somewhat muted to start this week, but remember, a holiday-shortened week here in the United States, bookended, of course, by the Passover holiday that began on Sunday, and Good Friday, of course, which is up ahead in about 4.5 days. Mike Contopoulos joins us right now here on this Monday afternoon, Deputy Chief Investment Officer over at Richard Bernstein Advisors. And Mike, when we look at the turmoil last week in the fixed income space and the relative calm that we have in the aftermath of it, a lot of people are saying that, okay, maybe that White House put or the Bessent put, depending on who you believe was behind it, maybe that actually does exist.
Yeah, I think it exists to some degree, Romain. The problem is you've created so much uncertainty now in Washington. I think it's going to become really hard for, CEOs and CFOs to plan investments going forward. And so, we talk a lot about the tariffs and the effects of the tariffs on earnings and confidence and things of that nature. But we haven't, I don't think, spent enough time talking about just the uncertainty out there. And the uncertainty isn't going to go away. As we've seen, the policy is changing left, right, and center. And I think that's going to be the bigger, long-lasting issue amongst corporates and for profits and probably consumer spending as well.
So how difficult is it right now to even make a directional call? I mean, look, if you're a trading shop, you're doing great because you don't really care on a day-to-day basis. But if you're a longer-term investor, this matters.
Yeah, I actually would take the other side of that, Romain, a little bit. I think as a longer-term investor, it's probably easier. We focus very heavily on profit models. And with profits, you do have some amount of insight into. And we were hitting a profit peak probably in Q2 or Q3 of this year, regardless of what was happening with tariffs. Now that's probably brought the peak a little bit more forward. So you're looking at Q1 or Q2. But I think if you're looking out over a 6-month or 12-month horizon, things are actually pretty clear. You're headed towards deceleration, not acceleration.
What is your game plan if companies indeed end up pulling their guidance, as we pretty much expect them to, or maintain their guidance but say it excludes the effect of tariffs?
Yeah, I think, when we looked at going into this year, as I mentioned earlier, I think, we were approaching a profit peak regardless of tariffs. The direction of our portfolios is clearly to get more defensive over coming, weeks or months. I don't think there's a huge rush to that, quite frankly. You never want to make rash decisions in the, moment of high volatility. And I do think Q1 earnings are likely going to be pretty strong. And that could also cause a little bit, that plus what we hear out of the White House, put a little bit of a floor on markets near term. So I don't think there's a huge rush to get max defensive here. But I think when you think about, later Q2, Q3, and into Q4, you probably are going to want to have a defensive posture.
So Romain mentioned the White House put, the Trump put. A lot of people are wondering whether there's a Fed put as well. We did hear from Susan Collins, the Boston Fed president, last week that the Fed would step in to stabilize the markets if necessary. According to UBS, the Fed would be looking at investment-grade spreads moving about 200 basis points above treasuries and junk bonds about 720 basis points before the Fed actually makes a move. Is that the key benchmark here for credit markets to blow out, the spreads to blow out before the Fed steps in?
Well, that's a great question, Scarlett. So I think there's a couple things we need to focus on. If first of all, if IG gets to 200, high yields are going to be well north of 750, in my opinion. That means you're in basically a recession. And certainly when you're in a recession, I'd expect the Fed to cut interest rates pretty meaningfully, not just because of the credit component, but because of what's probably happening with unemployment as well. I think funding markets drying up would be a big issue. If the plumbing of the financial system starts to gum up, then they might step in. But I think that Fed put is much higher than what people expect, or much more out of the money than what people expect. I think the inflationary backdrop is going to be such that it really kind of puts them between a rock and a hard place. And unless you see unemployment skyrocket, I think that's really the measure, or the financial plumbing really gum up, I would not expect the Fed to come in and save markets here.
Did you see any evidence last week that financial plumbing was in danger?
In the swaps market, maybe a little bit, but not extraordinarily so. I think it's still got a ways to go before you see something from the Fed, like a QE type sort of response. And in fact, I think you would see the Treasury probably step in and increase buybacks before you saw the Fed do anything. So, listen, I don't think we're there quite yet, Romaine. I think it's still got to break a bit more than what we saw last week.
So then on the inflation side, I mean, obviously looking at survey data, which continues to show, at least on the household and consumer side, some pretty wild expectations, 5, 6, 7% inflation rates, obviously a lot different than what the actual financial markets are pricing in. Yep. When does that difference in expectations become a concern?
Well, you start to see these big divergences between, a lot of the survey data and the market-based data. That's not infrequent. That happens quite a bit. But if you look at like 5-year inflation expectations, it is quite high, right? And on a historical basis, it's quite high relative to where we have been over the last 10 years or so. I think that is a concern today. When you look at inflation expectations via the markets, when you look at survey expectations, and when you even look at some of the hard data, it's not good. So I would say that should be a concern of the Feds today. That should be a concern for investors today. It has implications with how you invest in the long end of the yield curve. I don't think yields will fall quite as much as they have in the past in the 20 and 30-year space, even as unemployment goes up, should that happen later this year. And you probably see a steeper yield curve.
Staying on what investors should worry about today, can you give me a sense of how you're listening to comments coming out of the Trump administration, whether it's Navarro, Bessent, or Lutnick, to gauge what the thinking is, or at least what the strategy behind that is?
Yeah, so I don't know if I'm 100% convinced that there's an incredibly well thought out strategy amongst the administration. I think they know what they want to do, but are certainly kowtowing a little bit to markets. And I think President Trump basically told us that when he said that he rolled back tariffs because people were feeling jittery, I believe was his word he used. Yippee.
Technical term, yeah.
That's right. That's the technical term. And so I think he told you right there that whatever plan they may have, similar to what Mike Tyson said, right? Everybody has a plan until you're punched in the mouth. I feel like the administration's sort of like that. So we can only guess what the long-term plan is for the administration. And that's why I think it's dangerous to try and trade or position a portfolio simply based off of politics without paying attention more to the fundamental drivers of earnings and liquidity.
All right, Mike, got to leave it there. Great conversation. Mike Contopoulos, Deputy Chief Investment Officer over at Richard Bernstein, kicking us off to the close on the day with stocks right now near the highs of the day. Yields right around the lows, and the outperformer, at least in the equity space, you're going to find that amongst financials. Goldman stock traders notching record revenue in the most recent quarter. A look ahead to some of the other big bank earnings out later this week and what to expect, including from Citigroup.
Plus, we've seen tech losing some steam, but Apple roaring in today's session on Trump's latest tariff exemptions. A look at how to trade the sector through all this turmoil.
And is there a White House put? An exclusive interview up ahead with the Treasury Secretary of the United States, Scott Bessent. Going to be sitting down with our Anne-Marie Hordern on his trip to Argentina. All that and more coming up in just a bit, right here on The Close. This is Bloomberg.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I'm Alex Rodriguez, executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Jay Williams.
I want to be an owner one day.
Billie Jean King.
Learn the business.
Paul Rabel.
Don't chase trends. Get ahead of them.
And so many more.
Shares of Goldman Sachs rallying after the firm's latest results beat analyst estimates, with stock traders posting their highest quarterly revenue haul on record. So here now with more insight on the financial sector as banks continue to report their results this week is Jason Goldberg, senior analyst over at Barclays. Jason, what surprised you the most about the earnings that we have seen so far?
Yeah, I think the biggest upside surprises has come from better than expected equity trading revenues, with several of the banks posting, record quarters. That was certainly a bright spot. In addition, share repurchase continued, unabated. You've actually seen an uptick since the fourth quarter, despite kind of several of the uncertainties. And then importantly, credit quality indicators were fairly benign. Now, maybe a little bit backward looking in light of some of the tariff news we've gotten, but, loan losses, were stable to lower, and non-performing assets, generally, relatively stable. And while banks boosted loan loss reserves a little bit, it certainly wasn't by any, big increases.
Okay, so the bottom line is banks believe the health of their customers, whether it's corporate or individual consumers, remains fairly sound, even with a lot of warnings about the economy. You mentioned the equity trading, Goldman's equity trading desk clearly benefiting from all the volatility. A question did come up on the earnings call about good volatility versus bad volatility. How quickly can good volatility turn into something bad?
It certainly was very good in the first quarter, and so far in the second quarter, it feels like results continue to be good. I mean, volumes really across all asset classes are robust as, institutional investors continue to navigate the evolving landscape. It's obviously something we watch, but, so far, despite all the volatility we've seen, trading has been fairly orderly, both in the equity and fixed income markets.
There was a lot of questions on the conference call, Jason, about sort of the potential pickup in capital markets later this year. How much, confidence do you have in the comments that they gave? And more importantly, what is your own personal view as to when we can see a material jump?
Yeah, no, backlogs, and pipelines remain, quite robust. Clearly in the near term, there's a lot of uncertainty, whether it's tariffs or taxes or immigration or whatnot. And I think corporates are kind of, waiting to see how some of these policies break or engaging in either an IPO activity or M&A activity. But there is a lot of pent-up demand. And our sense is once we get further clarity on both the kind of the tariff outlook and the economic outlook, there's a lot of transactions to be had. I mean, corporates, need financing, and there is a lot of strategic rationale to consolidate across various industries. And I think once people get a better sense of what the new administration's up to, you'll be able to see those transactions materialize.
It's interesting, too. I mean, we talk about, obviously, the rally that we're seeing in Goldman and some of the big banks. Obviously, the sort of diversification of those banks really sort of helps in situations like this, a pickup in trading while investment banking is down. For those banks that don't necessarily have that same diversification, take M&T, which reported earlier today, clearly some outsized exposure to any potential drop in consumer lending. Also, of course, that drop in net interest income. What is the ballast for them going forward?
Yeah, that's a good point. I mean, I think, you've seen that kind of the biggest banks report so far. And I think to your point, right, trading revenues are 3 to 4 times that of investment banking fees. We'll get a lot more regional banks as this week progresses. And they don't have the benefits of trading. So, loan growth has been, still fairly subdued this quarter. You're seeing some benefits from lower deposit costs, but also as variable rate assets reprice lower, there's some headwinds there. Net interest income had 2 less days this quarter than last quarter. So, for the more traditional banks, results may not be as strong as we've seen, Friday and earlier today.
All right, Jason, great stuff. Jason Goldberg, senior analyst over at Barclays, to look at a couple of the bank earnings we got earlier today. And, of course, a push ahead to Citigroup and a few others starting tomorrow. When we come back after the break, a focus on the retail sector. This after we got earnings out of LVMH, and sales in the most recent quarter, they were weak, fueling some concern about a broader luxury goods market under pressure amid all the tariff uncertainty. Jelena Sokolova going to be joining us, senior equity analyst over at Morningstar, to talk a little bit more about what she expects going forward. That's coming up next here on The Close on Bloomberg. All right, let's get a view from the sell side. Top calls, big movers on the back of analyst recommendations. And we start off today with Apple. KeyBank raising its recommendation to sector weight from underweight. This after President Trump temporarily exempted phones, computers, and chips from tariffs. The analyst says the exemption is probably the, quote, best case scenario for Apple as it takes a big risk off the table. Investors are willing to take a risk on Apple on the day, up for a second day, a 4% gain here on this Monday. Up next, DuPont. Another call from KeyBank upgrading the chemical company to overweight, saying that the tariff relief for Apple actually de-risked downside for DuPont. Adding to this, KeyBank says DuPont's strong balance sheet should help it weather any economic downturn. Those shares rising for a second day as well. And finally, Brunswick Corp. You know this as the home of some of the most well-known brands of boats. Truist Securities, though, cutting its price target to $60 from $85 ahead of the company's earnings next week. This as recreation stocks overall begin to feel the impact of tariffs, with consumer spending under pressure. The analyst saying that the recent sell-off for the stock appears to have largely discounted potential tariff risk, and says that because of that, further downside could be around the corner. Nevertheless, the share is getting a modest bid up about 0.4% on the day, though we should point out the stock's still down more than 30% to start the year. In terms of consumer spending, well, we're also keeping an eye on, well, one of the granddaddies of them all in the luxury space, LVMH. Shares going on a bumpy ride throughout the day. This after their 1Q earnings report showed a drop in sales, a drop that was more than what the street was looking for. The company's weak sales now fueling concern for the broader luxury goods space, particularly with names like Kering and Hermes set to report a little bit later this week. We're joined right now to talk a little bit more about this by Yelena Sokolova. She's an analyst over at Morningstar, where she covers the luxury goods sector. And let's start off with the numbers from LVMH. They weren't awful, Yelena, but I am curious as to whether we can take this one quarter and maybe extrapolate that there is a longer-term trend here at play of weaker growth.
So the numbers were a deceleration from Q4, which was quite strong for them and for the sector. So some deceleration was to be expected. But the interesting thing about it was that it was not driven by the U.S., but it was predominantly driven by Chinese spending less, essentially in Japan. So for fashion and leather, which is their biggest division. The disappointing factor is, of course, that the weakest numbers rather are for their most profitable two divisions, so wines and spirit and fashion and leather. Of course, there is also potentially a negative read across to the whole sector with these results. Yeah. And also with the market turmoil, it could weigh on luxury consumer sentiment.
As far as its sectors, I mean, can you talk a little bit more about wines and spirits? Obviously, this is one of the sectors that's definitely much more exposed to the tariff impact than some of its other sectors here. What do they have to say about navigating through this?
Yeah, so essentially, wines and spirits is, of course, more also, it's quite a cyclical business, right? It's also predominantly exposed to wholesales, which makes it more tricky to navigate the inventory situations. And it's also exposed to more aspirational consumers, and here pricing may be also more difficult. So for this segment, the recovery could be quite gradual.
Jelena, you talked about the faltering Chinese demand. The disappearing Chinese consumer, do we know whether it's a pullback on everything, on all brands, or are they shifting some of their spending to local brands, to Chinese brands?
I haven't really heard about specific. There is quite not many of established Chinese luxury brands. There is a trend to shift towards domestic, say, sports apparel brands, but we don't really see that much in luxury. But Chinese, as also other nationalities, are more resilient with companies like, for instance, Hermes, which are more exposed to more affluent consumers, but also with companies like Moncler that has been outperforming in this market with exactly this, more sporty positioning.
Right, and I'm glad you bring up both those names because Moncler and Hermes set to report later on this week. Of the brands that you cover, which has the most pricing power and the ability to withstand, this slowdown in demand?
Yeah, I would say Hermes definitely stands out in terms of pricing power. They have been also less aggressive, in immediate aftermath of the pandemic in raising prices. So they have been quite careful, and now they are executing. They're basically exercising this pricing power. But given that their brand standing is really exceptional, they don't really have direct competition in their price ranges. Their pricing power is stronger, and they're also exposed to more affluent consumer, which is a little bit less price sensitive.
All right, Jelena, thank you so much. Jelena Sokolova, senior equity analyst at Morningstar, on the heels of LVMH's results. And of course, Montclair and Hermes set to report later on this week as well.
Well, that's what I'm curious about, too. I mean, because anytime you see these types of numbers or type of forecasts from a company like LVMH, you wonder, is this specific to that company or is this a broader trend? And hopefully we'll get more clarity on that on April 17th.
What struck me, though, was that the revenue for fashion leather goods at LVMH fell 5% on an organic basis. Analysts were looking only for a decline of 0.55%. I mean, that's a huge gulf.
Well, and it's hard to sort of model this now. I mean, we had a retail analyst on maybe about 3 weeks ago, and she was saying kind of this is the problem now is that because so many of these goods are sold not just through the normal retail channels, as Yelena was saying, the wholesale channel, then you have the whole travel aspect that a lot of their goods are bought in airports and duty-free shops and things like that. I was in a duty-free shop just this past weekend.
And?
I picked up a couple things,
Did you?
Rum cake, rum candy. Oh, and some cigars.
And you happily brought it back
Which I don't think I was supposed to bring back, but they're here nevertheless, Scarlett. You're more than welcome to one if you like.
All right, I'll take you up on that later on. Coming up, we're going to speak with Dan Niles, founder and portfolio manager at Niles Investment Management, about the moves that we're seeing in Apple after the White House temporarily exempted smartphones, computers, and chips from his tariffs. This is The Close on Bloomberg.
.30 p.m. here in New York. This is the countdown to the close. I'm Romaine Boston.
And I'm Scarlett Fu. And you saw how clear it was outside. It feels like there's some clarity on markets, at least this afternoon, because things are moving in one direction.
Yeah, it'll be interesting to see, though, how this holds, too. I mean, we talk about a market that has still been decimated by, obviously, a lot of the policy chaos coming out of Washington. 5,400 in the S&P on the day here. I mean, the good news is you get this two-day rally, if you will. The question is, how much further does that go? And not to throw water on it, but also we should point out, too, volume definitely below where it was. Basically a holiday week for a lot of folks, of course, with Passover that started over the weekend. And then, of course, you have Good Friday and Easter coming up this weekend. So a lot of people away from their desks.
Yeah, I'm looking at volume in the Dow and the S&P off about 40% from their 20-day average, or 5-day average, I should say. So really a slowdown compared to what we had seen recently. And, of course, if you look at Apple shares, that's a big, interesting one, given the U-turn on tariffs and then the mention by the president that, of course, he's still thinking about sectoral tariffs.
I'm so confused by this, too, because I was away for a couple of days. So first we knew that Apple was kind of in the center of this storm because of their supply chain, their customer base. Then apparently there was an exemption for iPhones and other things, smartphones.
Laptops,
but then
chips.
Then Lutnick and some other people saying there wasn't an exemption or is it temporary? So I'm very confused as to what exactly is Apple paying right now in terms of tariffs, or are they going to have to absorb on tariffs, because it's not really clear to me.
Well, it sounds like they moved a lot of their stuff into the U.S. right before the April 2nd announcement anyway, so they can work off of that inventory. But these are all good questions. So for more on how to think through a lot of these questions, let's bring in Dan Niles. He is founder and portfolio manager at Niles Investment Management. Dan, how much is Apple caught in the crosshairs of what the administration is doing or not doing? Can anyone really make a call on a company when we have no idea how to interpret the latest moves?
I think you framed it perfectly, Scarlett, which is why I think you have to go back to valuations, right? Because there's two components to a stock price. There's earnings, which we have no idea what those are going to be, because on a daily basis, where we are on tariffs changed, right? The second part, though, is the multiple. And that you can look at it relative to what you're paying for other names in the space or the market in general and go, okay, what's the risk I'm taking owning Apple relative to other names? And so if you look at the S&P, for example, you're paying 23 times trailing estimates. And the reason I look at trailing is the forward numbers are clearly too high. And we've been saying this for a while. Right now, the S&P estimates are for 13% earnings growth. Hopefully it's something closer to the low single digits and not negative. But, for Apple, obviously the numbers are too high as well. But if you look at 23 times for the S&P, why would you pay 33 times for Apple? It makes no sense, especially when you go on a fundamental basis. The AI upgrades to Siri have been pushed out from this year to next year. The growth for the last 3 years in revenues combined is 5%. And you can buy a lot of other companies in the Magnificent Seven for a lot cheaper. The thing is, Apple's a retail darling, and so on days when the stock market is up, investors tend to gravitate towards that because a lot of people have iPhones in their pockets. And they're going, oh, well, market's up. Yeah, let me go buy some Apple.
Yeah, well, and of course, a lot of people going to Apple stores over the past few weekends to load up on iPhones before they think prices are going up. This earnings season, a lot of questions obviously will be focused on the supply chain and how these companies are moving them or adjusting them or rethinking them. What about AI spending, the theme for the last couple of earnings season? Will that come up at all, and will that move the needle for investors?
Yeah, I think it will. And I think you said something really interesting, Scarlett, which is the guidance probably is not going to be as bad as it should be for the simple reason that you said earlier, which is people are walking into stores and stocking up on iPhones before tariffs drive the prices up. And if you look at it this morning, we got March export and import numbers from China for the month of March. And exports from China were up 12.4% year over year. The consensus was up 4.6%, so much bigger than what everybody was expecting. And the imports were down 4% year over year versus the decline people thought of 2%. In addition to that, you had Easter move from the end of March last year to April 20th this year. And so that's also going to make demand look like it's better than it normally should be in the month of April. And so I think companies may end up guiding a little bit better than they should have. And then this pull forward in demand is going to cause an issue. With regards to your AI question, we've been writing about this for a while, but you're having companies going from spending being up about mid-teens on a sequential basis for all of 2024. That number probably drops to mid-single digits based on the guidance we've gotten so far for the first half of 2025. And so I think you're going to go through this AI digestion phase. I know you've talked about Microsoft cutting back on contracts as a good example of this, but I think you're going to see more of that in an economic environment that's tougher.
Do you think, though, that might actually be embraced by investors, Dan, particularly given that there was some concern that some of these companies were spending maybe a little bit more than the return seemed to suggest?
Well, it's a great point, Romain. I mean, I think there's two elements to that. And this is one we've written about before, which is the most violent rallies happen during bear markets. So if you go back to the global financial crisis, you had 11 rallies of 10% each on average on the S&P 500, while you lost 57% on the S&P. During the tech bubble, you had 7 rallies that averaged 14% each on your way to losing 49% of your money. And this rally right now that we're having is up 9% or so right now. And so you're kind of getting into that 10 to 14% band, which is normal. And so you may have, the stocks go up a little bit more, which I think is possible. But here's the thing. If, let's say, Microsoft, Amazon, Google come out and ratchet back expectations for AI spending either for 2025 or 2026, that might be good for them because that means, you know what, their cash flows are actually going to get a lot better. But for the semiconductor companies associated with AI, that's not going to be so good. But I think in the near term, because of this pull forward that Scarlett talked about earlier, that's going to keep numbers from going down too much because everybody wants to get these chips before tariffs maybe drive those prices up even more.
So then what can some of these companies do to placate investors that maybe are concerned, raising the same concerns that you are, Dan? Is it basically throw some cash at them through buybacks or even dividends for those that do pay it? Or is there something else maybe that will keep investors tethered?
Yeah, I mean, I think the thing is that there's short-term and long-term. For the big mega cap names, generally, all of them have great balance sheets. And the best thing that they can do is not be stupid and throw money at buybacks, et cetera, when you might be facing down, which I think you will, negative GDP growth in either Q3 or Q4. Because during recessions, multiples compress a lot. Right now, you're running at about 23 times trailing PE on the S&P. In a normal environment with inflation this high, that it should be 19 times. If you're in a more recession environment, it's like 15 times, which means that obviously the market can go down 30% plus from here if you end up in a recession. And quite honestly, it can go down another 20% from here if you just get back to average trailing PE multiples. So to go ahead and throw money at stuff to try to support your stock, it's just not going to work. You're better off having a great balance sheet so that when you do end up with the ultimate trough, you can step in, buy some interesting technologies, do things like that, because that's what these tech companies should be doing. They're not a People don't buy them for 3 to 4% dividends. They buy them for revenue growth.
Absolutely. Dan, we've got to leave it there. Always great insights. We'll let Dan get back to it. Dan Niles, founder and portfolio manager at Niles Investment Management. A closer look at the broader tech space with the Mag 7 posting another good gain on the day with Apple leading the charge amongst that group. But one of the biggest drags on that group is Meta. Those shares down a couple of percentage points right now. We're going to talk about it in our stock of the hour coming up after the break. This is The Close on Bloomberg. All right, let's take a look at shares of Meta. The stock down for a third straight day. This is Mark Zuckerberg taking the stand in court at the FTC's antitrust trial, which is seeking to break up the company. The FTC arguing that Meta's past acquisitions of companies like Instagram and WhatsApp actually gave the company an illegal monopoly on the social networking industry. Dave Lee is a columnist here for us at Bloomberg Opinion. He's written about this case, and he joins us right now here. All right, so Zuckerberg's down in Washington at this trial, answering a lot of questions. It's backwards looking, but kind of revealing so far. I mean, he seems to be kind of ratifying, I think, what's been reported for a while right now, is that Facebook was running scared for a while when it came to competition, particularly when it came to news and information.
Yeah, absolutely. I mean, look, this is a company that its survival depends on being the place to be to talk online, right? And so when you had a company like Instagram breaking through, and then you had WhatsApp as a messaging app breaking through, Facebook, and specifically Mark Zuckerberg, looked at those two companies and thought, well, we need to either swallow them up, or we need to copy what they're doing. And in the case of Instagram and WhatsApp, it bought both of those companies. And so now the allegation is that it did that to bury the competition. And that was what made Meta have its huge user base, which now numbers more than 3 billion people using it every day. So that's what's on trial here, the intent when they bought those companies.
What's interesting about all of this is that the tech titans have lined up behind the Trump administration. Mark Zuckerberg bought a house in Washington. He's been personally lobbying the president with trips to Mar-a-Lago. And it feels like these efforts are not exactly paying off because the FTC is just as focused on big tech as it was under the Biden administration.
Yeah, absolutely.
And we should point out, this case is a holdover from the Biden administration.
It is. Well, it's actually this case in particular is a holdover from the Trump administration. So, this has lasted all the way through, as some of the other cases have as well. But of course, when Biden was in the White House, he hired Lena Khan to be his head of the FTC, the Federal Trade Commission, and she was seen as this real sort of hawk on antitrust, and the tech companies hated her. They were trying to get her thrown off cases. They were trying to undermine her with various comments. There was a hope among the tech companies that once Biden had left the Oval Office, that Trump would kind of pull back. That doesn't seem to be the case. In fact, Andrew Ferguson, the Khan's successor in the FTC, said we're not going to take our foot off the gas. So, this lobbying directly to President Trump, going to the White House for dinner, standing behind him at the inauguration, doesn't seem to have really got them much as a result.
Just real quickly here, I mean, do we have any sense here of what the potential outcome of this case might be? Because we've seen these types of antitrust trials before, and as much as it seems like these companies and CEOs are in the hot seat, the end result is usually a lot of the same.
Well, it's dramatic, and then it gets drawn out and out and out and out for many years. Now, the worst case scenario, and what the FTC want to happen, is for Instagram and WhatsApp to be spun out of Meta. That would be a disaster, because Instagram is the biggest earner for Meta now. It earns more advertising than the original Facebook Blue app. I think we saw the stock a moment ago. It was down, 1.58%. I think investors thought that was a risk. That number would be much, much worse, right? And so I think there's an understanding that they think Meta's probably going to prevail. But then they said that about Google, and that didn't happen for them.
All right, Dave Lee, Bloomberg Opinion columnist, thank you so much. And of course, we'll be checking in with you as the trial continues. Coming up on The Close, we're going to take you to the closing bell with Dana D'Auria. She's co-CIO at Envestnet. This is The Close on Bloomberg.
The direction of our portfolios is clearly to get more defensive over coming, weeks or months. I don't think there's a huge rush to that, quite frankly. You never want to make rash decisions in the, moment of high volatility. And I do think Q1 earnings are likely going to be pretty strong. And that could also cause a little bit, that plus what we hear out of the White House, put a little bit of a floor on markets near terms.
A focus on earnings, a focus on tariffs, and of course, that big focus on macro conditions. Mike Contopoulos kicked us off to the close over at Richard Bernstein Advisors. That was just about 50 minutes ago, Scarlett, and the markets are pretty much where they were when we started the show back then, not far off the highs of the day, green pretty much across the screen.
Yeah, Mike mentioned a floor to equity prices, and that's kind of what you're seeing right now with the S&P holding on to a 1% advance or just around that level. 23 out of 24 bank names are also gaining, JP Morgan the exception there. And of course, we're keeping a close eye on tech hardware companies after the White House said they were exempting laptops, hard drives, chips, smartphones, and other electronics from the China tariffs and the baseline 10% tariffs unless they impose sectoral tariffs, which could be coming at any point.
Yeah, and of course, that is the big driver on the market today. Some of those hardware makers, some of the software companies as well. When you broaden it out from the S&P 500, a little bit more mix. You are seeing a lot of fintech names in there. A few, believe it or not, names as well, like Bed Bath & Beyond rallying here on the day. So investors are sort of trying to find, what in their mind would be a bargain given the big sell-off that we had over the last few weeks.
It's also worth noting that the VIX declined to below 30 for the first time in a week. So again, more metrics showing that people expect some measure of calm for at least a few days.
Also interesting, too, to see the competition amongst returns for various assets out there. Obviously, you get what you get potentially in the equity markets, but still some relatively decent yields out there in the fixed income space, despite the drop that we're seeing in those yields on the day. Let's get someone to help make sense of this as we move closer to those closing bells. Dana Doria joins us, Co-Chief Investment Officer over at InvestNet. And Dana, I mean, the big parlor game right now is that when you look in the face of the sell-off that we had over the past few weeks, and you look at this sort of, I guess we'll call it a mini rebound that we've had in 3 of the past 4 sessions here, does that give you enough confidence here that maybe it is appropriate to sort of look around and find those bargains?
Well, I definitely think for those who are looking to maybe rebalance to a risk tolerance that is more suited to them, now might be the time. So sort of a twist on the question maybe that you're asking. I think, look, we obviously deal with retail advisors and their client base.
फिलहाल के लिए देखोगे तो क्रूड ऑयल का हो गया टारगेट डन. क्रूड ऑयल में बुक कर लो प्रॉफिट, ठीक है, ज़्यादा ही मिल गया 45 पॉइंट से ज़्यादा. यहाँ पर एक बाइंग का प्लान भी है, यहाँ से एक बाइंग प्लान करते हैं. नेस्डैक की क्लियर है, ऊपर डे हाई रेजिस्टेंस था, नीचे सपोर्ट था, जो लेवल बताए थे वही चल रहे हैं, कुछ चेंज नहीं हुआ है नेस्डैक में. ये सेलिंग वाला ट्रेड बुक कर लेना, ठीक है, हो गया टारगेट डन. यहाँ से एक बाइंग का प्लान है, एक बाइंग प्लान कर सकते हैं यहाँ से. एसएल कितना रहेगा? एसएल ज़्यादा नहीं ले सकेंगे, छोटा ही एसएल है, ठीक है. सेलर्स एग्जिट कर लेना, यहाँ से एक बाइंग का प्लान रख सकते हैं आप. ये ऐसा रखना क्योंकि मार्केट ना, मेरे को लग रहा है कहीं ना कहीं रेंज को ब्रेक करने जाएगा कहीं ना कहीं. इतना रुकना तो नहीं चाहिए अभी तक, मार्केट को रेंज ब्रेक करके निकल जाना चाहिए था लॉजिकली. तो अब ज़्यादा रिस्क लेना मत किसी भी ट्रेड में, स्पेशली क्रूड की मैं बात कर रहा हूँ. नेचुरल गैस तो चलो रेंज के बाहर है, बट एक क्रूड ऑयल इतनी छोटी सी रेंज में फंसा हुआ है कि अब यहाँ पर कुछ खास कर नहीं सकते. तो एक छोटे से एसएल के साथ ये एक ट्रेड, बाकी इसमें एसएल छोटा ही रखना, क्वांटिटी भी कम रखना. मेरे अकॉर्डिंग अगर ये रेंज ब्रेक करता है अब, या तो नीचे कहीं या फिर ऊपर कहीं, तभी उसके बाद ही ट्रेड लेना बेटर रहेगा. नहीं तो कहीं ना कहीं तो एसएल जरूर जाएगा इसमें, क्योंकि जितनी देर से रेंज के अंदर रुका हुआ है, आई डोंट थिंक सो प्राइस विल होल्ड दिस रेंज फॉर टू लॉन्ग. पॉसिबल नहीं है. कि नीचे आ जाए तो बेटर है. बाकी नेचुरल गैस वही रीटेस्ट के बाद रुक ही गया ऑलमोस्ट. बाकी क्रूड ऑयल में बाइंग का ट्रेड, थोड़ा सा क्वांटिटी कम रखना, रेंज ब्रेक होने दो, ज़्यादा बेटर रहेगा मेरे अकॉर्डिंग. बाकी थोड़ा बहुत रिस्क ले सकते हो तो ट्राई कर लो, नहीं तो रेंज ब्रेक हो जाती तो ज़्यादा बेटर है. क्योंकि जितनी स्मॉल रेंज बनती जाएगी ब्रेकआउट के चांसेस उतने बढ़ते जाएंगे। बाकी कोई न्यूज़ वगैरह तो अभी तो आई नहीं है, ना कोई अपडेट है। लेट्स सी कोई और न्यूज़ आती है। Those route visit Odessa says support for Ukraine unwavering. Look at this. El Salvador, अब यूके आई थिंक वहाँ के प्राइम मिनिस्टर या प्रेसिडेंट हैं, says he will not return man the US mistakenly deported. सही है.
We don't even really know if we can trust that.
Yeah.
So, so being able to do the math around, okay, which countries are going to be better off, which parts of the economy. I mean, we can exempt, an iPhone, but not exempt the parts of the iPhone, right? So it's very hard for the market to price this kind of thing and to say, hey, which countries and, at what place should we be? A natural, if nothing else, academic starting point is to be allocated at market cap weight relative to these geographies. And so if you're finding yourself way off from that, and, because of the last 10 years, U.S. is already a very significant stake. So it wouldn't, you're not allocating a massive amount of your portfolio to international, if you're just even starting with that market cap weight rule of thumb.
All right, Dana, good stuff. Dana Doria, Co-Chief Investment Officer over at Envestnet, helping us count you down to those closing bells here on this Monday afternoon. Green across the screen, Scarlett, a pretty broad-based rally, too, we should point out. Last time I looked, you had something like 450 of the S&P names in the green. But we also came in today with Citigroup kind of downgrading their overall view of where stocks are going to end the year, as a group, at least. And then you had folks like Bob Michael over at JP Morgan Asset Management kind of touting maybe the potential benefits of fixed income, because partly, at least in his view, there is, if not a Treasury put, there's certainly a Fed put in order to keep the Treasury market functioning.
Yeah, but you might have to endure quite a bit of pain to get to that point again. Speaking of the Citi being the latest firm to downgrade U.S. stocks, I wonder just how much we're going to learn from earnings season this time around, because companies are going to be extremely reluctant to say anything when the goalposts keep moving.
Yeah, I think so, but I think maybe sometimes silence can say more than actual words as well. So it'll be interesting to see which companies are willing, which CEOs are willing to go out there on a limb and make their thoughts known, and which ones maybe are going to be a little bit more tight-lipped about things here. We're not going to be tight-lipped with you. We're going to have a full breakdown of all of today's market moves, from stocks to bonds and everything in between. That starts right now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Scarlett Fu. Today, Alex Steele is off, helping taking you through those closing bells. A global simulcast starts right now. Carol Masser, Tim Stanovic, they are in the radio booth, and they join us as they do every day at this time.
I don't even
as
know
we
who
welcome
you guys
our audiences
are
across all of our Bloomberg platforms. Carol Masser.
Hello.
I've been gone for 2 days.
I know.
You're still talking over me. Did you actually stop talking when I was gone?
No, you can ask the folks. No, but there's been so much going on.
It's great to see you too.
Volatility in the markets. It's nice to be talking with you guys again. Up and down we went today as well, but I think many would say it's interesting to see at least some green across the screen and some movement to the upside, considering all of the volatility we've had over the last week and a half or so.
Well, that said, we are still seeing a little bit of a downturn as we do get closer to the close. The S&P 500 was up as much as 1.8%. It did fall as much as 0.1%. Higher right now by just about 0.8%.
Having said all that, things feel relatively calm, muted, normal compared to the last week and a half. The S&P has gained only 3 times since the April 2nd tariffs were announced, and today's advance is actually the smallest of those 3 gains.
Getting a boost, though, today from, of course, some of those big heavyweights like Apple up about 2%. That's your biggest point contributor here to the S&P 500. Some of the healthcare names like Lilly also doing their work. But then you had that drag from Meta, from Amazon, Broadcom, NVIDIA. In fact, a lot of the folks in the chip space really getting dinged, of course, after additional tariff headlines now saying that maybe chip tariffs are coming, which
At some point.
I thought they were coming and they weren't, and maybe now they are. I can't keep up with anything here. What I can keep up with here are the closing numbers on the screen. You can put today's numbers in the book as we get the bells and the clapping and cheering that go along with it. A Dow Jones Industrial average higher by more than 300 points, or about 0.8%. The S&P 500 looks like it's going to gain a similar amount on a percentage basis, roughly about 43 points, closing right above that 5,400 level. The NASDAQ composite higher by more than 100 points, or 0.6%. But your gainers on today, you're going to find that your outperformers, on the day are going to be in that cyclical space. The Russell 2000 up 1.1%, S&P midcaps up 1.2%, and Dow Transports clocking in at about 1.2% higher.
All right, back to the S&P 500 we go. And Romain, of course, breaking down all of those closing numbers. But you got about 432 names actually in the S&P 500. Scarlett gaining some ground today, 70 to the downside.
All right, let's take a look at the IMAP, which shows the sector performances. And remember, on Friday, this was all green. Today, there's a slice of red, and it's in consumer discretionary. And just taking a look at some of the names, companies that certainly do rely on importing from, say, China, are among the decliners there. So which makes sense given everything we've heard about the tariffs.
All right, a lot of green. I had a lot to choose from. I want to go to, speaking of tariffs, we did see GM and Ford as well rallying in today's session. GM up about 3.5%, Ford a gain of about 4%. This is after you did have the president come out and said he was looking at helping car companies with tariffs. So a whole boost to the group. Stellantis also seeing some gains. Romain mentioned and singled out Apple. This one at its highs today, guys, up about 7.5%, finishing the day, though, with only a gain of about 2.2%, but nonetheless to the upside. Again, we go back to the bigger, broader macro story of tariffs. President Trump's administration, of course, temporarily exempting phones, computers, and chips from its so-called reciprocal tariffs. So at least for now, they are spared, and that company's global supply chain spared as well. As we know, so much exposure to Apple when it comes to China. Let's all go to Intel. Romain, you mentioned the stocks, and overall it was just a little bit higher as an index today, but you did have Intel up almost 3% in today's session. The company entering into a definitive agreement to sell 51% of its Altera business to Silver Lake at an $8.75 billion valuation. So again, Intel continuing to kind of remake its future, and so selling that off. And then I got to mention Fannie and Freddie. Fannie up just shy of about 9%, but was up as much as 14% earlier in the session.
What was the big news that they were tweeting us?
I don't understand that this is the news that gets it going.
Yeah.
Initially,
Pulte
there was
came out.
Right. Initially, there was a tweet. The Federal Housing Finance Agency Director William Pulte said in a post on X that news on Fannie Mae is coming shortly. We did get some news that Omid Malik, co-founder of 1789 Capital, joining the board of mortgage giant Fannie Mae.
Was that the big news?
I don't know. But keep in mind that company is the investment firm where Donald Trump Jr. works.
Yeah, so no conflicts of interest. I am curious, though. I mean, when you say big news on Fannie Freddie, obviously everyone's waiting for the actual big news, which is, what happens with this conservatorship and whether it's unending and whether we take these companies back into the hands of real investors here. Did he not touch on that at all?
I didn't say anything like that. And it seems like they're still waiting. So maybe that's why we're off its highs. But yeah, it's like everybody's kind of on pins and needles. So we're still waiting. TBD. All right, over to you, Tim.
Okay, let's start with some of the prominent decliners that we saw in today's session. Romain mentioned Meta Platforms dragging down the indices, falling by 2.2%. I'm keeping an eye on them after the FTC's antitrust trial got underway today. The FTC is seeking to break up Meta Platforms, and we actually saw Mark Zuckerberg take the stand earlier. The FTC is seeking to force Meta to divest Instagram and WhatsApp. It alleges that the acquisitions gave Meta this illegal monopoly on portions of the social networking industry. The trial is expected to last a couple of months. It's going to also feature testimony from former Meta executive Sheryl Sandberg. And I'm also watching shares of what happened with LVMH today. Here in the U.S., ADRs of LVMH fell by 6.4%. This after the company reported that sales of the company fell more than expected in the first quarter. This was due to weak demand for luxury goods in China and in the U.S., and there's a threat of a trade war, of course. The company's fashion and leather goods division, which is its largest unit, saw a 5% decline in revenue on an organic basis. Analysts were expecting only a decline of just about half a percentage point to 0.6 of a percentage point. LVMH is considering price increases to offset the impact of tariffs.
Price increases?
They've got room to adjust marketing costs. Wow. They don't plan to radically change U.S. production. They've got 75 brands. They don't call them brands. their maisons.
Really? That's what they call them?
Yeah. 6 sectors.
AKA brands.
Fendi, Louis Vuitton, Tiffany, Sephora. This is like Romaine's world.
They're
You know,
houses.
he's the luxury goods guy.
They're houses.
you.
So yeah, that's French, Carol, for
Houses.
Yeah. By the
Yeah.
way, so.
There are 75 houses and
Is that like
6 different
Hors-
sectors.
is that like Hors d'oeuvres?
Okay.
Okay. Miss
All right.
Escargot.
Okay, I like that.
The costliest dinner I ever treated someone to.
Finally, I do want to look at shares of DaVita. This is the kidney dialysis company. It fell 3% today. Fell more earlier in the session. It did become aware of a ransomware incident that has encrypted certain elements of its network. The full scope, nature, and potential impact on the company are not yet known at this point. Shares falling today by just about 3%.
All right, let's take a quick look at yields because we did see a lot of activity there. You see on the short end of the curve there, that was where most of the activity was. Down 11 basis points on your 2-year yield, 15 on that 5-year yield. And you did also see buying going on in the longer end of the curve, drops of about 10 basis points, on the 10-year, and then another 5 to 6 basis points on the 30-year yield. But again, really doesn't underscore the volatility that we saw in between here. Volatility, of course, that was also whipsawed around by some of those reports that we got out around 11 a.m. with that New York Fed survey showing inflation expectations amongst U.S. households continuing to creep higher as their outlook, Carol Massar, for their own economic conditions continue to drift lower.
Like, kind of interesting to see at least, that trade in the Treasury trade. But I got to say, I feel like we just kind of wait for the next shoe to drop. And, whether or not we're going to see something new, additional, lasting when it comes to tariffs. And I think it's a really difficult market environment to work within. I'm curious to see what the Treasury Secretary, Scott Bessent, has to say definitively. But can we even assume that we will have anything definitive when it comes to tariff strategy here?
I don't know the answer to that, but what I do know is that it seems like every day we get more news. I mean, how many of us woke up on Saturday morning thinking that smartphones and laptops were exempt coming from China to these 145% tariffs? And then we learned yesterday that, okay, there are going to be these sectoral tariffs for semiconductors, and these devices will actually fall under that category. So there is this sort of temporary reprieve for some of these large companies, including Apple. But it doesn't seem like this is the type of company that's going to escape unscathed.
Yeah, Carol, you mentioned definitive. It's definitive until someone else says something else, which is why people keep going to stores and loading up and buying what they can right now because they have no idea what could change in the next day or so. And a reminder that President Trump did hint that there was a possibility he would announce tariffs on semiconductors perhaps today. And, so far,
but what about
we haven't heard anything.
Autos and auto parts, right?
Mm-hmm.
Yeah, that's the other thing. So then maybe this little hint earlier today that there would be exemptions for auto parts.
But
again, a new bit of news.
Yeah, but the question is, I mean, when do you get sort of some stability in these announcements? Because again, it's not really what the policy is. It's the question is that policy going to change in a few months? You're not going to get any company to make the type of investments that I think the administration wants to see unless they have some clarity that if they do this, they're not going to have the rug pulled out from them in a matter of days, in some cases, or months.
Yeah. How do you game this out, especially if it means investing or making investments or hiring people or what have you? I kind of keep going back to that. It's a tough environment. All right, folks, that's a wrap. Our Monday almost over. Our cross-platform coverage on radio, TV, YouTube, Bloomberg Originals. We call it the closing bell. We will see you again, same time, same place tomorrow.
And with the market right now laser focus on policies coming out of Washington, well, we have a conversation with one of the most critical people in Washington, the Treasury Secretary of the United States, Scott Bessent, right now down in Argentina, leading Washington's trade war policy. A conversation with him coming up next, right here on The Close on Bloomberg.
Welcome back to The Close. I'm Scarlett Fu.
And I'm Romaine Bostic. The volatility from last week, a bit tamped down here on this Monday afternoon. The VIX back below 30, and that gave a little bit of clearance here for investors to try to find some bargains and bid stocks back up. And S&P 500 closing above that 5,400 mark, up about 0.8%, with 431 of those names in the green. But it wasn't all roses, Scarlett. Of course, we saw a lot of pressure in the semiconductor space. That index at one point was up about 3%, closed higher by about 0.3%, but a little confusion here about what tariffs exist now, what tariffs might exist tomorrow, and that caused a little bit of a sell-off in the semiconductor space here. You also see some of those tariffs concerns reflected on the last line of your screen there. That's your Mexican peso here, strengthening in a big way for a second straight day by the equivalent of about 1.1%.
We've gotten used to seeing 1% plus moves in the dollar. It's pretty remarkable given that currencies don't tend to move like on this scale ever. And of course, this is kind of an indication of what's to come because we don't know what's going to happen with these tariff headlines. So let's bring in our next guest, Ethan Devitt, Senior Advisor and Market Strategist at Moneta. And as Romain was just showing us on that board, we saw Treasury yields decline for the first time in a week. It really feels like the Treasury market is the tail wagging the dog here.
It has been for the last few weeks, and it does seem like that was actually the tipping point in terms of the pain point that caused the reversal on tariffs. Now the headline seems to be that this is a sign of recession predictions, that we're seeing this flight to safety in treasuries again. We've sort of temporarily suspended the narrative of forced selling or widespread selling of treasuries by our trading partners. So it's very difficult to know what to believe, but certainly reassuring, at least as far as the 10-year goes, that we are seeing some bid for it today.
Is there a sense here, Ethan, that even with some of the short-term moves, that there is more conviction in the long-term direction of this market and, for that matter, the economy?
I think we're certainly cheered to see the direction moving in the right direction. What market participants have been subject to recently is this, quite realistic game of virtual reality where we've been plunged into the worst case scenario and now we are ratcheting back from that. And somehow the narrative we're getting is that this is a good thing, that we now know how bad it could be and that our trading partners have been shocked into making phone calls and that it will be better from here. I think we are seeing incremental rollbacks from the worst case scenario. So that, I suppose, is a positive thing. It would be surprising to see us dive back into that again because I think we know a pain point or threshold has been crossed.
Yeah, we know the pain point thus far, but that could always change going forward. So having said that, where do you want to be regardless of what tariffs get announced or don't get announced?
You want to still be across the board well spread globally because we know now from the last few weeks that global stock markets ex-US are starting to come into their own. We know one of the unintended consequences of this trade policy and certainly the geopolitical standpoint we've seen has been really a resurgence of spending in Europe, a resurgence of national pride, and really just a work around some of these tariff restrictions. So I'd say that having a global portfolio is more important now than ever. You just spoke about the dollar and its movements, its quite volatile movements of 1% plus. That's another reason to own non-dollar currencies. So that has not changed. And I would also think that having a portfolio that has some inflation resilience built into it has not changed, even though the headline on inflation was positive. We think tariffs do mean inflation is heading upwards.
What does that inflation trade look like right now, Ethan? Because you haven't seen a whole lot of activity in tips, which I know is probably the more direct way to play this. But I'm getting the sense that people are taking out inflation hedges, if you will, in other ways, other types of assets.
Well, there have always been ways, but equities themselves are a bit of a long-term inflation hedge. And we know that the retail bid for equities is still strong. And certainly some larger companies will be able to have pricing power and push that through. But the traditional inflation resilient assets in a portfolio are real assets, real estate, some of those infrastructure names. And I would think with the spending and the verticalization of the US, the focus on spending internally, that is going to be very positive for infrastructure. We know that the public-private partnership around infrastructure has been growing and that much of it is crumbling and there is a need to invest there. So I think infrastructure stocks have not been that exciting in relative terms, but as bond yields come down, as interest rates come down, that dividend nature of infrastructure stocks could be quite interesting going forward.
And even quickly here, given that companies have been reluctant to share too much guidance, if at all, what do you reasonably expect to learn this earnings season once the management does start sharing their views?
I think we're going to hear a lot of those, the superlatives around caution on the horizon, whether it's an incoming storm, depression of consumer spending, all of these things that we really already know. And I actually don't think markets will be that surprised by that. I think we really have discounted in quite a bit of a decline in consumer sentiment and in corporate sentiment. I don't think any of that will be a surprise. What will be perhaps a surprise is something positive on the upside. So I do see earnings being depressed by this, but I don't think markets will be that surprised.
All right, Ethan, Always appreciate the conversation. Ethan Devitt, Senior Advisor and Market Strategist over at Moneta. She was just talking about infrastructure a little while ago, Scarlett. We are getting some earnings out of Applied Digital. This is, of course, the digital infrastructure company, the company that's been helping to build out data centers for AI. The results are out, and, well, it's a big miss. Revenue came in at $52.9 million in the most recent quarter. The street was looking for 63.4. The company also reported a loss per share of about 8 cents. Now, that was actually better than the loss per share that the street was looking for, which was 11 cents. Nevertheless, some concerns here that maybe we are starting to see some cracks in that AI trade. Those shares down 7% in the after hours.
Yeah, worth mentioning as well, Applied Digital was the most shorted ahead of its earnings today as well. So that just gives you some context heading into these results. In terms of data that's going to come out, what will be interesting is, including with earnings, this idea that a lot of people are buying things, we're front running the tariffs. So we might get a boost in a lot of the numbers, whether it's data or earnings, despite the fact that you have tariffs on the horizon.
Yeah, and you call it boost, I would call it distortion, right?
Yeah.
Because now how are we supposed to sort of make sense of what's happening? If Apple reports a blockbuster quarter because of this pull forward, is it a pull forward? Are we still going to buy just as many iPhones and other devices in the quarters going forward? So that's what's making things harder here. Of course, it's not just about the chaos coming out of Washington, but it creates chaos for markets as well. Markets that have been looking for resolution or at the very least some direction. Let's go down to Buenos Aires, where Anne-Marie Horton is standing by with the U.S. Treasury Secretary.
I'm pleased to be with Treasury Secretary Scott Bessent. This time you're back on Bloomberg in Argentina. Thanks for joining us again.
Good to be with you. Good to be in Buenos Aires.
Yeah, it's fantastic here. So you've come here at a time when the IMF has just announced this $20 billion agreement with Argentina, but we haven't seen a Treasury Secretary come to Argentina since Trump's first administration, and that was for a G20. So why the emphasis from the Trump administration on Argentina?
Well, Anne-Marie, a couple of reasons. The reason for being here today is today's a fulcrum day. So the Milei administration has done 3 adjustments, and this marks the beginning of the third one. So they did a large fiscal adjustment, a large monetary adjustment, and they announced on Friday a large currency adjustment. IMF has allocated $20 billion to them. The World Bank has allocated $12 billion. And I wanted to come here today to show support for President Milei and his commitment to what I think is historic in terms of bringing Argentina back from the precipice.
When it comes to the trade negotiations, I'm sure you spoke with President Milei about the 10% rate that Argentina was hit with. Do you think at some point that can come down to zero?
Look, I think we're going to start the negotiations, and just like with everyone else, I'm telling them, bring your A game. We'll see what you got, and we'll go from there.
Can any country go to zero?
We'll see. I don't know what's going to happen with the negotiations because we've got a whole box of things we've got to overcome: tariff, non-tariff trade barriers, currency manipulation, and subsidization of labor and facilities. So there's a big menu there.
There's been an early focus on Latin America writ large from the Trump administration in the first 100 days. Is Latin America policy also, in a sense, China policy for this administration?
Well, I think that might be a good description, because what we are trying to keep from happening is what has happened on the African continent, where China has signed a number of these kind of rapacious deals marked as aid, where they are really, they've taken mineral rights, they've added huge amounts of debt onto these countries' balance sheets. It's undisclosed to any of the other international organizations. They've got tolling arrangements. So they're guaranteeing that future generations are going to be poor and without resources. And we don't want that to happen any more than it already has in Latin America.
China has a foreign exchange swap with Argentina. Would you consider a credit line directly from the United States?
That's not under consideration in terms of, so they have an $18 billion credit swap in RMB. Argentina, under the previous Peronist government, drew down $5 billion, and that will remain outstanding. The Chinese showed very good faith effort after the announcement, or conjunction with the IMF announcement. So that is going to be rolled forward for a year.
But do you want them to get rid of that swap with Beijing?
Well, I think as this administration continues their stay the course on their economic policies, they should eventually have enough foreign exchange inflows to be able to pay that off.
So less than 2 weeks ago, you and I were talking outside of the White House after what the president called Liberation Day. And you said you weren't part of the negotiations. Now you're leading them. What's changed in these past 12 days?
No. What I said was I didn't construct the actual
tariff rates.
The tariff rates. I've always been part of the tariff policy. I had been focusing on tax. Maybe you want to talk about that later. That's going very well. And now with the trade negotiations, I'm going to be part of that. And the president has hit a 90-day pause button, and we are moving quickly with many of our most important trading partners. So we had Vietnam in last week. We had Japanese in on Wednesday, South Korea next week. So it's going to move fast. And but the important thing for your viewers to know is we're setting up a process. And we are going to run that process. It's going to be orderly. And at the end of the day, especially for the most important trading partners, the president's going to be involved.
So when it comes to the current negotiations this week, you're also sitting down again with the Spanish negotiating team, the Japanese negotiating team, and also the Spanish economy minister? Well, the Spanish economics minister was just a prearranged meeting. He and I have never met. So that is not a trade sit-down. The Japanese meeting is a trade negotiation. The Japanese prime minister recently said he's not going to rush to get a compromise and a negotiation. How quickly do you think you can see these deals come to fruition? Well, again, I think there will be advantage to our allies, especially in a first mover advantage. Usually the first person who makes the deal gets the best deal. So who do you think will be first? It's their choice. Is there a handful of countries that you expect to have a deal before the 90 days is up? Oh, I think there could be numerous countries. And look, it may not be the actual trade document, but we will have an agreement in principle and be able to move forward from there. So are we talking about a dozen or 70 plus? Look, I think it's going to depend, but we're going to move with all deliberate speed. And again, it's going to be a process. It's going to be USTR, who just has mountains of data that they've been collecting over the years. Because in a funny way, the tariffs are the easiest part. So a country with high tariffs, you can just say, okay, this, get rid of it. It's the non-tariff trade barriers that are more insidious, more difficult to spot. And it's probably going to take a little longer to exercise those demons. When you said you weren't part of the rates in that chart that the president held in the Rose Garden, is he taking a maximalist approach? Neil Dudder recently wrote that President Donald Trump has cracked a lot of eggs, and now Scott Bessent, the Treasury Secretary, needs to make an omelet. Is that how you view this situation right now? I view not giving away negotiating secrets on worldwide television as the essence of negotiating. You recently talked about getting deals done quickly with partners to then confront China together. When you're in these negotiations with trading partners, are you looking for them to offer up something to combat Beijing? Well, I think combat's an aggressive word, but look, I think now that we have the China tariffs in place, that they are going to want to have some protection from Chinese goods flooding their markets. That China's business model is like from that Disney movie where the brooms are carrying the buckets. Like they're not going to stop manufacturing because the U.S. has a tariff wall up, so those goods are going to go somewhere. Where do you think they're going to dump? Well, I think it depends on the good. We have exemptions now, though, for electronics, so we still expect electronics to come into the United States with the smaller tariff rate, the fentanyl, 20%. But you were asking where are they going to dump. I think it will depend on what is the good. Higher value-added manufacturing goods, likely in Europe, Canada, in the G7, and then kind of more of the baubles and knickknacks
in the global south.
China's Commerce Ministry came out when the tariff rates were going above 100% and called it, quote, a joke. Has there been negotiations on any level between Beijing and Washington right now?
Well, look, it'll come from the top. President Trump, Chairman Xi have a very good relationship. And I wouldn't say that these are not a joke. I mean, these are big numbers. I think no one thinks they're sustainable, wants them to remain here, but it's far from a joke.
Well, they just say that the rate is so high, it's become a joke. Basically, does it just stop trade between Washington and Beijing altogether? Do you see a decoupling of these two economies?
Well, maybe the trade minister has a different sense of humor I do, but I don't see anything funny about it.
Do you see a decoupling, though, between Washington and Beijing?
There doesn't have to be. There could be. There's a big deal to be done at some point, but look, what is different with China that is different in the history of trade, that normally, if you go back to the big trade deals or the currency deals in the 80s, the Plaza Accord, the Louvre Accord, the Reagan auto deals, our leading economic competitors were our military allies. China is both our biggest economic competitor and our biggest military rival. So that's going to require a special kind of formula.
Are you teasing out a Mar-a-Lago Accord that we should be paying attention for in the future?
I'm not sure what you're talking about.
Well, potentially getting all these trading partners together to discuss fair, balanced trade?
Well, we're doing that over the next 90 days.
Okay. So shifts in tariff policies has had markets on edge. Even the president recently remarked that the bond market was, quote, queasy. Do you have a sense of who is dumping U.S. assets? Who's been dumping U.S. treasuries?
I don't think there's a dumping, and I think we saw in the tick data either today or Friday that actually foreign ownerships picked up. We had three big auctions last week, and on the longer end auction, 10-year, 30-year, we saw increased foreign competition. So I actually think this is one of those occasional VAR shocks that you get in the trading community. I think a lot of people got very leveraged, maybe out over their skis, and then you combine that with some real money selling, and you get these moves.
So you don't think it's sovereigns, potentially it's hedge funds unwinding?
I have no evidence that it's sovereigns. And look, Anne-Marie, not you, but the nature of journalism is to create a headline that 10 days ago when 10-year yields hit 390 said, well, Secretary Bessent got what he wanted. He got 10-year yields down, but it's the wrong reason. Now, I forget what they hit on Friday, maybe 440 something.
We saw a 50 basis move last week in 10-year yield. At the same time that the dollar was weakening nearly 3%. How do you simultaneously look at that situation? It feels like investors are dumping U.S. assets.
Well, look, I've learned that not to look at what happens over a week. Right? Like, I, for better or worse, have lived through a lot of these things, and in trading, in one's personal trading history, it's the scar tissue that sticks with you the most. I can tell you exactly where I was standing in 1998 when the long-term capital, the debacle happened. That had nothing to do with anything other than a bunch of geniuses up in Greenwich who had too much leverage.
So you're not concerned at this moment about the U.S. dollar or the U.S. Treasury losing safe haven asset?
No. Look,
we're still a global reserve currency.
We are still a global reserve currency. We have a strong dollar policy. The dollar can go up and down. If you go and look back at President Trump's first term, I don't remember the exact number, but the dollar in 2017 went down, I can't remember, 7, 8, 9%, and then once the tax bill was done, took off for the remainder of his term.
Have you spoken to the Fed at all about contingency plans, though, if financial stability risks flare up?
Chair Powell and I have breakfast every week, and we discuss a wide range of things. And our staffs are always in contact. We have a markets room; they have a markets room. But and specifically, did we discuss some kind of a break the glass? I think we're a long way from that.
So when was the last time you guys spoke? You had breakfast last week?
We had breakfast last week, and it was an away game. I was over at the Fed.
And no concern so far from the Fed chair and what he saw in the Treasury market?
I think we would have heard from the Fed chair. I think we heard from Governor Collins of Boston on Friday. We heard from Governor Weller today on his thoughts on what tariffs mean. So it seems like business as usual.
When it comes to the Fed chair, his term is up May 2026. So we're almost 12 months out from that. When are you going to start to think about and have these discussions with the president about who should lead the Fed?
Well, we think about it all the time. I think when are we going to start the interviewing candidates? And that'll be sometime in the fall.
In the fall. So about 6 months lead time.
Yep.
The U.S. Supreme Court recently came out with a ruling that the executive branch, the president for now, could oust top officials at independent agencies. And that has some individuals in the market a little bit concerned about what this could mean for the independence of the Fed, which is really a cherished pillar of wanting to invest in America. Do you have any concern about potentially President Trump ousting Fed Chair Jay Powell or the independence of the Fed?
Well, and Marie, I've repeatedly said the Fed has two duties. And I believe that monetary policy is a jewel box that's got to be preserved. And then they have regulatory policies. And I think we can have more of a discussion because the Fed is one among three bank regulators. And there's the Fed, controller of the currency, and the FDIC. So I think it's very easy to delineate between those two.
So at the moment, no concern?
No concern.
When you talk to Fed Chair Jay Powell, at the moment it doesn't sound like they feel like the need to step in on this unraveling we saw last week with the bond market. Does the Treasury have any plans to do something if this was to become more unnerving?
Well, look, the Treasury has lots of things we can do. And but again, I think we're a long way from that.
But all options would be on the table?
Sure. But again, we have a big toolkit that we can roll out. We do regular off-the-run buybacks. We could up the buybacks if we wanted. So,
just finally, I want to get your thoughts on something you told me, John, and Lisa in February, which was that in your old world, you would be that person with your ear against the door trying to understand what policymakers were doing so then you could predict where financial markets.
Okay, guys. नैस्डैक को देखोगे रेजिस्टेंस एरिया पे था एग्जैक्टली सेलिंग आई वहाँ से जो कल का रेजिस्टेंस एरिया था 18,960 970 के अराउंड से नीचे सपोर्ट लिया वापस 18,790 एंड वापस ऊपर जा रहा है दिस इज़ द फोर्थ टाइम प्राइस इज ट्राइंग टू हिट दिस लेवल एक्चुअली लेट्स सी इस बार क्या करता है बाकी क्रूड ऑयल हो गया है साइडवेज अब मुझे लगता नहीं मूव करेगा 9 PM हो चुका है अभी भी 2.5 घंटा और है मार्केट के पास लेट्स सी कितना और मूव करता है अब वैसे चांसेस आर वेरी लेस कि अब ये मूव करेगा मोस्ट प्रोबेबली साइडवेज ही रहना है अब इसको फिर भी देखते हैं कुछ देर के लिए अगर थोड़ा बहुत भी मोमेंटम अगर ये कर देता है बाकी फिर हम सीधा कल मिलेंगे डोंट फॉरगेट टू जॉइन टुमारो मॉर्निंग with nifty bank nifty analysis and commodity analysis as well and कल का डेटा भी इम्पोर्टेंट है As per the study, people who wake up late are more productive and mentally sharp. बताओ बाकी लगता है शायद अभी नए क्रूड ऑयल ब्रेक करे रेंज को किसी एक साइड पे तो बेटर रहेगा मेरे अकॉर्डिंग। ज़्यादा देर होल्ड होना नहीं चाहिए लॉजिकली देखा जाए तो। नीचे वाला सपोर्ट भी ऑलमोस्ट ब्रेक डाउन के करीब। अच्छा ये फर्स्ट कैंडल पे आया। शेड्यूल कल डेटा देखोगे मैंने वैसे बता दिया था थोड़ी देर पहले। क्रूड ऑयल की इन्वेंट्री है कल 16 है ना। क्रूड ऑयल की इन्वेंट्री है, कोर रिटेल सेल्स का डेटा और पवेल की स्पीच फेड चेयरमैन 6 बजे 8 बजे और रात को 11 बजे। ये 3 टाइम पे थोड़ी वॉलेटिलिटी बढ़ सकती है। बाकी देखते हैं अभी क्रूड ऑयल क्या रेंज ब्रेक करेगा या फिर जाता है ऊपर, क्योंकि है तो रेंज के अंदर बहुत देर से रुका हुआ है। अगर ये कैंडल ओपन इक्वल टू हाई नहीं बनती है क्रूड में तो रुक जाएगा। अगर ओपन इक्वल टू हाई बनती है नेक्स्ट कैंडल इस लेवल पे तो हाई चांसेस ब्रेक डाउन हो जाएगा लेवल का। लाइक भी करो गाइस, इन लोगों ने लाइक नहीं किया है। डोंट फॉरगेट टू लाइक द स्ट्रीम।
Just came to a real lull, and everyone expected 2025 to happen and be super active. I think now, given the uncertainty, and uncertainty is anyone who has a crystal ball is only really one person here, but everyone else is trying to figure out like what happens in deal making. When we talk about getting companies exit ready, that's the key. Nobody knows when deal making is coming back. We have a good view that it will likely come back in the back half of this year. There's too many tailwinds at play that get behind the idea that there's going to be a lot of deal making. LPs are looking for companies to exit some of the longest hold periods that we've seen in private equity.
Right.
There is a ton of dry powder, more dry powder in private equity funds than ever before in history. That needs to be put to work. And there's a lot of pent-up demand of just getting back to deal making. But in lieu of that, you need to do other things. You need to prep the companies for sale.
Yeah.
And we're advising clients to do two things. To focus on tariff impact analyses and real sound liquidity management strategies right now.
I am curious on the liquidity side because, I mean, you bring up the LPs. The LPs are putting pressure on these companies for a while now. I mean, I remember even last year, about a year ago, there was a lot of pressure on these companies. That was before all of the chaos that we got into here. Is that going to be the catalyst that finally gets some of these firms to take liquidity more seriously?
Yeah, I think there's reality happening. The average hold period is longer than 6 years right now. When you think about private equity hold periods, it's typically 3 to 5 years in total. And so now you're looking at 6 years. So the pensions and the endowments, they're all looking for liquidity back. The GPs are looking for further commitments to their next fund, but also they have to put money to work that they already have in the coffers. So right now, a lot of the private equity funds we're working very closely with are focused on what can we do right now from a value creation standpoint, focus on those quick wins, focus on navigating this very rocky time, and then be at the ready when the market comes back.
So, Nick, I want to follow up on what you said about PE-backed companies will need to show sound liquidity management. What does that look like when we don't know how much the economy is going to slow, whether there might be a recession going forward?
Yeah, no one knows right now. What's great is this is not indifferent from spring of 2020.
ओके क्रूड ऑयल देखोगे नीचे आना शुरू कर दिया है। नैस्डैक वापस सेलिंग में चला गया है, कुछ ज़्यादा ही वॉलेटाइल हो गया यहाँ पे। ऊपर रेजिस्टेंस, नीचे सपोर्ट, रेंज के शायद जब तक एक साइड निकलेगा नहीं, मूव करेगा नहीं। इसको भी रिमूव कर देते हैं। ओपन इक्वल टू हाई, लुक एट द कैंडल, लुक एट द करंट कैंडल, ओपन इक्वल टू हाई है। मुझे यही लग रहा था ये पक्का ओपन इक्वल टू हाई बनाने की कोशिश जरूर कर सकते हैं, बिकॉज सपोर्ट है। नॉर्मली तो बाइंग आनी है यहाँ पर, बट इसको ब्रेक करना है तो ओपन इक्वल टू हाई बना के ब्रेक कर दें। लेट्स सी, देखते हैं नीचे ब्रेक होती है या फिर अपना ओपन इक्वल टू हाई निकाल देता है। कैंडल ओपन इक्वल टू हाई थी जो बनी थी, निकाल दिया ओपन इक्वल टू हाई। थोड़ी बहुत बाइंग वो लास्ट कैंडल पे आई है जितनी आई है, अदरवाइज तो इस तरह की कैंडल ही बनती है मार्केट में जब प्राइस को भी सपोर्ट या रेजिस्टेंस वटेवर जो भी है उसको ब्रेक करवाना हो। लेट्स सी यहाँ से और नीचे कितना जाता है प्राइस अब। यहाँ पर नहीं रुकता है, प्राइस नीचे आता है, तो फिर आप मान के चलो 5200 एक राउंड नंबर। यहाँ तक तो खैर क्या ही गिरेगा इतना नीचे, अब मार्केट रेंज के अंदर ही रुक गया है बिल्कुल। बट यह 5200 की ओर प्राइस जा सकता है, वहाँ पर फिर एक वापस बाइंग देखेंगे अगर ये लेवल होल्ड नहीं किया। कैंडल ओपन इक्वल टू हाई बनी थी जरूर, लास्ट कैंडल में थोड़ी बहुत बाइंग आई, नथिंग मच। वैसे अपना ओपन इक्वल टू हाई तो ब्रेक कर दिया उसने, बट अभी भी लेवल के नीचे ही है 5255। सो अगर बाइंग नहीं आई यहाँ पर से, मार्केट 5200 की ओर चला जाएगा। वहाँ पर एक फ्रेश बाइंग देखेंगे, वो एक सपोर्ट रेजिस्टेंस था, ब्रेकआउट हुआ है तो एक रीटेस्ट पेंडिंग है वहाँ पर। एग्जैक्ट सपोर्ट देखो, सपोर्ट तो फिर वही 5000 जो नीचे लगाया था 140 वाला है, वहाँ तक तो खैर नहीं आना चाहिए, बीच में वो रीटेस्ट कर देना चाहिए ये रेंज अगर यहाँ पर ब्रेक होती है। सो वी कैन एक्सपेक्ट अप्रॉक्सीमेटली दिस लेवल। बाकी एग्जैक्ट सपोर्ट नीचे डाउन साइड पे 5140 के अराउंड। बट मोस्ट प्रॉब्ली अगर यहाँ ब्रेक हुआ तो यहाँ पर रुकेगा 5200। नेचुरल गैस भी साइडवेज ही है, नो मोमेंटम इन नेचुरल गैस। आजकल मोमेंटम या तो एक बार में ही पूरा आ जा रहा है, उसका बिल्कुल ही साइडवेज जा रहा है मार्केट। ठीक है, नीचे ही आ गया है ऑलमोस्ट। कैंडल ओपन इक्वल टू लो, ओपन इक्वल टू हाई बनी एंड ब्रेक डाउन इज हैपनिंग। देखो यहाँ पर दो ट्रेड बनेंगे अगर थोड़ा सा क्लोजिंग कहाँ पर होती है, वैसे 7 मिनट है। क्लोजिंग अगर थोड़ा सा नीचे हो जाती है 5240 के नीचे, पुल बैक में एक रीटेस्ट हो जाएगा इसी जोन पे, डायरेक्टली नीचे आ गया तो फिर एक बाइंग बन जाएगी। अभी क्लोजिंग में टाइम है, सो वी हैव टू वेट। मिनट और हैं, क्लोजिंग देखते हैं। क्यों प्लीज, फिलहाल तो साइडवेज चल रहा है रेंज के अंदर। लुक्स लाइक रेंज ब्रेकडाउन के काफी करीब है। नीचे आता है देखो नेचुरल गैस भी, तो फिर वो नीचे वाला लेवल है 260, 268, 269 के अराउंड। क्योंकि नीचे वाला ये लेवल ना, ये ऐसा नहीं है पहली बार आया था यहाँ पर, 2 बार ऑलरेडी आ चुका है पास में, थर्ड टाइम आएगा यहाँ, थर्ड टाइम आया था। काफी स्ट्रॉन्ग पुल्स बैक है यहाँ पर। थोड़ा ट्रैक है, मुझे लगता है नीचे क्लोजिंग आएगी क्रूड ऑयल की, ऊपर तो नहीं आने वाली। मान लिया जाएगा कैंडल अगर क्लोज आती है नीचे 5240 के नीचे। 1 2 3, दो चीज़ हो सकती है, या तो डायरेक्टली गिरता रहे या पुल बैक दे दे। पुल बैक देगा तो रीटेस्ट पे सेलिंग, डायरेक्टली गिरा तो फिर नीचे 5200, वहाँ पर एक पुल बैक। बट ध्यान रखना कैंडल लेवल पे एग्जैक्टली जब प्राइस आएगा, कैंडल ओपन इक्वल टू लो हाई पे डिफरेंस नहीं होना चाहिए। लो हाई बना तो फिर नहीं बनेगा। वाह। देखो कैंडल हो गई क्लोज, ब्रेकडाउन हो गया है, हल्का सा पुल बैक देता है अबाउट 5255 56 के अराउंड सेलिंग, डायरेक्टली नीचे आया तो फिर 5200 के अराउंड बाइंग देखेंगे अगर कैंडल ओपन इक्वल टू हाई नहीं बनती है तो। पुल बैक ही दे रहा है, ठीक है। बहुत ही छोटे छोटे ट्रेड बन रहे हैं अब तो, मोमेंटम ही इस हिसाब से आ रहा है कि ओके। नेक्स्ट वीक फिर शायद इंपॉर्टेंट डेटा रहेगा रेट कट का मोस्ट प्रॉब्ली, एक बार देख लेते हैं नेक्स्ट वीक का। ये वीक तो कुछ खास डेटा है भी नहीं। सर्विस पीएमआई ट्यूसडे 2021, मेनली आईएमएफ की ही मीटिंग्स हैं और तो नॉर्मली डेटा है। अप्रैल में रेट कट नहीं होने वाला क्या? अच्छा वो रेट कट तो वहाँ पर हो गया ना उसका, एफओएमसी का लास्ट टू वीक्स में ही थोड़ा बहुत ठीक ठाक डेटा है, अदरवाइज तो कुछ खास नहीं। आईएमएफ की मीटिंग मेनली वही देखना पड़ेगा कल परसों। आगे 9:30 होने वाला है, 2 घंटे और हैं, देखो कितना मूव और करता है प्राइस अब। और गाइस 40 पीपल आर वाचिंग, जिन लोगों ने अभी तक नहीं किया है लाइक वो लोग कर दो अब। बिल्कुल पुल बैक में ले सकते हैं सेलिंग का ट्रेड वापस से क्रूड में, डायरेक्टली आया तो नीचे बाइंग देख लेंगे। वॉल्यूम कम है, बिल्कुल कम है अभी, काफ़ी कम है वॉल्यूम क्रूड ऑयल में. लेट्स सी, न्यूज़ ऑफ द आवर लास्ट देख लेते हैं एक बार.
News when you want it with Bloomberg News Now. I'm Erica Herskowitz. It seems the European Union and U.S. made little progress in bridging trade differences, with U.S. officials indicating that most U.S. tariffs on the EU will not be removed. The two sides met for nearly 2 hours in Washington Monday. The EU has offered to remove all tariffs on industrial goods, including cars, but the U.S. has rejected the proposal and instead suggested that some tariffs could be offset by increasing investments in exports. The EU has also agreed to delay implementing counter tariffs against the U.S. for 90 days, but will impose them if negotiations don't yield satisfactory results. Boeing stock is down more than 1% after China announced it's ordered its airlines not to take any further deliveries of Boeing jets as part of the tit-for-tat trade war that's seen President Trump levy tariffs as high as 145% on Chinese goods. Beijing has also asked that Chinese carriers halt any purchases of aircraft-related equipment and parts from U.S. companies. Bloomberg aviation reporter Danny Lee in Hong Kong.
Given how Boeing has come so far in China, where China used to be one of its most important foreign markets, selling billions and billions of aircraft into the country every year. And over the last several years, it has not won a single major aircraft order. And it does come against the backdrop of how China is pursuing its own aviation plane-making development. So slowly, ever slowly, Boeing is getting squeezed.
Yes, please ask your question.
Aviation reporter Danny Lee. The order came after China unveiled retaliatory tariffs of 125% on American goods this past weekend. The Canadian government says it will allow automakers to import a number of U.S.-made cars and trucks without tariffs as long as the companies keep manufacturing vehicles in Canada. Prime Minister Mark Carney.
In Canada, we will have to build a new relationship with the United States. And Canada can help redesign the global trading system with like-minded countries.
Canadian Prime Minister Mark Carney. The move will provide some relief to companies, including GM and Stellantis. Last week, the government put retaliatory tariffs on vehicles made in the U.S.
देखो मेंबरशिप, चैनल की मेंबरशिप के लिए ज्वाइन का ऑप्शन लिखा रहता है वहां पर, उस पर क्लिक करके चैनल मेंबरशिप ले सकते हैं.
Meanwhile, Virginia Governor Glenn Youngkin is confident President Trump's administration will get deals done with trading partners over the next few months. This following a recent announced 90-day pause on higher tariffs that hit dozens of trade partners.
I do expect that there will be deals cut, and those deals, importantly, will be with some of our largest trading partners, India and Japan and Korea. And so this is what's going to happen over the next many months. And most importantly, I think that will bring some confidence to the market that this reset, which has to happen, and disruption is part of a reset, will open up long-term opportunity.
Glenn Youngkin speaking with Bloomberg Surveillance. Youngkin was appointed as co-chair of the Council of Governors by President Trump. Stocks are edging higher thanks in large part to solid results from big banks, offsetting news pointing to an escalation of the trade war between the world's two largest economies. The Dow is ahead 0.1%, the Nasdaq up 0.2%, the S&P is ahead 0.33%. The 10-year Treasury yield is at 4.34%, the 2-year Treasury yield is at 3.81%. Shares in Citigroup are more than 3% higher after the bank announced it's inched closer to a key profitability target in the first quarter, surpassing expectations and drawing a record haul from its wealth and retail businesses. The trading division rode a wave of volatility in global markets to notch $6 billion in revenue for the period, helped by an 8% jump in fixed income and a 23% gain in equities trading. That topped the $5.74 billion average of analyst estimates compiled by Bloomberg. Shares of Bank of America are nearly 4% higher after the bank posted a record quarter as the company reaped the benefits of volatile markets and net interest income topped analyst estimates. Looking ahead on an investor call Tuesday, CEO Brian Moynihan doesn't think a recession is in the cards for this year.
Our research team, like many research teams,
team led by Candace Browning does not currently believe we'll see a recession in 2025. However, they've lowered their GDP growth rates for 2025. So rate cuts during 25, but expect as inflation gets under control, you may see them in the future.
Bank of America CEO Brian Moynihan. Revenue from equity trading rose 17% to $2.18 billion in the first 3 months of the year. That helped Bank of America beat analyst estimates for per-share earnings. And Johnson & Johnson is holding its earnings outlook steady, despite President Trump's moving decisively toward imposing tariffs on the pharmaceutical industry. The administration's investigation into drug imports announced Monday, widely seen as a first step toward imposing levies on the industry, could actually be beneficial. That's according to J&J Chief Financial Officer Joe Wolk, who believes the investigation is likely to show most medicines shipped to the U.S. are cheap generics, not the innovative therapies sold by J&J. In a post on Truth Social, President Trump said perhaps Harvard should lose its tax-exempt status and be taxed as a political entity. Trump said tax-exempt status is contingent on acting in public interest. The comments come just a day after Harvard said it would not accept the Trump administration's proposed conditions to continue federal funding, demands that include auditing the viewpoints of students and faculty and punishing students who took part in pro-Palestinian protests on campus last year. That's news when you want it with Bloomberg News Now. I'm Erica Herskowitz, and this is Bloomberg.
Is then retaliating in Trump's joke of a trade war. How else can they fight back? She actually has a secret weapon, one that Trump has revealed might just work against him. Let me explain. China is the U.S. second largest foreign creditor. If it sells any of its $760 billion of U.S. treasuries, Trump will feel the heat. Even a small thumb could perpetuate a bear narrative and hurt the U.S. dollar. Consider this. Last week, the 10-year yield jumped by 50 basis points to 4.49%, the biggest weekly surge since 2001 as bond prices fell. And some of the sharpest moves happened during Asian hours. Trump's U-turn on tariffs last week also happened after sovereign bonds tanked. So his chaotic policy making wasn't brilliantly executed, as billionaire hedge fund manager Bill Ackman said. Instead, it revealed the U.S. president's biggest weakness. Treasury Secretary Scott Bessent, who is now spearheading tariff negotiations, needs a stable bond market to sell into. He needs to issue $2 trillion in new debt this year, in addition to rolling over $8 trillion in maturing bonds. It won't be easy, and every percentage point rise in yield could cost the U.S. government $100 billion. Already, the greenback is starting to lose some dominance. Last week, news broke that the People's Bank of China added gold to its reserves for 5th straight month. That prompted frantic buying, with investors betting that gold is more attractive than the dollar. In other words, in this volatile environment where anti-American, anti-bullying sentiments run high, it wouldn't take much for Beijing to smash the haven status of the US dollar and bonds. Why wouldn't China take advantage of that?
We talk about how the implications of the tariffs are reverberating now into the entertainment space. How are you assessing the possible impact?
So I think the tariffs are impacting everybody. They're impacting sentiment, they're impacting people's mind space, and everybody is trying to figure out how to respond. And it's still not settled. You know, all kinds of developments are taking place. It's too early to call how it will eventually impact. As far as we are concerned, luckily our business is so heavily domestic focused. Our consumers are largely Indian. Our content, and the driver content, most of it is Indian, although we have a huge set of Hollywood consumers, and we are probably the biggest repository of Hollywood content in this country. But in the broader order of things, that's still small.
So given the fact that China is now retaliating, putting a lid on the number of Hollywood movies coming to China, might you gain from that? I mean, could you get your content at a cheaper price?
Hopefully.
So that could be opportunities.
Yeah, there are opportunities. Because, look, I think this whole tariff situation globally, it's a huge disruption, but once the disruption settles down, I think there is an opportunity for a country like India. I think we can get ourselves wedged far more centrally in the global ecosystem.
How are you looking at content right now? I mean, how are you looking at competition? Because the likes of Google is a major player.
It's a major player, but we don't, as a company, as a group, we are not, and as an individual personally, we are not very competition focused. First of all, our ambitions are very different from the ambitions of any other, streaming service or a media company in this country. As far as television is concerned, we really have a very good share of the market. We have channels that go out in every language and offer all kinds of content to all parts of the country, and we have a very satisfactory share of consumption. As far as streaming is concerned, our challenge is not to compete with someone, our challenge is to create a much bigger market. We want to be the destination for every Indian who has access to connectivity and data to come in every day for all their requirements of premium content. And that's a huge market expansion strategy that we have. So if we just continue to take a share of the existing market, it will still not be satisfactory for us. It will not be mission accomplished for us. For us, the mission is to make sure that every Indian, in the same way that television has gone in this country, despite being pay TV, has gone to every nook and corner, can we create Jio Hotstar as an alternative to television as a bouquet and make sure that we have the attention of everyone every day?
It is about making as much revenue as possible.
Yes.
That is key. And when Mr. Ambani made this deal, this $8.5 billion deal, it is on the basis that Indians will pay for the content they get on the internet. Where are you with that? How are you with pricing? How are you looking at it?
And our trust and our confidence in the Indians' ability and desire to pay has been validated very rapidly since the merger. Now we have just crossed 200 million paying subscribers.
200 million?
200 million paying subscribers. And that makes us one of the biggest streaming services anywhere in the world. And if you consider the fact that we've got 200 million paying subscribers just from India in such a quick time, it's pretty satisfying. So we believe that people are willing to pay. We obviously have to keep the realities of the country in mind, and that is why our pricing is very aggressive. And but we want to get into every household. We want to be, if there is a connected device, we want our content to surface there.
So what's the goal? You talk about 200 million right now. You want to get into every household. What is that target? What's the number you're after? What's the next timeline?
We would like to, as I told you, the targets are moving. When we first came together, we were looking at 100 million. When we crossed that, then we thought we should get to 200 million. Now that we have crossed it, we'll reassess. But
500 million? Give us a number, Uday.
I can't give you a number.
In 12 months.
I do not want to commit myself on. But in 12 months, we definitely want to, we also want to consolidate. We want to get onto every device. We want everyone to watch us. And then we also want them to watch us more and more, because that is what brings resilience to the business. So now that we've got to a sizable number of subscribers, we definitely want to make sure that we get their attention more and more. So that would be the next phase. We will continue to push for more subscriber acquisition, but driving deeper and deeper into consumption space as far as their attention is concerned is a very important.
So those acquisitions can come within the next 12 months?
Hopefully.
How crucial has the IPL been?
IPL is a very, very powerful asset. IPL is one of the most powerful assets, but we see IPL as a tactical asset, because IPL comes, everybody tunes in for the IPL, and there are other marquee cricket properties that bring people together. But at the end of the day, it's a seasonal property. It's with you for 2 months, and then it's not there for 10 months. And hence, we need to have a content strategy where we are able to engage and draw people's attention throughout the year. And that is where the content that we generate in Indian languages and the content that we get from Hollywood, because of our partnership with various Hollywood studios, that is very, very impactful.
In terms of the IPL viewership,
yes,
can you give us some numbers and the kind of growth you're anticipating?
IPL has, is successful every year. This year it's been particularly successful both on television and on streaming, on our Star Sports TV pay TV channels and on Jio Hotstar. IPL has performed better than ever in the past. So our reach numbers are, we are expecting that it will cross 450 million on Jio Hotstar by the end of the tournament, and a similar number on our pay TV channels.
You know, in my conversation with investor Todd Bowley, he didn't, erase the possibility of, buying into a share of an IPL company here in India. Some thoughts on the kind of competition you might face internationally, perhaps?
Look, I think there will be, it's such an attractive property, it's such a giant aggregator of viewership that there would be interest. But, and we would be very, very committed to IPL. You know, IPL, I've always been a big believer in IPL. I think we've played a role in making IPL what it is, and IPL has helped us. We will be committed. But then there is a lot of cricket going around. And it finally comes down to the price.
It's always about the price.
It's always about the price.
Udi, I just want to bring you back to the tariffs and the possibility of that impacting consumption. How are you assessing that? Because in China, for instance, consumption has been hit by expectations that, tariffs will hurt the economy. People are willing to forego their spending power and save more. Might consumption in India be impacted?
Look, first of all, right now, the whole world is in shock. So it's too early to predict exactly how it will settle down. And even the tariff is a moving target right now. The good news is that India, as of now, has, is one of the countries with lightest tariff. 26% is what was impacted, and that's been put in abeyance for next 90 days. And I'm sure the two governments are very focused. India and the US have been very deep strategic partners, geopolitical, in terms of geopolitics and in terms of business and everything. The two governments and two heads of states have great relationship. So I think there will be a reasonable bilateral arrangement between us. The other thing for us is that ours is a domestic consumption economy. Our business is driven, even for our advertising business. It's disproportionately domestic companies. But if there is global turmoil of this kind, and if all the fears that everybody is talking about, they begin to come true, then clearly there'll be impact on consumption, and all of us will be impacted.
Pharmaceuticals we're going to do, we don't make our own drugs, our own pharmaceuticals. We don't make our own drugs anymore. The drug companies are in Ireland, and they're in lots of other places, China. And all I have to do is impose a tariff. The more, the faster they move in. The higher the tariff, it's very simple. It's inversely proportional. The higher the tariff, the faster they come. And we're going to be doing that. That's going to be like we have on cars. We have, as you know, a 25% tariff on cars. We have a 25% tariff on steel and aluminum. And that's what that category fits right now.
Do you have a percentage in mind? Do you have a timeline?
I have a timeline, not too distant future. We're doing it because we want to make our own drugs. We're doing it because we want to make our own steel and aluminum, lumber, other things. And they're all coming in.